Assalamu alaikum everyone. My name is Safir. I'll give a small presentation a little bit about personal finance and things that you should consider. It's based on a guide that I have on a website called muslim.finance. You can look it up after too. It's a very simple one-page guide which has some basic stuff to get started with your personal finances. There's just some brief slides that I have, probably about 10 to 15, and then we can have a Q&A as well. I think the first thing that people get typically wrong a lot about investing is that most of the time, maybe about 20 to 30% of the actual investment decision-making process has to do with the things that you invest in, and much more of it has to do with the time horizon that you make. The longer that you are invested in something, especially something like passive, what they call, like investing in an index or a mutual fund, which is you're not actively managing it, the better. Because there's always ups and downs, and so it's very important to, everybody talks about think long term, think long term, think long term, but in order to actually do it effectively, you have to actually make less decisions and let things kind of just ride on, basically. So there's 5 or 6 like key principles I have to, what I like to call financial peace. The first thing is obviously decide a budget. I'm sure many of you have probably already thought about doing that. The second thing is to at least be saving 10% every month. The third thing is if you have debt, it's to prioritize eliminating debt versus investing. I'm purely just talking about from a financial perspective of generally, if you have $1 in terms of investing versus saving, you might have an interest rate of like 4 or 5%. It's always going to be generally beneficial to pay off that debt versus investing in something else. It's also important if you are employed somewhere that offers a 401k. A lot of these 401ks offer matching programs typically between 2 and 4%. So it's almost mandated by certain states. So at the very least, I would recommend to take advantage of that basic matching program. The fifth thing is to set goals on what you need. If you're trying to save up for a house, or you're trying to save up for a car, define actually what those particular goals are, and I'll show you kind of how to do that. And then the sixth thing is to actually invest about 10% of your salary every month. A lot of people have trouble with figuring out how to actually save, like practically and in reality. So the simplest way that I found is to just open a second checking account. And if you're getting let's say you're getting $1,000 every month as salary, you define a budget. Let's say your budget was $800. You have $800 going to one checking account, then you make a second checking account, and you put the remaining $200 there, and you kind of forget about the second account. The reason why I recommend putting it into a checking account versus a savings account is because savings accounts are generally interest-bearing, and they also have heavy restrictions on how much that you can transfer in and out of the account. Typically, they'll allow like 3 or 4 transfers. So just to make it easy on yourself, the best thing to do is to just open up a second checking account and pay all of your bills, your expenses, everything from the first account. So if you ever think that you're going to go negative in that account, just basically borrow from the second account. It just forces you to have a process for basically saving, right? That's kind of the goal to do. So this is just like a concrete example. If you're making $4,000 a month, put $3,000 in the main account. In the second account, put secondary. That can go eventually to savings that you want to do, goals that you may have, or future investments. Okay, for the investing part, this is the part that everyone gets more excited or interesting about. The first thing I think is, as Muslims, it's to decide your Islamic principles and stick with them. Sometimes you're presented with lots of opportunities that might be gray area or whatever, and you want to make sure that whatever principles that you think that you define, whether it's trying to avoid interest, whether it's avoiding to buy stocks that are associated with gambling or military contractors, whatever, you try to keep that out. Second thing is keep it simple and to what you know. I know it seems counterintuitive, but literally like the best investments that you can probably make are just to buy like an index or like an ETF or like an amount of mutual funds in the stock market. Those will perform much higher than any real estate, any venture capital, any private equity investments that anybody does. And I've invested in across several of these, and I can tell you that generally it's the most effective investment is the stock market, and it's liquid. So if you need it at any time, you can basically withdraw it. The third thing, we kind of mentioned it before, it's long-term rather than short-term. It's easy to say, hard to practice. The fourth thing is passive versus active. So it's better to invest in indexes where you can just be passive about it rather than trading, buying this stock and selling this stock and buying another stock and stuff like that. Generally, like it's proven in history that any passive investors perform better than active investors. And the fifth thing that I recommend is to just automate it every month. So I just have like a weekly automated thing that basically buys like $150 every week in the market through like an index. And so it forces you, it's not like you're thinking about it this week that I'm going to invest in something, or you're watching the market that this particular thing happened and I'm buying. The best thing to do is you cannot time the market. Nobody can. And the best thing to do is just to buy it every week, right? So that if there's peaks and valleys, you'll be able to capture them at any time. So this guy, Morgan Housel, he has a book called The Psychology of Money. It's one of the few books that I actually recommend to read in investing. He had this tweet which basically says just like shut up and wait. Because if you look at it from like the past like 40 years, or I don't know what this graph is from, I think it's like 30 or 40 years, you can just see that it just, especially we're blessed to be in the US stock market generally just kind of goes like this. And there's a whole lot of ups and downs in between, but if you just literally invest in an index and lock it up and probably never look at it again, you'll be much better off than looking at it kind of on a daily basis. So a lot of people, when they think about investing, they think about like, how can I get the highest returns? I want to get like 15, I want to get 20% on the returns. And inevitably, whenever people do that, they end up making lots of emotional decisions and mistakes. And I think the best thing that you can do is to really just create a strategy. And it's really simple. It's actually not as complicated as people kind of anticipate. This is another chart before I get into the strategy, which kind of shows, so Amana, I'm sure many of you have heard Amana mutual funds. This is, I think, since 2006, so it's almost like 20 years. So the comparison chart I didn't have the actual dollar number, percentage number, but that's probably around 1,000% over the past 20 years. So that's like almost like a 50% annualized return, right? The point is, like, who would not take a 50% return? The point is, more often than not, it's just to invest in either a mutual fund or QQQ and XLK are tech-focused indexes that I buy. XLK is more Sharia. It's about 96% compliant, so it meets you can't have more than 5% non-compliant in an index. So XLK generally meets that standard. And these are the reason why it's tech weighted is because generally tech stocks are more Sharia compliant than having banking stocks and stuff like that. There's some new ones that you guys might have heard called SPUS, which is an index on the S&P 500, and then HLAL, which is kind of across everything. They're kind of newcomers, but from my perspective, I generally recommend people to buy XLK or Amana. And then I also publish a filtered version of QQQ on my website, Muslim.finance. So this is kind of like a guidelines matrix to kind of think about what you should be set in, like in terms of asset classes. And it doesn't really matter till I would say you have, I don't know, $100,000, $200,000 of savings. But generally, your stocks, especially if you're doing like if you're following Sharia compliance, you'll be mostly in tech stocks. So your returns will be, you can expect probably anything in the range of like 7 to 10%. Although in the last like 10 or 20 years, it's been closer to like 15 to 20%. In terms of like, if you look at any like standard investment portfolio, they'll typically have a section called fixed income. So you might have heard of this like bonds or treasury bills and stuff like that. Like every normal investment portfolio has this. But we as Muslims really don't have any options available for this. The closest option today that basically exists is sukuk, which is like, think of it as like bonds in Muslim countries, international markets. So like Saudi or Turkey will basically issue these Islamic quote unquote bonds. They're actually generally not recommended. Like I work with a bunch of endowments, and most of the endowments that I know are actually pulling out of sukuk because it's highly volatile, not only in terms of price, but because the interest rates are fluctuating so much in the last couple of years, the price of sukuk actually changes a lot. And there's a lot of international exposure. And again, we're blessed in the US to have a generally stable currency. Most currency, like Turkey has, I think, 60% inflation rate, right? So generally, I don't recommend sukuk, and I know many endowments that are actually replacing sukuk with just low cash flow real estate. Like I said, once you have like a couple $100,000, then think you can consider having some real estate component. And especially that's important because to kind of replace the fixed income option that we kind of don't have. And then an alternative, so if you want to buy like gold or crypto, you can generally buy these things on the stock market. There's like a gold ETF called GLD. If you're buying Bitcoin, there's a Bitcoin ETF called IBIT that you can buy and then have maintain some kind of cash. So the endowments I generally work with kind of follow the 20-year mark till they're about like the $10 million stage, $15 million stage. And then as they want to focus more on income, they'll kind of start to go in the right ones, right? So as you get older, you can't withstand, the stock market is very volatile. You can't withstand a sudden drop in the stock market, right? So what you need to be doing is starting to shift your asset allocation to less stocks and more things like real estate or cash, basically. And this is like the guidelines that I have. If you go to like look up like Schwab guidelines for asset allocation, it'll largely be the same. It'll just have bonds as a fixed income component, and they generally don't talk about real estate. But because we don't have good options for fixed income, we're kind of forced. The next closest thing basically is cash flowing real estate. I'll talk a little bit about this later, but like lots of like investment decisions really have to do with behavior rather than actually like buying something or the other. So the point that I talked about earlier about like automating it every week, so you just set it and forget it. I can tell you, like, I manage my active portfolio, and then I have a portion that's automated and passive, and the passive portfolio does better than the active portfolio. And I literally like study the markets for fun. So it's like it's very hard to beat. And the best in the world-class managers also generally cannot beat the market. It's very hard to beat the market. So the other thing I recommend for people to do is, it's really not that hard to be strategic about it. So I would literally just open up like an Excel spreadsheet and write down all of the assets that you basically own, right? So if you have $100,000 of stocks, write that down. If you have this much in 401k, write that down. If you have in real estate, write all that stuff, sum it all up, and then divide like 100k divided by the sum. So the sum here is like $200,000. So you have about 75% in stocks, 25% of that is in the 401k, and 50% is in the regular brokerage account, right? When you structure it like this, when you see like these random opportunities for investing in this or buying this stock, you just always go back to this sheet and see basically how you should be positioned from an allocation perspective. And so this is more like reality, and then this is more what you should be kind of striving towards on the actual asset allocation. So this is the point I was saying earlier. We do not have a really good fixed income option, and it puts like our older community really at risk, because if 90% of your assets are in the stock market and a crash happens, you don't have the time horizon to basically recover. And so that's why I really recommend to either go to cash or find alternative things, basically like real estate, to basically invest in. So in terms of like home financing is like a very hot topic when it comes to personal finance. And I think MCC had a presentation with other home financing companies, and I'm sure they'll do it again. In terms of like buying a house, there's like multiple factors. There's not only finance factor. Actually, if I were to tell you, especially living in the Bay Area, like saving money in terms of buying a house is probably the least likely factor of why you should buy a house. It's more about like family and stability and stuff like that. I recommend, if you're considering buying a house or renting or whatever, there's a website called nerdwallet.com, and just search NerdWallet rent versus buy calculator. And you can basically plug in like how much is your rent, what type of home like you would be able to buy, and it even factors in things like inflation, how much rent is expected to go up, how much house values are supposed to go up. And I guarantee you, if you plug it in for like any house in the Bay Area or condo, it will almost be never cheaper to buy than rent, right? I know it's very counterintuitive advice that we hear, and it's always cheaper to buy versus renting. But if you do the math, it's honestly almost always cheaper to rent than buy. I'm not saying to not buy a house. I'm just saying that there's other obviously factors besides money in this involved, like the comfort of your family, you want stability and stuff like that. But what I tell people is that yes, a house can go up, especially in the Bay Area, but I would not consider your primary home to be the real estate chunk that I specified, because you're not getting anything out of it. When you're 65 years old and the property has gone from $1 million to $3 million, you can't do anything with that unless you sell it, right? And the asset allocation portion where I specified the rental income, that's more for providing cash flow, because stocks don't provide you cash flow either, right? And so, yes, especially in the Bay Area, things can appreciate, but I would really encourage you that when you're buying a home to not consider it as an investment. If it does better, it's great, but it's for the purpose of living in the house, right? That's the way I would fundamentally think about it. In terms of like options of where to, like how to buy or whatever, there's many like conventional Islamic mortgage companies like UIF, Guidance, and Devon. I have a loan with UIF myself. And there's some partnership models, Amin Housing, which has existed in the Bay Area since 1980s. And then I'm actually associated with a new company started called NIA that's doing very similar to Amin Housing, but at scale nationally. Another thing which I really recommend to people, I only have a couple more slides, then I'll show you guys the one pager and then we can have questions. The other thing I really recommend to people is to not wait on estate planning. So the best thing to do is to create a living trust. It probably costs like maybe like $5,000. There's a few like attorneys in the Bay Area that can do it for you. And basically what you do is whatever assets that you have, you put it in the living trust. That way that if you die, you don't have to, your family doesn't basically have to go to probate court and deal with all that stuff. They just, all your assets basically live in the living trust, and how it's distributed is basically defined in the will, right? And you need to be very careful here, because the Islamic rules on the proceeds of estate are generally like very, very strict. Like you have maybe about 20 to 30% of optionality of what you can choose from. Everything else is pretty much set in stone. of how it should be basically distributed. Okay, so quick point on charity and zakat. Like a lot of us, I'm sure, work in tech, and the problem is that you might be compensated by your salary. Part of your salary you might be compensated by your company's stock price, and what ends up happening is that people have like, I don't know. Let's say you work at Amazon, you end up having that's like your largest stock portfolio position. And then what happens is that you have too much of that. You're not diversified, and you have too much like Amazon stock versus any of your other stocks. So then people always get into this dilemma of like, well, what should I do? Should I sell the Amazon stock? Then I'll have to pay gains on it and stuff like that. The easiest thing I recommend people to do is use something called like a donor advised fund. It just makes the process super easy to be able to donate things besides cash, like stocks, crypto, whatever that you want. So what I recommend to people is like, if you have an over concentrated of a particular position, whether it's like Bitcoin or a particular stock, the way to decrease that position, one way would be to sell, realize those gains, right? The second way is to donate some of those stocks instead of cash. So what I basically do is like, if I have a concentrated position of something, I will donate a few shares to Charity Vest. Charity Vest is a company, it's like a donor advised fund. They do it for free. I donated to Charity Vest, and then whenever I want, I have basically a monthly schedule basically that I send to a few charities, right? Or if I don't want to follow a monthly schedule, I can just donate from that. It's almost like a bank account. You can donate from that bank account. The advantage of using like one thing, like a donor advised fund or Charity Vest, is that you get one tax receipt at the end of the year. You're not waiting on anybody to send you a receipt. So I just see that I donated like whatever, $10,000 basically every year, and they make it super streamlined with stock donations as well. Unfortunately, like our community organizations are not as equipped to handle all the things kind of that you need from a tax basis for when you're donating stock. And so that's why I kind of recommend people to use Charity Vest. The key is, especially if you work in tech, you probably have a very concentrated position of your employer or your previous employer, and you need to be conscious about that, and the way to bring that concentration down in the most tax effective way is to basically donate that stock. That's kind of the summary. There's like lots of like crazy books that you can read when it comes to investing, and the two that I really recommend are, one is called like The Psychology of Money by Morgan Housel, and the second one is, it's a horrible name, but it's like I Will Teach You to Be Rich. And this guy actually, if you don't like reading, this guy actually has a Netflix show too, which is pretty good. The thing that you'll realize once you read both these books is it has very little to do with actual investing, and it has to do with like behavioral decisions that you need, how you need to adjust your behavior when it comes to investing. So that's all I had for the deck. I'm going to show you the one pager that I have, and then happy to answer questions because that's often where the most interesting stuff is. So this is the website. It's called Muslim.finance. Lots of it is like a repeat of what I said, but you can see like there's a section on keys to financial peace. We reviewed that. We reviewed like how to save subconsciously. The keys to investing we also reviewed. Lots of people have questions about like investing in stock market, and I don't like to tell people what specifically to buy, but I generally recommend that you buy indexes or something like Amana mutual fund. So you can typically buy like Amana Growth or Amana Income. They've done like, I don't know, over the last 15 to 20 years, they've probably done around like 15% annualized returns, which is fantastic. QQQ is only like 60. So if you want to like check whether a particular stock is compliant or not, there's a company that I'm invested in called Zoya, which basically tells you on a particular stock or index like how compliant it is. If you're investing in an index, it has to be less than 5% of the stocks in there less than 5% can be non-compliant. 95% needs to be compliant. So QQQ is like a famous like index. It's basically a tech-weighted index. Tech-weighted basically means that you might have heard like Apple, Amazon, Google, these are all very large companies in terms of market cap. Their market cap is in the trillions of dollars. So the larger the company, the more weight it has in the index. So, Apple, I don't remember what the weight is, but Apple has like, I think like a 12% weight. Microsoft has like a 12% weight, etc. So the point is that the largest companies have a larger weight, basically. But QQQ has, I would say, I think it's about like 70% compliant. So if you do want, it would not be compliant of you to buy that on your own. So what I do is I publish annually a filter of QQQ on this website that you can see. Alternatively, there's a new index or new one that I came across, which is called XLK, which is very similar to QQQ, but it's 95% compliant, like plus or minus like 1%. So you can just buy that like in your brokerage account, basically. But the key thing here is that, and it depends on what type of brokerage account that you have, but the key thing that I would really, really recommend is you automate it. Just keep buying some X dollar, define some budget that you want to have for your investing, and just literally keep buying it every week. That's what I literally do. For 401k, lots of people have questions of like what's compliant or not. I generally recommend the most tech-weighted index will probably be the most compliant. And it generally will be the highest performing thing as well. If you have Fidelity, there's something called brokerage link, which basically means that you can kind of buy your own, you can choose your own investments from there. So if your company's 401k has Fidelity, there's some like instructions on the website for how to do that. Then you can buy like Amana or whatever you want from there. I think I talked about balancing investments. We talked about a little bit 401k. There's a section a little bit on ESA, educational savings account. They are tax advantage. There's a few links for kind of what are the options to buy a home. Some zakat calculators. There's some tools where you don't need kind of like a lawyer and they can handle the estate planning for you. I haven't used any of them, but my brother used ShariaWiz, I think. And then if you have student loans, I serve on the board of a nonprofit called the Continuous Charity, where we provide interest-free student loans and we also refinance student loans. So if you are in that position, check out Continuous Charity. And I think the applications are March or April. Yeah, so you can go to that guide to see more information, and I guess we can open it up for questions.
We can. Thank you so much, Brother Zafir. So I know you a little bit, Brother Zafir. Very insightful talk. Maybe before we jump into Q&A, you can tell us a little bit about yourself, because I know you started very young investing, and what got you into the market? What keeps you inside?
Sure. So I was born and raised in the Bay Area. I grew up in like Saratoga, Cupertino area. I went to school at UC Irvine, and then I spent 6.5 years at Amazon. And I started in maybe investing since I was 16. And I used to have this website called Underage Investor where I used to analyze stocks and publish them. And then since then I've been involved, my father and I run a series of real estate funds called Cordoba Funds. And its newest project is called NIA, which is very similar to Amin Housing, but it's trying to take Amin Housing and take it kind of nationally. So it provides a debt-free alternative to buying homes. And then in addition to that, I've served on a number of endowment boards with IMRC, which is Indian Muslim Relief and Charities. They have about a $35 million endowment. And most recently, we've started working on standardizing best practices around endowments as well. So that's kind of my background or so.
Thank you, thank you. All right, so we have a little bit of time for Q&A, inshallah. Just raise your hand. We'll do one brother, one sister, and we'll ping pong back and forth.
Assalamu alaikum. Have you heard of Wahid app?
Yeah.
So what do you think of that? I just heard about it.
I think, HLAL, the index that I showed before, it's actually sponsored by Wahid. So Wahid, they call it basically, it's called a robo-advisor. And there's non-Islamic robo. I'm sorry. Um, they use like an algorithm to base Apex. That might be like the sponsor of the ETF. But basically, what a robo advisor does is it just says like, you know, this allocation thing that I was showing you guys before. They'll basically based off of like your age or whatever, they'll say like if you have $100 in your portfolio, they'll say like 90% goes to stocks, 10% goes to bonds, and instead of bonds, they'll invest it in sukuk. So personally, and then if you look at this chart that I showed, they'll mostly invest in like HLAL, and HLAL has not done as well as other indexes, partly because HLAL is just like a blanket filter of all basically like stocks, and then they just taken like whatever ones are compliant from there. I think you'll get better performance if you have a tech weighted index basically, and that's what XLK and QQQ are. Especially in like 401ks and for people that need to be a little bit more conservative on their age, Amana is honestly a great option. It's still tech weighted, but not as tech weighted as XOK and QQQ. And then within Amana, you have Amana Growth and Amana Income. Amana Growth is even more focused on tech rather than Amana Income. Amana Growth performs slightly better, but honestly, Amana Income is great too. So what I sometimes recommend to people is like 50% in XOK, 25% Amana Growth, 25% in Amana Income. And I would personally not buy any of these sukuk options. I don't think that they're like the most, it's very murky in terms of compliance, and it's just not like a good investment. So you can pretty much achieve everything that you want to achieve without Wahed. I don't know if they have some reoccurring component. That part might be useful, but otherwise you can just kind of do it yourself.
Okay, sisters, let's take a question from your side. Inshallah, just raise your hand. I'll come to you with the mic. MashaAllah. There we go.
If you can expand a little more on the 10,000 donation LLC, I don't know which one you talked about, because I did heard that if you're getting a lot of return on any investment, if you're getting a lot of ROI on any investment, there is another way I heard that you can roll that into a non-profit organization, like if you open a non-profit organization LLC and then donate that 10,000, that way you can secure more, like you will not end up paying more taxes. So, but if you have any information on that, if you can expand, that would be great.
Yeah, so it's not really about opening like a nonprofit or LLC, but I had I think, where did it go? This portion. So anytime you have a gain, right? Whether it's like you sell a stock or you have some dividends, basically, the key is that you can basically wash it off with donations. That's like the high level principle, right? Whether you have rental income or capital gains. And so what I recommend people to do is that if they have a concentration of a particular stock position, like you work at Amazon, for example, and you have a lot of Amazon stock because that's partly how they compensate you, to basically deconcentrate that by donating Amazon stock. And Charity Vest just makes it easy to basically do that. That's basically kind of the main way. For most people, it's actually not going to matter because there's like a standard deduction of, I forgot what it is, I think it's like $26,000 or something like that you get automatically off of your taxes. So typically if your donations are less than that, then this portion does not really matter as much, but it's really a way for you to just reduce your concentrated positions.
Just raise your hand and I'll come over to you. So could you go over some of the terminology that you talked about? What's an index fund? What's a mutual fund? What's a stock fund?
So a mutual fund is an actively managed basket of stocks. So you might have heard of like Amana mutual funds. that's operated by a company called Saturna Capital, where they're actively choosing particular stocks. An index fund is, think of it as like it's just a certain set of the stock market, right? So QQQ is basically like the top 100 stocks in the Nasdaq, like I forgot what it's called, the stocks that are basically listed on the Nasdaq. Then you have XLK, which is basically like tech companies that are in the S&P 500, right? So the key thing about an index is that it's automatically adjusting over time. So let's say Apple becomes from like $1 trillion to $2 trillion. So their weight in the index might increase from like 5 to 10%, for example, right? So it's then if you buy XLK again, you're automatically buying 10% instead of 5%. So it's automatically kind of helping you make decisions of what to buy instead of you having to actively manage it, right? So best thing to do again is to buy an index, or like Amana has done great, and it's a great option as well.
Okay. Any questions? Sisters? One more thing I was curious about, Brother Safir, if you could talk about the conventional Islamic mortgages, like the UIF, and then how does that compare or contrast with the partnership models that you talked about, NIA and Amin Housing?
Yeah, so I think I like to tell people that, you know, the UIF and the Divan and the guidance, they follow, they follow like the legal version of the Islamic law, but substance-wise, they could be lacking kind of in the Islamic spirit. What I mean by that is, like, if you look at the principles of Islamic finance, the main principles are you have to share equally in the profit and the loss. There's no such thing as a guaranteed return, right? So if you think about who's on the other side of these mortgages, right? Most of the time they're selling to Freddie Mae, Fannie Mac, and it's basically a guaranteed return that those people get for the mortgage. That fundamentally is un-Islamic, right? No matter of what the contract is kind of on the other side. And so the core principle of Islamic finance is you can participate in the gain, but you also have to participate in the risk of a loss. And that's what the partnership model is. So Amin Housing is one option, and NIA is a company that we started basically, where it's very simple. The person, let's say you're buying a $1 million house, the person puts 20% down, 200K. NIA puts down $800,000. And we share equally in the major expenses, we share equally in the taxes, we share equally in the insurance. And you can buy additional equity at whatever the market value of the house is. So let's say it goes from $1 million to 900K. You can buy additional equity beyond your 20% at that 900K value. Let's say the house goes to 1.1 million. You can buy additional equity in the home at 1.1 million, basically. And so it's a true partnership model, because if the home goes down and you sell the home at a loss, we have to realize that loss as well. No bank will ever do that for you. And because of that, we have to be very conscious about where areas that we invest in. If you go to a bank and you tell them that you want to buy in the swampland of Florida, they're not going to stop you, because they don't care. They're going to get 5% return on their investment. But as a partnership model with NIA or Amin Housing, they have to be very conscious about that. Right? So it's fundamentally, that's where kind of things break, if you will.
All right, I'll be right over to you, sister. Real quickly, on where do they get the capital from then for like conventional Islamic mortgages? Where are they going to get that capital?
The conventional mortgages like UIF, Divan Bank, they sell to government-sponsored entities like Fannie Mae, Freddie Mac. UIF and guidance have started, I think UIF only has started to come out with something called time deposit accounts, which we're trying to supplement their things from. But for NIA and Amin Housing, all that capital is from the community, basically, right? So that's, again, the Islamic spirit behind it, is that an individual, like someone might be paying rent or something like that, but someone else is basically benefiting from that. It's not just going into something that someone can buy at a guaranteed rate.
I want to find out, based on your 10 plus years of experience, and I see that you have invested in indexes, you have invested in stocks, Bitcoin, real estate. So if you rate which one is the most conservative and more profitable, if like from top to bottom, like can you just give us a gist of it?
Yeah. So this kind of table has a pretty good, the best returns that you're generally going to get are going to be in like a tech weighted index, right? Like the XLK or the QQQ. I put 7 to 10% here on average, but realistically you'll get somewhere in the range, like at least in the last 10 to 15 years, it's been closer to 15%. So especially if you're young, that's where like you should have majority of your money. The real estate component, if it's unlevered, you're typically going to get like 6 to 9% on like cash flow, right? Like rental income coming in. And you know, it can be basically a small amount in the beginning, but then over time you want to increase your allocation towards that. And then you can have some amount of alternatives like gold and crypto as well. It's basically just to hedge inflation, right? So you can buy GLD ETF, I think I mentioned that, and then or you can buy Bitcoin or IBIT index for Bitcoin, and then some amount of cash. The thing to do basically is to not chase returns. It's to strategically decide whatever portion that you decide. Let's say stocks should be 80% and real estate should be 25%. Whatever it is, just make sure that you're actually abiding by those guidelines rather than someone approaches you for an opportunity or you see a stock price that's down and you want to invest in it. Sticking to these guidelines will solve 99% of the kind of your investment performance, if you will.
A question from a brother here.
I was wondering, on 401ks that have only certain investment options, what do you recommend?
So
For you know, since they're not compliant.
yeah. So oftentimes what you want to definitely stay away from is the target funds because they'll often have some bond component in them. You want to look for like generally the ones that are tech weighted. So sometimes depending on the 401k you might be able to see that. The tech weighted ones will generally be the most compliant option. Now there's different like rules around this. I'm not the right person to get into like whether you can invest in it or not. But now Zoya, it's an app that you can look up. It has things at an index level. So it can tell you if like from an index perspective, whether it's 60% or 90% compliant. The general rule is that you need to be around 95% compliance basically. That's what I was recommending. And then if you have Fidelity, then you can explore something called Brokerage Link that will allow you to actually customize and choose which investments that you have. Those are kind of like the two options. And if it's not as compliant, then you know you can still open up like an IRA account, for example, and other things like that to use that potentially. Also, a big advantage is if you are under I don't remember the exact number. I think it's 160K. You can invest in something called a Roth IRA account, which is you're putting post-tax dollars into that account, and then all of your gains are tax-free. Versus in a traditional 401k, you're putting pre-tax dollars, and then you have to pay basically on the gains. So especially when you're young, if you can put like $5,000, $10,000 there, and then just let it grow over the course of 30, 40 years, you'll be at a huge advantage.
Assalamu alaikum. Quick question. I was wondering, do you have any advice if somebody is just a regular W-2 earner and wants to lower their tax liability? Usually most people rely on their mortgage with interest and all that and writing that off. But like, if you're trying to avoid that route, what are some other ways that just a W-2 earner can lower their tax liability besides investing 401k?
There's
like
not
any
much,
creative ways?
There's not much donating, but then you have a standard write-off of 24,000. Some people this is not exactly writing off your W-2 income, but like if you invest in real estate, there's something called depreciation, which basically means that if you buy a house and that house, like I don't know, gives you $5,000 of income, you can have a paper tax expense which actually lowers that actual income that you have to pay taxes on. And that's called depreciation. But you have to realize it at the end when you sell it. But lots of people buy real estate because of kind of that reason, where you don't have to pay taxes on all of the income that you're getting. So that's one potential option. Other than that, unfortunately, though, it's very difficult to do in reality.
Okay.
As a business owner with a few employees, let's say 2 to 7 or 8 employees, it's a corporation, but you still get a W-2, and you want to invest in Amana Mutual Fund. So what is the option or the advice you would give to use as an investment as an individual, or use an investment, paying from the corporation, pre-tax or post-tax? What is the best way?
Yeah, there's pretty, it depends what type of retirement plan you've set up, but the problem with doing it from a corporation perspective is that there's certain rules that you can't just do it for one employee and not for others. It depends on the retirement plan. So the better thing to do is have like a W-2 plan and have some retirement portion there, and then just use sometimes you can open up something called like a SEP IRA, which can be independent, and then you can put more money into there. People also do other things like you can contribute post-tax dollars into an IRA, and then they'll roll that into something called like a mega backdoor Roth IRA, for example. So that's kind of what I would recommend. Like, you can, just because you can't invest in like a retirement account or put more, I would say just don't let that stop you from investing, right? Because it's not really tax-free. You're just going to pay taxes on that at the end. You're just postponing the taxes rather than doing it now.
Okay, we have some viewers online that they're asking about college savings for their kids. What's the best way to get college savings going for your young kids?
So there's something called the ESA account. If you're under, I think 216K, there's a section on this, on here. Yeah, if you're under 220K, you can qualify for putting $2,000 down. And I think Amana has an option for an ESA account. Otherwise, if you're above that, there's not really a lot of options. The best thing to do is create a custodial account and then use that.
Okay, any questions? We have questions online, we can take those. Okay, we'll take some online questions. What do you think about buying gold, Bitcoin, and ETFs? And what is ETFs?
ETFs is exchange traded funds. Again, it's like an index, basically it's the same thing. Gold and Bitcoin I would use as a hedge. We need it less here in the US because we don't have that much inflation risk compared to other countries. But I would put between 1% and 5% of my portfolio to something like gold or Bitcoin.
Got it. For the average investor who's new to all this, do you recommend a individual stocks or do a brokerage account like with Vanguard?
I recommend creating a brokerage account wherever you bank. So if you use Bank of America, they have Merrill Edge. Chase now, they have brokerage accounts as well. And if you're new, just buy Amana or buy like an index fund. That's the simplest thing to basically do, and it will be the best performing thing too.
Okay, Jazakallah khair. We're pushing against Isha prayer. May Allah bless you. If you have any questions for Brother Safir, can you stick around? Inshallah. You can stick around. We'll do Azan now. May Allah bless you. Thank you for the work you do. And please check out muslim.finance, and you can also get a hold of Brother Safir at that link. Jazakallah khair.
So this is the agenda. We have current statistics. I'll share some interesting things that I look at from an economic perspective. I usually read what's going on in the economy with people's household incomes, spending, things like that. There's a little bit of a pop quiz. There's 5 questions. See if you guys know the answers to those. I wanted to show you a graph about actually a philosopher who talks about need versus want and aligning our brains before we get into how to establish a budget. Then there's some interesting statistics about the psychology of cash versus credit that I've been observing that I wanted to share. We'll talk about financial goals, leadership, and health index, and then how to build a family budget and stay on track. So inshallah, we'll begin soon. So the current statistics show that 60% of Americans don't families, Americans don't have a budget, nor do they track their spending on a regular basis. This is a pretty shocking statistic to me. 43% of Americans have anxiety about not having an emergency fund for unanticipated expenses. These are current stats on AOL, CNN Money. Anywhere you go, you can find a lot of these different polls and stats. 90% of families that earn $100,000 a year report that they could not go to the bank and give you $2,000 if they needed it as an emergency fund. And this is why we're actually doing this talk, because these are shocking statistics. 50% of divorce filings list that financial problems were a major root cause issue of the divorce, and it's the #1 listed cause of major disagreements for families that have filed divorce. Going on a little bit more, the #1 reason for middle-class families filing for bankruptcy, middle-class families, these are families that have jobs and probably possibly a little bit of savings, is, sorry, if I get behind, the #1 reason for middle-class families filing for bankruptcy is healthcare costs, unanticipated healthcare costs. $10,000, $12,000, you don't have it, have to file bankruptcy or get behind on credit cards. 37% of American families carry credit card debt from month to month. You just got killed. All right, I'll keep going. Americans are not taught financial literacy basics in schools. Only 17 states in America have a basic curriculum, and it's an elective. It's not required. So teenagers and high school kids are not being even taught the basics. All right, rebooting. More Americans aged 18 to 35 live at home with their parents than any other time since World War II. And that's because folks are getting out of school, having lots and lots of debt. If they don't find the appropriate job, they just cannot manage a budget and get out of school and live on their own. So families cannot get started if people are still living at home and worried about money, especially young unmarried people. So those are the basic statistics. I wanted to share a couple of econ graphs with you guys. We need to boot up the machine. So what does an economist do? So we look, essentially, the difference between a business graduate and an economist is economics. We look at the philosophy of money, spending. We look at the early philosophers like Adam Smith and Malthus and the Keynesian philosophy. Then we derive the theories. We spend a lot of time looking at statistics and econometrics. And then we look at analysis and we do research. So it's almost like a doctor who does research versus a doctor who lives with patients. So an economic person, an economist versus a business person, those are kind of the differences. So I look at a lot of technical graphs. I'm going to show you a couple things that I see when I read the paper. I don't really need to read the headlines. I look at what's going on in the economy, kind of analyzing what's been going on. So this first graph here shows the month-to-month changes in savings rate, the red line, and you can see that savings rates actually go up and go down. And the reason why savings rates go up and go down is because the cost of the goods you buy, the bundle, we call that the consumer bundle, your organic milk, your gasoline, your tolls, your electricity costs, those things fluctuate. And they fluctuate at a pretty rapid rate, and those things affect your income. So now we use the term real disposable income. Not just income, but real disposable income. And disposable income is what you have left after you pay all your bills. So real disposable income in this economy that is booming, everybody's looking at the Dow Jones and thinks everything's going great, but really there's several problems going on. If you look at the red graph, at the early part, the savings rate is only 5%. And then in 2017, it dips down. At one point, it's actually 0. There's no red line. But all through that time, spending continues. So you're seeing Americans basically have very little savings. And now that the stock market is booming in 2017, we actually have the exact opposite of what we think. And what we think is everybody's getting wealthy. And what's really happening is people are getting behind. The blue line must be below the red line, and that's not happening. So this is a very interesting statistic, and these are the kinds of things that I look at. Don't be fooled by the news. The second line shows that, the black line shows that savings continues to drop. So at the very end of the black line on the right, you're seeing that savings rate is 2%. You look at the far left top graph, I'll point it out. The black line is at 2%. And the purple line shows that people are getting wealthier and wealthier. But the folks that are saving less and less are not on the blue line. They are not saving. The economy is not helping them. So if you say, oh, the economy is great, but you're not saving anything, you're getting behind, someone else is getting better, richer. So the rich are getting richer, and most people are saving less and getting poorer. So these are kind of economic stats. If you look at the write-ups at the top, you'll see the same thing. So here's a pop quiz. What are the 3 worst things you can do with your money? Number 1, you have...
I'm guessing not paying your credit card in full, like for the time that's due rather than accumulate interest.
Yeah, that's the month-to-month balance, but that's not... I'm talking about major things you can do.
I'm guessing like stop buying coffee and lunch outside.
Okay. The third worst thing you can do with your money is going out to expensive restaurants. Food is food, and it ends up in the same place. Okay? Now, the second worst thing you can do with your money is buy a new car. The second you drive it off the lot, you are behind. You've paid taxes, your loan is higher than its value. You now have a liability that is greater than its value. The worst thing you can do with your money is when you have a house, buy another house and change houses. If you look at the 3% that you pay your real estate agent and the 3% the other guy gets, and you look at the change in value of buying an expensive house and the tax burden on it, it is shocking. You have to really do the true math. Okay? You have to do the true math. Okay? If you buy a $500,000 house and you turn around and buy a $700,000 house, your expenses could double. You don't realize they're going to double, but they can double because of your tax burden. And the amount of, you've lost $80,000, $90,000 right there. If you put that in the bank, if you put that in stocks that are halal, inshallah, halal stocks, we're not talking about bonds, you could do a lot better. That's a lot of money you've given up. Did I go back? Oh, so how long does it take to pay off a 10% credit card with an $8,000 balance if you just make the minimum payments? Anybody want to guess? The number's not even there. It's 32 years. Okay, I actually saw this as an advertisement in a bank. They're that crazy that they're thinking that this is 32 years is advertising. Yeah, jump on, borrow $8,000 and keep paying off for 30. That's one vacation you pay off for 32 years. It's crazy. You have to know the math of how those minimum payments work. When you take a 30-year mortgage on a $700,000 house, how many years does it take for you to own half your house? Does anybody know?
Around 30 years probably.
No. So 30 years, you've paid it off, you own it.
Okay, so 15 probably.
22 full years to pay off. So on the year 23, you own half the house. So the first 22 years, all you've done mostly is pay debt, pay interest. Okay, so it's an interest game. The bank gets fed first before your principal gets accumulated. The next thing is the average family carries blank in rolling credit card debt, uncollateralized credit card debt. That's called uncollateralized.
I would say 12K.
16K, the average U.S. family. Okay. If you have $100 earning 10% interest for 5 years, just a math problem, I'm not advocating interest. After 5 years, does your balance equal more or less than 150 or equal to 150? Mathematicians, engineers? Answer is more than 150, right? Because the first year you get 100, you get 10% on 100, then you've got 110. Then you get interest on the 110, so you end up with about 160, okay? You have to know that this math works for you because you can accumulate more, or it works against you because your debt is accumulating faster. So either way, okay, so this is now shifting gears a little bit. This pyramid was brought to light by Alexander Maslow. He's a philosopher. In 1943, he created this thing called the Maslow's hierarchy of human needs. And this is a very important graph because it should align with your priorities. It should tell you what's important and what's not when you go shopping. The first thing you need to do is meet your physiological needs. Warmth, shelter, clothing, fire, wood, energy, okay? What happens to a person when they're in the forest? They spend most of their time looking for food and looking for warmth. The next thing they do is safety needs. The next thing they do is your safety, when you've got your physical needs met and you've got some safety, then you look for love and belonging, community. After that, you look for self-esteem, and after that, you look for self-actualization. So these are very important. So what the marketing industry wants you to do is forget about the safety needs, the long-term planning, the health, and the property. Line number 2, and go out and buy things like fancy cars. So, these are the things that the marketing industry specializes in getting you to do. They're getting you to not follow this basic pyramid. That's why a lot of people don't have any savings, but then they have a fancy car. They just go out and lease a car. They're driving a brand new Audi A3. You don't have any money for your safety needs. You haven't secured the pyramid. It's upside down pyramid. So what happens? So this is a very important graph. I actually have this graph as a picture on my phone. So it reminds me what is important. So it's very important for you guys to become familiar. Anytime, just type in Google Maslow's hierarchy of needs. It's something you should look at, and this is how you build a budget. So we'll get to that eventually, inshallah. So now we're moving into psychology. So the psychology of cash versus credit. So I wanted to show you some interesting statistics about what happens in our brains when we take cash away from us and start using plastic. So there's a vending machine, a national vending machine company that says that their sales jumped up by 178% as soon as they change their cash machines to card machines. People will just spend more. Okay? And that's a shocking number. The American Express Gold Card came out in 1982, and people were so proud of it because it made them feel special over the green card that they were willing to have a higher balance and willing to pay higher interest rates. American Express discovered that by accident. They were just trying to change the color of their card, and they realized they could change the color of the card and make it and charge more. Studies show that everyone spends at least, the most stringent, strict person will spend between 12 and 18% more when they go to the store with cash versus credit. It's statistically proven. They've done brain scan experiments on people, and they've plugged them into brain machines while they go and shop. And if they have cash and they pay for things, they actually have a pain center that's activated in the brain. And if those same people go with the brain scan and they use a credit card, nothing happens. So it neutralizes you value cash. Look at cash. If I give cash, if I buy a shirt and I give cash, something less is in my wallet. If I buy a shirt and I give a credit card, I get the credit card back and the shirt. You see that? There's something going on. We don't know what it is, but innately it's very, very psychologically driven. Disney hotels, casinos, cruises, if you've ever been to any of those places, they don't want you to use cash. The second you enter the door, they want you to give your credit card on a tab, and your Coke and your meals, everything, your stores, everything is you just put it on your room. They just put it on your room card. Then later on you get the bill, you're like, whoa, what happened? I did that at a cruise when I went with my kids. We were paying $2.50 for a Coke. Normally on the street we would pay 75 cents. So they overcharge for everything, you don't even know. And then you get the bill later. The CEO of Visa said that we are at war with cash as it is a direct competitor to our business. A, they charge Target, and B, they charge you. They're charging on money on both ends for you to use your money. It's really a sick game. They're the richest people in the world. These companies are at the top of the S&P 500. So,
what do you mean when they charge you?
Well, they charge the vendor who's selling.
Yeah.
So if I'm a store and I'm using Visa, they pay a percentage for Visa to use, for them to use Visa, and you pay interest on what you use. So both the vendor and the buyer are getting charged. Yeah.
Just wanted to comment. So now I see vendors wanting to avoid the 3%. So they'll have a note saying we'll be charging you 3% if you use your credit card. I don't know if that's legal, but
they
I
can.
see that.
As long as they tell you, sure. They just charge you 3% more, right? So this is very important that we realize what's going on. And you know what they do? It's financial convenience. It's a financial insurance. It gives you flexibility, So you don't have to go to You don't have to go to the teller machine and get your money. No, you want to go to the teller machine and get your money because then you can budget, right? That inconvenience helps you. It doesn't harm you. They want you to think it helps you. Okay, so the bottom is not showing up, but basically it says cash is what you value psychologically. You feel the pinch when you give it up.
Can I ask a question here or question will later?
Sure. How are we doing on time?
Close to this kind of topic of credit. So the way these things are, I mean, we've been told, when you use credit card or things, your credit score goes up because you're paying and all that stuff.
Right.
So, but everything is credit driven, right? You go and buy a house or car or, these. So how does that kind of relate to that when you go and take or maybe borrow money? Because your credit score impacts, right?
That's sorry to cut you off, that's just a distraction.
So yeah.
It's not hard for a high schooler who has no credit history to go get credit. It's not hard. So why are they getting you caught up and distracted in this score game? Because you're thinking about the score and not the true cost. Live the life you want, not the life they want. That's the gist of this talk. Live the life you want, not the life they want. Right?
Just
I'm sorry.
a quick add to that. So it's interesting that you mentioned that because actually I had a score of 750. I did try to go to the bank and get a loan, but my income didn't match the sort of even though the score was high. So I realized that later as a lesson of what you just said. It's just kind of like a gimmick. Because if your income doesn't match or even your credit score is super high, they won't give you a loan. So it's just why should I cover my credit score?
They're doing you a favor if they don't give you a loan. You go get cash. You'll buy it. In the old days, you used to have 3 choices. Buy it on cash, buy it on installment, or buy it on credit card. Very few people carried credit cards. And you bought it on installment. If you didn't have the money, you take it home when you've paid for it. A layaway. They call it layaway. So there's things in this society that have to happen very quickly. So let me finish this thought. So you can't read it, but you feel the pinch when you give it up. Credit cards remove you from the feedback mechanism of pain. Using cash is the only surefire way to budget. Right? It's in your hands. You see it decline. Right? If you're really mathematically inclined and you're really, really strict, you can budget with a credit card. But you have to walk around with a calculator every time and keep a slip. You have to do that. There's no other way you're going to do that. You have to be extremely disciplined. And you're still going to spend 12 to 18% more. It's just proven. So recalibrate your thinking. So the whole point of that previous slide was to try to give you a real picture of what's going on. And the questions are good because you get distracted. A credit card is an instant debt generation device. That's what it really is. You're just taking debt. And you have an accountability lag. It doesn't show you what you've done for a month. And you don't know what the calculation is unless you're like a mathematician. Can you walk around and keep track of all the interest that's being accrued on your credit card while you're shopping in a mall? No. To do that for a week, you won't know what the number is. You won't be able to budget. So see the credit card for what it really is. A debit card is something different. We're talking about credit cards. Need versus want. So we talked about Maslow's hierarchy of needs. We really need to understand. You're bombarded with 10,000 messages a day, which are scientifically proven and designed to make you want. Right? Sheikh Hamza said he studied the media, and I listened to a talk of, he said, before in the 1920s, the Sears catalog told you how something was made and how long it lasted. Then they got more sophisticated. They started telling you, oh, other wives have it, other husbands have it. So it was like keeping up with the Joneses. And then media got more savvy, and now it's about emotion. I saw a Nissan ad or a Volkswagen ad during the Super Bowl where the kid's wearing a Darth Vader mask and he's pushing this on the car, and the guy has a starter in his wallet and he starts the car because the kid's doing the force field in the car. It makes the kid happy. So they're now, the advertising is playing with your emotions. It's getting more and more sophisticated, right? So this talk is based on Dave Ramsey. I don't know if you guys have heard of Dave Ramsey. He's been on the Oprah show. He's kind of like the Dr. Phil of money. And you should familiarize yourself with him. Most of the principles are here. My understanding here was to introduce you to Dave Ramsey, but because we're short on time, I'm not going to click on the link. But he says in this talk, don't join the cult of Apple. It's great if you have money, buy an iPhone. but they want you to join a cult. They want you to think that you're better than a Samsung person. You're not. A Google person is different from an Apple person. We're all the same. Forget it. This is a cult. They want you to join cults and feel like you're in these cults. So we're going to talk now, the last 3 bullets are really examine your feelings about money. What may have influenced you? So for instance, I came from an immigrant family, and my father has a horrible story about how the second he arrived in America, he had to spend half his money on a coat because it was freezing outside and he lost his jacket. That story sticks with me. And our first car that he bought was from this Turkish guy in New York. It didn't have a back seat. So he bought a cheap car, a used car, and we had to go to the junkyard and get a seat because my father had to budget. So I grew up in a budgeting family. Some people grew up in a family where they were very wealthy. Money was no object. They had fun. They went on vacations, and the parents never bothered. Some people grew up in tribulation. They were poor or they got kicked out of their homes. These things affect you, okay? So please examine where your feelings about money come from and what your feelings about money really are. And then that's the first step, okay? Explore what money is and what it means to you. Does it make you happy? I had a college roommate who was in debt, and the second he made a few bucks, he would just go buy himself a treat. I was sitting there going, what the heck is going on? But I realized for him, he came from a poor family, and he was always going to be poor. He had enough school debt, so he didn't care. He needed to be happy. He gave himself a treat. When spring break happened, he went on vacation. He didn't think twice. When spring break happened, I went and lived at my cousin's house and ate their food. You know, I mean, we had different philosophies and we were really good friends, you know. Understand what makes you happy. Again, they want you to go to the mall and buy to be happy, right? So let's fix that. And then the next thing you need to do is whatever your feelings are, you need to share them with a spouse and your partner, okay? How many people actually have a premarital talk about money? How many couples do that? It's very, very rare. You can go on the website and see 100 questions to ask about money, 100 questions to ask before you get married, 30 questions you need about money. It's all there. This is the summary right here. Career, talk about career and retirement. Are both the husband and wife going to work? Does she want a career? Okay, it's very important. Who's gonna pay the bills? Are you going to have joint accounts? Very, very important. I can tell you horror stories, personal horror stories of people I know. Debts, what are your current and future feelings about debt? What is your school loan situation? You know, do you want to spend $40,000 on a wedding? You know, that's a big question. Big ticket items, house and cars. Do you want to buy a house or you want to keep up with the Joneses and, oh, it's in this neighborhood, but that neighborhood's cool, so 5 years later we're going to buy a bigger house. This is just a starter home. That's what I hear. Oh, we're just buying a starter home. Yeah, because you're going to throw your money away and buy 3 more homes. Buy the home you want to grow in. Big ticket items, savings, investments, emergencies, and risk. Okay, this is the next category of questions you need to have with the potential spouse. Raising and educating kids, are they going to go to private school or public school? Or does the husband want the wife to stay home and homeschool and she wants a career? That's a big issue. Parent and sibling obligations. Some people send money back home. You don't know until you have these questions asked. How much money is going to go back home? Entertainment and vacations. What do you see as entertainment? Is it going to the park or is it going to Disneyland for a weekend and staying on their dime? You know, feeding Mickey. You know, so these are the premarital talk. I hope you all had them. One of the things I benefited from was my wife was in LA and I was in San Francisco when we got engaged. We spent a lot of time talking on the phone. And we didn't plan to do this, but you know, she's a very verbal person, and I actually checked the box. We actually talked about all these things. Just in general we did, but we got lucky. We're very, very lucky. Alhamdulillah. Okay, so now that you, as a couple, any company that's run, you know, has a board, and then they have a vision, then they have goals, then they have objectives, then they have execution and tasks, right? Every company, if you came to me and said, I want to work for a company, I said, I don't have a vision, I don't have goals, I don't have tasks, just invest in my company, you'd be out of here. But as a families, we do that all the time. We don't have goals, we don't have vision, we don't have strategy. we don't have execution, and we don't have agreement. That's really, really strange. And most families have to have this. And it's a difficult conversation because, where are you going to get if you don't have agreement? And one person, the sunnah is you have shura, you talk about something, you take consultation, and then there's an amir. And that person is responsible. So in your family, you have to have a CFO. And that CFO should not be treated like the bad guy. That CFO should be, yes, you're the CFO, we're all on track, we know what to do. We do it at work. I can't hire 2 more people if I want to. I have to listen to my boss. She's managing the budget. But somehow we think at home we can call each other, you're cheap and you're stingy, you won't get your way. We need to be on track. Okay? So, as a couple, do you understand the feelings about career? Do you have a designated leader who's the Amir and the family CEO? What are your feelings and comfort level with debt? So each person may have a very different view of debt. One person may be super, super religious and conservative and say, we cannot have any debt. I'll rent a house. The other person will say, oh, you know what? I looked on Chef Google and, loans are okay. We don't know, but you've got to figure that out. What is the budget and the consumption philosophy of the family? Have the 5th bullet's very important. Have the budgets and goals been discussed openly with the whole family? Don't treat your children like they don't know. Treat them with respect and talk to them and tell them, why are we spending? Why can't we buy this? Why can't we go to Disneyland yet? We'll go on vacation when I get my bonus. If they understand the whys, they will comply. If they don't understand the whys, they won't know and they won't comply. So treat them with respect and teach them about money as they're younger. They will surprise you with how much they know. I remember my father and mother talking about budgets, and my father would say no, and it would be okay. And he kept a strict budget. But then we were able to get things as we grew as a family, as his income grew. So that's the page. Put your family first. Like I said, live the life you need to live for your family, not the life they want you to live. So this is the financial health index. Hopefully everybody's got this 899 point score where the needle is. But again, I just wanted to give credit where credit is due. There's Dave Ramsey's financial coaching, and I got these images from a website. And I want to give credit to the Storehouse Financial Solutions. You can go there and look at these images, but they have a plan. They'll charge you money, but they'll get you on track. And I'm sharing the same information with you. So financial health scoring. If you look from the bottom up, look at these what this thing says about the family. So each family condition is described, and it says client does not. This is critical. Client does not meet any financial health standards, is financially unstable, and is under extreme financial stress. Those people are likely to get sick. Those people are likely to have strokes, and then they'll have healthcare costs. Okay, it says here consistent scores in this range are doubtful towards improvement and may be a candidate for bankruptcy. So these are the different places where a family can be, and you want to be improving. What is your state, and how do you get to the next station? Sheikh Hamza talked about this many years ago. In religion, it's like, where are you with Allah, and how can you get better? You always be improving. And this is the same situation. They just don't talk about religion, but the same situation. Where are you, and how can you take steps to get to the next level? Climb the ladder. Climb the ladder for yourself and to keep your family out of debt. It's a very dangerous situation. And inshallah, once you do a great job, you're now putting away money for your college, so your kids aren't debt-ridden when they go to college. You can help them out.
Can I ask a question regarding the score? Or should I wait?
Yeah, let's wait. Let's keep going through. I think the time here, we gotta actually stop for Isha, but then we can continue.
Yeah, we can come back after Isha.
Yeah, so I don't know if people are online, inshallah they are.
Yeah.
So building blocks of financial health. So I just threw this out there. This is from the RAP. You've got to map a plan, master the process, and measure. So any company, you have a board meeting, you have a budget, and then you have metrics, key performance indicators, KPIs, metrics. So the third part is it doesn't happen any day. It happens week to week as you're spending. So if you're going to have a budget and you're going to do this, it's a long process. Okay, but you can do it. It's very, very actually easy, and I've got the tools here to show you and show. Again, the first part you do, number 01, is cash flow management. How much are you spending on rent? How much are you spending on daily bills? Revenue versus costs on a monthly basis. And you've got to watch your grocery bills every week. It's a weekly job. Number 2, if you haven't done 01, 02, and 03, it goes back to that graph where I said, if you're on the black line, you're not on the blue line. If you're not a saver, you're not making investment income. Okay? So if you're not doing 01, 02, and 03, the economy's not helping you. You're just surviving, and you're teetering. Okay? Then there's 2 ways you can earn money, right? One is with your body, your mind, and your time. And the other way is passive income, your investments. So while you're sleeping, while Warren Buffett sleeps, he makes money. Okay? Trump passes a tax bill, he's $600,000 richer. He's got passive income. So if you're not doing 1, 2, and 3 and getting to 4, you don't have any passive income. And that's how you that's what you retire on. That's what you send your kids to college on. So inshallah we can get there. Okay. So the basics of a financial budget. This is from Dave Ramsey also. This is a budget breakdown of what your expectations should be. It's ranges. If you add up all the ranges, 25, 10, 5, the lower ones all the way down, it equals 85%. So if you can stick to that, you'll be saving 15%. But it's hard to do. I mean, organic milk is expensive. Gasoline just went up. So you have to understand real income versus accounting income. Yeah, you made $100,000, but gasoline just went up 50% and you commute 2 hours a day. You just became poorer. You got a $300 raise, but tolls went up, and gas went up, and BART went up. You just got poorer. You have to then go to this budget and lower the expenses that you pay. You have to find a way to do that. And you have to find a way to protect your family. So really think about not income, but real disposable income and what your savings rate is. The 80-20 rule, pay yourself 20% first, live on the 80%. If you can do that, you will succeed. Inshallah, you'll build it up. That takes discipline, especially in California and San Francisco. Okay, so for income statement, I don't want to use the fancy words, but this is an income statement. Think revenues versus costs. Okay, so this is how you build a budget. You can download lots of apps. If you go to Dave Ramsey, he has a budget app. You put in your numbers, and you can have an app every month and put your numbers in. So I took this from one of his apps, and you can have that. This is how you build an income statement. You do this every month, and be sure to also think about taxes and deductions. The first line there, a lot of people don't think about that. They think they make $100,000. No, they only make 70. And that's if you're doing a good job. Okay, so this is a good place to stop because Isha's up. We can go a couple more slides. Okay, think assets versus liability. So a lot of people say, well, should I lease a car or buy a car? Buying a car goes in the left column. Leasing a car goes in the right column. Assets over liabilities gives you net worth. So if you buy a $10,000 Corolla that's used with 40,000 miles on it, you can lower the insurance premium. Not only do you have a car you're paying off, but you pay cheaper insurance. The same monthly payment you go buy a $20,000 brand new Corolla, you pay $2,000 in tax, so it becomes $22,000. You have to pay the highest insurance premium because the bank owns it, you don't own it, and it actually costs you a third to half more, and it's a liability. You lease it. It's the same payment, right? The car will do the same payment. You can buy an old Corolla for $120 a month loan, or you can buy lease a new Corolla for $120 a month. But you have mileage restrictions, you don't own the asset, and you have to pay the higher insurance premium. So your real cost is much higher for leasing the car. And at the end of the day, if your used car, you pay it off in 4 years, you can drive it for another 6 years. Corollas last forever, okay? It doesn't look cool, but your bank looks cool. You're not in critical, you're not in red. You get up to the green. Then when you get up to the green, you get to the blue. And when your score is 899, go buy a Jaguar. Go buy a Lexus. That's how you do it. Okay, this is the method. So keep thinking. I always buy it, if I'm buying a durable good, I never impulse buy. I sleep on it for 3 nights. Okay, really, what psychologically things are going on in my brain before I go buy this car. Really. And I love BMWs, okay, but I won't buy a new one. I'm a car guy. I got car magazines for 30 years. I used to get a car magazine subscription. That's crazy. Now, like, what was that? I had motorcycles too. I was like, now I'm like, why was I driving a motorcycle? Just killing myself. You know, you just get into this weird psychology. Like, I want to be a motorcycle dude. And you're dead. You know? I got stolen. And I was like, I cried for a day, and then I realized, oh my God, it probably saved my life. Someone stole my bike. So this is Dave Ramsey's baby steps. So number one thing, get your monthly budget in order. And step 1, get $1,000 cash saved up. Just do it. Before you even pay your credit cards, just do the minimum payment, get $1,000 in the bank. Your car repairs, medical, deductible, make sure you have medical insurance if you can. Get a less sexy job, less high paying job with medical benefits. Because, young people get sick, not just old people. Number 2, baby step number 2, pay off debt. Okay? Pay off debt using, he calls it the debt snowball method. So pay off your smallest credit cards first. Just get rid of them, if the rates are comparable. But to me, pay off the credit cards that have the highest interest rate first. And awudu billah. I mean, this is not a religious talk. I'm not going to quote hadith. I'm not a scholar. Awudu billah, pay them off. And with the niyyah of paying them off and pleasing Allah. He will help. Allah will help you. Allah can do anything. I've seen I've heard many stories, first-hand stories of people who made tawbah and it happened for them. But if you're going to Sheikh Google and he's saying you can take loans, then you listen to who you want to listen to. Number 3, 3 to 6 months of expenses and savings. Okay, that's a lot of money for most people. People are paying $4,000 for a rented house here. $3,000 is nothing. That's a lot of money, but you gotta save it because you can be out of a job very quickly. There has not been a recession in America for the last 9 years. And in economics, we're taught there's this correcting cycle every 7 years. We're literally waiting for an economic earthquake. It is imminent, okay? And what's going on in the stock market, I don't know. I'm an economist and I don't know. So please just try to have a rainy day. This is called your rainy day fund. And I've been out of a job. There was a time when I lost my job between Thanksgiving and Christmas and I couldn't pay my mortgage, all right? That was a bad situation. Okay, it just, huh? 8 o'clock, okay. So we'll come back. There's only a few more slides. If you guys have to leave, thank you for attending. Inshallah, we'll pray Isha and then start again. Dave Ramsey he has a national syndicated radio, but he's also Christian, family values, conservative. One of the things I wanted you to notice is that he has charity in here. He's got a space for charity. So he budgets charity into his budget, and he recommends for all the Christian families to do that. Of course, we have zakat, we have sadaqah. So I forgot to mention that. I did want to definitely mention that about him. He's a great guy to listen to. So a personal story, I want to tell a personal story. I have a coworker whose brother made $80,000 and they lived in a very small town. And they had 3 kids, and him not knowing, his wife bought $80,000 worth of stuff, uncollateralized credit card debt. And he never knew it. So he came home one day and he saw these bills these bills going into the garbage can after years, and he realized, he opened it up, and then for some reason she would unplug the phone because the creditors were starting to call her because she couldn't make payments. She just went shopping sprees. And it turns out that she had spent $80,000 and he didn't know it. Okay, so they went to almost got a divorce. He had to figure out what to do. Turns out she was a child of divorce, and what her parents did was, in order to make her happy, they bought her stuff. And she was home alone. He was working long hours, overtime. He used to work in a PG&E gas line. He's a welder, so he used to be on shift all the time. So his 80,000 was like more like 100,000. But she was home alone with the kids and she needed to keep them happy, so she spent money and she didn't tell him. So they never had that talk. So this exact same story happened on Oprah. And Dave Ramsey was there. And Dave Ramsey and Oprah had a fight because Oprah wanted to make the show about the victim. And Dave Ramsey's argument was, the husband is not a victim. He's also at fault. And the reason he's at fault is something that I've already covered, which is they needed to have an understanding. Like, how can you be so blind that stuff's coming in the house, your kids are wearing Gap, your kids are wearing Banana Republic. I mean, something's gotta give, right? You've gotta open your eyes and notice, and you've gotta have a conversation. So A, he didn't have a conversation, bad on him. B, he didn't even notice what was going on. He just assumed she was buying according to the budget, and they never talked about the budget. So that's an interesting story. The other thing I have, we know personal story, the wife and the husband both work. They have kids, okay? The husband talks to his friends about nothing but stocks. Always investments, investments, investments. He wants to buy a Tesla, okay? The wife comes and complains about it because she wants, before the kids are older, to go on a family vacation. When she brings it up with him, he thinks it's a ridiculous idea because it'll throw their investments off and he won't be able to buy his Tesla. So they have a major disagreement. You know, the wife wants to do something with the family, with the kids. The husband, it's all about money. It's all about his goals. His friends are all his friends are about money. All his friends are about stocks. All his friends are about these toys. And that's what they're, sitting and complaining about this stuff because they don't have internal agreement. It's very, very sad to see. How is that marriage going to survive, right? When two people are on such different trajectories, okay? Another coworker of mine, she was divorced, had a daughter, she married this rich doctor, and he charges her rent. So he has a really nice house in Orinda that he bought land, he built. He only owed like $80,000 to his mom. So he's got this house paid for her, so he charges her rent because they should be equal partners, right? She came in with $15,000 of debt. He charges her rent and makes 3 times more than her. And then he has all the money and she's supposed to pay the expenses because she has 2 mouths to feed. It's her and her daughter. So he basically counts the money that her daughter is the food that she's eating. So this is going on in America. I mean, I'm in corporate America. These are people who work for me. These are their stories. This is real. I have another story of a wife who, every time she meets with her husband provides. They have many kids, 3, 4 kids. I don't want to say anything so that people know who I'm talking about. And they rent a house. Okay, he's doing a good job. But every time she meets with her friends, they're like, oh my God, you don't own here? You gotta own. You've gotta own. Why are you guys living in this neighborhood? And so every time she meets with her friends, she feels horrible. She feels like her husband is not providing for her, not doing her right. But at the same time, he's a good husband, he's working, they're paying rent. They have an internal agreement. For whatever reason, they didn't buy. But she feels horrible every time she meets and sits down with her friends. What kind of friends are people? They're making each other, not supporting each other, tearing each other down. But these are real stories. So I wanted to share a couple of those stories. The other thing I wanted to talk about is, be content. So if your husband brings home something and you have a $10,000 Corolla and it's used, it's got 100,000 miles and it's running, be content with that. He's doing what he's supposed to do. He's bringing it home. And if it's not in your risk and you're doing what you can, be content with it. Work on your own heart. Don't work on destroying him when he's doing something right for you. He's doing what he's supposed to be doing. The worst thing you can do is when someone's doing something right and you criticize it. Not when they're doing something wrong. A lot of people will criticize you when you're doing something right, but if you're criticizing somebody for doing something right, for standing up, being a man, providing for his family, working hard, you see him going out every day, and you tear him down for that, that's horrible. The same way if a wife cooks food and the husband like, this tastes like junk. She's doing what she's supposed to do. She's making effort. To do something right and then be criticized for it, that's how you tear people apart. And there's a lot of people who live under financial stress, and we want to make sure that we have healthy families, because healthy families build a solid building block for healthy communities, right? The first woman who went on Social Security, first woman who was paid the first dollar from Social Security, 42 working people supported her check. Now, Social Security, 6 people earn for every 1 person that gets a check. 42 to 1 was the ratio. That's a solid Social Security plan. That's what America had when Social Security started. Now there's 6 people who earn enough to pay for Social Security. It's upside down. How are we going to pay these obligations? The average American is $60,000 in debt because of our $20 trillion debt. The average taxpayer is $170,000 in debt because of our $20 trillion debt. That's what's going on in this country. So these are the economic foundations of things that are going on. These are the short stories I wanted to share to shed light on what's really going on. There's like a tsunami, it's an earthquake, and we need to get our families right, inshallah, and our couples together when they get married. So charity was in this slide, and then we talked about income statement, revenues and costs. We talked about balance sheet, assets versus liabilities. This is the baby steps. So we covered baby step 1, which is get $1,000 emergency fund. Number 2, pay off your debt in the snowball method. So highest interest rates first, right? Or smallest, if it's all equal, smallest credit cards first. Just pay it off, rip it up. Pay it off, rip it up. Okay. Number 3.
Sorry, like for number 2, does that, I guess that's like the big purchase, like the brand new cars or 2, like.
Yeah. If you've got one with $100 and one with $10,000, and they're both the same rate, pay that $100 one off, get it out of there. You know, that's the snowball method. Number 3, 3 to 6 months. That's a lot of money. So you've got to have a plan. And the plan is try to save 15 to 20%. Try to save 15 to 20%. Budget the heck out of your family. And if you need to move to a smaller place, move to a smaller place. Do you need that extra bedroom when you're sick with anxiety and fear? You can have a stroke, and then you won't be able to provide for your family. There's so many diseases that happen because people are sick with stress. Jobs are stressful enough, commute is stressful enough. You know, coming home, you barely get enough rest. And then on top of that, you're going to put financial crisis stress on your body. It's not a good situation. It's not a good situation. I had a stressful job for it was a really stressful job for 7 years. There were days when I thought like my heart would just stop in its cavity. Okay, that's enough stress. Alhamdulillah, I'm fine here. You know, layer that on top and people are just really sick. Okay, and then healthy food. You know, it's just if you're that tired and worn out, you're just going to please your body with food, and then you're going to get sicker. So it's a snowball effect. Try to be healthy. Healthy financially means healthy physically. Step number 4. So start investing. So once you're in the saving category, you can get into the investing and passive income category. So start investing. Invest in growth stocks. We're not talking about receiving interest income here. That's not what Muslims should be doing. They should be investing in growth stocks. So invest in Nabisco, invest in Apple, invest in stocks that appreciate, give you an income, not which give you interest. So stay away from bonds, right? Stocks, income stocks, not bonds, right? Not T-bills. So there's all these. There's 2 real categories: stocks and bonds, right? And if you have any specific questions, of course, I'm trying to get the MCC to set up like a financial counseling. We can do classes, workshops, but more it's one-on-one. You can't really do that much in a workshop because everybody's situation is individual. Number 2, as soon as you're doing well in step 4, that's for you and your family, start setting up your children for success. You know, are you going to send them to Yale for $40,000 a year because they can get in so you can brag to your friends? Or are you going to send them to Sac State? You know, they still teach you 2 + 2 at Sac State. It equals 4. Okay, if you're doing it for your friends, pony up and give them more money. You want to send them to Yale so you can brag? Give them more money. Okay, if you want to set them up with the education, set them up with the education and teach them the value of money from the time they're 3 years old, and teach them how to work, make them get a job, and send them to school. Make sure you do all those things. Teach them about money, make them work when they're in high school, and then let them go to college and build a resume as well as a curriculum resume. Don't let them have all these amazing degrees on their resume and have no job experience. They don't know anything. And they don't know the value of a dollar, and they're in debt. And then they're living with you and they're 34 years old. A'udhu billah. let's get to a better plan, really, okay? And let's think about that. Let's think about who's influencing us, okay? Imam Tahir was here. He said he said it. I was like, I thanked him saying it. He said, if they gave my son a free ride to Harvard and Yale, I would not send my son to Harvard and Yale. A, they're not ready at 18 to go that far away. That's a different conversation. But B, people are letting their kids go into massive amounts of debt because they're proud of them. You know, and you know, you get what you pay for. You get what you pay for. I know people have great degrees from Columbia, they make $200,000 a year, they can't save anything in New York City. You know, if you live in New York City, you can't, you know, and they're working Saturday, Sunday, they're coming home at 11 p.m. at night. Your real wage is the same as a Subway sandwich maker. Right? If you look at your real wage, if you're putting 80 hours a week and you're making $60,000 a year, you're making the same amount of money as a $30,000 employee, right? Because you're putting in double the time. Right? So think about your real wage, your real time, your real leisure. Okay? So after you, it's the kids. Okay? And then get that house paid off. Okay? Anything can happen to your spouse. Okay? Anything can happen, especially if you're earners. We're all at risk. You know, we don't know how long we've got. So pay off your debt. Pay off your house. You know? And family vacations are important. Of course, you should budget for that. It's really good for them. But your priority is to do both, not just one. And, you know, I see 55, 60-year-old guys buying a new house. I'm like, what are you doing? That's another 30 years. Okay, if you're wealthy, great. I don't know, maybe they're wealthy, but if they're extending their debt till they're 70, they're going to be working till they're 70. Hopefully they're paying it off. I don't know. But I always question, like, what's wrong with the home you're leaving? You just gave $90,000 to 2 real estate brokers and they're living really well. Number 7, build wealth. Give a bunch away. That's the bottom line. Sorry, here. This is again, mashallah, Dave Ramsey. Right? So once you're wealthy, you can help the community. You can help other people. But if you're teetering, you're on the brink of needing help. So, you know, give charity, give sadaqah, but make sure your house is in order so that you're not looking for a handout later. And that's the problem. It's like, hey, I'm doing really well, and all of a sudden, somebody help me. You didn't take care of business when you could take care of business. So alhamdulillah, you know, I mean, do you need that iPhone X? Really? I mean, you need to join the cult of Apple. I actually, if I see someone with an iPhone 4, I go shake their hand. I'm like, mashallah, you can keep an iPhone 4 working. You're a really, really amazing person. You know, there's a lady at work, she has an iPhone 4. I'm like, wow, that is cool. You are really cool. Because she's keeping that thing working. If she upgrades it, it's gone, it's going to blow up. You know? So, alhamdulillah, we should be praising people for doing the right thing. So, Warren Buffett is famous. What does he do? Going back to that line, what makes you happy? You know what he does to be happy? Does anyone know what he does to be happy?
He's like grateful.
He lives in Omaha. He lives in the same house. He does that. He lives in Omaha. He lives in the same house. He drives a Camry. He goes to work every day. Does what he loves. It's worth $40 billion. And when he wants a treat, he buys himself a dairy, what is it called? Dairy ice cream cone. And he loves to play that computer card game. I don't know what it's called.
Solitaire?
Bridge. I think it's Bridge. He plays online with some lady every day for like 2 hours. So he knows what it takes to make him happy. It doesn't cost him any money. He has $40 billion. He runs Berkshire Hathaway. I don't know what it's called. I think that's what it is, right? So it's simple play. He knows what makes him happy, and he buys it, but it doesn't cost him anything. That's Warren Buffett.
Can I just add something to that last?
Sure.
One of the things that always just messes with my mind is how we as Muslims don't budget, because how else are you going to pay your zakat or know if you're the recipient of zakat if you don't even know what that is year to year?
Yeah.
And another pet peeve of mine that's related to that is if people aren't paying their zakat, like in Ramadan where we know that it's on the Hijri calendar, a lot of people do it on the yearly Gregorian, which is off by 10 days.
Yeah.
And then I'm almost done.
Yeah.
So then the zakah is kind of like off kilter after, several years of paying.
Yeah, you're supposed to look at the same day every year. And you can just do it on the 1st of Ramadan. But my company has United Way, so whatever has to happen, you just do it and it's monthly. I know talking to nonprofits, they want to see monthly donations, quarterly donations. They don't want to see one blip in Ramadan and they've got to scrap all year to try to see if it's going to last or not. So they, a lot of nonprofits would like to see regular, steady donations.
So does that mean you're paying the year that passed or
Yeah, you just take a benchmark and you up it.
I see.
So you look at how much because it's store of value, right? So if you have this many dates, if you have this much wealth in the past in your house at that date, then you've increased and then you pay zakat on that. So I don't want to get too technical, but anybody can talk to Imam Tahir. He's a great resource. Okay, so we're here. So we've got vision, philosophy, and emotions, right? Socrates said this 3,000 years ago, know yourself. And the media is here to manipulate you so you don't know yourself, right? There's some amazing, amazing ads. I look at ads and I'm just blown away by them. I'm like, wow, what are they doing to me right now? I look at them because see the media through the eyes of a Muslim. See the media through the eyes of somebody that's being manipulated. A boxer knows when the guy fakes, he's going to come back with a punch. And the media is doing the same thing. It's exactly like that. If you're in front of a boxer, you're playing sports, you get set up with a jump hook to get, a shot. That's how every sport is played. This is the same sport. It's a sport. And the guns are on you. You're prey. Your wallet is what they want, right? And look at the credit card company, even their slogans. What's in your wallet, right? Do you have a cool credit card or do you have an average credit card? That's how they're playing with you. Okay, number 2, internal agreement. Talk to each other and listen. So again, have a vision and then have agreement. Have goals. Get advice from someone who you both trust and admire. Get an unbiased perspective. Call a friend who you trust. Somebody who will give you good advice. Somebody who will really listen to you, not for the sake of they're nosy, but they want to actually help you. They're sincere. Set goals, strategies, and objectives together. Bring your kids in on this, and plan and execute. Plan and execute, and remind and be kind. Behavior is going to be fixed in 4 months. If you're doing a budget together as a couple and family, you're not going to get it right month 1. You're not going to get it right month 2. You're not going to get it right month 3. Inshallah, you'll get it right month 4. It's trial and error, and you have to be kind. Because people have long-term habits and things going on that you have to try to undo, right? And that's what we've got to work on, is to try to do it together, be successful together. Let's see. I shared some interesting stories. So that's how we go. Okay, so here's a couple other diagrams and things. Sometimes you have to tell yourself no so you can later tell yourself yes, right? So if you want to work for the community, you have your corporate job, but you pay off your house, you can be financially free to do something you love. Say no to yourself first so that you can say yes to yourself later. Inshallah, one day I want to retire. I want to retire but not sit on the couch. I want to retire and do something else. I might want to work with kids. I might want to, help people. I might want to work in the mosque. I don't know, but at least if I pay my house off and I get my pension squared, my 401k squared, I have that flexibility. I'm not a slave to what I've got going on. I've got to do it until I'm 70. We make a joke at, where I work. It's like the wheels are on the chair so that, they wheel you out when you die. Because there are people who literally will not leave. And I ask people, like, you're so unhappy in your job. Why are you here? And there's 2 answers. I haven't met my financial goals, and I can't pay for medical benefits. Really, really old people. They shouldn't be at work. There's a guy who was at PG&E 47 years. 47 years. He was a multimillionaire. He had a pension. But he wanted more, and he didn't want to pay for his own medical benefits. They stay in PG&E, like, you're unhappy every day. You come in my office and complain, you got nothing nice to say. Sorry. Please, leave my office. Let me work. He brings a different coffee cup every day. It's like The Office, like a sitcom. Like, I see him and I just get up and pretend I gotta go to the bathroom because I know it's like a recorder every day. Just come and ruin my day. You know, go home. You know, get close to God. Be with your children. You
You're the
know?
only one who listens to him.
No, or maybe your children, they don't want to be with you because you kicked them out and they're in debt. You kicked them out at 18 and they're in debt and you've got tons of money. I mean, I don't know. God help people. All right. Some Warren Buffett quotes, Mr. Rich Guy here. On savings, do not save what is left after spending, but spend what is left after saving. So his philosophy is, put the 20%, pay yourself first before you pay everybody else. Okay? He takes his income, 20% away, and then he lives on the 80%. 20%, 80%, 20%, 80%. After a while, man, you can do whatever you want. On spending, if you buy things you don't need, you may have to sell off the things you need. Okay? You're just renting your fun. You don't own anything. Okay? On earnings, never depend on a single income. Make investments that create a second source. So again, if you're not a saver, you're not going to play a second source. Okay?
That's like when we talk about the stocks.
Yep, yeah, investments, right? You make money while you sleep. Inshallah, if it's in your risk. And the people are like, well, you know what, I'll find the perfect job, I'll sit at home. No, go work at Target and get some experience. It's tie your camel and trust in Allah. They forget the tie your camel part. Like, get up and do something.
So work at Target?
No, work and save. Don't sit at home like, oh, I have a master's degree, that's beneath me. But then you're in debt, you're sitting at home and you got holes in your resume. You might meet somebody out there. One of my directors at PG&E, he couldn't get a job, so he was a toll guy at Golden Gate Bridge. And he made 2,000 copies of his resume. And he said to everybody in the car, this is a true story, he said, I'm looking for work, I'm an engineer, can you help me out? And 1,000 people a day ignored him. And somebody would be like, yeah, give me your resume. He'd be like, slip my resume. And he got a call. He got a call. The guy said, I have a job, come work for me, I'll call you. Got a job, started working in this engineering firm, then he got a job at PG&E, now he's a director. But that was his story. He said he started off as a toll taker, and he started giving out his resume.
Work is work.
Work is work, and you're getting out and meeting people. And now it's the opposite. Before it was like you had to be online to get a job. Now there's all these apps and systems that are like bombarding you with thousands of resumes a day. PG&E, our company, gets 120,000 resumes a year. That was 5 years ago. Imagine how many resumes we get. We only have 20,000 jobs. 120,000 resumes a year. How do we even process that? So you got to know people now. You got to do some work. On investment, do not put all your eggs in one basket. That's pretty cliche. On risk, never test the depth of the river with both feet. Okay. So.
Can you expand on that?
Meaning you don't go all in. You rely on trusted sources. Have you guys heard of the grandmother's investment? There's this investment club that these grannies started back in Florida. They're all, grandmothers pinching their pennies and everything. And they invested in things that made sense. So they're like, oh, I like orange juice. I'm going to buy Nabisco stock. I buy this. My daughter had a kid, so she's getting Pampers. I'll buy Pampers. So they didn't use mathematical algorithms. They weren't an investment bank. But they banked on things that they knew about. Simple. They kept it simple, and they outperformed the market. They outperformed the market because they bought solid foundational stocks. They didn't buy, of course, for every, let me tell you this story. For every, I think there was 3,000 venture capital investments in startups in the peninsula over a 2-year period. Guess how many of them actually survived 2 years? Out of 3,000. 19, right? So in the news, you're always being bombarded by the next, Jeff Bezos and the next, Steve Jobs, but there's so many failures, right? Don't bet on things that aren't solid. And then the other one, this is a good one. When we were kids, we used pencils. Now that we are adults, we use pens. Do you know why? It is easier to erase the mistakes of childhood. we should be wary of making mistakes as adults. And your pen is what gets you into debt, right? You give your word, it's a liability. You don't have the money, right? They want your ink. There's a Volkswagen slogan on Christmas called sign and drive. Yeah, you ever heard of sign and drive?
Yeah.
Just come in, sign the paper, take the car, 3 months, no payment. I mean, they try and suck you in. They got to get those cars off the lot, okay? It's just poison. You can't fall for that stuff. All right, so this ends the discussion. Thank you for being here. I just want to make a dua that, Allah give us ilm and amal, Allah give us halal, healthiness for our families that allow us to be generous, and Allah gives us iman, ihsan, and gives us health. And it's a beautiful community. I want to thank the board, and I thank all of you for being here. And Jazakallah khair. In fact, if you have questions, we could take some questions. If you want to talk to me offline later, I'm here for another little while. All right, well, Jazakallah khair. Thank you for coming Saturday night. I know I'm competing with other people. Jazakallah, I really appreciate it. Let's end with a dua. Wa inshallah, Allah give us guidance to keep our families protected and allow us to be physically, spiritually, and financially whole and strong and build stable families. And Allah guide us to stay away from the haram and stay in the halal and raise our kids in a way that pleases Him. And He uses the example of the Prophet sallallahu alaihi wasallam. Bismillah ar-Rahman ar-Rahim. Surah Fatiha. Bismillah ar-Rahman ar-Rahim. Alhamdulillah Rabbil Alameen. Ar-Rahman ar-Rahim. Maliki yawmiddin. Iyyaka na'budu wa iyyaka nasta'in. Ihdina as-sirata al-mustaqim. Sirata alladhina an'amta alayhim. Ghayril maghdubi alayhim wa lad-dallin. Ameen. Jazakallah.
The radical, fundamental principles of freedom, rational self-interest, and individual rights. This is the Yaron Brook Show.
All right, everybody, welcome to Yaron Brook Show on this Saturday afternoon, or at least this afternoon over here. March 16th, we're already in the middle of March. Spring is here. I guess, isn't middle of March spring? Anyway, welcome. I was going over some old shows of mine, and I realized I hadn't done a last personal finance show I did was 5 years ago. And I know a bunch of you have been asking for a show on personal finance. So here it is. I figured I'd do it today. And today is the day of positive shows. And personal finance is certainly one aspect of a positive planning, planning your future. Yeah, it's pretty amazing that I did that show 5 years ago. I was going through shows and God, I've done so many shows first and over such a long time now. Really, I started audio only January 2015, so that's 8 years now. That's 8, 9 years. It's a long time. There's a lot of shows out there, so. And YouTube, I don't know, 2017, something like that. But so there's a lot of stuff. But it's good to renew these things and renew them and remind you of them. And some of you probably are too new to have gone back and watched all the old episodes. I don't really expect you to. So yeah, so we're gonna do personal finance today. Now remember, a lot of what I'm gonna say is pretty general. And doesn't necessarily apply to any one of you. So if you want, if you have specific questions about your circumstances, specific questions about where you are and the issues you are facing, please feel free to, ask in the Super Chat. That's what the Super Chat is there. That's the benefit of listening live. Now, some of you are not live. You'll have to come onto a future show and ask, or you can send me questions. So those of you who are not live, but have specific questions on this topic or any topic for that matter, you can send me a question and make a contribution through PayPal or through Venmo Those are the easiest ones, I think, for kind of one-time contributions. So if you just want to send me an email question with a Venmo or a PayPal contribution, I will try to answer them. And if there are a bunch of them on this topic, on the personal finance topic, I'll try to bunch them all up and do them all at the same time, and maybe do a part 2 where I answer specific questions. But some of you are here live, and so you get to ask whatever you want to ask. Just use the super chat feature. All right, let's see. Batista says, "Hi from Argentina. You're on. Already have tickets for your visit. That's exciting. That's great. It should be a fantastic event. I'm still waiting to announce the surprise." But we will do that soon, I think, as soon as everything is official. But yeah, it's going to be fantastic. It's going to be a lot of fun. I'm looking forward to it. And it's coming up, like it's in 3 weeks, right? It's right around the corner. All right, let's do this, right? It's got to be Millet, Jennifer says. Got to be Millet. I can't say. It's got to be Millet, but I can't say. All right. But what about Millet? And what's he going to do? And what's he going to say? Who's he going to say it with? All of those are interesting questions that hopefully we'll have an answer for in the next few days. All right. Personal finance. So, point number 1, and really the most important point, and that will frame everything else. Point number 1, oh, Silvanos is here. Excellent. Point number 1 is context. There is no one personal finance rule to apply to everyone. There is no one principle, in a sense, that applies to all circumstances. You have to figure out the context, and we'll go over alternatives and variations of this. I mean, the principle is you want to live well today and you want to take care of your future. But beyond that, there is no such thing as, yeah, Richard says, buy low, sell high. Yes, if you know that it's low and you know when it's high, buy low and sell high. But of course, the big challenge in investing is, do you know it's low and do you know whether it's high? So let's just focus on, so we're going to get to that. We're going to get to investing. But this idea so the whole idea is you've got to understand the context. Your particular circumstances will dictate the specific strategy with regard to your own personal finance. Anybody trying to sell you a formula, anybody trying to sell you a one-size-fit-all is conning you or thinks you're dumb. And therefore, if you're dumb, then you just follow these rules. Here are 5 things you should follow, and all is good, right? So beware of people trying to sell you products that assume you are dumb. For example, there might be people out there saying, never take on debt. Really? Why? Debt can be valuable in the right circumstances. Not always. Depends on the kind of debt. Depends when. Depends on the circumstances. Or don't use credit cards. Why? Why not? If you pay them off every month, what's the big deal? Just many of these things, you've got to ignore kind of generalized advice that does not take into account, does not ask you about, your specific circumstances. So let's think about the circumstances that matter. Well, certainly how old you are matters. Investment advice for young people is not going to be the same as investment advice for middle-aged or investment advice for older people. It depends on, are you single or do you have a family? Do you have kids? Do kids depend on you? Are the kids at home? Are the kids grown up? Have they left the house? It so how many mouths are you feeding, right? And what is that? To what extent do your kids play into your long-term plans? Do you plan to pay for their education? Do you plan to buy them their first home? Do you plan for them to live off of your money forever? Right? Hopefully not. But all of those are considerations that determine how much money you're going to need in the future. So how old are you? What's the size of your family? And what are your plans for the family over the long run? Maybe most importantly, what kind of job do you have? What are its prospects? Are you in a dead-end job where you're never going to make any more money than you make right now? Are you got a career where the expectation is you'll make more money every single year, basically, until you retire or until you reach peak earnings, which might be in your 50s, and then maybe it flattens out or something? But what kind of career do you have, and how confident are you in that career in terms of its earning power? What are your earning prospects? And think about. You have to really think deeply about that one, because is your job about to be replaced by AI? How risky is your job? That is, it's not just what you expect your earning power to be over the next 50 years, 30 years, 20 years, whatever your horizon is, but are you being rational about that? Are you really thinking it through? If AI comes and takes away your job, what are you going to do? Do you have an alternative? How confident are you you can refigure out, get a new job, design a new, pursue a new career? So really, what is your earning power? If you had to project from now until your 60s, what are you going to do? What's plan A? What's plan B? What's plan C? And what's the variation between those? All plans might be, I'm making more money. It's fine. Things are good. And that's great. Okay. So, what are you earning? What's your risk tolerance? Are you somebody, and here, no judgment, you can change your risk tolerance, but assuming you are what you are at this point, and you have a particular threshold for risk, if the stock market goes down 20% tomorrow and you have a lot of money in there, are you going to freak out emotionally? Are you going to just lose it? Are you going to not sleep at night? Are sleep is important. Being able to have a calm, successful, enjoyable life is important. Is risk disruptive to your life? Is it something you cannot handle? And again, you have to be objective about who you are and what you are. To what extent are willing to take the ups and downs of, let's say, your investments or your savings into the future, and to what extent can you tolerate all of that? So, what's your earning power? What's your risk tolerance? And your capacity to bear it, your emotional, psychological capacity to bear the risk, right? And maybe you say my emotions out of whack and I should really work on that. Maybe, but first, adjust your investment or kind of personal finances to the emotions that you have right now, and then as you get, as you adjust them and become maybe more risk tolerant, you can change your investment strategy. You can change your savings. So nothing is forever. That is, in that sense, if you choose a particular investment style, strategy, personal finance strategy, it doesn't mean you cannot change it as you move to the future, right? How much do you know about finance, and how much do you care? I think that's important, because that will tell you how much you're going to have to rely on outside sources. If you don't know anything and you don't really want to learn anything, that's fine. That's what you have. I know in this day and age, talking about experts is elitist, and nobody wants to rely on experts. I'm sure you're all self-medicating at home, and when you need your appendix out, you'll do it yourself, or maybe you'll have your spouse do it for you. But there seems to be an attitude of anti experts. But you know, if you're not interested in learning about finance and you don't know that much about it, you probably want to hire an expert to help you out. You probably want to get advice from one of those elitists who actually knows something about the topic, just like you do for your healthcare. I hope. Although you could just listen to RFK and not listen to your doctor. All right, what else? What else is context, right? Age, earning power, risk tolerance, knowledge, all of those are crucial, right? I mean, one other aspect of this should be, do you have a lot of money already, right? I mean, is this not about, in a sense, survival? Is this you're done? You've got enough money, right? Maybe you inherited a lot of money. Maybe you're at a point in life where you've already got a lot of money. You've already earned it. You're sitting on a big pool of money. Maybe that's the case, and you know, so that's going to be a different personal finance advice than if you are basically making the money that you spend every month. That you're basically living off the money you earn, like most of us, right? So, again, all of those factors have to play a role, right? BB says, cut up credit cards. God, I don't think I have, you know, the credit cards now, like here, you know, like this one, right? They're made now of metal, and you can't even cut them up. So the whole advice about cutting up credit cards, yeah, don't pay attention. Also, what do you think about, you know, how much complexity can you tolerate? That's another aspect of this, right? How much complexity can you handle? You know, your finances can be super complex, lots of different things going on, and can you manage that? Can you tolerate that? Is that okay, or is that going to overwhelm you and drive you nuts and not worth dealing with, right? For example, can you handle 3 credit cards, 10 credit cards, 1 credit card, 20 credit cards? I don't know. Or is that just too much for you? All right. Those are some of the considerations, and so let's break this down a little bit, and then again, I think this will be particularly valuable if you ask questions, right? So what's really important here is for me to address some of the issues that you might be facing, or that you might have questions about, or that you might be struggling with. There could be, you know, Kim says, buy some Bitcoin. All right. You know, if that's your only strategy for personal finance, good luck to you. But that is a pretty disastrous and scary proposition. Although I know a lot of people who've done that, and right now they're riding high. Right now, they've made a huge amount of money, and can't argue with that, right? It wasn't looking so great a year or so ago, but that doesn't matter because they're willing to wait it out until whatever, I don't know, until Bitcoin becomes money, or whatever happens to Bitcoin in the long run. But you might want to buy some Bitcoin. I have nothing against buying some Bitcoin, but it's a risky asset, very volatile, and I doubt you want a significant percentage of your net worth in Bitcoin. It could go to much higher than it is today, and it could go to much lower than it is today. And the only thing driving it up or down is, in a sense, the degree of passion of speculators. That's it. It's a speculative asset. So that's what drives it in one direction or the other. Nothing more, nothing less. Okay, so let's break this down a little bit, and let's start with what I think is the most important part of personal finance, and really the thing that sets everything else, sets in motion, or sets in context, or sets everything, and that is earnings. At the end of the day, what really matters in finance is making money, is how much money you can make. That is the key. And while some very rich people and some, trust fund babies, or some children of very wealthy parents or whatever, have enough money so that they can live off of their investments, most of us have to work for a living. Most of us actually have to engage in productive activity, and should, because it's virtuous for other reasons, but engage in productive activity to earn money. And look, there's nothing more valuable that you can do in terms of your future and in terms of your personal finances in the future, in terms of your ability to have wealth and to pursue consumption and live well financially, than invest in your earning power, invest in your career, invest in an upward trajectory in terms of the money you are going to make, the money you are making, and the money you are going to make. So this is not necessarily personal finance, but this is the starting point, and this has to be your primary orientation. Everything else is a sideline. Everything else in terms of finance is a sideline. How much money can you make? And is your job, are you making enough to be able to live? Have you adjusted your consumption, how much you're making? But are you happy with how much you're making in your job? Can you do better? Do you want to do better? How important is money to you? And then can you earn enough? Can you earn enough to fulfill whatever wants you have, whatever realistic wants you have? So the first focus you should always have is on your own productivity, in your own abilities, in your own, whether it's education or whether it's just professional training, or whether it's experience, or whether it's just different career experiences. Invest in yourself, invest in your career. Figure out how to maximize the earning power of, given how hard you want to work and how many hours you want to work and so on, maximize the earning power of whatever skill set, whatever education you have, whatever abilities you have. And that should be your primary focus. That should be your primary focus. Your wage will go up as you become more productive. In other words, as you produce more, you will be paid more, even if you're a salaried employee. And if you're not, change jobs, right? Change employers. So keep driving your abilities higher. Keep gaining the skill set to be more productive. Keep engaging in productive activities that and keep trying to get promoted and trying to do more. If you're inclined to open a business, if you're entrepreneurial, then focus on that. And look, the focus here is not on trying to maximize your earning power today, because it very much could be that in order, and here earning power is not just money, it's also productiveness and being productive in life. But it very well could be that you have to take a few years off to go to school, to travel, to do whatever, to learn a skill, before you can maximize your earning power. That is, it's what you're trying to do is maximize your earning power given what you desire, given what you want, over a lifetime. And you might want to take a lower pay today, to make much more money tomorrow, like by going and getting a master's degree or something like that. So you've got to figure out what can you make? How much can you make? And then the second piece of that, of course, is you've got to gain an understanding and a deep knowledge of your own consumption behavior. How much do you consume? How much do you consume in a month, in a year? What do you consume it on? Are you happy with what you consume it on? I mean, we live, in a sense, by producing so that we can consume. At the end of the day, we have to eat. We have to go to the doctor. We have to do things. All those things cost money. We work partially in order to fund all these other activities that are necessary for human life. And, so you should have a good grasp of what are you spending money on? And are you spending money on the things that you want to spend money on? Are you spending money on things that are important for your thriving, flourishing, and ultimately happiness? Are you wasting money? I don't know. Are you gambling when you can't afford to gamble? Are you gambling more than you could afford to gamble? Are you spending money on frivolous stuff that you can't afford, or that is causing you, challenging, your income? Are you living beyond your means? Now, you could for a while live beyond your means. We'll get to that in a minute. But is this a pattern? Are you generally consuming more than you bring in? Are you going into debt in order to fund your consumption? And if you are, can you see an out of this? And step one for this is understanding your consumption habits, understanding what you consume money on. And here, I strongly recommend getting some kind of piece of software, some app, something that just keeps track of everything you spend money on and keeps track of your income. I've been using Quicken. I've used Quicken basically. I have financial records, I think going back to 1991. I think I was using Quicken 1.0. I don't know what version they have these days, and they've sold and they've gone. The software's changed hands, but it's still called Quicken. And I use it. I don't think that everybody needs to use Quicken. There are lots of other things. If you only have one bank, if you have all your relationship with one bank, you can get a breakdown of all those things from your bank. You don't need more than that. There used to be a software product called Mint that used to aggregate all these things, but I have multiple banking relationships. I have multiple credit cards. I have saving accounts. I have brokerage accounts in a different bank, where my investment is. So I need something that aggregates all that information and brings it all into one place. All into one place. And it is incredibly valuable. And the earlier you start doing this, the better, because then you can see what your consumption, pattern trends are. You can see what your income trends are. You can see what your debt trends are. You can see, you can take a look and you can see your financial life. I mean, I have data, literally data on expenses going back almost 30 years. No, more than 30 years, right? 33 years. It's ridiculous. Now, at this point, it's just it's a curiosity, because I have no interest in going back other than to see how little money I made. That's always fun to see. I made this little money. I spend more that entire yearly salary in. Anyway, so it is valuable. And of course, with credit cards now, I use credit cards for everything, because part of the reason I use credit cards is because when I download that data, when that data gets integrated into my software, it tells me exactly what I spend it on. And it has categories, and it puts it into the category, and I can tell you exactly how much I spend at restaurants, grocery stores, concerts, whatever, doctor's bills, everything. You can get cash back. I like to accumulate travel points because I travel so much. So I have gazillions of points that allow me to fly free to all kinds of places and stay at hotels for free and things like that. But you can also just get cash back if you don't travel a lot. Cash back makes a lot of sense, and this basically gives you a discount of anyway. Some of these cards will give you up to 5% cash back, basically giving you a discount of 5% on everything you buy. The only thing you have to do with credit cards, it's very simple. It's very simple with credit cards. Always, 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 because credit cards are the dumbest form of debt in the world. Always, 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 always pay off your credit cards at the end of the month. The entire amount. Whatever you get the bill, pay it off. Now, even that, right, is so simple now. Basically, my software basically does it for me, right? I have automatic payments on every single one of my credit card accounts. It has my bank information. It automatically takes the money out of my account and pays. I don't have to think about it. I just have to make sure I have enough money in my bank account. But even that, Quicken will tell me, you need this amount of money because look, these credit cards are coming out in the next few days. So you can move money from accounts and everything. So I'm a huge fan of having something like Quicken that aggregates your accounts, automates what you have, automates all your bills, pays all your bills, automatically pays your bills. So again, you don't miss bills, because the worst thing is to miss a payment and get penalized and pay interest and penalties and all this stuff. That's when you can really get into financial harm and financial problems. And again, there is so many different ways in which to do that in the modern world. I use Quicken. Maybe Quicken is too much for most people. It's really robust. It has lots of features. It's online, and it's an app on your desktop, and it's on the phone. And I never use it on the phone though, but you can. It's pretty cool. But it has. I don't even use probably. I use probably less than 50%, or probably maybe less than 40% of the features that it has. But it's worth it. God, I don't know what I would do. I don't know how I would manage my personal finances without something like Quicken. How much is it? I don't know. I think it's kind of a monthly subscription at this point, but I don't remember how much it is. Again, I bet you there are cheaper versions. The simpler ones, again, Quicken is for, complexity. I have complexity. You might not. But Quicken, I think right now, is the gold standard for personal finance, keeping track of it, right? Keeping track of it. Just right now, somebody Google Quicken and see how much they charge, and you'll find out how much it is. I don't think it's $2 a month. Is it $2 a month? Maybe. But whatever it is, I don't know. If you have any kind of complexity in your personal finance, it's worth it by far. So you want to know what your consumption habits are, and you want to know what your income is. Particularly, some of you might not have a steady income. You might not have one job, or you might not have a job. You might be self-employed. You might have a business. And the business probably has its accounting over here, but you want to see what is flowing to your personal account. How much is it on average in a given year? You want to, in those cases, you want to always plan for the taxes you're going to have to pay, because they're not being deducted out of your paycheck, because you're probably not getting one, or you're getting a small one, and some of it is being distributed to you as dividends or capital distributions, or whatever. You want to see what's happening in your investment portfolio. Again, this will track everything, and it's really cool. Mint used to be, and again, I don't know if it's still, it used to be really, really good. It was the first all online personal finance app. It was actually created and it was founded by somebody who at the time at least was an objectivist. I don't know if he still is, but at the time was an objectivist. He'll end up selling the company, I don't know, for $300 million to QuickBooks. But Mint is, and they destroyed the product, and Mint is no more. It doesn't exist anymore. But there are others. Somebody says here that they use Empower. Again, there's tons of options. They're free options, right? They're free options. So I highly recommend. Here's my biggest advice now: get a personal finance, so you can track what's going on. If you can't track, if you don't know what's going on in your finances, how are you gonna manage them? All right. So know how much you earn and know how much you spend. And think about, of the things that you spend, what is optional and what is not. What you could do without, what not. That doesn't mean you have to cut out the optional stuff. I mean, the optional stuff is the fun stuff, right? But you should have a good idea of, if I need to, how much could I cut my spending? How much could I get? How much could I cut from my monthly bill. Right? And yeah, and it's good knowledge to have because that'll help you, again, plan the future, and it'll help you if a crisis comes, if you lose your job, if something happens that's negative, it'll help you say, okay, but I know I can cut this amount of expenses and I have this amount of money and my new job pays this, that I'll be okay. All right, you want to know your owning, you want to know consumption. You know, mostly, you know, your earnings should be higher than your consumption. But here is where it doesn't always have to be, and this is where I get controversial, and maybe some people resist this. You know, if you can find cheap ways of borrowing money, don't borrow from credit card companies. That's extremely expensive. Never borrow money from credit cards unless you can get these deals, which I get in the mail offers all the time for 0%, 18 months, 0% debt. Now they want usually they want a 3% transfer fee. Sometimes, but if you just charge stuff on the card for a certain amount of time, they'll give you 0% interest. I love 0% interest. I find it difficult to resist people offering me money at 0% interest. It's like free money for a while. So I find that hard to resist. But, you know, if you're confident in your earning power into the future, if you're confident that next year I'll make more money than today and the year after that, then taking out a certain manageable amount of debt for a while, for a good reason, I wouldn't do it for just frivolous consumption. But for example, if you're going to start a business, and it starts some kind of small business, it's not a business that you're going to get venture capital for or anything like that, but it's something that you want to take a shot at, you want to try. Then of course the primary source of capital for a business like that is probably you. And that's probably going to mean you taking on some debt, going to the bank and asking for a loan, finding ways to access debt that you can then pour into the business because the business has enormous upside. Now, there's a risk there that the business might fail, and you have to be able to live with that risk. You have to be able to live with the knowledge that you have a lot of debt. You have to be risk tolerant. You have to not allow it to keep you up at night. But taking on debt, for example, to start a business is not a bad idea. It's actually what debt is for. It's what banks are for, to invest in a productive capacity. So, you know, if you're investing in your own future, if you're investing reasonably in your own earnings power, then absolutely debt is a great way to make that investment happen, given that you probably don't have an alternative to that. You probably don't have the cash lying around to make that investment. So I don't think there's any issue with taking on debt if what you're using the money for is rational and appropriate for where you are in life, and rational and appropriate in terms of expectation of being able to pay the debt off, and you're confident in your earning power into the future, and you can handle risk. You can handle the stress. Ali says, I wish Yaron was one of my relatives, I would get a lot of advice. You can get a lot of advice without me being one of your relatives. Just ask a question on the Super Chat, and I'll give you the advice. So there you go. You actually don't have to actually be a blood relative in order to, we're all family here, right? You know, well, most of us anyway. In order to get advice, you just have to pay for it. Pretty cheap though, given all things considered. Or for example, if you buy a house, most of us take on a debt in order to buy a house. It's called a mortgage. And it can be 20% of the value of the house, The debt can be massive. If you buy $1 million house, you might be taking on $800,000 worth of debt. That seems like such a big number. But the debt is spread over 30 years, can be spread over 30 years, and generally I suggest getting fixed rate mortgages. If interest rates come down, you can always refinance. Make sure that it's refinanceable, right? That it has a provision that allows you to refinance. And make sure you can afford to make the monthly payments. That is, look at the monthly payments that are involved over the next 30 years and make sure you have the income to be able to afford to pay it off. Generally, you know, variable rate mortgages are often cheaper, and often over the life of the loan, you're going to pay less, but they clearly involve more risk. People who took out variable rate mortgages at any point in time in the last 15 years, over the last 3-4 years have suddenly got a shock because suddenly their monthly payments have gone through the roof. The beauty of a 30-year mortgage is that it allows you to clearly plan. I don't know, you're paying $3,000 in mortgage every month. You know that. It's every month. And it's every month. It's steady. You know that. It's going to be that way for 30 years. You've got to structure your income to be able to afford it. And before you take out the mortgage, make sure that, again, your expectation of what your earnings are going to be matches the mortgage you have taken on, matches the commitment you have taken on in terms of monthly payments. And look, you're probably going to sell the house before 30 years. You probably won't pay it, but it doesn't matter, right? You'll buy another house, you'll take on another mortgage, and you'll keep rolling with it. If the value of the house goes up, that's fantastic because then you only put down 20% on the house. Maybe you've even put down only 10% of the house, or maybe, like I did once, put 0% down, took everything out in debt. Then anything, every time the house goes up, that is all profit for you. And when you sell the house, you pay off the mortgage and you keep the rest. And that can be a pretty sweet deal. I've been lucky, mostly lucky with my homes, at least the first 2 homes I was very lucky with. The third one, not so much really. Didn't lose any money, but I didn't make any money really. And we'll see about this one. So far, so good, but we'll see. But you shouldn't count on your house value going up. This is another piece of advice that goes counter to everybody out there. Housing is not an investment. Now, it might turn out to be because we have a screwed up political system where there's a shortage of housing, which means that as long as demand is there, the price of houses go up. But you can't count on that because it depends completely on the irrationality of the government. And if for some bizarre reason, unexpectedly, completely unexpectedly, the government frees up the housing market, then your house price could go down. Or if they shut the borders down and no immigration and the population in the United States starts shrinking, long-term your home value will probably go down, of course, depending on where you live. If you've owned a home in the Midwest, a lot of the homes in the Midwest have lost value. People don't want to live there. So, again, don't count on your house as an investment. Houses are a consumption product. In a free market, they would start depreciating. That is going down in value the day you moved in. Just like with a car when you buy it. But it's still worth doing because, look, if you have to pay cash for a house, the house you really want, you'd have to save money for 30 years before you could buy it. Instead, buy the house now and pay it off over 30 years. It's an incredibly rational thing to do, particularly given that the government actually allows you to deduct your interest payment on your mortgage from your taxes. So let's say you're paying, I don't know, 5% mortgage. I know it's higher today. and your effective tax rate is 20%, then you're actually only paying 4% mortgage. Because 1%, 20% of 5, you get back from the government, or you pay less taxes because of it to the government. So, and when you do a comparison with rent, you should take into account the fact that mortgages are tax deductible. And am I spending more monthly, and which one? And of course, you also should take into account that when you buy a house, you have to put money down. When you rent, you don't have to put money down. So in both cases, you have to compare it properly. You can't just compare the monthly payments. You're also locking away a certain amount of money by having a down payment. Now, in a market where housing is going up, that's fine, because if it's $1 million house, you put $200,000 in. If the home price is going up, then $200,000 is gaining value over time. But if housing is flat or down, then it's sitting there, and that might tilt towards rent being just better, more affordable. And of course, you need to think about, is it important for you to own a place versus renting? What are the advantages of ownership? You can make changes to it. You can, like the first home I bought, I was renting it, and then I bought it because the owner was going to sell, and he gave me the first option, and I ended up buying it. And the first thing I did was install air conditioning. Right? There was no air conditioning in the home. And I couldn't have done that as a renter, right? So it gives you an option to improve the house, to renovate it, to do things to it that you wouldn't otherwise do if you were a renter. So a lot of things like that you have to take into consideration. On the other hand, if you're renting a place that's pretty perfect for you, then renting is fine. Renting is no problem. I know people feel uncomfortable with renting, but there's nothing wrong with renting, particularly given big swaths of our lives when we just don't have we're not going to be in one place for a very long time, or we don't have the income, or we don't know where we want to live, or we haven't found the perfect place. Renting is fantastic. Other forms of debt. Car loans. You can't deduct the interest payment. But again, it's a way to buy a car and not have to plunk down a chunk of money and be able to pay it off over time. I find it quite useful. Now, if the interest rate is nuts, if it's really, really high, then it doesn't make any sense, because you're saving money. You didn't put the chunk of money in. But if that money is not invested at a higher rate, let's say generally on your investment stuff, you make over the long run 8%. And your car loan is higher than 8%, then don't do it. Take the chunk of money and pay it. So you have to take into account, but if the car loan is at 4% or 5%, then it's worth doing, because you're probably earning more than that in your long-term savings, long-term investments. And again, whether you can do these monthly payments, mortgage, car loan, etc., is going to depend on how much money you're making, and what kind of car you're going to buy, and how expensive a car you're going to buy, and therefore how big of a debt you're going to take on, is going to depend on how much money you're making, and what is your confidence level about how much money you'll make in the future. The more optimistic you are, and rationally optimistic, that is, the more sure you are of your earning power into the future and your ability to earn into the future, the more debt you can take on. Rationally. The more risk-taking you are, the more you're willing to take on risk, and you don't panic and you don't not sleep at night, the more risk you can take on. The more risk-averse you are, the more fearful you are, the more worried you are, the less certain you are about the future, or any one of those parameters, the less debt you want to take on. But the idea that debt is wrong, bad, evil, nobody should do it, is just crazy, because it assumes we're all incompetent. It assumes we can't assess our earning power into the future. It assumes we all can't handle risk. It assumes we don't want to invest in ourselves. Student loans is another thing, that in a rational world where the loans were properly valued and everything, if the loan is geared towards making you more productive, then it's worth doing. It's absolutely rational to do because it's increasing your earning power. It's an investment in yourself. But if, you know, you're going to study gender studies and so on, I don't know that the bank would give you a loan because what are your earning power afterwards? And it's not actually making you more productive, so I wouldn't take a loan to go study something that's really just a hobby or really just something you're doing for fun, but it has no productive outcome, productive consequences. Right? All right. We covered a little bit of debt, right? And of course, I'm happy to take questions about that. A lot of, there should be a lot of questions. All right, you guys know everything. But if particularly $20 questions, $50 questions, $100 questions would be great. I'll get to the questions in a minute. Let's talk about saving and investing. I mean, you need to think about how much you want to save for the future. And there are various categories and various buckets you need to think about in terms of saving. Now, investment is a subcategory other than saving. Investment is a form of saving, right? The whole idea of saving is postponed consumption, delayed consumption. It's the idea that this is money I'll consume later on. You shouldn't have the idea that this is money I'll never consume. Why? What do you need the money for if not to consume? This is money I'll leave my ancestors. Maybe you want to leave your kids a little bit of money, but most of the money you make in your life, you should want to consume. You should want to enjoy it. You should want to benefit from it directly. So you want to think about saving in terms of buckets. Short term, medium term, long term. Short term might be, I want to save money so I can go back to school. And I don't want to take on loans for everything, so I want to have some money so I can, maybe the loans will pay for my, tuition, but I need some money in order to live off of stuff, even though I might work. Right? You want to, so it could be, short-term saving could be around, I want to buy a car one day, so I'm going to save some money so I can put a down payment on a car or buy it outright. If interest rates are high, I might as well just buy it outright. Medium-term saving might be, I want to save enough money so I can put a down payment on a house. Right? I'm renting right now. I want to be able to put it down to $200,000 if I'm buying $1 million house. So you want to be thinking in terms of, a down payment. How much do I need? I need $200,000 if the house is $1 million. How long is it going to take me? And you want to save enough money. So, and depending on how important the purchase is, how quickly you want to get the house, how important it is, that will determine how much you save in order to achieve it. And then long-term saving, and I would say long-term saving here is really long-term saving, which is, for most of you guys who are young, is retirement savings. My income will probably start declining at some point, let's say 65. Maybe it's 70, maybe it's 75. I intend to work because, well, we all love our work and we're super productive and we enjoy it. So I'd like to work as long as I can, but at some point I might want to work part-time. I want to work a little less, and over the years, I might want to shrink the amount of work that I do, and ultimately, I might have to retire and not work at all, and I want to be able to have enough money to be able to live off of that. Now, my view of things like Social Security is, don't count on it. Don't count on it. Who knows by the time you retire what'll be there? Who knows what the government will want to do with it? And it's not a huge amount of money anyway. Don't count on it. Save so you can live the way you want to live in retirement. And Social Security money is like a bonus. Think of it as a bonus. You'll get an extra few $1,000s, $2,000, whatever it is, when you retire. and you can do that to spend on fun stuff. But you want to be able to have enough savings so that you can retire comfortably. And again, what comfortably means depends on you. Whenever you want to, again, depends on you, without having to rely on, the ability of the government to pay you off, because they might not be paying you off. And it's your money, right? The Social Security technically is your money. You're putting it away with Social Security. But they're stealing it, right? Every dollar you pay for Social Security is going to pay people who are in Social Security today. They're not saving your money for you. They're taking it from you, so just don't count on it. It just doesn't make any sense to count on it. So for each one of those buckets, you want to have a different strategy. A short-term saving need to be in something super safe. You're not going to make a lot of money on it. You're just putting it away, gaining some kind of minimal interest, and where it will grow over time very, very slowly. But the main way in which it grows is you adding saving into it, because you're going to take it out, and you want to take it out relatively quickly, and you want to make sure it's there because you're going to need to buy that car, or you're going to need to spend this money on whatever on schooling or whatever it is. You don't want to take a risk with that money. Don't want to take a risk with that money. Your medium-term saving can involve a little bit more risk. You've got a few years now to make this saving happen. You want it, if you can, to grow it. You might want to have some of it in the stock market. You want to have some of it in a saving account, or in something that is less volatile, something that's more secure, particularly these days when a saving account actually pays you a little bit of interest. And you want to add to it every month. You want to have a plan in terms of when you plan to buy the home, and maybe this is contingent on when you plan to have kids, or you just got married and you're saving together to buy the home. So you want to have a plan in terms of how much you want to save. How much you want to save will also depend on how much you're making, how much you consume, all of that. But you want to have a plan on how much you put away every month so that you can achieve the $200,000 for down payment someday in the future. Now, in some, $200,000 is a pretty scary amount, but that's in California, where you can't buy anything for less than $1 million. But in a lot of other places in the world, you can buy homes for a lot less than that, a starter home for a lot less than that, and you can save less than that. But I'm also assuming you guys are ambitious and you guys can make a lot of money, because you should be. You should be ambitious and you should be able to make a lot of money. We have a smart group here listening to you on Book Show that should be quite ambitious and in careers that could do well. So the medium-sized bucket, you should be able to take on some risk. Risk means stocks, bonds, and then some in cash. The exact distribution will depend on how old you are, how many years you want to save this for, how crucial it is. Of course, the less variability you can handle because you have to buy the home next amount of time or whatever, the safer the investment should be. The safer the investment should be. But again, you don't have to save the $1 million for the house. You only have to save the 20% because debt is okay. I hope you guys buy a lot of Bitcoin on the dip and make a lot of money, and then contribute it to the Einman Institute and to the Yuan Book Show. I expect to see now with Bitcoin at close to all-time highs. I'm shocked that my super chat, the super chats are not going through the roof. That you're not adding a lot more to the super chat. You should be. You guys, all you Bitcoin guys, should be super rich at this point. All right, what about those long-term savings? And here, look, if you're very young, if you're in your 20s, the long-term savings should not be a high priority. The biggest priority for you in your 20s is the short and medium term. And it should be to consume. You should live fairly well. And you shouldn't worry in your 20s too much about retirement. Now, if your company offers you a 401k is a vehicle where you can save money with pre-tax dollars. You won't have to pay taxes on them until you withdraw it when you're retired, which is in a long, long time from now. You might as well max out on your 401k. So generally, max out on tax-free investments. And particularly, if your company matches your contribution to 401k, then max out on the company's contribution, your company's match. But your primary focus should be when you're young on your short and medium term savings, not on your retirement. You should also be thinking when you're young, for some of you, depends on who you are and what you are, about whether you're an entrepreneur, whether you want to start a business, whether you think that that's in your future. And if it is, you should be saving for that. Don't save for retirement at the expense of starting a family, at the expense of starting a business, at the expense of living a decent life, particularly if you believe that your income will only rise. Now, you shouldn't mimic me, right? But I didn't start saving for retirement until my late 30s. And then most of the saving for retirement was part of a 401k. Almost all of it was a 401k where the employer matched the whole amount. So I maxed that out because I wanted to get the employer match. But I was always confident that my income would be higher next year than it is today. I still am. And as a consequence, it was, okay, at some point, I'll be at where I want to be from consumption perspective. I'll be where I want to be in terms of my short-term and medium-term savings. And at that point, I'll start saving for retirement. Now, I'm not saying everybody should do that. Some of you might want to start it in your 20s, might want to start it in your 30s. But when you start that, the saving for retirement, make sure you do it in a tax-free account, whether it's a 401k, an IRA, a SEP IRA. SEP IRAs are really interesting because a SEP IRA is where you invest the money post-tax. This is money you've already paid taxes on. But all the capital gains that accrue inside the account are tax-free. So when you withdraw the money, you don't pay any taxes. No capital gains, no income taxes, because you've already paid the income tax. It's tax-free. So SEP IRAs are really, really good. If you're investing when you're very young, the capital gains that you will accumulate over the account, hopefully, are going to be substantial. You're going to more than double your money. You're going to double it many times over, I think. And as a consequence, it's much more important for you to minimize the capital gains taxes than it is income taxes. You'd rather pay the income taxes now, but save on the capital gains taxes for when you retire. Oh, sorry, I'm not talking about a SEP IRA. You're right. Thank you, Richard. Yeah, when you get old like me, you have to watch these things. I'm talking about a Roth IRA, Roth, R-O-T-H IRA, not a SEP. SEP is like it's a tax-free kind of retirement account for for small businesses. So it's something to consider if you're a small business. There's such a thing as SEP. The nice thing about a SEP IRA is if I remember right, the limits in terms of how much you can put in the SEP IRA are much, much higher. Right? Now, all of these, you're going to have to figure out, you're going to have to get the exact details on what are the limits and how much you can put in and so on. But when you're young, save in tax-free ways. Roth IRAs, SEP IRAs if you're a small business, 401ks, all of those kind of things, you should be saving in that format, right? Once the money is in one of those IRAs, you can then decide on putting money away into stock market, bond market, cash, however you want to save it. But it should be structured in one of these tax saving accounts. Mike, you really should use the super chat to ask a question. But since you asked, HSAs, which are health saving accounts, are fantastic. This is another way in which you should be saving long term. This is a great way to save for retirement, but also to save for just expenses, anything you spend on healthcare. Now, it turns out most of your healthcare expenses will happen as you get older. It's HSAs, health saving accounts, that form of both medium-term and long-term saving. You don't pay any taxes on them. You don't pay any taxes when you put it in. You don't pay any taxes when you withdraw. You don't pay capital gains taxes, if I remember right. But you can only use the money for healthcare. But that's fine because we're going to need money for healthcare in the future. We just are. So HSAs are health saving accounts. They are fantastic. Use them. Take them. There are all kinds of other things. There's an education saving accounts for your kids. If you have kids, you expect them to go to college. You can say, thanks, Mike. Mike just put in $10 for the question. I appreciate that. So anything that's tax-free, take advantage of it. Take advantage of it, right? Health saving accounts, ultimately education saving accounts, is I forget the name of the account that you can set up to save money tax-free for college. But there's a bunch of them. I never used that one because by the time it came about, my kids were much older and it didn't make any sense in terms of saving for their college because they were already quite old. All right, what else? So the vehicle in which you save is important. The younger you are, the more you want to take advantage of these, particularly these Roth IRAs, but any form of investment that is not involved, that saves you on taxes. And, okay, so that's savings, but you don't want to just have it in cash sitting there because, of course, cash loses value every year because of inflation. And also you lose what's called the opportunity cost of being able to deploy that money for productive means where it grows because it's invested in something that's productive. In other words, invested in something that is actually growing wealth, growing value. So you want to have an investment strategy. You want to be able to invest the money in ways that earn you some kind of return over the long run so that you can plan for that retirement, right? So that when you retire, you have the money. And, okay, so here's my view of retirement investing for retirement. The younger you are, the more volatility, ups and downs, you should be able to tolerate, right? Over the very long run, at least historically, and we'll get to the future in a minute, you know, the stock market has done very, very well over the long run. And if you just have the patience to stick with it, you've done very, very well. You can earn 8 to 12% annualized return on average over very long periods of time with the right kind of portfolio. So what I recommend people do is, particularly when they're young, they buy only stocks. But they don't buy individual name stock. They buy mutual funds, ETFs, that are well diversified and that are cheap. You don't want to be paying somebody to invest your money. You want to make it cheap. Vanguard mutual funds are pretty cheap. ETFs generally are fairly cheap. You want to look and find ones that are fairly cheap and funds that are run well. And what I would do is I would widely diversify across different stocks categories. You know, so for example, tech stocks are pretty aggressive. They go up a lot, but they can also go down a lot. And I know people don't believe me that it can go down because tech stocks seem to only go up. But if you look at tech stocks in the 1980s and 90s, they seem to only go up. Certainly in the 90s, post-89 crash, they only went up. And they go up and up and up and up and up and up. And, it, you know, and it seems like, wow, this is amazing. I should put all my money in tech stocks. And then one day they crash. And they crash by a lot. I think the NASDAQ went down from peak to bottom by something like 75%. You lost 75 cents on every dollar you invested. And you might say, but if you hold it long term, well, it depends what your long term is. Because it took the NASDAQ, I can't remember the exact number, but I think something like 12 to 13 years to get back to its high in March of 2000. And since then, it's been on a tear, and you've made a lot of money if you're in tech stocks. But what happens when it goes down 75% next time? And how do you know when you will need the money? Will you need the money when it's at the bottom, at the top, in the middle? So while you want some percentage of your portfolio in stocks that could go whoop, boom, whoop, do that, and who in a very, very long run make a lot of money. I mean, it makes sense that tech would make you a lot of money. That's where the growth is. That's where progress is. You don't want a certain percentage of your savings to be in that. You don't want everything in there. And generally what I recommend and what financial theory recommends is that most people have a well-diversified portfolio. Some in very aggressive growth tech stocks, some in what are called value stocks. These are stocks that are relative to value, they are cheap or inexpensive. Across all industries. You also want maybe some investment in real estate, which you can do through the stock market with a variety of instruments. You can also buy a diversified portfolio of real estate assets. And you want to be in a variety, you will basically want to bet, if you're going to bet on anything, hopefully, well, bet is the wrong word. You want to invest in the world economy. Now, if you know something, if you have particular knowledge of a particular field and you know and are convinced that a particular area will do well, fine, invest a little bit more in that area. But take into account that you might not know what you're doing and you might make a mistake and take on as much, think about how much risk you will need to take on. So, diversification, diversify widely. Here's what I don't recommend you do for short-term savings, long-term savings, medium-term savings. I don't recommend any one-day trade. I don't recommend any one-day trade. I don't believe in buying the dips. I don't believe in buying any kind of one of these crazy rules of thumb. Every time you trade in the stock market or the bond market, you're trading against professionals who do this for a living. You're trading against, on the other side of the transaction, there's always somebody on the other side, people who do this for a living. People who are good at it because they've survived. People who get paid a lot of money to do it. People who are well trained in it. So don't pretend like you know more than they do. Now, you might want to take a little bit of money, insignificant for your total wealth, put it aside, and as play money. And for the enjoyment of it, trade on a daily basis. Sometimes you'll make a lot of money, and you'll tell your friends how amazing it is. And sometimes you'll lose a lot of money, and you won't tell anybody that you lost the money. The only stories we ever hear from day traders about all the money they made, never about the money they lose. So just be objective about what you're making and what you're losing, and never take all your money and day trade on it, any more than you would do it in gambling. Most, I'd say 99% of day traders are gamblers. There are a few that are not, they actually know what they're doing. Maybe they have an algorithm, maybe they've figured out something, maybe they're just exceptionally smart, maybe they know a particular industry inside out. But most people have no clue, and most people are just the next dumb guy who was was the fool that was born, so that other traders can not take advantage of him, but do take advantage of them. So diversify, diversify, diversify. Don't pretend that you're a finance guru when you don't know anything about finance. Be objective about what you actually know. There's a concept. Be objective about what you know. Pretty crucial, pretty important. Do it. All right, I think that covers it. I mean, the key to personal finance is to keep track, have clear goals, know what you're saving for, know how much risk you're willing to take on. Don't pretend you know stuff you don't know. And really think about what your earning potential is. Try to maximize it within the context of your life. And plan according to that earnings potential. Don't short shrift it, but don't exaggerate it. And then really think about how much do you need to consume to live well. And how much you can afford to put aside to save short run, medium term, and long run. And have an investment strategy for the short run. I'd say mostly saving accounts and cash. Medium term, a big chunk in saving accounts and cash, and only some in speculative assets like stocks. And long run, if you're young, mostly in stocks. If you're older, mostly in stocks, some in, let's say, saving accounts or bonds. If you're very old, almost all of it in some form of liquid securities, either bonds or short-term bonds, not long-term bonds, because interest rates can go up, as we've discovered, and other kind of short-term money type instruments, and you're not going to make a lot of money on interest payments on that, and that's fine. Right. Now, let me just address this issue. What if you're super pessimistic about the world in the future? Well, one, make sure that pessimism has some basis in reality. Because the fact is that everybody seems to be pessimistic every decade about future decades, and usually future decades are better than the decades we have right now, and usually, the stock market goes up. So make sure you're being objective about your fears about the future. And if you are afraid, then you should, what you want is to be in cash or gold, or I'm not sure Bitcoin is a good hedge against the end of the world, but gold certainly is. Load up on more gold. It doesn't make it's not bad in a diversified portfolio to have a certain percentage of your net worth in gold. I don't know, 10% maybe. I'm not making any specific advice, but just kind of generalized. What else? So gold we talked about a little bit, and what happens if somebody said here, what about positive things? Like, I don't know, should we be investing in Argentina right now? Well, yeah, if Milei is going to be successful, but do you know if Milei is going to be successful or not? Do you know better than the market if Milei is going to be successful or not? Because the market's already up quite a bit in Argentina with expectation Milei will be somewhat successful, but there's a probability on it. The market has estimated what that probability is. Stocks have gone up, but not as much as if he's truly successful, but also more than if he's failed. So are you willing to take the risk that this won't be successful by buying Argentinian stocks? That is, it's like tech stocks. How positive are you about the future, and how much do you want to allocate for that? But if you want to have a little pool of money that you say, I'm going to invest based on my estimation of what the future will bring, and in this case, I think Milei is going to be successful, so I'm going to put a little bit of money into Argentina, go for it. I think that's a good, I'm considering doing that. I might do it after I visit Argentina and get a better sense of what the upside really is. But I like also the idea of investing in something you believe in, right? Investing in stuff that you really like. The same about individual stocks. You might be a fan of Apple and you want to own some Apple. Sure, why not? Just don't make it a big chunk of your portfolio because Apple could come up with a horrible product and something disastrous could happen and you don't want to be wiped out. If you work for a company that gives you shares, so a chunk of your compensation is stock in the company, don't hold it forever. Certain percentage, keep in the company. But look, you're already undiversified because your salary is coming from this company. Diversify, sell some of it, and put it into other stocks. Put it into other places. All right, let's see questions you have, because I think that we'll see what direction that takes us on. We're still way short of our goal. We've been going for over an hour, so it'd be great if we could make up this difference. Those of you who haven't asked any questions, please consider doing so. If you are going to ask a question, since we've got a lot of them, see if you can make it a $20 plus question so we can start chipping away at the goal without keeping us here for lots of hours. All right. Silvanos, $50. Silvanos says, been hard to catch your shows lately. Glad to be here. Glad you made it, Silvanos. Hope you're still there. I don't know if you are, but I hope you enjoyed the show. Another $50 from Enric. We'll watch later when I'm free. But my question is, advice to deploy your money towards your goals when you're semi-retired. Make a list of what you want to accomplish and the money you have towards that. More advice than that. Thanks. Well, I mean, you want to make a list, but then you want to have you want to figure out the time frame for each one of those goals, right? So every one of those goals, I want to take a trip around the world. I want to be able to fully retire and live off the income from my savings. I want to, I don't know. I want to downsize the house and move into a condo that might be cheaper, might be more expensive, or whatever. I want to have all these goals lined up, and I want to think about how much money I want to allocate for each one of those. How much money do I have right now? And again, I would take the strategy of short-term, medium-term, long-term. Now, here, short-term, medium-term, long-term are going to be different scales because your income is reduced, but also just you're going to live less, right? If you're in your 60s, you're suddenly your time horizon is only 30 years into the future, probably. So here you want to say, okay, here's an amount of money I have to, look, I need to eat. I need to pay for housing. This is the basic stuff that I need. This money is allocated towards that. I'm putting it in this pool. I'm going to invest it. I'm going to put it in some combination of stocks and bonds and real estate. I'm going to widely diversify it. And this is my pool for survival, for living at the base, at the way I want to live, not living in a hut somewhere. But this is a pool dedicated for living the way I want to live. And I'm going to invest it very diversified. And I'm going to put that aside, and I'm not touching that because that's my living money, right? And then, all right, I've done that, and there's some money left. And now some of this money, and I do have some income coming in, so I'm taking that into account. And I might downsize my home, and I'm taking that into account. So I might get some inflow from there, and I might inherit some money or whatever. Take all these things into account. But here's another pot of money. This money, I want to have some medium-term and short-term goals. I want to travel. I want to do X, Y, Z. So I'm gonna allocate a certain amount of this money for travel, and I'm gonna invest it. And depending on how important the travel is to me and how important that the timing of this travel happen, I will decide how risky I'm willing to be on this. If you know what, if I don't travel, it's no big deal. But maybe I'm not putting too much. I'm not putting a lot of money here. But it would be cool if I could. If this money grew dramatically, then I could travel really, really well. Maybe you want to be a little bit more aggressive with the savings. On the other hand, I know I want to go on a trip to Italy next year. I'm going to go for 2 months. It's going to cost me this amount. I'm not going to have any income during those two months. How much do I need? Okay, I'm going to allocate that. I'm going to put it away in a saving account because I don't want to risk it at all. It's going to grow. Right now, I probably get a 4% 4 or 5% on your saving accounts. It's going to grow this amount. Great, I've got that money allocated. It's not. I haven't touched my consumption money. This is money allocated for the trip to Italy, and it's done. And you got to divide things up according to those goals and have pools for each one. And think about how to invest each pool a little differently, because the time horizon is different, the risk is different. The more risky, the more you go towards stocks. The more safe, the more you go towards cash. With, I don't know, tech stock being the most risky, or Bitcoin being the most risky, all the way to cash being the least risky, with growth stocks being risky, value stocks being a little less risky, bonds, depending on interest rates, being more or less risky, short-term bonds being less risky, and of course cash being the least risky, or saving accounts. The cash, when I mean cash, it means it could be a saving account, right? It could be a saving account. So I don't know how much more specificity you want for that, but hopefully that answers the question. But if not, we can do a follow-up in a different show. Ian Meerkat says, my investment advice, buy Argentinian real estate. All the Russian war criminals will make the price rise. Plus, you can rent it out to the Ukrainian Mossad. Furthermore, I think Gaza must be destroyed. I have no idea whether Argentinian real estate is a good investment or not, is cheap or not. I'm not sure why Russian war criminals will go into Argentina. There are lots of other places that they might want to go to. Their money is in Malta and a variety of different places that have Cyprus, that have taken in Russian money. Same with Ukrainian Mossad. I don't know who the Ukrainian Mossad is. Anyway, I think Ian Meerkat is kidding. But beware. Beware of fancy stories. Anything that appears too good to be true almost always is too good to be true. As older you get, and you're starting to think, okay, maybe my judgment is off a little bit. I mean, people who get older, particularly into their 80s, lose a little bit of a sense of judgment. Some people never have it, but some people lose it with time. Then find somebody you trust who has a good financial mind. And anytime you're tempted to do something crazy with your money, ask that person. This is what friends are for. This is why having great friends is good. It's a certain sense of protection. You can rely on them. You can call them up. Hey, I've just been offered this bridge in the middle of the Atlantic Ocean. Should I buy it or not? It seems like a really good deal. Yeah, you should have friends that give you advice. I've been asked many times, I was asked many times over the years about all kinds of investment schemes. Often people did not take my advice, and usually they suffer the consequences and regretted it later. So, schemes that seem to offer very high returns with very little risk don't exist. There's no such thing. Friend Harper, I think there is an emotion that follows from recognizing that one has more than one needs. I call it wealthy. This emotion is dependent on individual context and can change based on ambition. Yeah, absolutely. And look, knowing you have more than you need, but your needs change, right? My needs are very different today than they were 40 years ago. I spent a lot less money 40 years ago than I do today. I was happy then, I'm happy now. I had just different needs, different expectations, lived in a different home, had a different mortgage, had different toys, different expectations and comfort in terms of a lot of things. So this will change with your life, and expect it to change, and acknowledge that it's going to change. Don't be dogmatic about it. Your needs should grow as you have more money and as you get older. And those two should go together. You should be making more money as you grow older. I mean, up until retirement. You should be on an upward trajectory in terms of your career, in terms of your earning power, in terms of your ability to earn money. That's what having a career means. It means more every year. Well, I mean, every decade, whatever. It doesn't have to be literally every single year. So if that's not the case, then you should really think about your career. You should really think about, are you ambitious enough? Are you investing enough in yourself? Are you investing enough in your career? are you investing enough in getting that upward trajectory, which should last you a lifetime, really? Geoffrey says, this is invaluable. Thanks, Yaron. You know, so far it's only $398 of value, so invaluable, I don't know. So, and also, it is interesting. I thought that this is a topic I'd get a lot of people watching live and asking questions. Now, maybe it's not a convenient time, but I am surprised that, you know, if I talk about politics, I get a lot more people watching live. It's just interesting. I think a lot of people watch the show after the fact, but the advantage of live is, of course, you can ask questions. Thank you, Geoffrey, for the support. Really appreciate it. Have I gotten all the people's stickers? No. Mike did the sticker. I think I mentioned that because he asked a question in the chat. Kenny did a sticker. Thank you, Kenny. Yeah, that's as far as I can go back. So, yeah, again, feel free to ask questions. $20 questions have a huge advantage. All right, it gets closer to our goal. Andy says, have you seen Lex's debate on Israel with Destiny? Everything is Zionism or Arab. Nothing is how can I live here and there? What are my rights? It's all Arab state or Jewish state. Yes, I know. I haven't seen it yet. On Thursday, this coming Thursday, I will be talking to Ilan Juno about the debate. So we're going to take the debate apart. We'll analyze it. We'll think about it. We'll critique it. And we'll present our views basically on certain questions that are being asked. So, you know, I didn't have high expectations for the debate because, you know, particularly the pro-Israel side, I thought was very, very, very weak. I don't like Benny Morris and I don't like Destiny in terms of their knowledge. Benny Morris is he was one of the new historians school. He later changed his mind, but when he was a new historian, he basically applied principles of postmodernism. Anyway, we'll talk about that on Thursday. Talk a lot about that on Thursday in terms of why I don't like the new historian school of thought. Anyway, all right. So, Andy, watch the show on Thursday. Sylvanos, what can be said for using minimalism to augment your finances? I don't know what minimalism means. You mean really cutting down on your expenditure, living the bare minimum so you can save a lot of money? I'll take that as what it means, and if you want in the chat to correct me, that's fine. I'm very much against that. There's something wrong with your planning horizon, with your production, with your ability to earn money if that's what you need in order to save money. Life is for living. Life is not for living tomorrow. Life is not for living 30 years from now. Life's for living now. You've got to live at a reasonable level. You've got to live at a level that you can enjoy life, that you can be satisfied, that you can flourish, that you can do the things that you enjoy doing that are necessary for you. Now, that'll change over time, and it has to be within your means. But to purposefully, starve yourself so that one day you'll have more money. Well, instead of that, think entrepreneurially, think about how you can produce more money, think about how to grow your earnings so that one day you have more money. Instead of shrinking your consumption side, think about growing your earnings side and invest in growing your earnings side. It reminds me of this longevity strategy. You know, there's a strategy to live long. They found that if you restrict your calories significantly, you probably, at least with mice this works, will live longer. But you will have no energy, and you will never be satiated, and you will never enjoy food, and you will never have, forget it. I hate feeling hungry. I hate it when I have no energy. I want to enjoy my food. I want to enjoy my life. Just adding a year of my life for the sake of adding a year of my life that is not enjoyable, that is not a year that I can use for human flourishing is pathetic. And that goes for finances. So I would not do calorie restrictions. And the same goes for finances. I would not do money restrictions in order to one day. Instead, grow your productive capacity. Grow the amount of income you get so that you can live a better life longer term, right? So that you can save that money without sacrificing your short-term consumption. You want to be able to live reasonably well. It's one of the reasons you should invest in yourself early on so that you can get a good career that makes decent money. Hopefully and you should enjoy it as well. Not hopefully, but you should enjoy it. And think about how you can be entrepreneurial to make more. Jennifer, can you discuss the phenomena where some old people get really cheap? Maybe it can be caused by dementia. My one uncle used to say they are waiting to take it with them after death. I mean, there are all kinds of psychological reasons that go on there. Some of it is fear because they don't know how long they're going to live and they're not sure they'll have enough. Some of it is this altruistic, I think it's altruistic in the end, commitment to leave their kids money. It's a for some people, I know quite a few people like this, it's an issue of some kind of personal pride that they get to die with a lot of money that their kids can have. I think that's a completely wrong way to look at it. And then some of it could be a sort of dementia, yes. But I think a lot of it is I think older people, as you get older, again, not everybody, but I've noticed this with older people, they become more fearful, more worried about the future, more cautious about the future, more risk averse, and therefore less inclined to spend money because what if it runs out? What if the market collapses? What if the economy, they tend to buy more gold and tend to put it into the ground, even though, the time horizon is shorter, the opportunities for the world collapsing is less, right? So it's a combination of fear that I think a lot of people suffer from as they get older, a combination of wanting to leave it to the kids and wanting to, again, the fear of feeling like the money is running out. I think that's what causes it. The reason to save money for retirement is so you can enjoy your retirement. Now, it's reasonable to think about leaving some money for your kids, but I'm planning to live into my 90s. At that point, my kids will be in their 60s, 70s. I hope they don't need my money. Right? I mean, I hope they live productive careers in which they've saved money and they have money and they don't need my money. So who am I saving it for? My grandkids? I hope they have productive careers. So, I mean, this idea that you have to leave your money your kids a lot of money, I mean, it's fine to leave them some, but you got to live well. That's your focus. Your focus should be on living well. Andrew, no central planner can decide values because values are individualized. Yes. And yes. But even if central planner could accurately determine values, it is morally wrong to rob the individual of his choice to decide for himself. Yes, and change his mind and shift in values over time and make decisions about how valuable a value is. Right? How much am I willing to pay for this value? How valuable is this value to me right now? It might not be valuable, it might be more valuable to me in the future or less valuable to me in the future, all kinds of stuff like that. So there are multiple considerations which the central planner cannot assess and should not assess because he's denying the individual the ability to choose for himself and to make decisions and to change over time. Whoops. Ali, it's taken me a long time to get to a question. I don't even know if you're still here. You're not on the chat, so I don't know if you're still here. But here's the question. I got out of a divorce 1 year ago, lost most of my savings to keep the house. I'm in late 30s. Do I still have any chance? Any chance for what? Of course you have a chance. I mean, you're in your late 30s, you're in the beginning of life. As I said, first time I ever owned a house, I was 30, what was this? I was 34 before I owned my first house. I had no money to put down on it, so I got it with zero down, right? I borrowed every last cent to buy the house. I was at the time, or a little bit after that, I had huge credit card debts because I had started a business that had failed. So I basically was carrying $50,000 of credit card debt. Now, I, used zero interest rate, zero balance transfer credit cards for years, transferring that debt from credit card to credit card to credit card, so that I wouldn't have to pay any interest on it, because I couldn't pay it off yet, right? I didn't start saving for retirement until my late 30s. I didn't start making real money. I don't know what real money is. I don't know, well into the six-figure money until my late 30s. So absolutely not. You're still young. You can still save. You can still, enjoy consumption. You can still live well. I don't know what career you have, so it depends on your profession. But, you strike me as a pretty intelligent guy. We don't always agree, so that's a knock against you. No, I'm kidding. But you strike me as an intelligent guy. You probably have a decent career. You probably have a well-paying job. If you don't, then you should find one. And I don't know how entrepreneurial you are. I don't know how much you're striving to be entrepreneurial, but you should constantly be thinking about how to maximize your potential income. Being in your late 30s gives you a huge amount of time to do that. You're basically going to be productive well into your 60s, maybe well into your 70s, depending on your career, depending on your interests. You've got a ton of time. I mean, this idea, I know people, a friend of mine, I have friends that didn't figure out what their productive career was until their 30s and had nothing until their 30s and had kids and I don't know if you have kids from the previous marriage, but had kids and they've done phenomenally well. So there's no limitation. The real cap is your productive ability, your productive ambition, your willingness to invest in your own productivity, right? So no, don't give up. Don't get into that mental thinking it's too late or anything like that. I think that is the most destructive thing, is to start thinking of yourself as, I'm in my late 30s, it's too late for me. I mean, that's ridiculous. Really ridiculous. Because you're super young and there's so much of life in front of you. And that mental attitude is really, really destructive. All right, Mike Duty says $50. Thank you, Mike. Really, really appreciate it. He says, thanks for everything you do. This donation is long overdue. Really appreciate it. Thank you. Thank you. All right. Let's see. All right, we're chipping away. We're chipping away. This is good. Remember, this show is funded from support from you guys, so keep it up. I really, really appreciate it, and this is my income. This is my income in my retirement. I'm not retired, but in this period of my life, my income is this show, basically, and my speaking. That's it. So I appreciate whatever you do. Let's see. All right. We have Richard. Richard is asking, I have an idea of buying growth stocks on margin, mitigating the risk with stop loss orders. The stop price would increase at least as much as the margin rates. What do you think? Stock price would increase. Why would it increase at least as much as the margin rate? It might not. Look, I think that you're taking on a lot of risk, right? So it's good that you're putting in stop loss orders, but the stop loss orders are going to be a loss, right? You could lose money. You might make money for a while. I've seen people then stop putting on the stop loss orders because they want to buy the dips. They don't want to get out of the dips, and losing a lot of money as a consequence. I've seen a lot of damaging, a lot of things that. But look, buying growth stocks on margin is buying growth stocks with debt. You're basically getting debt to buy this. So while you can cap how much it goes down, even if it goes down just that amount with the stop loss, you're going to lose not only the stock that you bought and the debt, right? So it could be very painful. I mean, run the numbers, put it in a spreadsheet. It's not that hard to do. And run the numbers and play it out based on different assumptions of how the market would do. Figure out what your stop loss is. Let's say it's a 10% loss. How much would you lose? If you're on margin, you're not just going to lose 10%. Because it's leverage. Leverage allows you to make a lot of money on the way up. But it also makes you lose a lot of money on the way down. Right? I mean, a mortgage is margin. So if you buy a house with 20% mortgage, 20% down, that means that you bought it on, Richard said growth would eventually cover the cumulative interest. Eventually it would, but you could really suffer a downturn that could wipe you out in the meantime. So what's your tolerance for the pain involved? And if it was risk-free, if it was low risk, then everybody would do it. So what you're doing is a super hyped up risky strategy that could pay off enormously, and it could wipe you out, or could maybe not wipe you out, but you could suffer significant losses on. That's what risk means. It means you could suffer significant losses on it. And the more you try to mitigate the risk, the less upside you're going to get. So you have a high risk tolerance, but you want to apply your risk tolerance to things that you have a comparative advantage at. And there's no comparative advantage in buying growth stocks on margin. I knew a guy who bought, there was this thing in the 1990s. You could buy basically a kind of a mutual fund, an ETF, kind of an ETF. There was highly leveraged growth stocks. Like the leverage was 4-to-1 or something like that. And it was thousands of percent. It was just going up like this because the stock market was doing well. And then in March and April and May of 2000, he basically was wiped out. So what's the point? Think about ways in which you can take risk that are where you're mitigating the risk with your own talent, in a sense. So you're taking risk on something that you have control over. Starting your own business is a good example of something like that. Or investing in particular stocks where you might have some comparative advantage in terms of your knowledge of them. But just, margining up on the market, you're not bringing anything to the table. And by not bringing anything to the table, just leverage, you're setting yourself up to fail. I don't think I know anybody who's used that strategy over the long run who's made money. So I say beware. If you have a high risk tolerance, think about how to utilize your risk tolerance in a way that will maximize your potential return. And that means using it for something you know a lot about or you're an expert in. Why isn't this working? I'm doing something on here on my program and it won't work. That's bizarre. Try over again. Not working. All right, giving up. MetaLife says, thoughts on whole life insurance. Hate it. Very, 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 very much against whole life insurance. I know people do this all the time. Nobody pays attention, I guess, but it really doesn't make any sense. Here's what whole life insurance is. Whole life insurance is a combination of life insurance and an annuity or an investment strategy. What I suggest is, let me just address Richard's thing. RDF said margin calls will wipe you out. Frank says, yes, this was 1929. No, margin calls would have wiped you out in 1989. Was it October? 89, October 19th, 1989, something like that, a Black Monday, would have wiped you out in 2000 when the NASDAQ took a beating in March of 2000, would have wiped you out very quickly in COVID in March of 2020, would have wiped you out during the financial crisis. I mean, markets are very volatile, and I'd say the more statist they become, the more volatile they become. We're heading into more volatility, not less volatility. Beware. All right, back to whole life insurance. Whole life insurance is a combination of an annuity/investment strategy and a life insurance policy. And they charge you money for both, and they charge you a premium for bundling them together. You are better off by splitting them apart. Buying what's called a term life insurance policy. A term life insurance policy, you generally, particularly if you're young, your premiums are going to be very low. But if you don't die during the term of the life insurance, you never see any money in return. I love that. It's real insurance. It's like auto insurance. You pay every month. You never have an accident. You don't see the money. You're happy. Generally, you should be happy when you don't get your insurance money back, because it means the bad thing you were insuring against never happened. So if you're in your 30s, buy 30-year term life insurance. You can get it at a very low cost. It'll cover you well into your 60s. Hopefully by your 60s, you'll have saved enough money so you don't need life insurance. And you will pay, as I said, very small monthly payments. And I would only do it if there are people you want to leave the money to, wife, children, things like that. Don't buy term life insurance if you don't have anybody to leave the money to. It's cheap. And then, if you want an annuity, or if you want to save money, save money. Buy ETFs, buy a bunch of diversified portfolio, which is much, much cheaper than it would be in a whole life insurance product. And that's it. You're done. And you'll save a lot of money from a whole life policy, which is going to be quite expensive for what you get. Quite expensive for what you get. All right. Thank you, MetaLife. All right. Before we go on, quickly, and we got a lot of questions, but thank you, which, again, chipping away. If somebody wants to come in with $150, that'd be great, but no more under $20 questions. There's just too many questions, and we're already almost at 2 hours. So I just want to remind you that Ayn Rand Institute is a sponsor of this show, and I just want to, they're pitching a particular thing right now, which is, the Institute is inviting students of Objectivism to join the Ayn Rand University. Ayn Rand University instructor, Don Watkins, for an upcoming webinar where he'll discuss 5 mistakes even long-term objectivists make and how you can avoid making them. So 5 mistakes long-term objectivists make and you can avoid making them. He'll be doing the webinar on this. The webinar is going to take place Tuesday, March 19th between 1 and 2 p.m. Eastern Time. Tuesday, March 19th between 1 and 2 Eastern Time. Learn how to mine Ayn Rand's works for new insights, the most neglected aspects of leveraging objectivism for happiness, and much more. You'll also have the opportunity to take advantage of a very special offer to study with leading experts on Ayn Rand's philosophy, including Harry Binswanger, Tara Smith, Gina Gorlin at the Ayn Rand University. To learn more or to register, go to where you always go from here. That is aynrand.org, aynrand.org/start here, aynrand.org/start here. Go. Don is amazing. Go and check it out. You don't have to register, but go to this website, check it out, see, and yeah, sign up. And if you're going to sign up through aynrand.org/start here to show that way they can keep track that you came from the Yaron Brook show. And they'll keep sponsoring it because they get value from it. So please do that, right? All right. Daniel says, I have it set up so 30% of my paycheck goes into a company's 401k. I work in California, so it reduces my tax rate to about 18%. Then $500 a month goes into a personal Roth IRA. Is this overkill? I want to eventually pay off my home. So, I mean, a few things to consider there. I don't know, because I don't know how much you make. I don't know how much you consume. I don't know how well you live, right? So I don't know, if it would be too much if you're skimping on on important things that would allow you to flourish and be successful and happy in your life, and you're skimping in order to make another payment into your 401k or into the Roth IRA. So, but it could be that it's not. Now, 401ks are usually capped, so you can't put more than an X amount of dollars into your 401k. I assume that by putting in 30% of your paycheck, you're maxing out. I'm assuming your employer is matching at least a portion of that, which is good. And a Roth IRA is always good. It's always good to do, and lowering your tax rate is excellent. So again, can't tell if it's overkill or not. That would depend on, again, your consumption behavior and how much your disposable income is. Does that allow you to save money for short-term things that you want to buy? And does it allow you enough to consume at the level that you want to consume? And then finally, I'd say, I don't understand this idea of eventually paying off your home. I don't want to ever pay off my home. What for? If I can borrow money from the bank and deduct it from my taxes, then, why would I ever want to not do that? I mean, it's really, really cheap money. So it's not clear to me why anybody would ever want to pay off their home. I love having a mortgage. Now, I can't, my mortgage is so large that I can't deduct all of it. But I deduct, I deduct a big chunk of it for my taxes. Saves me money. Now, in Puerto Rico, less so. But generally, it saves you money, and it's a good thing. Why would you give that up? Now, if they do away with the tax deductibility of your mortgage interest, then it's a whole different story. But even then, if the debt is cheap and you can invest the money for more, I'm not big on. Now, again, you have to be comfortable with living with debt. But why are you not comfortable with living with debt? As long as you have a plan, as long as you have savings, as long as you thought it through, and it's not going to drive you into bankruptcy. Daniel also says he rents out rooms in his house as well, and he gets more income. That's great. But leverage is good. If the house is going up in value and you have a little bit invested in it, you're making a huge return on your money. If you have a lot of equity in it, you're not making a lot of money on this home. Why do you want to, I don't know, constrain your available investable income to a house which might not go up in value. So I'm not big on, I know a lot of people like the idea of paying off their mortgage. I don't see the point. Now, if you're worried about the future, if the one thing you don't want to ever lose is your home, if you don't have enough saved, then sure. But if you've got savings and you can make those monthly payments, mortgage payments easily, then max out the mortgage and get the tax deduction. Now, I don't think, I can't remember what the limit on tax deductibility is. It's probably $1 million or something a little above $1 million. Whatever it is, max out to that, to wherever you can get the tax deduction. Finn Harper says, economic power is voluntary interaction. So does that mean the economy is essentially the apparatus of voluntary interaction? Well, in voluntary interaction, at the material level, yes. Definitions, I find, don't seem to agree with the essential characteristic explicitly. The economy is essentially the place in which we engage in production and trade. And all of that is voluntary. But it's the material aspect of our voluntary interactions. You don't say the economy is where friendship and love, that's also voluntary, but that's not captured by the economy because it's not material. Hopefully that helps, Finn Harper. Richard says, what are your thoughts on long-term care insurance? I mean, I'm probably positive about it. I don't have any. It depends on how much saving you have and whether you think that saving is enough to pay for that. I've never looked into it, so I don't really know that much about it. How much does it cover? Is it going to allow you to be comfortable? Is it like super cheapo that you won't even use it in the end? You'll just use your own money. I just am trying to save enough money so I don't need that kind of insurance. And at some point here, I won't have any life insurance anymore because I think my savings are high enough so that if something happens to me, my wife can live off my savings for long enough. So you really have to take all that into account. And I would want to look very carefully at the small print and make sure the long-term care insurance is actually providing the kind of care that you would actually want. It depends if you have kids or don't have kids, if the kids are going to help take care of you or not. I don't think you should count on that ever, but there's just a lot of considerations that I'm just not familiar with, partially because I haven't looked into it myself. Silvanos, another $50. Thank you, Silvanos. And George just did a sticker. Thank you. It's his first super chat, so really appreciate that. I think there was somebody else here with the first super chat. Yeah, MetaLife. It was his first super chat. $20. Thank you, MetaLife. And there was some other stick. Yeah, we did the other stickers. Okay, I thanked them already. All right, Silvanos. Say the goal is $1 million. If an individual is more risk averse, is it better to work on the fear of risk or best return on the low risk returns? I'm not sure I understand. Let me see if I can make sense of this. If an individual is more risk averse, is it better to work on the fear of risk or best return on low risk returns? Oh, I see. I'd say both at the same time, right? You should try to understand your own psychology and figure out why you're risk averse. We should all be risk averse, right? I mean, it depends on how much you're risk averse. But if you feel like it's too much, why am I so risk averse? Is it holding me back in other realms of my life? And what kind of work can I do to get rid of it? And at the same time, in your investment strategy, you should accept your risk aversion because you don't want to suffer because of it. And for as long as you're risk averse, invest, accept the lower returns. And as you work to reduce your risk aversion, change your investment strategy. So I would say do both. Right? Always have your investment portfolio, investment risk, consistent with your actual risk aversion. But if you become less risk averse, then increase the risk on your investments. Thank you, Silvanus. Matthew says, thank you for the show. Oh, absolutely. Thank you. All right, we're really close to the target, guys. And I'm sure some of you must have personal finance questions. I know, my guess is that, you do, but you're not listening live. So those of you listening live, please consider, we got $76 to get our goal. So that's like three $25 questions, and we're there. Let's see if we can make it. James says, what is the best way to generate passive income? Well, it's to have a ton of money sitting in a mutual funds, sitting in your investment portfolio, so much that the dividends and the interest that money is generating, you can live off of. That's what passive income means. It means that you can live off of the interest and the dividends that you're getting off of your investment portfolio. And it's big enough to do that. And depending on how much you consume, that would determine how big of an investment portfolio it would have to be, how rich you have to be, how much money you'd have to have in savings. James says, does Dave Ramsey give garbage advice you can never get ahead with his approach? I don't think he gives garbage advice. I think he gives advice to a certain category of person. I think he's very good for people who can't handle debt, who generally are irresponsible in their lives. And Dave takes the perspective of, I can't control how irresponsible they are. I can't teach them to be more responsible generally in life. So what I need to do is give them rules. Give them rules that can guide them so that in spite of their irresponsibility in general, in their finances, they'll not do anything too horrific. And there's a place for that, given how irresponsible and ridiculous people are out there. There is absolutely a place for exactly that, for that attitude of, look, in a sense, you're too irresponsible, too dumb, too out of control to be able to actually manage your own affairs. Just follow this script. Just here's the dogma that you have to follow. At least you won't do harm. So it's on the principle of do no harm or do as little harm as possible. People like that, in many respects are hopeless, and that's not what I want to be talking about. I want to be talking to and with people who are responsible but just don't know. People who are responsible but need some pointing in terms of directing them in the right direction in terms of the advice, but not people who need a formula and just do this. Because Dave Ramsey is dealing with people who don't have ambition, or have ambition, don't have the discipline to be rational, are not choosing to be consistently rational in a disciplined kind of way. So Dave Ramsey has this place, just not talking to the same people I want to talk to. Wes, thank you. Really, really appreciate the support. Wes just did a sticker for $50. So now we just need one person to do $25. And we're there, or 5 people to do a $5 sticker each. I mean, there's 76 people watching right now live. If just a few of you did some $5 stickers, we'd be right there, and all would be good in the world. Stickers are easy. Frank says, Bank of America put a $7,000 max on my credit card. My rate was 13%, now it's 18%. It always teeters on the max limit. Should I pay a lot more per month? So I don't understand. You're actually paying 18% on money you have on this credit card? That's horrible. You should pay down the $7,000 as, whatever you have the balance there, as quickly as you can. In other words, you're paying 18% interest to the bank for what? The only reason you would want to pay 18% on debt is if you've got something that's more important, that's more valuable than 18%. 18% is a lot. So, make much bigger payments every month to get rid of that debt. Drive it down to zero. You should only use credit cards. And here I agree with Dave Ramsey. You should never be in a position where you're paying credit card debt. Credit card debt is unbelievably expensive. Do whatever you can to reduce your consumption to get rid of it, or find a way to get other debt. Maybe you can find a bank that'll lend you money at 8%. 18% is insane. So don't do it. Don't do it. Find ways not to do it. Find ways to pay it off, or get a cheaper loan, refinances. I mean, yeah. So figure out what to do about it. Where your top priority financially should be to get rid of that 18%. Only use credit cards for convenience. Pay the entire balance off every single month. Never allow yourself to get into a position where you're paying 13 to 18% debt unless some emergency happens, and then pay it off as quickly as possible. That is just too high, way too high. My mortgage is at, I don't know, less than 4%. My car loan is at 5%. I can't even imagine paying 10% or 18% on anything. All right. So yeah, make that a priority. Kim says, buy some Bitcoin. Buy some Bitcoin then. I'm not. Louis Philip Noel says, want higher pay, get new skills. Yeah, or get better at your job, become more productive. Jacob says, as someone working in a union plant, production does not transfer to pay some of the time. Part of the reason unions are partially immoral. I agree. Try to get out of a union job. Try to shift jobs. Try to move out. Try to get to a position where you know the union is not capping how much you can earn when you are more productive than the people around you. Richard, I'm voting with my money for discussing finance, which does good, over politics, which mainly looks good. I get it, but here I am discussing finance, and yeah, we just made it. Your $20 just got us over the $650 goal. Whereas when I talk finance, it's politics is much easier. It's taken us over 2 hours to get there. I often get there in an hour and a half talking politics. But look, I'm happy to talk finance. If you guys have questions, and if you bring your friends, and you know, there's 77 people watching right now, should be doing stickers to just even $1, $2 RDF. Thank you for Apollo did one. You know, and don't forget to like the show. And let's see how many people watch the show afterwards. I have a feeling a lot of people watch it afterwards. So I'm happy to talk finance. Thank you, Richard, for putting your money where your mouth is. And I'm happy to talk finance. Please ask questions about finance. Please, if anybody wants to sponsor a show, it's $1,000 and you get to decide the topic. And, we used to, I'm open to show sponsorships anytime you guys want. Usually we have quite a few during the year sponsorships. Okay, we got a bunch of questions. Let's do these quickly. We're over 2 hours. Pickaxing, writing sci-fi with 3D printing house in the background. Housing demand is lowered due to this innovation. Requires fewer resources, less labor costs, and far faster to build. Cogent, unrealistic. Well, I don't think it will reduce demand. It'll increase supply, which is great. But yeah, I think 3D printing of housing is the future. And we need to build millions and millions and millions of units of housing in the United States. And I think a 3D printed house is one way in which to get those housing done. We need primarily to get the government to stop regulating. Daniel, if I want to invest in something more risky with a portion of my investment, what might be a good option? I mean, tech, biotech, things like that, things that are exciting. Maybe some companies that you have enjoyed consuming their products, or really think that they produce something really, really valuable, that you would enjoy owning their stock, things like that. But again, I would do it with a small portion. But yeah, so think about companies you interact with, companies you really enjoy, that you think produce a great product or great service that you would like to own a piece of. Ian Meerkat, want to hear a joke? Russian elections. Who's going to win, Vladimir or Putin? Not funny, but true. Pickaxing, deep sea mining company stock buy all while low. At least one will climb in the market. In my early 30s and just started as a lab technician. I mean, I wouldn't put a lot of your money into something like that. Deep sea mining might be the future. It might not be the future. There's a lot of mining to be done on land, which is a lot cheaper. But yeah, buy the entire industry. One of them will do well. Maybe the rest will too. Hard to tell. If you think that's where it's going to go, but put a small portion of your saving into something like that because it's high risk. High risk. Francisco, what are your thoughts on 2000 market crash? What was the reason? Oh, well, the reason was there was a bubble. There was a bubble in primarily in technology stocks, but also broadly market. I think the bubble was caused by two things. One is by pretty loose monetary policy by the Federal Reserve during the 90s, interest rates, if you will, being lower than they otherwise should be. Same reason we got bubbles in housing in the 2000s, and I think got all kinds of bubbles, including probably in the stock market in the 2010s, leading to today. But then there was clearly interest rates lower than they should be. And then on top of that, you also got a investment frenzy and investment passion for tech, which happens every time there's a new big technology. When the railroads came in, a lot of capital went into railroads. A lot of people lost their money. The survivors did phenomenally well. So way too much money flowed into technology. Well, too much by some standards. But then at some point, there was a cleansing. Some of that capital got lost. But if you'd invested in Amazon, you would have taken a huge beating, and then you would have made a huge amount of money over the long run. But how would you know in 1997 that Amazon was going to be the winner? It could have been somebody else. So every technology goes through, every new technology goes through this boom, bust, long-term boom. Short-term boom, bust, long-term boom. It's just the way markets function. And the way that you guarantee, not guarantee in a sense, but the way markets provide large amounts of capital for new industries all at once, which creates a bubble in a sense. But you should know that when all this capital is flowing into a particular industry, there'll be a lot of losers. Like right now, a lot of capital is flowing to AI. There'll be some winners, huge. There'll be a lot of losers. A lot of companies will go bust. You have to take that into account. And the dot-com bubble was exactly that. And some of it was just pure emotionalism by market participants. I wrote about this in an academic paper. So people get emotional about stocks, meme stock phenomena type of thing. And they go nuts about buying those stocks in the short run. And and you can get, so you could have stock run-ups that just make no sense because people are being irrational in their buying patterns. Fred Harper says, follow-up, do you think Musk or Bezos feel wealthy, as I described before, if they need space more net for Mars missions? Yeah, I mean, I think they feel wealthy. I mean, they're not wanting for anything. They consume everything they want to consume. And they seem to have, I don't think they seem to have a shortage of capital for their space missions. They can raise capital from other sources. They can sell stuff. So it doesn't seem that they're constrained at this point. Maybe at some point, but just look at how they live, particularly Bezos lives pretty well. So it doesn't give the impression that, no, he's trying to save money so he can invest more in space. And I don't really think, Elon Musk did one of the great, what do you call it, consumption, whimsical consumptions when he bought Twitter. He's lost a lot of money on Twitter so far. We'll see in the long run whether he makes or loses money. But it was basically, just he wanted it, he bought it, $40-something billion, and didn't hurt SpaceX. He could have invested the money in SpaceX instead, but he bought it. He doesn't seem to be hurting in a sense of his needs being greater. But they do need to be gazillionaires because otherwise they couldn't do the space stuff and live a good life. Oops. Francisco, How should one think about money one gets from a large inheritance? Should one be living a very decent life materially, although one has never earned anything? There's a certain guilt to it. No, I don't think there should be guilt. It's not that you didn't earn it. You earned it by, somebody gave it to you. Somebody thought enough of you to give it to you. So you earned it that way. You didn't steal it. But what you don't want it to do is cause you to lose ambition and lose energy around your productiveness. So you want to stay productive. You want to engage in productive activities because that's healthy. That's healthy for your self-esteem. That's healthy for your soul. And if the money that is given is going to help you start a business, if it's going to help you consume a little bit more, live a little bit better, that's great. But don't give up on the ambition to be productive. That is the key. If you give up on the ambition to be productive, then the inheritance is damaging and could destroy your self-esteem. So work for the self-esteem, for the pleasure, for the joy, for the challenge that it involves. Ben Shapiro says retirement is stupid. Is he right? Well, he's too young to say that. Sure, I mean, you don't want to retire, but the circumstances which you have to. You just can't do the work that you've done in the past. You physically can't. You mentally can't. You can't stay sharp enough. You can't physically do the work. You might have to retire some hours. You have to shorten the amount of hours you work. I'm sure Ben Shapiro will when he reaches a certain age. And there might be a point where you have to stop working, pick up a hobby, go play golf, do something else, or figure out some other productive activity that is not quite as demanding as your primary career. So I think it's a mistake to say, well, retirement is stupid. I think you have to recognize that there are different phases in life, and there is a phase in which your primary productive endeavor will probably no longer be available to you, and you'll have to come up with something else. And it might not earn you money. So in that sense, it might be a form of retirement. You should never not do anything. Francisco, why do stocks perform so much better than the average economy? How is this possible? Thanks for the show. Because the S&P 500, or wherever you want to measure stocks, represent, in a sense, the best of the economy. They represent the best companies in the economy. And in that sense, so the economy broadly has a lot of companies that are mediocre, a lot of companies that are lousy, a lot of companies who ultimately go bankrupt. And then you have the best companies, the companies that grow the most, and they go public, and they're the ones you can buy shares in, and they grow, and they innovate, and they prosper. So what you're buying the best of the economy. And that's why they do better, because they do. And of course, if they don't, they go bankrupt, or if they don't, they drop out of the stock market. So you've got in a sense, you've got a survival bias there as well. You're only looking at the ones who survived and have done phenomenally well. So you're looking at the best, the subsection of the best companies in the economy. Silvano says, don't forget to like the show before you leave. Please don't forget to like the show before you leave. Really appreciate that. It helps with the algorithm. It helps with YouTube. Promote the show. Any kind of engagement really, really helps. So chat, comment, like, share, all of that stuff is amazing and incredibly helpful. All right, guys, have a great rest of your weekend. And I will see you on Monday. We will have a show Monday, a news show and a news roundup show on Monday. We'll be back to a pretty much regular schedule next week. The new news schedule will only be introduced in the middle of April. But have a great weekend. I hope you enjoyed the show. If you did, like it, share it, and all that good stuff. And of course, you can contribute even if you're not live by doing an applause. There's an applause button there. You can do an applause and contribute. You can also contribute monthly at Patreon or YaronBrookShow.com/membership. Thanks, everybody. Thanks to Super Chatters. Thanks, everybody listening. See you all Monday. Bye.
Well, welcome back. It's great to have you back with us, and I am always honored when Daryl and Chris join me for the podcast, and typically when we do the podcast and these guys join me, we also do a YouTube piece. So it's wonderful to reach out to people who enjoy getting their information through the videos. By the way, if this is your first time here, I'm Paul Merriman, and I started this foundation in 2012 with a commitment to educating investors to teach them how to take better care of their investments, primarily on a do-it-yourself basis. That's the goal. On the other hand, if we feed you some information and you have an advisor, and because of this information, you're able to maybe ask a few questions that might lead to a slightly different portfolio, we're happy for that as well. And with me, if you don't know Chris Pedersen, he's our director of research and a retired engineer, marketing development. How many titles do you have? How many lifetimes have you had, Chris?
Oh, I've been a professional photographer, but mostly I was a product manager. So that's it was a great fun career. And then when I got ready to retire, I realized I needed to live off my investments and I needed to learn how to do that better. And so I called you and volunteered to try and help, and it's led to a much more comfortable, much more knowledgeable retirement. And I should point out, you're too humble. You mentioned that you founded this, that you created this foundation. You did this all with your own money. There is no conflict of interest. You don't earn money from anybody or ask anybody for money or work for money. You do this out of the goodness of your heart and just with a desire to help people. And that was part of what attracted me to join you.
And then thank you. That is very kind. Just for full disclosure, we actually do have people who donate money to us, and we're thankful for that. But most of the money has come out of my wife's and my pocket, and but we do have a lot of very kind contributors. And Daryl, you were an engineer, a manager, most of your career?
I was an engineer for all of my working life career, essentially. Started out as a system engineer. I started out as an astrodynamicist. That's one who works with orbital mechanics. Became a system engineer later on, and then retired and talked to you about coming and trying to help pick up some slack when one of the people who had been supporting had to leave the foundation for other reasons. And so that was, I don't know, 10 years ago, 8 years ago, something
amazing.
like that.
But you guys have done an amazing job of helping our folks, and it takes a lot more than money to make this work, and you guys have made it work, and I do appreciate it. Now, today is kind of a Q&A day, uh, I've got a bunch of topics. The first one that I'd like to cover has to do with that amazing day, and I'm not going to get into politics, but we had a political event that led to the stock market deciding to go up 3, 4, 5, 6, 7%, depending on what investments that you had. And it just opened the door for me to look inside some of the investments that we recommend. And of course, we're big on small cap value as a way to add some juice to your portfolio. And I'm going to share a few numbers, and then I'm going to turn to Chris and find out how meaningful these numbers are. Now, if we just talk about that one day, that would be November 6th. AVUV, Avantis Small Cap Value, was up 7.2%. Now, another fund that is managed in a very similar fashion, managed by dimensional funds, was up 7%. And that's interesting because if you look at these two funds when they've both been in existence, their returns have been very close because the people who started at Avantis, who started the Avantis funds, used to be at Dimensional Funds. So it's not shocking that these two funds have produced very similar returns on that one day. But if you wanted to be in the hot dog of them all, amongst the funds that we track in that arena, VBR, that's a Vanguard small cap. By the way, this is a small cap value fund that has larger companies on average. It was up over 9% in one day. And then VIOV up 5.8, and VTWV, that's another Vanguard small cap fund, up 6.3. So I am sure that the owners of all of those funds were happy to own them on that single day. They probably haven't been all that happy every day over the last years because value has lagged growth generally. But here's what I want to dig into. I want to dig into the fact that for the last 5 years, AVUV has compounded at 14.5%, VIOV at 9.9, VBR at 11.9, VTWV at 9.8. So AVUV has way outperformed over this particular 5 year period. If you actually put that money to work and you look at the Morningstar graphs, it would show that you'd be up about 93% in AVUV and as little as 42% at VTWV, and then the other two are in between. So here's what when I say I'm worried about it or that I'm concerned about it, I just want to know, is it legitimate that AVUV could in fact continue to outperform, maybe by not this much? That would be unlikely because that's a huge difference, but by enough that it could be life-changing for some people. So, Chris, you have turned these kinds of investments inside out between Morningstar and what's the other source that you use so much of?
Portfolio visualizer.
Yes, of course. What do you know? What can you tell us about these funds that would lead us to believe that this is either just a fluke or there's some meat here that we want to have on the bones of our portfolio?
Well, as investors in these smaller, out of favor companies, what we're looking for is their future earnings growth. We're looking for them to thrive and grow, and when we buy a fund that includes them, we're looking for stable exposure to companies of a smaller size, companies of a greater discount. And we want that to be stable over time. And if it is stable over time, we would expect that there will be periods of time when those attributes are worth something more than just exposure to the market at large. And there'll be times when they're not. And hopefully it averages out over the long haul to look like the past. And the past says that those smaller companies and those value companies delivered higher returns with a little bit more volatility. And so it's interesting you started all of this with a discussion of 1 day of returns, because we'd all agree 1 day of returns isn't important, but what that 1 day of returns probably says is that people believe that the future, based on the information that we've gained in the last few days, is more favorable to companies that are small, to companies that are out of favor. And we're not pundits, but pundits on the news would tell you why. They would say, oh, it's because there's going to be less regulation, and in a deregulated environment that favors these startups that are trying to do innovative things, or the tax regime will be better, or whatever. And the truth is, they don't know either. They're just guessing. But the consensus of the market yesterday was obviously that these companies are going to do better, that companies with these attributes are going to have better earnings growth, and that earnings growth may be less discounted because of interest rates and inflation than it was the day before. So that's the belief of the market. Now, you asked, is it reasonable to expect that AVUV's advantage is going to continue into the future? And that depends on two things. It depends on whether the fund is managed in a systematic way so that its exposure to these attributes that give us higher expected returns is stable. And the answer to that question is generally yes. You can go into Portfolio Visualizer and you can run a regression analysis on it, and you can look at the residuals. It's basically a chart that shows you how close the model is to modeling the returns and how much exposure you get to each of these attributes over time. And it's very stable. You can also just do a shortcut and go look at the R squared number, which says how good is the model? Did the model predict returns pretty accurately for when they came in based on what the market was doing in the small part of the market and the value part of the market? And I think the last time I looked, it was 98%, which is pretty high. Yeah. So I think it's reasonable to expect that AVUV will continue to give you exposure to these attributes in the way that it's done in the past. And that has been advantaged exposure over VBR, over VTWV. It's why it's my best-in-class recommendation, is that it gives you more of the sauce, the flavor under the hood that's going to spice your portfolio. Now, whether that means next year it's going to perform well or not, though, depends on whether those attributes are being rewarded at that point in time. And we hope that over the long term, over 5 years, 10 years, 15 years, that those attributes will look like they did in the past. And that means that they do come in and out of favor, but that on average, they're to our advantage. So I'm optimistic. I'm optimistic about AVUV. I think it's going to continue to be a good best-in-class choice for us. The DFA funds you mentioned are not far back. They're actually neck and neck. So in terms of the best-in-class choices, one of the things I aspire to do next year is to show not just which one's best, but how far apart they are, some kind of a relative ranking so that people can see, because the two are much of a muchness. They're actually very close to one another. And if somebody's already in one and has to realize profit and gains to switch to another one, it probably doesn't make sense if they're close. If there's a big difference, then it may make sense. And that's what I hope to be able to reflect in the update.
Talk a little bit, Chris, about let's call it quality. You had a slightly different way of the term about quality, but the difference in quality of the Avantis companies that they hold, and for example, the Vanguard WTWV and I think VIOV are both basically Russell 2000 based indexes. What were those differences between the Russell 2000 and Avantis that gave Avantis theoretically an upper hand?
Well, regarding quality, the specific attribute that shows up in the regressions, this is the Fama French 5-factor regressions, is rich minus weak. So these are companies with advantaged financials, and the rich minus weak advantage, or the quality advantage, if you will, was 10 or 20 basis points, 10 or 20% of that attribute or that factor when you compared these funds. And so that means that you have an engine that's firing on more cylinders. It's just the more broadly you are exposed to a wider range of these attributes, these factors, as the academics call them, in your portfolio, the more consistently that portfolio will perform, because each of these attributes tends to come in and out of favor at different points in time. And the more you get, also the higher your expected return. So there's a number of reasons why AVUV should do better, but again, in any given year, you don't know, right?
So I know, looking at Morningstar, that AVUV has a lower PE ratio, average PE ratio. I notice that at Morningstar that the price to book ratio is lower for Avantis. The size is not too different, actually, with AVUV, VIOV, and VTWV. So it's not a size factor difference that has driven this this difference in returns. Um, so I appreciate all that you just said. I will add something that might be an advantage in terms of knowledge. I don't know that I've read this before on one of our podcasts, but a fellow that works at Avantis, who I've known for uh, 20 plus years. I knew him when he worked at DFA, and his father was actually responsible for helping our firm become a DFA advisor in 1994. So I know this young man well, and I have great regard for his commitment to doing the right thing. But he provided this. He says, our strategies, this is from somebody who works at AVUV, our strategies are daily managed, by the way, to maintain exposure to the target universe. We are designed to provide exposure to the top 25% of the small cap universe that are highest in the joint ranking of profitability and modified book to price. Essentially, we are looking to own the most profitable business that are also trading at the low valuations. We are less concerned about what industry the companies are in. We just want businesses with great profitability at a good price. With that said, we have some constraints to prevent significant sector concentration. We have top line cap of 30% in a sector. We also have a relative cap of 10% of anything that would bigger than 10% of the small cap universe. We don't buy REITs because we view REITs as a distinct asset class, and we want clients to be able to choose REITs if they want real estate and how much they want. He mentions that they have a global REIT strategy. We also don't buy utilities in the Avantis value strategies because they tend to be highly regulated, which has a negative effect on long-term expected return. These exclusions will also impact relative sector weightings. So you mentioned, Chris, looking for a system. And what confuses some people is they think that Avantis is looking for the best companies. Well, and where you measure the management and you measure the financials and all of those things. And basically what they're looking for is a company with good financials that's underpriced. Would you make it any more complex than that?
Well, and they're looking in small the small
In
part of the market
yes,
where
yes.
there are a lot of companies. It's it's not like the S&P 500 where you got 500 companies that everybody on the planet's looking at them. When
Yeah.
you get down into the small part of the market, you have thousands of companies that are less well examined, and and the fact that they do this so systematically, they do it very systematically, means that in many respects they are like an index. Because and people do sometimes trip over this and say, well, Avantis is active, they're not passive. Well, the S&P 500 is decided by a committee, that's active as well.
Right.
So the fact that they don't show to the world the trades that they're going to do before they trade them should be an advantage to the investors in the fund. The
Well,
fact
and go ahead.
the
Excuse me.
fact that they do this systematically is why, when you look at the exposure to the factors over time, it's stable. There's nobody behind the curtain second guessing and saying, I think small is out of favor this month. We're going to go a little bigger, and value is it's the wrong time. We're going to sit in cash for a while, and quality maybe that'll be a next month. There's nobody doing that. If there were, it would show up in the numbers. And the fact that it doesn't show up in the numbers tells me that this is essentially an index fund that's a private index. It's run behind the scenes. And that's why it's 25 basis points. If there was somebody, doing a whole bunch of sophisticated black magic behind the scenes, it'd be a lot more than 25 basis points of expense. So, yeah.
Well, and the fact that they look at all of their companies daily, they run this
Right?
information daily, and so if you compare it to the Russell 2000, where once a year they go in and correct to make things right, and Avantis, why would we want to wait a year if something is failing by whatever definite, however you define failing? Why let it go for a year or 9 months or 6 months? Do it now. And that is a part of what they do. And because they're an ETF, their turnover appears to be very, very low at 7%. And I think that is just because of the nature of how ETFs work. If they were a traditional mutual fund, I think they would be considered to have a lot more turnover. Daryl, you're certainly welcome to weigh in here if you got anything on your mind, a question that pops up to you.
Yeah, I think this might be a time to mention the fact that a lot of these small cap value or small funds or ETFs or indices, they have their own rules for what determines membership or determines eligibility for membership in the class that they're attempting to represent. And those rules are different from one fund to another. And one set of rules is what you just mentioned. There are others that other funds and indices use that make their component different. So a small cap value fund A is different than a small cap value fund B or C or D or anything else. And so, and this is where Chris's work has such value, so to speak, is that he goes in and he looks at what the performance is for different funds, not just what the name of the fund is.
Yeah.
And so I think that's maybe an important point that people should realize, is that just because something is named small or large or blend or value or growth, it doesn't mean that it's the same as everything else that might or might not have that name in it.
And by the way, I looked at DFA's ETF, small cap value, and Avantis, and I looked at the 25 largest holdings. Now, they're not going to have a whole bunch of anything because they've got between 700 and almost, I think, 1,000 companies. And so they're going to have small percentages of a whole bunch of companies. But the fact that I looked at the biggest 25 companies in each, and I don't think there was any duplication. It makes me think, because DFA is so academically driven, and Avantis is academically driven. I think owning both of those funds is okay, because what it's going to give you is two funds that are trying to do very similar things, but you're going to have more diversification by owning both of those. And in looking at the returns of these two funds since the DFA ETC, we've had the DFA mutual fund for small cap value around since 1993. So there's plenty of history at DFA managing small cap value. And so when we look at their fund that's been around during the same period of time that Avantis has been around, the returns are very similar. Now, I can't speak to all of those things that Chris would look at. And maybe at some point after the first of the year, when Chris goes through his analysis, maybe he'll even take the time to share with us the subtle differences between the DFA product and the Avantis product. I think that would be a good lesson for us all. And I think it's probably something he does anyway. Is that fair to say that you're going to do that analysis when you decide which one you're going to pick?
Yeah, it's just a question of how much work we share, and how much we can do without confusing people.
Yeah, that is a problem around here, is it? That I'm responsible. I'm in charge of confusing our students.
Director of confusion.
How am I doing, by the way? Yeah. Okay, let's take a really easy question here. So, J.L. Collins recommends we put all our equity investments in the Vanguard Total Market Index. And Warren Buffett says the same thing about the S&P 500. If you had to choose one, which one would you recommend? What do you say, guys?
Well, I'll go first, and then Chris can correct me. I'd put it in VTI because it's more diversified than the S&P 500. That's all.
Okay.
If you want to make a bet that maybe the additional volatility would pay off, then do the S&P 500. But
why do you think that the S&P 500 will have more volatility?
It's more concentrated, right? It's got fewer stocks, probably. It's in a specific asset class, large cap blend, more or less, as opposed to VTI, which has many more stocks and in more asset classes, although the weighting in the other asset classes is probably not that great. But that's my 2 cents.
Yeah, no, that's great.
That's probably what it'll make you, is 2 cents.
Chris?
Well, historically, the difference in the returns between the S&P 500 and VTI are very small, because the VTI is dominated by the large caps. Being a cap-weighted fund, the rest of the other 3,000-4,000 stocks that are in there just don't move things very much, because they're not very big in comparison. So at a return standpoint, there's not much of a difference between the two. And I think at a behavioral standpoint, there's an advantage in owning VTI in that you own a little bit of almost all of the companies that are public that you do business with. And that may be, from an educational and a psychological standpoint, useful. Because as Benjamin Graham used to say, if you own the total, I think it was Benjamin Graham, if you own the total stock market and somebody comes up to you and says, what about company XYZ? You can just kind of confidently nod and say, oh yeah, I have some of that, right? And so there's a little bit of psychological advantage there. But in terms of meaningful diversification, they both give you basically exposure to the market risk factor and nothing else. So if you really want additional diversification, I'd take a little of your portfolio and throw it in small cap value and put the rest in the S&P 500. Because when you own VTI, if you're thinking you're getting diversification, you're not. And the reason is that the small stocks that you own are offset by the large stocks, and the value stocks are offset by the growth stocks. So if you think that in owning VTI you're getting meaningful diversification, I would do it differently. I'd take the S&P 500 and add a little bit of small cap value, because now you have exposure to more attributes that are going to move at different times and thrive in different economic conditions and have earnings growth that varies from one another, and you're going to get a higher return per unit of risk. Yeah.
And if you look at VTI, the part that is not large cap blend is about 15% of the portfolio. So basically, if you bought the S&P 500 for 85%
Hmm. Yeah.
and small cap value, you'd have something cooking that could maybe add an extra 3/4 to 1%. Do you think, Chris, from the
Yeah,
studies you've
something
done?
like that. It's
Yeah.
you're talking about 15% to 3%. So what is that? Half a per. I'd be confident in saying 0.5% in expected return. Not that you get it every year, but
Yeah.
yeah. And if you do it as a true buy and hold investor, and you just let it sit there and you don't rebalance every year,
Mm,
it'll probably do even better in the long run. Yeah.
yeah, good point. Uh, and also another possibility is not to use the S&P or VTI, VOO or VTI, but to use AVUS, because AVUS has doubled up in its exposure to small and its exposure to value. It's still a total market index. Uh,
But it's a smart total market index, where VTI is a dumb total market index. And by dumb, I just mean it's making no choices at all about what parts of the market historically have delivered higher returns or not, where AVUS it takes advantage of the fact that we know that small cap growth historically drags things down, and so it filters that out and it shifts you in a direction away from this historically troubled part of the market. Yeah.
all right, well, that's great. That leads right into another question I had here from somebody who was asking about a something other than the international total market index at Vanguard. Is there something better people could use? And this comes up again with if you look at the target date fund at Vanguard, it is made up of the equity portion of the total US market and the total international market. And so if we wanted to help people, it seems like if we could replace the total market US and the total market international with something better in both cases, we will have helped them make a difference in their financial future that could be meaningful. So what do you say about something better than the Vanguard Total Market Index?
Well, there isn't an exact replacement for you're talking about VT, right? Which is the world, the global.
No, it's the um, well, the fund is the Total Market International Index.
Is that
And I don't
VXUS?
remember, it is ex-US.
Okay, VXUS, which I think does include emerging markets. So,
Yes, it does. Yes,
yeah,
it.
so with this footnote that I'm going to ask you to go get emerging markets on your own, then what we do in our best in class recommendations is we recommend the Avantis Fund AVDE, and Delta Echo. So AV Delta Echo. And the reason we do is that it is very similar to AV US, but for international developed markets. It doesn't include the emerging markets, but emerging markets are a small part of the international ex-US markets anyway. So you could add that in with a separate fund. And the same principle applies internationally that does in the US. If you looked at a total market fund for international developed markets outside the US, it would perform very similarly to a top 500 or a large cap blend fund because of the cap weighting. So I would say AVDE is a good choice there. Yeah.
But they're going to have to do the emerging markets on their
Yeah,
own.
they'll have to add emerging markets separately.
Probably 10%, 15% of that.
Well, I mean, your recommendation in the ultimate buy and hold portfolio has always seemed prudent, which is, yeah, it's 10% of the total portfolio.
Okay, and the emerging market fund you would recommend?
I think we're using
AVE
another
is
Avantis fund these days, AVEM.
EM.
Yeah,
Okay.
just double checking that. Yeah, So we have Avantis Emerging Markets AVEM. That's our recommended best in class. And Paul, in your implementation of best in class in your own portfolio, and Daryl, I think in some of your back testing of the ultimate buy and hold, you actually divide the emerging markets into three parts, right?
Right.
And we have recommendations for emerging markets value and emerging markets small cap blend where somebody could do that if they wanted to. They could bring in they could divide up their emerging markets into those smaller slices, and try and extend the exposure they have to small in value into the international markets. It is more expensive to get your tilts to small in value internationally, but if you want to preserve that kind of a tilt, you could do that.
Very good. So we had another project here today. I am such a fan of Ben Carlson. I don't know if either. Do you guys read Ben Carlson daily by chance? Anybody? No?
I listen to Ben Carlson weekly, at least.
Oh, you do. And
I do
I don't.
occasionally.
Huh?
I do occasionally.
Yeah, I don't listen to podcasts generally, but I do read his articles every day, and he had this recent one I thought was very good about some things I don't believe about investing, some things I don't believe, and I liked the list. And what I thought would be interesting, I will read quickly his one-liners that make up his list without all the explanation because it's pretty obvious. But I would be curious whether there are some things you don't believe about investing that I suspect a lot of people do. He says, I don't believe there is a sole way to invest. He says, I don't believe anyone has the ability to predict what's going to happen next with regularity. I don't believe politics should ever play a role in your investment decisions. By the way, I didn't know this, but in the article, he shows the total returns from the past four presidential election dates. And in 2008, the return was 14% annualized. 2012, 14% annualized. 2016, 15% annualized. And 2020, 16% annualized. So people who have shied away from being involved in one or other president in terms of the market have historically made a mistake. I don't believe investing is ever easy. I don't believe there is a perfect portfolio. I don't believe you should make investment decisions based on what Warren Buffett is doing. By the way, Warren Buffett is acting very bearish. And I don't believe you need to outperform the market to achieve financial success. I don't believe buy and hold ever truly dies. There are announcements that it has died many times in my 60, almost 60 years. Every time we go into a big bear market, somebody is predicting that buy and hold is dead. I
So
don't
that's like when they say that small cap value is dead, or remember equities died back in the, what was it,
Yeah,
70s?
that's
Yeah, they
right.
were
Yeah.
dead. They were gone.
The death
Sorry.
of equities, front
Yep.
page, US News and World Report, I think. I don't believe following the news makes you a better investor. I don't believe risk ever goes away. It's just a matter of choices. And that's what he came up with. And I just wondered whether you two have something that you don't believe in investing that's meaningful.
I have one or two, and they may be just derivatives of something he said, but and maybe this goes along the well, says I don't believe you have to do everything right as long as you don't do too many things wrong. And that is not original, by the way. I can't remember who said it, but
Warren Buffett.
yeah, well, okay, there you go. So but I think it's true because I've done a few things wrong, and I'm happy with where I am. The other one is that I don't believe you have to be perfect when you're executing your investment strategy. Close enough is good enough most of the time. So you don't need to go for the last little 0.010% of return, or make sure that your asset allocation is perfect to the nearest hundredth of a percent. Close enough is good enough. If you look at
So
that.
so let me
Those
ask
are
a
the two
question.
that I don't believe.
Let me ask a question about that, Daryl. There is an amount. I don't know. It could be any number of numbers, but there is an amount that is actually gets my attention. Certainly a 0.5%. If I can add a 0.5% over a lifetime, even as short as my expected life, I would take steps to make an extra 0.5% for the people and the causes I leave behind. Um, but
Sure, but you don't have to, and you probably will be fine.
no, that's right. But it still begs the question, at what point should an investor, J.L. Collins, smart guy, wonderful person, helping millions or at least hundreds of thousands of people, and saying basically all you really need is the total market index and just the US. You don't need that international stuff, just US. That's all you need. And so somebody comes along and says, but JL, if they would just put in 20% small cap value, it could add 1% compounded over their lifetime. And it's pretty simple to do that. In the whole scheme of things, the hourly reward in your lifetime for adding small cap value to total market index is the hourly wage is probably maybe $200,000 an hour or something, because it doesn't take much time. So what
I have two
is,
comments about that, Paul.
yeah,
So who's this someone who said, "Hey, JL"?
what do you mean? Who,
Anyway,
I say,
yeah. Who would
say,
that be? Yeah, that would be you, right? So the other thing though is this goes back to one of the things that Ben said. There isn't a perfect portfolio. He doesn't believe there's a perfect portfolio. So you're trying to and you're right, you can add incrementally to your return. But the first step is to invest. And if you do that,
Right.
you're 90% of the way there. And so now we're just talking about what happens at the margin. And this goes along the lines of what I was talking about, is you don't have to have a perfectly executed investment strategy in order to be
Got it.
good enough.
Well, and just look, Paul, at how much time you, me, and Daryl spend trying to teach people how to become effective buy and hold investors of small cap value. I think JL looks at that and goes, A, I don't know that I don't want to put all that time into it, and B,
It's true.
I have other things I want to teach my audience. I've got it's kind of it's a question of who you're speaking to and what they need. I mean, the fact of the matter is, for a very large part of the population, a target date fund may be just fine.
Exactly.
It may get them enough, and enough is all we really need, right? And were they to try and get fancy beyond it, it might actually cost them if it exceeds their risk tolerance and ability to stay the course. So,
Causes them to change
just
their strategy.
answering your question, Paul, the the truth I would add is that, and you and I talked about this the other day, and we may do a whole podcast on it at some point, but I don't think anybody invests in any of these model portfolios for a lifetime. And that would be true for, uh, two funds for life, the ultimate buy and hold, the Bogle and Buffett recommendations. I think everybody's investing journey in life just has too many twists and turns and too much history in it. And even the teachers have complexities behind the scene that are a product of how they got to where they are and where they're going, that mean that, it's fun to have these teaching examples, but life is messy. And even the teachers tend to follow something different than what they teach.
And my hope is that the students at Western Washington University will come closer to doing what we would think they should do than people who don't get that extra little kick in the behind educationally to get them headed in the right direction. But you're right. I mean, I'll just make one point. It happens all the time. Somebody will say, Paul, you guys, and they do mention you guys, they mention the work that you guys are doing, and they'll say, you guys are helping me out so much. I really like what you're doing. And then I'll just ask a couple little questions to get a sense of what they're doing with their with their portfolio. And it has sometimes almost nothing to do with what we teach. And I have to laugh because we spend a lot of time trying to get them to see the light. So okay, any more? You guys come up with anything else? I got one. Um, I don't believe people when they tell me how they've done in the market. I have spent a lifetime listening to people. In fact, one of the joys of being an investment advisor is that you do get to see, like a CPA gets to see how people have really done. And very often what they do remember so vividly, there are two things they remember with couples. One, and it's typically the male, remembers the stock that they made the most money on. They remember it so well. And the spouse, who wasn't the one, the female normally, who wasn't the one pulling the trigger and making the trades, would say, remind her husband of that she told him to buy Microsoft. And in the Seattle area, typically Microsoft was the story, and he didn't. And she has never let him forget. So the memories people have about their investments, um, and in fact, we know, and again, this is not a political statement. but we know that people do not remember what their life was like 4 years ago and what was going on that made any difference to them because we are so good at making up stories about where we are or where we were, and that's just human nature,
You
which
know,
is one of the go ahead.
yeah, the stories of financial loss I find more believable.
Yes.
People will tell you about the mistake they made selling out at the wrong time or losing on a bad investment, and I think those are more believable because they're usually hard won.
Yeah, but I will tell you, most people do not actually understand the lifetime cost of a mistake. I mean, even that little bit that they pay for a load fund and what that really costs them. Their minds don't think like calculators and compound everything. Um, I would say that this one about I don't believe following the news makes you a better investor. And the studies also say, or being very smart. It turns out that being very smart does not help you make more money. That just sounds so counterintuitive. But the reality is that indexes are going to probably make more money than most smart people will.
I did have a thought though, as you were talking about the people who you talk to that follow our work and then have a portfolio that's different. And that's that I think the most important thing we teach is buy and hold investings. So it's buy right, hold tight, don't peek. And I think the fact that they find value in our messages, it's probably that. And sometimes people's portfolios are a mess, partly because of that. I know for myself, I really hesitate to trade out of things, even if it's to rebalance or get my portfolio in the right shape, because I don't want to pay the taxes, I don't want to pay the fees,
Yeah.
I don't want to make behavioral mistakes. And so, it may be that their portfolio doesn't look like ours, but that their behavior is helping them out. And that's probably more important.
Good point. Can you leave that in, please? I like that. That's good. Gentlemen, thank you as always, and certainly a really heartfelt thank you to all of you who keep coming back. When I read that somebody has been to our site and they've gone through almost all of our articles and podcasts, I have my first thought is, oh my God, I'm sorry. But the other thought is, and it's real, we are so happy to be able to help people do better with their investments. We're the first to admit we don't know what tomorrow will bring. We don't know what the next decade will bring. But we do look at a lot of numbers from the past. And I honestly don't know anybody who is well there. I mean, there are academics who are digging deeper than we are, but I can tell you for people out doing the kind of thing that we're doing, I think we're doing a good job of looking at the past and finding information that can help you. And I hope you keep coming back, and I hope we keep helping you. Thank you and good luck.
How can I be wrong? I never make any predictions.
That's
अस्सलाम वालेकुम वरहमतुल्लाहि वबरकातुहू। उम्मीद है आप सब खैरियत से होंगे और वेलकम टू आवर ओरिएंटेशन सेशन फॉर इस्लामिक ट्रेड एंड फाइनेंस। इसमें हम मुख्तलिफ टॉपिक्स के ऊपर बात करेंगे। हमारा ये एक ज़बरदस्त कोर्स हमने अभी निकाला है जिसमें हम बैंकिंग, फाइनेंस, ट्रेड, जितने भी आपके सवालात होंगे, जितने भी प्रॉब्लम्स आप फेस कर रहे हैं फाइनेंस से रिलेटेड, बिजनेस से रिलेटेड, करिकुलम हमने बनाया जिसमें आपको एक तो कंटेम्प्रेरी जो अभी डेली मैटर्स है या फिर जो दुनियावी चीज़ें चल रही हैं उसके बारे में, और फिर जो फिक हमारा दीन जो कहता है उसके बारे में भी चीज़ें हम लोग डिस्कस करेंगे। मेरे साथ है द वन एंड ओनली शेख अदील आरफीन। शेख साहब, थैंक यू सो मच फॉर ज्वाइनिंग अस, जज़ाकल्लाह खैर। मैं फिर हमारे साथ शेख याह्या मसूद भी हैं जो हमें ज्वाइन कर रहे हैं हमारे इस्लामाबाद के ब्रांच से। तो जज़ाकल्लाह खैर शेख साहब, अस्सलाम वालेकुम व रहमतुल्लाह एंड जॉइनिंग, थैंक यू सो मच। शेख साहब कैसे हैं आप?
अल्लाह का शुक्र, अल्लाह का एहसान। आप सुनाएं से ठीक है, अगरचे काफी दूरी पर हैं लेकिन इंशाल्लाह दिल हमारे करीब हैं और स्क्रीन के अंदर भी करीब करीब है इंशाल्लाह।
इंशाल्लाह इंशाल्लाह। शेख साहब आप कैसे हैं? शेख अदील?
अल्हम्दुलिल्लाह जी, मैं बिल्कुल ठीक हूँ और बहुत मुझे अच्छा लग रहा है कि आप होस्ट कर रहे हैं आज ओरिएंटेशन सेशन, वरना हमेशा ये जो है ना अपॉर्चुनिटी मुझे मिलती है। शेख याया मकसूद को भी मेरा खुसूसी सलाम है। अल्हम्दुलिल्लाह ही इज़ वन ऑफ द फाइनेस्ट इंस्ट्रक्टर्स इन यू नो एन आलिम हु इज़ डीलिंग इन इस्लामिक फाइनेंस, और मिदरार की तरफ से भी अल्हम्दुलिल्लाह हेड ऑफ डिपार्टमेंट है पूरे इस्लामिक फाइनेंस के, और ये कोर्स भी अल्हम्दुलिल्लाह इन्हीं की सुपरविजन के अंदर डिज़ाइन हुआ है और मैं उसके अंदर एक इंस्ट्रक्टर हूँ हैं, और आप भी माशाल्लाह से शान उसके अंदर जो है वो पढ़ाएंगे। तो मेरे हिसाब से सबसे पहले तो क्योंकि हमारा ओरिएंटेशन सेशन है, मैं चाहूँगा कि आप एक्सप्लेन करें उस लिहाज से कि हमारे कोर्स स्ट्रक्चर क्या है, कि हम इसमें कौन कौन से कोर्सेज पढ़ाएंगे इस पूरे डिप्लोमा के अंदर, डिप्लोमा इस्लामिक ट्रेड फाइनेंस एंड बैंकिंग के अंदर। तो उसके बाद जो है इंशाल्लाह मजीद आगे चलते हैं।
बिल्कुल। तो शेख साहब सबसे पहले तो हम डिस्कस करेंगे इसके अंदर कंटेम्प्रेरी ट्रेड कि दुनियावी चीजें अभी क्या क्या हो रहा है, बिजनेस में क्या क्या है, फाइनेंस में क्या क्या है, ब्लॉकचेन टेक्नोलॉजी क्या है, क्रिप्टो करेंसी क्या है, ड्रॉप शिपिंग क्या है, क्या कहते हैं इसको, डेरिवेटिव्स क्या है, किस तरीके से इक्विटी फाइनेंसिंग हो सकती है, किस तरीके से लोन फाइनेंस है। तो जितनी भी चीजें आप लोग दुनिया में शायद सुनते होंगे मॉर्टगेज के बारे में, ये हम सारी चीजें डिस्कस करेंगे ताकि इल्म हासिल हो सके, लोग इस चीज से तारुफ हो सके कि होता क्या है ये। अगर हमें पता ही नहीं होगा कि होता क्या है तो हम उसके बारे में पता कैसे कर सकते हैं कि ये हलाल भी है या हराम भी है। तो सबसे पहले तो ये हम इस चीज के ऊपर
यानी यहाँ पे मैं चाहूंगा कि शेख याया इसको जो है वो यहाँ पे एक
थोड़ा सा डिस्क्राइब कर दे इसको,
डिस्क्राइब करें कि शेख जो बंदा कंटेम्पररी ट्रेड को, यानी दुनिया के अंदर आज जो सूरतें हैं तिजारत की, उसको जानता ही नहीं है, क्या उसके बारे में वो शरई हुक्म निकाल सकता है या जान सकता है? हम में से अक्सर लोग जो है वो सवाल पूछने आते हैं ये हलाल है या हराम है, डेरिवेटिव्स हलाल है या हराम है,
और
फॉरेक्स ट्रेडिंग हलाल है या हराम है, लेकिन दे डोंट इवन नो कि वो है क्या। तो क्या हमें शरई हुक्म पहले बताना चाहिए या पहले उसको ये समझाना चाहिए जिसके बारे में वो सवाल कर रहा है वो है क्या?
असल में शेख साहब सॉरी, मैं आप से थोड़ा सा पहले मैं सिर्फ ये एक पॉइंट और ऐड कर दूं, क्योंकि इतनी मार्केटिंग हो रही है इन चीजों के बारे में ना, कोई फॉरेक्स का कोई ऐप बेच रहा है, कोई क्रिप्टो करेंसी का कोई कुछ चीज बेच रहा है, कोई ड्रॉप शिपिंग का कोई कोर्स बता रहा है। तो मार्केटिंग में लोग चीजों बताए जा रहे हैं कि ये कर सकते हो, उस तरीके से पैसे कमा सकते, पर है पता नहीं ये क्या है। तो इस वजह से शेख साहब अगर इसके बारे में अगर आप थोड़ा सा हमें बता सकें, आई थिंक इट विल बी ग्रेट।
आमतौर पर हमारे माशरे में ये सोच है कि जो हमारे लेन देन के मामलात हैं, जो हमारे तिजारत के मामलात हैं, उनका दीन में होना या उनका दीन का एक अहम हिस्सा होना, ये चीज़ हमारे जहनों से निकल चुकी है। हम समझते हैं कि शायद सिर्फ इबादात हैं वो हम अदा कर लें, मामलात के जो चीज़ें हैं, मामलात जो हैं उनको भी सिर्फ छोड़ दें, वो गैप हमारा बाकी रह जाए, वो अल्लाह ने माफ़ कर देना। जबकि मामला इसके बरक्स है। अब देखें कि अगर हम मामलात वाली साइड को छोड़ देंगे, उसके हवाले से इल्म हासिल करना, उसके हवाले से जानना कि आया जो तिजारत हम कर रहे हैं या जो मामला हम कर रहे हैं, क्या ये मामला शरई उसूलों के तहत है कि नहीं, क्या ये मामला उन उसूलों के तहत है कि नहीं जो उसूल अल्लाह ने कुरान मजीद में बयान किए हैं या अल्लाह के रसूल सल्लल्लाहु अलैहि वसल्लम ने अपनी अहादीस में बयान किए हैं। अगर हम ये जाने बगैर इस मार्केट में कूद पड़ेंगे, तो जैसा कि हजरत उमर रज़ी अल्लाह तआला अन्हु कहा करते थे कि हमारी इस मार्केट के अंदर तिजारत वो करे, ट्रेड वो करे जो तिजारत के उसूलों को जानने वाला हो। और हम क्या करते हैं, हम पहले तिजारत में कूद पड़ते हैं और उसके बाद जब कभी दिल में ख्याल आता है 20-30 साल के बाद, बाज़ औक़ात अपनी एक उम्र सर्फ करने के बाद, हम कहते हैं कि चलो अब हम फतवा ले लेते हैं, अब पूछ लेते हैं कि आया जो हम काम कर रहे थे वो हलाल है या हराम है। तो ये ज़रूरी है इसकी अहमियत को जानना कि वो काम जो भी हम करने जा रहे हैं, आया वो शरीयत के उसूलों के मुताबिक है कि नहीं। आप देखें कि अक्सर लोग सवाल करने के लिए जब भी हमारे पास आते हैं और अपने तिजारती मामलात के हवाले से सवाल करते हैं, खुशी होती है दिल में। ये एक चीज़ हमेशा खुश करती है कि इस बंदे के दिल में ईमान है, वो ईमान की तड़प है जो इसको लेकर आई है सवाल पूछने के लिए। लेकिन साथ अफसोस भी होता है कि इतना अरसा गुजारने के बाद बाज़ औक़ात आप एक पूरी कंपनी बना लेते हैं, हज़ारों लोगों को आप जॉब्स दे रहे हैं, वो आपकी कंपनी में काम कर रहे हैं, उसके बाद लोग सवाल करते हैं कि जी हमारा ये जो बिजनेस है इसकी बुनियाद क्या इस्लामिक उसूलों के मुताबिक है कि नहीं है। जब उस पर फतवा दिया जाता है कि नहीं जी, सारे का सारा सर्कल ही जो आपने बनाया हुआ है ये इस्लामी उसूलों के खिलाफ है, इस तरह आप दुरुस्त कर सकते हैं, तो अक्सर लोग आगे से जवाब देते हैं कि जी इस्लाम में तो हर चीज़ हराम हो चुकी है। तो बेसिकली जो पहले हमने एक कंफर्ट जोन बना लिया है, एक दायरा कार बना लिया है जिसमें हर चीज़ कि जिसकी बुनियाद में कुछ ना कुछ हराम हमने ऐड कर लिया है, उसके बाद सालों साल उस हराम के आदी होने के बाद वो खून हमारे मुंह पे लग चुका है। उसके बाद फिर जब हम इस्लामी उसूल जानना चाहते हैं, इस्लाम को समझना चाहते हैं, हम इतना अंदर जा चुके होते हैं, दलदल में इतना अंदर घुस चुके होते हैं कि उसके बाद बाज़ औक़ात हमारे लिए निकलना मुश्किल हो जाता है। तो इंशाल्लाह इस कोर्स के थ्रू कम से कम हम लोगों के दरमियान ये आगाही पैदा करेंगे कि कोई भी मामला जो आप करने जा रहे हैं, ट्रेड करने जा रहे हैं, कम से कम अगर इतना हमारे अंदर शूर पैदा हो जाए कि वो मामला करने से पहले हम किसी अहले इल्म की तरफ रुजू करें, उससे सवाल कर लें, या जो इस तरह के कोर्सेज हैं उनको ज्वाइन करें और वहां से सीखें कि वो कौन से उसूल हैं जो हमें हराम से बचा सकते हैं। और देखें आप सल्लल्लाहु अलैहि वसल्लम रहमहुल्लाह ताला वो इस हवाले से किस कदर फिक्रमंद थे। जी मेरी आवाज क्लियर है?
जी जी शेख, आपकी आवाज मुझे क्लियर है, लेकिन यहाँ पे मैं जानना ये चाह रहा हूँ कि आपने बिल्कुल बजा फरमाया कि हमें किसी भी चीज को स्टार्ट करने से पहले उसका इस्लामी या शरई हुक्म जानना कि आया ये अल्लाह रब्बुल इज्जती वल जलाल के यहाँ हलाल भी है, जायज भी है या नहीं है, शरीयत इसके बारे में क्या कहती है। लेकिन उससे पहले भी ये तो जानना तो उससे पहले भी जरूरी है कि ये जो जिसके बारे में मैं शरई हुक्म पूछने आ रहा हूँ वो है क्या। यानी वो जो लोग तिजारत के खाली नाम के हवाले से फतवा लेते हैं और उसकी असल डिस्क्रिप्शन को जानते ही नहीं है। बहुत सारे लोग कहेंगे कि जी फलां तिजारत करना हराम है, लेकिन जब उनसे पूछा जाएगा अच्छा आपको इसका फतवा तो पता है, मुझे ये बताएं कि आप क्या इसको जानते भी ये है क्या जिसके बारे में आप फतवा बयान कर रहे हैं। तो हमने जो यहाँ पे डिप्लोमा इस्लामिक फाइनेंस ट्रेड एंड बैंकिंग के अंदर जो हमारा पहला कोर्स है, जो इंशाल्लाह उस्ताद शान जो है पढ़ाएंगे, उसके अंदर वो कंटेम्प्रेरी ट्रेड के ऊपर है कि वो सारी जदीद सूरतें ट्रेड की जो चाहे सही है या हराम है, या हलाल है या हराम है, उसके बारे में वजाहत करना, ताकि कल को अगर कोई आलिम या कोई दीन पसंद या दीन के बारे में नॉलेज रखने वाला आदमी भी कोई ऐसा नुक्ता नजर पेश करे और उसके बारे में बात करना चाहे या शरई हुक्म निकालना चाहे, तो उसको कम से कम पता हो कि व्हाट आई एम टॉकिंग अबाउट, कि वो सब्जेक्ट है क्या, वो तिजारत है क्या। अब फ्यूचर्स है, डेरिवेटिव्स हैं, फॉरेक्स ट्रेडिंग्स हैं, और उसके अंदर जो है वो
ब्लॉकचेन्स
हैं,
स्टॉक ऑप्शंस है, फ्यूचर्स है, पता नहीं क्या,
मतलब कि इसके नाम भी नहीं पता। तो मैं ये चाहता हूँ कि इस कोर्स को डिजाइन करते वक्त ये हमने टॉपिक इसलिए, हालांकि इसका इस्लामिक ट्रेड से कोई ताल्लुक नहीं है, ना शरई हुक्म से ताल्लुक है, हम यहाँ पे ये कह रहे हैं कम से कम ये तो जाने कि जदीद सूरतें है क्या। फिर दूसरा हमारा जो कोर्स है जो शेख इंशाल्लाह शेख आतिफ जो है वो पढ़ाएंगे इसके अंदर, वो है कि जदीद सूरतों के अंदर जो ट्रेड है, क्या वो इस्लामिक कॉन्सेप्ट जो अल्लाह के नबी सल्लल्लाहु अलैहि वसल्लम की फिकुल बुयू है, क्या उससे मिलता भी है या नहीं मिलता। जो चीज अल्लाह और उसके रसूल से साबित नहीं है, ना कुरान से साबित है, ना हदीस से साबित है, और ना ही उसको शरीयत ने इंडोर्स किया है, तो उस ट्रेड को हराम करार दिया जाएगा। उसके उसूल क्या हैं वो इंशाल्लाह शेख आतिफ पढ़ाएंगे। द प्रिंसिपल्स ऑफ इस्लामिक ट्रेड या प्रोफेटिक ट्रेड, फिकुल व्यू जिसको बोलते हैं, इंशाल्लाह शेख आतिफ वो पढ़ाएंगे। और तीसरा कोर्स जो है वो शेख याया मकसूद जो है हमारे साथ जो है माशाल्लाह से, मैं इनकी प्रोफाइल के हवाले से आप सबको फिर से बताते चलूं, शेख वैसे अक्सर जो है डिस्कस नहीं करते, माशाल्लाह इज अ ग्रेजुएट ऑफ इमाम यूनिवर्सिटी रियाद सऊदीया, और वहां से माशाल्लाह से इनका बैचलर्स है, मास्टर्स है, एमफिल है, और उसमें गोल्ड मेडलिस्ट है माशाल्लाह से, और उसके बाद अल्हम्दुलिल्लाह भी पीएचडी भी इनका इन्हीं टॉपिक्स के ऊपर जो है मुकम्मल है। अल्लाह ताला इनको बरकत नसीब फरमाए, अल्लाह ताला इनको कामयाब करे, खूब तरक्कियां अता फरमाए। तो ही विल बी टीचिंग द इस्लामिक बैंकिंग कोर्स,
इसमें सब कुछ कवर,
सारे प्रोडक्ट्स आ जाएंगे इस्लामिक बैंकिंग के। वो शेख उसके बारे में बताएंगे कि इस्लामिक बैंकिंग के जो मेजर टॉपिक्स हैं, इसके बारे में आपका कोर्स जो है बात करेगा। अगर शेख आप अपने स्टूडेंट्स के लिए जो कि एनरोल्ड हैं, वो आपको सुन रहे हैं, अगर आप उनको ब्रीफ इंट्रोडक्शन देना चाहें इस्लामिक बैंकिंग का, तो प्लीज अगर आप ये कर सकें।
आवाज इशू आ रहा है मुझे
जी। बिल्कुल आवाज क्लियर है शेख साहब आपकी।
आपको आवाज आ रही है मेरी? आप मुझे सुन सकते हैं?
अब आ रही है मुझे। जी जी, दोबारा बताएं।
मैं कहूंगा कि अगर इस्लामिक बैंकिंग के हवाले से आप बताना चाहें,
पहले आवाज आपकी नहीं आ रही।
इस्लामिक बैंकिंग के हवाले से अगर आप बता सकते हैं अपने कोर्स के हवाले से, आपके स्टूडेंट्स आपको सुन रहे हैं जो कि एनरोल्ड हैं इसके अंदर, तो क्या इस कोर्स में क्या क्या पढ़ाया जाएगा और ये किस तरह बेनिफिशियल है?
जी, इस्लामिक बैंकिंग के हवाले से चूंकि हम सब जानते हैं कि जो बैंकिंग है वो इस वक्त हमारी हकीकी ज़रूरत बन चुकी है, हमारी नीड है। और अक्सर लोग सवाल करते हैं बाज़ औक़ात कि क्या ज़रूरी था कि इस्लामिक बैंकिंग आए माशरे के अंदर? क्या हर चीज़ का मुतबादल ढूंढना ज़रूरी है? तो हम ये कहते हैं कि वो चीज़ जो आपकी हकीकी ज़रूरत बन जाए उसका मुतबादल ढूंढना ज़रूरी है, लेकिन वो चीज़ जो आपकी अयाशियों से मुतालिक हो, ठीक है, और जो आपकी फजूल खर्ची से मुतालिक हो, जैसा कि लॉटरी हो गई और इस तरह की चीज़ें, उनका मुतबादल ढूंढना ज़रूरी नहीं है। लेकिन बैंकिंग इस वक्त आप देखें कि हमारी हकीकी ज़रूरत बन चुकी है। हम अगर चाहें या ना चाहें, हम इस बैंकिंग में पढ़ चुके हैं, हर बंदे का अकाउंट बैंक में मौजूद है। उस सूरत में जब हर बंदा इस मैदान में कूद चुका है, हर बंदा उतर चुका है, और फिर साथ हमारे सामने एक इस्लामिक बैंकिंग के नाम से भी एक नई चीज़ मुतारिफ हुई और उलमा ने उस हवाले से रिसर्च की, उसको पढ़ा, उसको समझा, तो आया अब ये जो इस्लामिक बैंकिंग है, इसके हवाले से इस्लाम क्या कहता है? सिर्फ नाम इस्लामिक बैंकिंग होना काफ़ी है? इस्लाम के नाम पर क्या ये ऐसा धंधा तो नहीं है जो लोगों को कुफर के करीब कर रहा है, जो शैतान के रास्ते पर चला रहा है? और शैतान का सबसे बड़ा ट्रैप यही होता है कि वो कोई भी चीज़ जिसका लेबल इस्लामी हो और काम जो है वो कोई और हो, वो लोगों के सामने मुज़य्यन करके पेश करना और लोगों को भड़काना, ये शैतान का सबसे बड़ा ट्रैप है। तो हमने इंशाल्लाह उसमें ये चीज़ें बयान करनी है कि जो भी मोड्स ऑफ फाइनेंस हैं हमारी इस्लामिक बैंकिंग के अंदर, क्या वाकई ही वो इस्लामिक हैं कि नहीं है। जैसे कि आप देखें कि हमारे सामने कार लीजिंग का मसला है, हर बंदा सवाल कर रहा होता है कि जी बैंकों से लोग गाड़ियाँ ले रहे हैं, हम बैठे हैं यहाँ पर, हमारा भी दिल करता है हम भी गाड़ी लें। इसी तरह इजारा है बैंकों के अंदर, और कई एक मामलात हैं जो बैंकों में चल रहे हैं। तो क्या हमारे लिए गुंजाइश निकलती है इस्लामिक पॉइंट ऑफ व्यू से कि हम भी इस्लामी बैंकिंग के अंदर जाएं या मामलात करें? इस्लाम हमें किस कदर इसकी इजाज़त देता है, ये कितनी इस्लामिक है? ठीक है, इंशाल्लाह इस कोर्स के अंदर जितने भी इस्लामिक मोड ऑफ फाइनेंस हैं जो कि इस्लामिक बैंकिंग में हो रहे हैं, इंशाल्लाह हम उसको डिस्कस करेंगे, बयान करेंगे। इसमें इजारा है, मुराबहा है, तवर्रुक है, और इसी तरह इसके अंदर इंशाल्लाह जो हमारे यहाँ आजकल बीमा सिस्टम चल रहा है, उसको भी इंशाल्लाह हम डिस्कस करेंगे। तो ये सारी की सारी चीज़ें इंशाल्लाह इस कोर्स के अंदर कवर होंगी
इंशाल्लाह। शेख जज़ाकल्लाह खैर। मैं तो खुद इंशाल्लाह इस कोर्स के अंदर
वाला तो अटेंड करना है।
मैं आपने कार इजारा की बात की और आपने माशाल्लाह से इतने प्रोडक्ट्स की बात की, तो मैं खुद जानना चाहूंगा कि शेख का मौक़िफ़ क्या है इसके ऊपर, और क्या
क्लासेस अटेंड करना जरूरी है।
मैं तो इंशाल्लाह खुद भी अटेंड करूंगा। ये हमारा तीसरा कोर्स होगा इस हमारे पूरे डिप्लोमा के अंदर। चौथा कोर्स इसके अंदर जो है वो मैं खुद जो है वो इंशाल्लाह पढ़ाऊंगा, जो हमारे मैक्रोज ऑफ इस्लामिक ट्रेड के हिसाब से है, यानी वो कौन से कवायद हैं जिससे कभी भी कोई भी अगर ट्रेड बाहर जाएगी तो वो हराम करार दे दी जाएगी। यानी तो कोई भी मॉडल है, कोई भी बिजनेस मॉडल है, कोई भी ट्रेड है, कोई भी तिजारत है, कोई भी बै है, कोई भी कॉन्ट्रैक्ट है, कोई भी जॉब है, वो किन बाउंड्रीज के अंदर रह सकती है, वो पूरे असल में वो कवायदुल फिक़हिया हैं सारे, जो कि मुताल्लिक हैं किसके, व्यू के। यानी ट्रेड से मुताल्लिक जितने भी पैरामीटर्स हैं जो शरीयत ने सेट किए हैं, जितनी भी बाउंड्रीज हैं जो शरीयत ने सेट की हैं, इंशाल्लाह वो उसके हवाले से मैं इंशाल्लाह पढ़ाऊंगा। तो ये 4 कोर्सेज हैं जो कि जिसके अंदर कंटेम्प्रेरी ट्रेड है, इन जदीद सूरत ट्रेड की, आजकल के दौर में क्या चल रहा है, फिर अल्लाह के नबी सल्लल्लाहु अलैहि वसल्लम के दौर में क्या होता था, ये शेख आतिफ इंशाल्लाह पढ़ाएंगे। फिर इस्लामिक बैंकिंग जो जदीद दौर का एक टूल है और एक प्रोडक्ट है, इसके अंदर डिफरेंट प्रोडक्ट्स आ जाएंगे, पूरी बैंकिंग की चेन चल रही है, इस्लामिक बैंक्स की पाकिस्तान के अंदर खासतौर पे बहुत ये ग्रो कर रहा है। ये शेख
वेस्ट में भी ग्रो कर रहा है
जी, मिडिल ईस्ट में भी कर
काफी
रहा है।
मिडिल ईस्ट वेस्टर्न इकोनॉमीज भी एक्सेप्ट कर रही हैं इसको।
जी,
नॉर्थ अमेरिका
कहते हैं प्रॉफिटेबल ज्यादा है,
बोलने
बहुत।
ज्यादा प्रॉफिटेबल है। तो वो भी एक्सेप्ट कर रहे हैं, वो उन्होंने अपनी रिसर्चर्स लेके आए हुए हैं कि इसको हम कैसे इंट्रोड्यूस कर सकते हैं अपनी
ये
इकोनॉमी के
शैतान
अंदर।
कंफ्यूज हो गया यार, ये
वो परेशान है।
अगर हलाल है तो ज्यादा प्रॉफिटेबल कैसे? बहरहाल ये इंशाल्लाह शेख याया मकसूद जो है वो पढ़ाएंगे। और चौथा सब्जेक्ट जो है, जो फाउंडेशंस हैं और बुनियादें हैं और जो बाउंड्रीज हैं इस्लामिक फिक की व्यू के हवाले से, बिजनेस ट्रांजैक्शंस के हवाले से, इंशाल्लाह उस पर मैं बात करूंगा। तो ये चारों पैरामीटर्स को जो है ना, चारों डायमेंशंस को इंशाल्लाह कवर कर रहा है हमारा ये डिप्लोमा। और इसके क्लास स्ट्रक्चर के हवाले से, कोर्स स्ट्रक्चर के हवाले से मैं चाहूंगा उस्ताद शायान जो है बताएं कि कितने महीने का कोर्स है और किस किस टाइम पे जो है क्लासेस हुआ करेंगे।
तो हमारी एक तो बुनियादी जो मकसद ये होता है कि हम चीजें आसान करें, लोगों के लिए मुश्किल ना करें। तो हमने ट्वाइस अ वीक ये क्लास रखी है, तो 2 दफा हफ्ते के अंदर ये क्लासेस होगी, मंडे को और वेंसडे को, पीर को और बुध को। और ये 2 घंटे कितने घंटे की
45 मिनट्स की
क्लास होगी। वहाँ 45 मिनट्स की क्लास
7 to 9 शाम के अंदर
इंशाल्लाह शाम में रखेंगे, ताकि किसी अगर कोई कमिटमेंट है वो सारी कमिटमेंट्स वगैरह खत्म करके आप फोकस कर सकते हैं क्लास के अंदर, ताकि एक सेमेस्टर वाइज हमारा ये चले जिस तरीके से हमारे बाकी मॉडल्स।
इसके अंदर हफ्ते के अंदर 2 दिन क्लासेस हुआ करेंगी और ऑनलाइन है। ऑनलाइन का मतलब ये है कि रिकॉर्डिंग्स भी अवेलेबल रहेंगी, आप बाद में भी सुन सकते हैं, दोबारा भी सुन सकते हैं, रिवाइज भी कर सकते हैं। कोई चीज आपको पिछले सेशन की क्लियर नहीं हो रही हो, दोबारा भी सुन सकते हैं।
आप कहीं से भी सुन सकते हैं,
कहीं से भी सुन सकते हैं।
ऐसा कोई मसला नहीं है कि आपने यहीं पे कराची में।
यानी अक्सर ऑनलाइन क्लासेस में स्टूडेंट से बात करता हूँ, कहते हैं यार हमारा तो कोर्स ही गाड़ी में सुनते हुए हो गया, आते जाते हुए
हो गया।
ट्रैफिक आजकल PSL की वजह से वैसी इतनी है कि 1 घंटा तो कहीं ना कहीं लग ही जाता है।
आज आपको भी लगना है,
आज मुझे भी लगना है, बिल्कुल ऐसा ही है। तो बात यह है कि 4 महीने का कोर्स है, हफ्ते में 2 दिन है और 2 क्लासें होंगी एक दिन के अंदर। तो 1.5 घंटा आपको निकालना होगा मंडे को और 1.5 घंटा जो है वेडनेसडे को।
टोटल 64 आवर्स
टोटल 64 आवर्स का जो है ना हमारा पूरा डिप्लोमा है। कोई क्लास मिस हो जाए, रिकॉर्डिंग्स अवेलेबल हैं
और सवालात आप कर सकते हैं, कोई भी।
और क्लासेस हमारी जो है शहया मकसूद भी हमारे साथ हैं, ये भी हमारे डिफरेंट कोर्सेज पढ़ाते हैं, इंटरेक्टिव होती हैं। आप ओपन डिस्कशन होता है, आप किसी भी टॉपिक को जो है वो इनिशिएट कर सकते हैं उस्ताद के साथ, और वो अगर वो चाहेंगे तो उस पर बिल्कुल डिस्कस करेंगे। कोई क्वेश्चन आंसर सेशन हो, कोई आपका बिजनेस अपना मॉडल हो जो आप डिस्कस करना चाहते हो, इंशाल्लाह वी विल ट्राई आवर बेस्ट टू अकोमोडेट द डिस्कशन, जिसपे हम आपके बिजनेस को डिस्कस कर सकें अपनी क्लास के अंदर। और इंशाल्लाह हमारे पास वैसे भी जो हमारी फैकल्टी है उसके काउंसलिंग सेशंस जो हैं वो ट्रेड के हवाले से, बिजनेस के हवाले से अवेलेबल हैं।
शेख मसूद से भी
बिल्कुल, और मैं तो स्पेशली इनके कोर्स के अंदर जो है वो एनरोल्ड हूँ। पहली एनरोलमेंट मेरी अल्हम्दुलिल्लाह। वी हैव अ लॉट ऑफ स्टूडेंट्स कमिंग फ्रॉम ऑल अराउंड द ग्लोब। पूरी दुनिया से हमारे स्टूडेंट्स जो है एनरोल कर रहे हैं हमारे कोर्सेज के अंदर, इस्लामिक फाइनेंस, ट्रेड एंड बैंकिंग का। और इंशाल्लाह
और चीज भी होगी, सॉरी साहब, कि इसमें ग्लोबल पर्सपेक्टिव भी बहुत लोगों को मिलेगा कि बाकी दुनिया में भी क्या क्या हो रहा है जो शायद अभी पाकिस्तान में आया ही नहीं है। जैसे शेख साहब, अगर आप इसके ऊपर थोड़ी और बात कर सकें, जैसे काफी हद तक कुछ मॉर्गेज प्रोग्राम्स है जो पाकिस्तान में अभी तक आए नहीं, इंट्रोड्यूस ही नहीं हुए हैं। तो वो भी एक पर्सपेक्टिव लोगों को मिलेगा कि वो सवालात आएंगे ना। अब क्या पता कोई नॉर्थ अमेरिका में बैठ के ये सवाल कर रहा है, तो एक एक्सपोजर भी लोगों का बढ़ेगा कि ये चीजें भी होती हैं, ये चीजें भी अभी मार्केट के अंदर मौजूद हैं। अब कितने लोगों को पता था कि रियल एस्टेट स्टॉक भी मौजूद होता है, दुनिया में चलते हुआ रहा है, दुनिया में एक प्रोडक्ट है, बहुत सक्सेसफुल प्रोडक्ट है जिसके अंदर आप इन्वेस्ट कर सकते हो। मतलब सिर्फ प्लॉट खरीदना एक इन्वेस्टमेंट नहीं। हम लोग तो बोलते हैं ना कि यार इधर प्लॉट होने चाहिए, उधर प्लॉट होने चाहिए। नहीं, आप एक कंपनी के अंदर ही इन्वेस्ट कर सकते हो, रियल एस्टेट इन्वेस्टमेंट कर रही होती है शेख साहब। तो इस किस्म की भी एक्सपोजर मिलेगा। दूसरा जो आई थिंक एक चीज और भी हम लोग,
और हो सकता है किसी चीज को आप हराम समझ रहे हो हलाल हो और आपके प्रॉफिट्स बढ़ जाए, और हो सकता है आपका कोई आपके हराम कर रहे हैं और आपकी आखिरत महफूज हो जाए।
और हो सकता है आपको ये भी पता चले कि ये मैं कर भी सकता हूँ, मतलब एक ये आइडिया भी मिल जाए कि ये भी मैं कर सकता हूँ, ये मुझे, मेरे पास तो शायद इसका
ज़हन खुलता है, एक्सपोजर बढ़ता है आदमी का।
और दूसरा ये आपको ये भी पता चलेगा कि भाई ये जॉब भी हलाल है या नहीं, इस कंपनियों में काम भी कर सकते हैं।
बहुत सारे लोग, मुझे इतना दुख होता है वैसे वाकई शेख याया मकसूद ने शुरू में ये बात की है कि लोग पूरा नेटवर्क चला रहे होते हैं एम्प्लॉइज का, बड़ी बड़ी कंपनीज चल रही होती है, और आखिर में वो शरई हुक्म पूछने आते हैं तो बेचारों का सभी उड़ जाता है उसके अंदर।
मतलब ये भी
एक बड़ा सिंपैथी होती है मुझे लोगों के साथ।
प्रॉब्लम है
तो भी पहले पूछ लेते,
यही तो ये एक प्रॉब्लम है। किसी को पता नहीं था कि मैं एक प्रोक्योरमेंट कर रहा हूँ एक बैंक के साथ, पता नहीं था कि ये इसके अंदर क्या।
लेकिन बात ये है कि मैं उन सब के लिए मोटिवेशन दूंगा, जो भी अल्लाह के लिए किसी हराम को छोड़ता है ना, अल्लाह हलाल का नेमुल बदल पैदा करता है।
एंड उल्टा भी इसके ऊपर शेख साहब चलेगा, मतलब कुछ हलाल चीजें भी अब आपको एक नजरिया देंगे, एक विजन मिलेगा कि ये भी हो सकता है। सिर्फ हराम के अंदर ही पैसा नहीं था,
हलाल के अंदर भी बहुत ज्यादा पैसा कमाया जा सकता है, कोई मसले की बात नहीं है, पर ये कि शायद हमारे पास एक्सपोजर ना हो, शायद हमारे पास थॉट ना हो, विजन ना हो, तो ये भी इंशाल्लाह हम कोशिश करेंगे कि इस क्लास
और फैकल्टी जो है आपके सामने जो हमने इंट्रोड्यूस कर दी, कोर्स शेख याह्या मकसूद, उस्ताद शयान एंड अदील आरफीन साहब, इंशाल्लाह हम आपको पढ़ाएंगे। ये कोर्स 4 महीने का है, सर्टिफिकेट्स विल बी प्रोवाइडेड। आप लोगों के लिए कोऑर्डिनेटर्स भी जो है मौजूद होंगे। अगर आपको कोई भी चीज क्लास के अंदर ना समझ आए तो आपके लिए उस्ताद से पूछकर जो है स्पेशल जो है आपके लिए आपको जो है गाइडेंस इंशाल्लाह प्रोवाइड करेंगे। तो मेरे हिसाब से दिस वाज ऑल फॉर द ओरिएंटेशन सेशन, शॉर्ट समराइज ओरिएंटेशन सेशन, जिसमें मैं फैकल्टी को इंट्रोड्यूस कराऊं, कोर्स को इंट्रोड्यूस कराऊं, टाइमिंग्स को इंट्रोड्यूस कराऊं। तो इंशाल्लाह आप लोग में जो लोग भी इनरोल करना चाहते हैं वो कमेंट सेक्शन पे जाकर जो है वो हमारे कोऑर्डिनेटर से राब्ता कर सकते हैं,
इनरोल भी करें और सॉरी आपकी बात करें स्प्रेड भी करें ना, क्योंकि एक तो ये मतलब कितने लोगों के पास ये प्रॉब्लम,
क्या पता सदका जारिया हो जाए,
सदका जारिया बन सकता है ना। कितने लोगों का ये मसला है शेख साहब, काफी लोग इन्वॉल्व हैं चीजों के अंदर, इनको पता नहीं, इल्म नहीं है, पता नहीं इन चीजों के अंदर मौजूद है। क्या पता आप किसी की हेल्प कर दें, आपके लिए वो सदका जारिया बन जाए, क्या पता वही आपके लिए पता नहीं क्या क्या एक सवाब का जरिया बन जाए। तो ये अब एक तो आप खुद भी इनरोल करें, दूसरा आप लोगों को और
माशाल्लाह से मैंने सबको इंट्रोड्यूस कराया। हमारे साथ जो उस्ताद शयान मौजूद हैं, ही इज वन ऑफ द फाइनेस्ट एंटरप्रेन्योर्स और माशाल्लाह से बड़ी पोजीशंस के अंदर काम करते हैं कंपनीज के अंदर। तो हमेशा आइडियाज जो है ना वो फ्लो में आ रहे होते हैं क्लास के अंदर भी, तो शायद आप लोग में से कोई मुस्तफीद हो जाए। ऐसे ये अक्सर लोगों को पार्टनरशिप्स ऑफर करते हैं। तो कितने स्टूडेंट्स जो है माशाल्लाह से आपके पार्टनर्स बन चुके हैं,
कोशिश कर रहे हैं और बन जाए। कोशिश ये होगी कि इन्वेस्टमेंट भी यहीं से आ जाए,
इन्वेस्टमेंट भी यहीं से आ जाए। तो मैं रिस्पॉन्सिबल नहीं हूँ कि उस्ताद शयान किसी ने इन्वेस्टमेंट ले ले। शेख याह्या अब आपसे जो है ना वो ताल्लुक बन गया उस्ताद शयान का, ऐसा ना हो ये कल से आपसे जो है इन्वेस्टमेंट पकड़ लें किसी काम के लिए, तो आप बोले मेरा पैसा डुबा दिया इन्होंने।
शेख साहब रिटर्न अच्छा मिलेगा इंशाल्लाह।
शेख मेरे ख्याल से आवाज नहीं आ रही उनको।
हाँ शेख साहब को शायद आवाज नहीं आ रही हो।
चले
बहरहाल की बात नहीं है।
बहरहाल हम अपने सेशन को यहीं तक रखते हैं, ओरिएंटेशन सेशन को। आपसे इंशाल्लाह पहली क्लास में मुलाकात होगी और अल्लाह ताला आप सबको आपके इल्म में इजाफा करे, अल्लाह ताला ये इस काबिश को कबूल करे, अल्लाह ताला हमें हलाल की तौफीक दे, हराम से बचा के रखे। ये दुआ जरूर मांगा करे कि अल्लाह मेरे लिए हलाल को काफी कर दे, हराम से बचा ले, हलाल को काफी कर दे। लोग दुआ करते हैं अल्लाह हराम से बचा ले, नहीं, ये दुआ भी मांगो अल्लाह हलाल को इतना सफिशिएंट कर दे और हराम से बचा ले। छोटी चीज क्यों मांगते हो अल्लाह ताला से, बड़ी चीज मांगो। शेख आतिफ भी यही बोलते हैं, इंशाअल्लाह बड़ा मांग, अल्लाह बड़ी सल्तनत देगा इंशाअल्लाह। जज़ाकल्लाह खैर, बारकल्लाहु फीकुम, अस्सलामु अलैकुम व रहमतुल्लाहि व बरकातुहू। सुब्हान रब्बिका रब्बिल इज्जति अम्मा यसिफून व सलामुन अलल मुरसलीन वल्हम्दुलिल्लाहि रब्बिल आलमीन।
It's time for your weekly financial workout with your elite personal trainers, Ryan and Bob Payne, guiding you on how to build a stronger and more robust financial plan. So get ready. We're about to pump you up, live from the greatest city in the world and the city of brotherly love. This is No Pain, No Gain.
Good morning. This is No Pain, No Gain Financial Radio. I'm your host, Ryan Payne, president of Payne Capital Management, along with the man with the plan, our chief investment officer, my father, Bob Payne. Well, we have a great show for you this morning to help you on your path to financial freedom. We're going to talk about it's not your parents' retirement. If you've already arrived or getting close to the age when your parents retired, Bob and I are going to discuss how different your retirement's going to look than your mother and father's did many years ago. We're going to talk about worlds of investment. We're going to break down the major options of where you can place your money and invest it for retirement, or if you're in retirement now, and give you some of the pros and cons of all the different options available to you. Along with this week's financial pornography. There's a lot of stuff out there in the media, the news, you need to avoid at all costs to keep on track with your game plan for retirement. And we have our spotlight segment today. We have our colleague, certified financial planner, Michelle McKinnon, on the show. She's going to talk about a real retirement case she worked on, give you some tips, give you some ideas on how to solidify your retirement. So good stuff this morning. Let's talk about the way retirement used to be versus today, Bob. And I'm curious, when my grandfather, your father, Pop, retired back, oh man, I guess it was what, over 25 years ago or 30 years ago, what did Pop's retirement look like back in the day?
You know, Ryan, it's so much different today than it was 30 years ago. 30 years ago,
pretty much retirement was covered for you, right? Today, you need to plan for yourself. Now, what percentage do you think 30 years ago, Pop's retirement was covered by Social Security and pension?
I would say that pretty much covered his whole lifestyle, but did he even have a pension?
Well, he didn't have a pension, but most people did. That's one thing that we didn't have a lot of today. But, 30 years ago, most retirees had a pension if they worked for a major corporation.
Yeah, those days are long gone because the advent of the 401k really put the onus of retirement on the individual. So a lot of times nowadays, you don't have the luxury of not only getting Social Security, but a pension on top of that.
I'll tell you the other thing you had back in the 80s for the people who retired then is their medical costs were mostly covered by their former employer.
Oh, yeah, and medical costs, as we know, are probably one of the biggest expenses you're going to have in retirement. I can't even imagine, having the luxury of a company taking care of, my medical costs in retirement. That's just non-existent today when we look at building a plan for you.
Yeah, you combine that with the fact that medical costs will go up 2 to 3 times inflation. It's almost like educating your children and keeping your parents healthy is there's not enough money in the world.
Yeah, and that's why a lot of times this generation's be called the sandwich generation, because you just have so many more financial burdens than your previous generations did. And I mean, it's really one of these things where your plan has to be so much more dynamic today than plans, Bob, you and I were running, close to 20 years ago. It's just a completely different world.
Well, that's why you got to be so careful, Rod. You got to be certain that you're putting together a retirement plan not based on what your parents did. It can be very deceiving. How many times did I tell you Pop would be on the golf course and I'd get a call from the back office that his checks were bouncing. And I'd call him up in the middle of the round and I'd say, Pop, hey, Pop. Yeah, I said, we got a problem. We got, your checks are bouncing. He'd say, yeah, okay, fine. Put some money in the account. Click. So, it's not really, I took care of him. But
is this what I have to look forward to, Dad, in your old age?
That's what I'm going to do, Rob. I'm going to play golf every day and bounce checks and, it just puts you as the power of attorney.
Not all of us have a luxury to have a son who's going to take care of our expenses, as your father did. And I think that's why it's so important when you actually do run retirement projections, you're adding in a lot of things that didn't have to be added in 20, 30 years ago. Like you just mentioned, Bob, you have to have those healthcare expenses built into your financial plan. You have to have whatever expenses you have for your kids, your grown children, and any aging parents, built into the plan as well. And also just longevity in general, right? We're living a lot longer than our parents and grandparents' generations lived. So longevity is another thing you got to plan for that you didn't have to plan for before.
Oh, yeah. Longevity is like spot on, right? When you were 65 back in 1985, you're expected to live another 14 years. So you're going to live to 79.
That's amazing.
That same person today is going to live to 91. And then, take your mom. Women back in 1985, if they were 65, were expected to live to 84. Now it's 94. Your mom's expected to live to 94. That's a lot of planning.
That is a lot of planning. And if you think about it, I mean, when you're planning for 30 years plus in retirement, you need to have the appropriate amount of growth in your portfolio, the appropriate amount of income, because you're really planning for the long term. And it's like, we've said a lot on the show, Bob, but retirement is not really a destination anymore. It's a whole nother journey, and you've got to be prepared for it financially.
Yeah, you do. You have to have productive assets, right? I mean, a lot of times we want to have big houses, and baby boomers, like, we love houses, right? We love big houses. And, a lot of times baby boomers come in and they have so much money in real estate, which suck assets out of your portfolio. They're not money generators, they suck money out of your portfolio. So they're expensive. You want to have income generating assets to fill that income gap, not just for today, but what might be 20, 30 years from now, because a lot of you are going to live 20, 30 years longer.
Yeah, and I had this conversation the other day with a baby boomer client. He's 65. He wants to work another 5, 10 years, and the numbers just don't work with the behemoth of a house that he has, out in Long Island, where the real estate taxes are exorbitant. The maintenance on the house every year is also dramatic. So we figured, okay, if you sell that big asset, make it a productive asset, and you cut that overhead that comes with owning a home, it's a game changer. So these are all the things you have to start thinking about. And if you're sitting there thinking to yourself, I need a game plan for the long term, I know it's not my parents' retirement, I need to get serious, here's your shot to do it. If you're one of the next 10 callers and you have over $200,000 saved for retirement, Bob and I will run for you our famous Total Financial Master Plan. It's a full holistic review that's going to help you get through retirement. Just simply bring in all of your statements, put them in a brown paper bag. We'll sort through everything for you. If you bring in last year's tax return, we'll have our CPA partner review it. We'll make sure you're not paying unnecessary taxes. If you bring in that will that was done 20 years ago, we'll have our estate planner review that to make sure your estate plan's up to date. Then we'll take all of your financial statements, look at all your investments, build you a personalized portal, and do a full x-ray of everything you own. We're going to look at all the critical elements. We're going to look at income. Income is so critical in retirement. We're going to show you how to optimize or increase the income on your portfolio so you're not dependent on market volatility. We're going to look at fees. There's a lot of hidden fees in financial products. I know it's shocking. We're going to break down all those hidden fees in things like insurance products, brokerage products, mutual funds, show you how to reduce cost on your portfolio, and we're going to look at diversification. What risks, what pitfalls do you have in your portfolio? Are you prepared for the next market crash? We're going to show you how to bulletproof your portfolio. And then finally, we're going to tie it all together into one total financial master plan, and we're going to determine the most important question. Is your money going to outlive you? Or more importantly, are you going to outlive your money utilizing strategies our family has worked on for 4 decades to take your family from point A to point B with the least amount of risk and the highest odds of success?
Hey, planning is hard. Calling us is easy. Give us a call at 844-752-6692. You can text or call 844-752-6692. If you're one of the next 10 callers, you've saved over $200,000 for your retirement. Our team will create for you your own total financial master plan. No obligation, no cost, but there's no plan unless you call or text 844-752-6692. That's 844-752-6692. This is Bob Payne. I'm with my son, Rye. We're the Paynes of No Pain, No Gain Financial Radio.
It's time for the weekly No Pain, No Gain market update with the team at Payne Capital Management here in New York City.
Good morning. This is Bob Payne, co-founder and chief investment officer of Payne Capital Management. Now, this week on the Street of Dreams, the good news and the good times continue to roll with the Commerce Department's announcement of an upward revision of the second quarter GDP to an annual rate of 4.2% from an earlier estimate of 4.1%. In addition, U.S. corporate profits measured a 16.1% gain year over year. Now, this is the largest in 6 years. Of course, it was boosted by the tax cuts and a stronger economic growth than initially reported. Now, small company stocks made all-time record highs this week and are outperforming their larger company counterparts, with earnings growth of 35% from last year, and with the Small Business Optimism Index climbing to its second highest reading in its 45-year history, as business owners expect the strong economy to continue. Joining the Russell 2000, that's the small company stock index, on the new high list were the S&P 500, the Russell 1000, the Russell 3000, and the Wilshire 5000 indices. The New York Stock Exchange Advanced Decline Line, the NASDAQ, and the Value Line Geometric and Arithmetic indices. Now, this all sounds good, especially when you hear it on the evening news that the market is making an all-time record high. But when you look at your statement, you might be a little confused, since the previous highs were made this past January, when the market made a short-term peak and the majority of the gains were made for the year. See, the market is just getting back to even, coming out of a 7-month consolidation from this past January. But historically, when the stock market makes new highs after a period of consolidation, it's proved to be very bullish. Of course, bull markets climb a wall of worry, and the media has plenty of issues they want you to focus on. But see, markets don't care about good or bad. They only care about better or worse. And things continue to get better as a whole with the second longest economic expansion in the history of our country. If you're sitting there wondering, do I have a portfolio that's appropriate to my family's needs, to my goals, to my risk tolerance? Why sit there and wonder when you can know? For a free analysis, please call or text 844-752-6692. That's 844-752-6692.
For all the latest information and news that you need to retire successfully, make sure you go to BeBullish.com. That's BeBullish.com.
It's Ryan Payne, Bob Payne, No Pain, No Gain Financial Radio. And Bob and I are very simple men. And of course, we want to keep it simple for you so that you can have the most common sense advice when it comes to your planning and investing. That's why we put together our latest video series, What You Need to Know About Creating an Income You Cannot Outlive. It's a simple 3-part series. You can simply download it for free. Text the word bullish, that's BULLISH, to 555-888. That's the word bullish, to 555-888. It gives you a quick baseline on all the things you need to do to get retirement ready. It's an easy way to get started. You can get the course for free. Simply text the word bullish to 555-888. Text the word bullish to 555-888. And in this segment on No Pain, No Gain, we want to talk about the different options you really have when it comes to building a retirement plan, what different investment options are available to you, or if you're in retirement now, and what are some of the pros and cons to the different worlds of money that are available to you. Bob, and when we talk about the pros and cons of the world of money, I think the first place I think about is cash, the banking world. How much cash are we sitting on right now, and what are some of the advantages to having money, a lot of money sitting in the bank, and some of the disadvantages?
Well, the big disadvantage is that cash is only insured up to $250,000 per depositor, right? A lot of times you own a business where back in 2008 and 2009, the friendly bank pulled your line of credit and you were stuck. Right. You're just hanging out there to dry. So a lot of businesses now keep enormous amounts of money in cash and it's not insured.
That's right. And we see this too as an individual investor, especially since 2008. You may have gotten burned, put your money out of the market, or started stockpiling cash and been nervous to figure out what to do with it. And the real shame of it is, Bob, and this is why banks can be somewhat evil, is they're paying nothing in terms of interest on your savings and checking accounts, and interest rates have gone up. What's up with that?
Wait a minute. Mortgage rates have gone up, the line of credit's gone up, margin rates have gone up, and you're telling me that banks haven't increased their savings rates? I'm shocked.
I know it's cruel, but if you're still sitting in cash, you haven't seen the interest rate on your cash go up the same way. If you're borrowing from a bank have gone up, that's just unfair in my opinion.
Well, I just, the other day I sat down with a client, Ryan. We took $1.8 million out of one of the biggest banks in the country. And he said, Bob, it's a great bank. It can't go under. And I said, yeah, I said the same thing about Merrill Lynch right before it went under. Never say never. If you have $250,000 in insurance per deposit, well, move it to 5 banks, move it to 10 banks. And we can do that on a push of a button, which is really nice.
Yeah, you could just ladder out CDs right now. You can get a much better yield than sitting in cash. The other thing to think about is if you're just sitting in cash and you need that money working for retirement, let's face it, cost of living has averaged over 3% since World War II. That means every $1 million you have today is worth $500,000 every 20 years. So, Bob, if you're sitting in cash right now earning that measly interest, that's having a really, really negative effect on your retirement.
Yeah, it truly is, Ryan. It's you need a strategy. You can't just have an all or none proposition. That's the thing. When you look at the worlds of money, you've got the banking world, you have the insurance world, and you have the world of Wall Street. And, they all have certain business models. But, you wouldn't have someone just build a boat for you. For example, you wouldn't have if you have a bank build a boat or an insurance company build a boat or Wall Street build a boat, you don't want a boat that has a sail too big or an anchor too small or an engine too big, right? You need balance. And if you just go to one institution, you're not going to have balance.
Yeah, because you do need cash on hand. You need liquidity. You can't have everything invested for the long term. I mean, one of the keys to our strategy is having what we call diversified streams of income. Ideally you get to a point in retirement where the cash flow coming in exceeds what your income gap is, and that's the money that you're not making anymore working, and you're not touching principal. And that's kind of the key there, but you always need some sort of liquidity because there are emergencies. And sometimes it's not the best time to take your money out of the market, and that's why you want to have diversification in your portfolio.
Well, that's what I love when I see these institutions advertise, and they tell you they can be all things to everybody. Let's face it, in the banking world, they want to lend you money. In the insurance world, they want to sell you insurance. In the Wall Street world, they want to fee you to death. When you're working with an institution, you want to make sure it's your objective that's being served, not theirs.
Yes, and that's what another key thing is with the Wall Street world specifically. You really want to understand, is the advisor you're working with, are they an old school, what we call broker, even if they have a shingle out there saying they're a financial planner, are they a real financial professional where they take on a fiduciary responsibility? It's a key difference, and the real difference is if you're a fiduciary, like we are, is you, by law, have to act in the client's best interest, and you're not allowed to just sell products that may benefit the broker and the firm, and that's a very key distinction, Bob.
Well, it's a big distinction, right? Fiduciary works for the individual, works for you. The stockbroker or insurance agent or whoever is a registered representative. Now, they're not a registered representative of you. They're a registered representative of the company that pays their paycheck. Who are you going to be loyal to if you're a registered representative? The client or the institution that writes you a check every month?
Yeah, it's kind of like the old analogy of when you go to the doctor's office and the doctor's recommending the pharmaceuticals of that pharmaceutical rep that took him on the best trip last year.
Yeah.
It's the same kind of thing a lot is going on in the financial services world. So you need to be aware and make sure those conflicts don't exist, because they can. Which also makes me think about, Bob, you know, we hear a lot about annuities. Annuities are sold all the time. They're on the radio. What is it? Crash-proof retirement. But there's a lot of cons to owning a lot of these annuities that give you, quote-unquote, guaranteed income for life, which I put that in big quotes.
Well, it is a big quote because they give the impression you're going to get S&P stock market returns with no downside risk, and you're going to get the same upside of somebody speculating or investing, you know, in a basket of S&P 500 stocks, which is impossible. You can't have above average return with absolutely no risk and no fees. You know, do you ever wonder why, Rye, when somebody calls an insurance company and says, you know, I took out this annuity and I'd like to get my money out, and they suddenly tell them they got a 10% penalty, but there's no fees?
I suspect, Bob, because there's definitely hidden fees there you don't know about. And that's the thing with annuities is a lot of times you will get a stream of income, but what you need to realize, and this is really, really important, is you probably have to give something up. And it's usually your principal in exchange for an income stream for life. And not to say it's good or bad, but what you have to think about when we think about when we're building plans for you is liquidity in retirement, or having access to your money, is really critical, and it can be very dangerous and risky to give up principal. So you really need to understand the fine print with any sort of insurance product that you're going to go into.
You know, Ryan, isn't it amazing every time we call an insurance company and ask them for a track record of their annuities and they tell us they can't provide it?
It is. It's not shocking to me, Bob, because there might be a lot of smoke and mirrors involved there. Just saying.
Well, if you want to make sure that you don't have a portfolio that's built in smoke and mirrors, then want to have a little more certainty in your life, if you're one of the next 10 callers and you've saved at least $200,000 for retirement, Ryan and I will do a complete analysis of your personal financial situation. Matter of fact, we'll create for you your own total financial master plan. Now, there's no obligation and there's no cost. And if you're one of the next 10 callers, here's exactly what we'll do for you. We'll review your tax situation. We'll have our estate attorney review your wills, trust, basically be certain that your estate plan is not an IOU to the Internal Revenue Service. But lastly, we're going to look at all of your investment statements, regardless of where they're custodied, whether it's with an insurance company, a bank, a brokerage firm, or another RIA. What we want you to do is take all those statements as they come in, get a shopping bag, throw them in, and make an appointment. We'll do all the work. What we want you to do is be able to compare apples to apples to see if your portfolio has the three key elements of a successful strategy. That's diversification, fees, and income. You know, not all portfolios are diversified. Most of you are taking more risk than necessary to achieve your financial goals. Why take more risk when you don't need to? A lot of portfolios are overcharging you. We want to be certain that you are not paying any more fees than necessary. Yes, as Ryan says, there's a lot of hidden costs in those portfolios. Let's pull back the curtain and make sure you're getting what you're paying for. And lastly, you know, as we retire, or if you're in retirement, you know, there's two goals in retirement: to get retired and to stay retired. And in most cases, there's a gap in income that has to be filled. We want to be certain that you have the cash flow to support the lifestyle and to achieve the dreams and goals that you and your family have set out for. And lastly, we want to tie it all together and be certain that you have a portfolio where you're going to outlive your money. Your money's not going to outlive you, utilizing strategies that my son and I have been perfecting now for over 4 decades. For 43 years, we've been helping families like yours get from your financial point A to your point B, your goals, your dreams with the highest odds of success and as much certainty as a fiduciary like Payne Capital Management can provide.
So don't waste time. Call or text us now at 844-752-6692. That's call or text 844-752-6692. If you have over $200,000 saved for retirement, get the holistic review at 844-752-6692. That's 844-752-6692. Get a second opinion. Know what's going on in your portfolio. Get a game plan in place. Simply text or call 844-752-6692. If you're one of the next 10 callers, take advantage now at 844-752-6692. That's call or text 844-752-6692. This is No Pain, No Gain Financial Radio. It's time for Financial Pornography of the Week. This is where Bob and I scour the daily financial news and call out the biggest offenders of offering obscene and profane financial guidance to help you protect yourself from making any ill-advised financial decisions. So, Bob, what awful, profane advice did you find online this week that we all need to avoid?
Well, Ryan, I was reading a couple of articles, and there's one that reminded me of one of the most important investment lessons that I ever taught you when you were growing up. And that was never lend money to your friends, your father-in-law, or your brother-in-law. Remember why I taught you that?
Well, mainly because you wouldn't get it back.
Yes. Not only would you not get the interest, but you wouldn't get it back. So this article reminded me to add one more thing, and that is never lend money to cities in the state of Illinois where their pensions are in distress and where the local governments have overspent and overpromised, their employees.
That sounds like a very dire situation, Bob. So what's the latest? What's going on there right now that you don't want to own Illinois' bonds in your portfolio, especially on the municipal side?
Well, what you have is a situation in a town called Harvey, which is outside of Chicago. They've got $60 million in unfunded pension liabilities, which is twice their operating revenues. And what they've decided to do is basically default on the municipal bonds. So basically the people that lent money to Harvey are no longer getting their interest, and there's a good chance they're never going to get their money back.
Well, it's a really good point because we always say this, but all bonds aren't created equal. And if you look at state by state, if you own a tax-free bond portfolio, it's really important to know what credits you own, or at least have someone doing research on them. This is where you get a lot of risk. We talk a lot about bond funds on our show, but owning bonds outright or owning bond funds where you don't really understand what you own, or no one's actually watching the credit quality, something like this where you think you're getting into a tax-free investment that's safe can come back and bite you in the you-know-what.
Yeah, it's not just the bond funds, right? Because you don't know what's in there. You really don't. I mean, you get a prospectus, but most stockbrokers and most investors that are sold these products don't really understand, what the bonds holdings are. There's no real transparency. But the other thing that I've seen over my 40 years is in every town, in every city, people think that their local general obligation, a bond that's issued by the city they happen to live in or the town of Harvey or Harrisburg, PA, for example, they think they're safe, but they're not. They don't have the revenue. They don't have the resources. And a lot of times when they go up against the state, they lose. So, we find, and we've had a rule, since Payne Capital Management's been around, never, ever invest in a local small general obligation, even if it's a larger city.
Yeah, and that's very true, especially if you live in New York, New Jersey, and you want to be very state-specific with your bonds. It's not worth the added risk buying some of these municipalities or these local municipalities that, to your point, Bob, don't have a wide base of revenue. And I've seen a lot of horror stories. Like I met with a client a couple months ago, and he had a lot of Atlantic City bonds in his portfolio.
Oh, boy.
And those bonds have just gotten destroyed. So it's just so important to understand what you own and at least know that somebody is doing the work to make sure that everything you have is high quality, because a lot of times it might not be.
Yeah, well, hold on, Rob. We got sports betting now in Atlantic City, so maybe that'll bail those C-rated bonds out.
I've been to Atlantic City. I have a feeling it's not going to help. But
you know what, Ryan? You know what happens is, a broker will come to you with a higher yield, and that's what happens. You'll reach for yield, thinking that a local general obligation bond is safe. It's not. You don't want to reach for yield. You don't want an investment where there's not certainty when it comes to the bond or fixed income investment. There's not certainty that you're going to get that money back. It's not just return on your money; it's return of your money. You want to make money. Where should you be?
You'd be in the stock market because the returns over time are much better. And in that vein, Bob, talking about lousy investments, this past week in New York, it was actually blockchain week. And this is where everyone congregated to talk about cryptocurrencies. And there's just so much hype around cryptocurrencies. Reading lots of different articles right now. One article that I saw out there was talking about how this may be the year that institutional money comes in and buys Bitcoin. Well, what's with the hype with such a lousy investment? I just don't get it, Bob.
I know. After you had Warren Buffett and his partner Charles Munger just basically telling you that this is a scam or a fear of missing out trade, how could anybody want to attend a conference, let alone put their hard-earned money into something they don't understand?
Yeah, what's crazy to me is you see very, very low participation in the stock market. In fact, if you look at how many people in the U.S. own stocks versus 10 years ago, it's down by like 10, 15%. And meanwhile, we talk about this a lot on the show, but fundamentals right now are some of the best we've ever seen historically. You have global growth around the world. You have companies more profitable than ever. We have low unemployment. I mean, it really doesn't get this much better. I say it's like we have this magical formula, but meanwhile, you have all this enthusiasm about an investment that's down 50% from its highs already this year, and it has a market capitalization that's as large as Apple and Warren Buffett's company, Berkshire Hathaway, put together. It's actually insane.
So wait a minute. People are putting money into an investment where, number one, you can't put it in your wallet. It doesn't pay a dividend. You can't eat it. And meanwhile, you've got major companies, the biggest companies in the world, are buying back their own stock. They're increasing their dividend. They're paying out, earnings to investors side by side with the way they're investing their money. And people don't want to have stocks. They want to own something called Bitcoin.
It's there's an old quote, Bob. When you find yourself on the side of the majority, it's time to stop and reflect. And I think that's exactly what's happening right now, which is also another reason to be bullish on stocks, because people just haven't embraced it, and that's usually a very good sign. It means that there's a lot of value there. Once everyone's on the trend, it's the greatest thing since sliced bread, that's what you get in trouble, and I think that's a lot of what we've seen here with Bitcoin.
So true, right? I think with the stock market, let's face it, we're in the 10th year of a recovery. People think that it's like a baseball game, right? It's got to be over after the 9th inning. Well, I've been to extra inning games, 14, 15 innings. The market, the economy, it's not a baseball game, right? It's an engine. It's the greatest engine of wealth creation in the history of the planet. And the markets have been going up since 1776. That's a trend I'm going to continue to follow and to invest on.
It's a wise decision, Bob, not to mention all those dividends that pay out and that cash flow, and especially if you're getting close to retirement. In retirement, that's one of the best places to look, is a diversified portfolio right now to generate lots of current income. So if you're thinking to yourself right now, I need a plan that's not based on hope, like Bitcoin, here's your shot. If you're one of the next 10 callers, you have over $200,000 saved for retirement, Bob and I will run for you our total financial master plan, and we'll do it with no obligation or cost. It's a full, comprehensive, holistic review that's going to get you on track for retirement. Simply bring in all your most recent statements. Just throw them in a folder. We'll go through everything for you. We'll look at everything from your tax return. Our CPA partner will review it. Make sure you're not paying unnecessary taxes. Only pay what you have to. Bring in last year's will. Bring in that will that you put together 10, 15 years ago. We'll have our estate planner review that to make sure that it's up to date, what changes you may want to make. And then finally, we'll go through every single investment you own. We'll load it into a personalized portal for you so you can see everything at a bird's eye view. and we're going to look at all the critical components to your portfolio. We're going to look at fees. There's so many hidden fees in investment portfolios. We're going to break them all down and show you how to reduce cost on your portfolio. We're going to look at income. Income is so much more consistent and reliable than the market going up each year for your retirement. We're going to show you how to increase or optimize the income on your portfolio to make sure you're set for retirement. And we're going to look at diversification. What hidden risks do you have in your portfolio? Are you prepared for the next market crash? We're going to show you how to bulletproof your portfolio, make it retirement ready. Then we're going to tie it all together and determine that age-old question. Are you going to outlive your money? Or more importantly, is your money going to outlive you? Utilizing strategies now we've been perfecting for over 40 years to take your family from point A to point B with the least amount of risk and the highest odds of success.
It's time. Call or text 844-752-6692. If you're one of the next few callers, you've saved over $200,000 for your retirement. Our team will prepare for you your own total financial master plan. Now, there's no obligation and there's no cost, but there's no plan unless you call or text 844-752-6692. That's 844-752-6692. This is Bob. I'm with Rye. We're the Payne family. We're the Paynes of No Pain, No Gain Financial Radio.
This is No Pain, No Gain. Now, back to the show.
It's Ryan Payne, Bob Payne, No Pain, No Gain Financial Radio. And Bob and I like a common sense approach to planning and investing. We want to give you common sense ideas that you can use when it comes to your planning and investing. And that's why we put together our latest online video series, What You Need to Know About Creating an Income You Cannot Outlive. You can download it for free. Simply text the word bullish. That's bullish, BULLISH, to 555-888. That's the word bullish to 555-888. It just gives you a nice baseline. Get the planning process started. Make it easy as possible. Simply text the word bullish to 555-888. That's the word bullish to 555-888. And if you want to learn more about me and Bob, you can check us out on the World Wide Web. And yes, Bob's hair is real. Go to BeBullish.com. That's BeBullish.com, and you can subscribe to the show. Also, most weeks you can catch me on CNBC, Fox Business News for regular appearances. And if you ever have a burning question you want to ask myself or Bob, you can email us, questions@BeBullish.com. That's questions@BeBullish.com. And if it's a great question, we'll answer it right here on the show. And to help us out with questions today, we have our producer, the man behind the scenes, Mark Haywood. What's shaking, Mark? How you doing today?
Hey, good morning, guys. How we doing?
No complaints.
Well, you know, Mark, if I was doing any better, we'd all be Ryan.
We'd be Bob is more apt.
I was about to say, if I was doing any better, I'd be down in Florida on the beach.
Sounds like Bob's
Social
life.
City time now, Mark. Come on, get your geography right, will
That's
you?
right. That's right. Oh, man. Well, how about we dive into the mailbag, guys?
I love it.
All right.
All right, got a couple good questions this week. Let's take one from Blake out in Westchester. Blake says, Bob, what's your opinion of investments that require you to keep your money locked up for a certain period of time? I know a lot of annuities operate that way, as well as some hedge funds. Oh, Blake, you asked about annuities. Here we go.
Well, Blake, it's not just insurance investments. It could be real estate. It could be limited partnerships where you can invest in basically anything. But anything you can invest in where there's a wrapper that prohibits you from having liquidity, having to lock up your money, you can always do it with something that's liquid, probably less expensive, and a better deal. So Bob's rule of thumb is never, I mean never, invest in something where there's not liquidity. Rye, what's your experience been with illiquid investments?
Yeah, I think it's one of these things that we forget because the market's been so good and things have been going so well. But back in 2008, when we had that huge sell-off in the market, anything that was illiquid sold off even further. So it's not when the times are good, and it always goes back to one of our favorite Warren Buffett quotes: "When the tide goes out, you can see who's been swimming naked." You really want to make sure that you have liquidity or you're able to sell your funds for quick cash. If you can't do that, it can be a real big problem sometime down the line.
You know, think about it. When it comes to any investment, Just because you decided that day that that's the price that you're going to pay doesn't mean it's the right price. All right. Markets are auctions, right? It's what somebody's willing to buy it for and what somebody's willing to sell it for. So the other problem with illiquid investments is when you want to buy more, you can't necessarily take advantage of the dips. And when you have a tax loss, not every investment works out, and nothing's guaranteed 100%. If you want to take a tax loss, you can't. I mean, or if you have somebody who needs the money, you can't give it to them. So, all things considered, Blake, we don't want anything that's illiquid, and we never, ever want to have an investment that comes with what's called a K1. Right. Have you ever had any K1 nightmares?
Oh, it's a disaster. If you've ever had any sort of real estate investment, a lot of times you do get a K1, and they usually come late. Your accountant's going to charge extra fees to actually run the tax return on that K1. But I would put this caveat out there because I see a lot of these real estate deals right now being sold. I don't think it's necessarily bad to have money in one of these things, but I think you just have to realize that's not in your liquid bucket. You got to make sure that you have ample cash. If, God forbid, you have an emergency, something happens, you have to know if you're putting money into an investment like this or one of these hedge funds, that it's just not going to be readily available. Get the mindset, this could be 5-10 year money, not money that I may need next year.
Well said.
Oh, man, Blake, you got them on their soapbox this morning here, but some good takes from Bob and Ryan, as always. Let's take another one. Let's move over now to Mary in Great Neck, Long Island. Mary writes in, Ryan, is it a bad idea to do a Roth conversion if I have a high income?
Long story short is probably yes, Mary. I don't know your specific situation, but just to give us a little refresher on what a Roth conversion is, it's when you take money from your IRA or your retirement account and you pay taxes on that money now and put it into an account where you never pay taxes on it again, which can be a great strategy. But the problem is, if you're a high earner right now and you pay taxes on that money, you're going to pay at a very high tax bracket. And it can take you many, many years to make back what you had to pay in taxes. Because remember, come April the next year, you've got to cut Uncle Sam a check for any taxes that are owed, and that's money that comes out of your portfolio that's not growing anymore. And that's something, Bob, you really need to consider when you're looking at something like a Roth conversion.
Yeah, I agree, Ryan. I think Roth conversion is a phenomenal tool. It could be like me, where they work me like a dog here, and you pay me like a puppy, right? So high income's never been an issue.
That's our business plan. Work Bob like a dog, pay him like a puppy.
But yeah, I'll tell you what, that's been one of the greatest tools, the Roth conversion. Either doing, and not just that, right? How about the backdoor Roth? An idea you turned me on to a couple of years ago. I have a ton of money now sitting there growing tax-free forever. I love that, forever.
Yeah, that's a good point. So if you are a high earner, the Roth conversion, Mary, might not be the best option for you, but you might be eligible to do a backdoor Roth. And not to get into too many specifics, but basically, when you make over a certain amount of money, you can't contribute to a Roth IRA anymore. However, there's a loophole to do that, which you can talk to your accountant about, talk to your financial planner about. So there are ways to build tax-free money, even if you're in a high tax bracket, but it entails a couple proactive strategic moves on your part with your accountant and your financial advisor.
Ryan, the best way to know if you need a Roth conversion or not is to be financially organized. Now ask yourself, on a scale of 1 to 10, how financially organized are you? Now ask yourself another question. On a scale of 1 to 10, how organized financially would you like to be? Of course, we're all going to answer a 10. And if you'd like to be a 10, all you have to do is be one of our next few callers who have saved at least $200,000 for retirement. Think about it, having all your documents stored in one place, having a holistic view of not only what you own, but fully understanding why you own it, having all of your goals displayed, and a report card on how you're progressing towards those goals. If you'd like to be a 10, all you have to do is call, and Ryan and I will create for you your own total financial master plan. Now, there's no obligation and there's no cost, but if you're one of the next few callers, here's exactly what we'll do for you. We're going to have our CPA partner review your tax return. Be certain that you're utilizing every tax benefit that's available to you, something like the Roth conversion. We're going to have your legal documents reviewed, your estate plan, your wills, your trust, to be certain that your estate plan is not an IOU to the Internal Revenue Service. And lastly, we want you to bring in all your investment statements. I don't care how organized they are. Keep them in the envelope. Throw them into a shopping bag. Pick up the phone, make an appointment, bring them in. We're going to analyze your portfolio to be certain you have the 3 key elements of a successful strategy: diversification, fees, and income. Diversification is all about having your assets spread across asset classes and also within asset classes. You don't want to overcharge yourself. Why pay more fees than necessary? There's a lot of hidden costs buried deep in that prospectus, that mutual fund you own, or into that big, thick insurance contract sitting somewhere in your desk drawer. And income. We all need income. But most importantly, our biggest goal in life is to retire, but also to stay retired. There's a big income gap when you retire, and you want to be certain that we're able to fill that with an income stream that you can't outlive. We want to make sure that we have that income gap filled before we retire, and more importantly, to make sure that we can stay retired. And finally, we're going to tie it all together into one customized total financial master plan. We're going to answer that age-old question: are you going to outlive your money, or is your money going to outlive you? Utilizing strategies that my family's been perfecting for over 40 years. We want to help take your family from your financial point A to your point B, to your goals, to your dreams, with the highest odds of success and as much certainty as a fiduciary like Payne Capital Management can provide.
So don't waste time. Call us now at 844-752-6692. That's call or text 844-752-6692. We have a couple slots left. If you have over $200,000 saved for retirement, call or text us at 844-752-6692. That's 844-752-6692. Make time for a second opinion. Make sure you are where you should be. Simply call or text us at 844-752-6692. That's 844-752-6692. This is No Pain, No Gain Financial Radio. Hi, it's Ryan and Bob here, and we want to talk to you about your cash. Bob, many of us are sitting on a lot of cash right now in our businesses and personal savings accounts, and rest assured the banks are taking full advantage of our dormant cash.
That's right, Ryan. Not only do you have to worry about FDIC insurance limits, but most savings accounts pay close to 0%.
Exactly right, and that's why we're putting together short-term CD ladders so you can have increased FDIC coverage, and not to mention rates that are in many cases double what your local savings and local checking accounts are paying.
If you want to learn more about how to manage your cash better, simply text the word CASH, that's C-A-S-H, CASH, to 844-752-6692. That's text the word CASH, C-A-S-H, to 844-752-6692.
Here's this week's Spotlight on No Pain, No Gain.
It's Ryan Payne, Bob Payne, No Pain, No Gain Financial Radio. And Bob and I want to make sure that you are retirement ready in the simplest, most common sense way. And that's why we put together our latest video series, What You Need to Know About Creating an Income You Cannot Outlive. You can download it for free. Simply text the word bullish. That's the word bullish, B-U-L-L-I-S-H, to 555-888. The word bullish to 555-888. It's a great way just to get started. Simple baseline to get the retirement planning process started, especially if you've been procrastinating. You can check it out for free. Simply text the word bullish to 555-888. That's the word bullish to 555-888. And we now have a very special guest on the show, my colleague, Bob's colleague, one of our two certified financial planners, superstar, seen on CNBC, Michelle McKinnon. I can't say enough. Thanks for being on the show this morning.
I feel like I need a drum roll, Ryan. Jeez. I'm happy to be here.
Well, that was a very, very humble...
Kidding.
Mr. Wonderful is tuning in to hear you today, Michelle. He seems to really like your commentary on CNBC.
Michelle seems to be on CNBC with Mr. Wonderful like every week, so we're all envious. Thanks for being on the show. This is our Spotlight segment where what we do every week, we dissect a real financial plan, and then we look at some of the flaws or mistakes this couple's been doing with their planning. So why don't you talk about a case you worked on recently and some of the things you did to help them out?
Yeah, so great couple up in New York, a little on the younger side, and talking about stalling and procrastinating, Ryan, they never ran a retirement plan. So the husband just really didn't like working anymore, had been working for the past 40 years, was tired, accumulated a nice net worth, but no one had ever run the numbers, and no one has ever told them that they can retire sooner rather than later.
Yeah, because that's one of those things. It's like you could work a couple more years, but wouldn't it be nice to know if you can get out now why not do it?
Right. It completely changes the game, right? If you know you don't have to work, you're just choosing to work, or you choose to do something else. So that was the big accomplishment that we were able to give them, is saying, hey, if you guys continue to contribute to XYZ for the next few years, you can retire. And number two, we provided that income through generating an additional $50,000 from their income that immediately bridged the gap. They're retiring a little bit before Social Security. I mean, that's their living expenses right there, Ryan, and they don't even have to touch into principal.
So let me get this right, Michelle, if I'm looking at this correctly. So without touching any principal, you're able to generate current income of almost 90 grand a year.
It's crazy.
That's awesome.
What were they invested in that was generating such a low return?
Number one, very heavily weighted in equities, so minimal bond exposure. And number two, and kind of one of the reasons why that they came to us, is they are loaded up in all these mutual funds, and they were forced to pay a lot of capital gains on those mutual funds last year, and they were not prepared for it because they looked at their statement. And this has actually happened multiple times these past few months, that people have come to me saying in 2017 they got hit with a big tax bill because obviously everyone did well in their mutual funds, but no one sold. But just kidding, you still have to pay taxes because those mutual funds paid out a decent amount of capital gains last year because they all did so well.
Big problem when you have, you don't have any control of your tax situation. It's like if you have an index fund or you have an ETF, you can control when those capital gain distributions occur. It's just crazy to give up that control to somebody you don't know.
Let me sum it up real easy for you folks. Mutual funds are old school. Exchange traded funds are new school. It's just from every aspect, it's just a much more efficient vehicle. And we talk about this a lot, but money saved in taxes is just as important and just as green as money you can make invested. It's all about what you take home, not what you make.
Well, if you're not paying taxes to the IRS, that money's in your account compounding to your benefit, to your children's benefit. I mean, why give it to the government?
And I've also seen that people are hesitant to take capital gains because oftentimes on these mutual funds, you will have to pay capital gains to sell them. However, guess what? You're still going to have to pay capital gains over the next few years, even if you don't sell. So it's like better to rip the Band-Aid off now and then be in control of taking your own capital gains.
Yeah,
exactly. How come they had so much money in cash?
Well, I see this all the time, Bob. They were thinking about potentially buying a home, not sure, and just a little bit of fear. They didn't know what to do with their cash. They had been working for so many years and just stockpiling, and they were really fearful of, I don't even know what to do. I don't even know what to invest in. There's this fear that markets are at all-time highs. I don't want to put it in the market. I'm worried that the bond markets are dipping because of interest rates rising. So it was a little bit out of fear.
That's crazy, but it's so common, and I totally get it because 2008 was just so dramatic. But when you're earning 1% at best on your money market fund, you're losing so much. And then you look at here with your diversified portfolio, where you're not saying, hey, we're not going to put all your money in the market. We're going to diversify over different income streams. That's 90 grand a year and has nothing to do with if the market goes up or down. It's a beautiful thing.
Well, that's what I love about your analysis here, Michelle. Everything's in writing. They can see, what their net worth and their income stream is going to look like one year after another. Without this type of analysis, it's just some salesperson's, lips against your fear, right? It's like 3,000 words, shouted at a person or said to a person. That doesn't allay your fears. When you're able to see your own personal financial situation in writing, and it shows you where you're going to be every year for the next 30 or 40 years, it's got to have a lot of comfort.
And that they can retire way sooner than they ever expected.
And stay retired, even better.
Yeah.
It's just so therapeutic to have a plan and just understand, what your income gap's going to be, how you can fill it. And there's a lot of easy fixes where if you just get diversified properly, you're set. But by not doing those things, in this case, there's so much they're missing out on. Like to miss out on another $50,000 a year in income has a tremendous impact negatively by not doing anything. And that's what we see all the time.
You know what the beauty is, Michelle? You have to take time to sit down with you to get the plan done. But once it's finished, they now have that 360 financial portal. They can drop in any time they want. 9 o'clock at night, 4 o'clock in the morning, 12 o'clock on a Sunday afternoon, when they're ready, when they feel like checking to see how they're doing. And everything's going to be right there in real time.
Absolutely.
Well, great job on this case. Another, as Bob would like to say, financial masterpiece. Thanks for being on the show, Michelle.
My pleasure.
If you're thinking to yourself right now, I need a review like this. I need to know what my income gap is. I need to know how to fill it. Here's your shot to do it. We still have a couple slots left. If you call right now and you have over $200,000 saved for retirement, myself, Bob, and our certified financial planner, Michelle McKinnon, will put together at no cost our total financial master plan, which is a full review just like this. If you bring in all those statements, just throw them into a folder. We'll go through everything, build your personal portal, and we'll run the same analysis. Can you increase your income by double? This couple is going to have $90,000 a year coming in. They're going to fill that income gap. Do you have the proper diversification? Are you sitting with too much cash? Do you have too much risk in your portfolio? What does your diversification look like? We're going to show you where those pitfalls are in your portfolio. Make sure you're retirement ready and you're protected against the next downturn. And then finally, what we're going to do, we're going to put it all together, and we're going to determine that age-old question. Are you going to outlive your money, or more importantly, is your money going to outlive you? Utilizing strategies now we've worked on for over 40 years to take your family from point A to point B with the least amount of risk and the highest odds of success.
All you have to do is text or call 844-752-6692. That's 844-752-6692. We have a few slots left. If you're one of the next few callers, you've saved over $200,000 for your personal retirement. Our team will create for you your own total financial master plan. No obligation, no cost, but there's no plan unless you call or text 844-752-6692. That's 844-752-6692.
Well, another great show this morning. It's always a financial party when Michelle McKinnon comes on the show.
Always, Ryan.
Thanks for being on, Michelle. Any big plans for the rest of the weekend?
I'm actually going down to Florida to hang with some friends and hopefully soak up some sun.
Nice. Always on the move, Michelle McKinnon.
Always on the move.
Big Bob, another great show this morning.
Excellent job, Rye, and can't wait till next week.
All right, well, have a great weekend, and as always, be bullish.
Information provided on today's show is provided for information purposes only and does not constitute investment, tax, or legal advice. Information has been obtained from sources that are deemed to be reliable, but their accuracy and completeness cannot be guaranteed. Always consult with an investment, legal, or tax professional before taking any action.
All right. Well, mindful of everyone's time, we might make a start. So, huge thank you to everyone who's joined the webinar so far. I still have quite a few more to jump on, so I'm sure everyone's going to get a lot of value out of the session today. We've got some fantastic speakers, both Jane and Joel, who will introduce themselves shortly. We have called this the Mother's Day Personal Finance Webinar, I guess in honor and recognition of all of the amazing things that all of the mothers around the world do. And of course, those who are not mothers, I'm sure will get a lot of value out of today as well. So obviously, this is a combined webinar between Global Financial Consultants, Ally Wealth Management, and Greenwich Partners in Perth. So plenty to cover. So mindful of everyone's time, let's dive straight in. A little bit of housekeeping before we do. We do have the chat and the Q&A box both running. So any questions at all as we go through today's webinar, just drop a note. We'll get to your questions as we can. If they are too complicated, then we might leave them to the end, or anything that's too personal, we will obviously leave and potentially chat about offline. So let's dive right in. So naturally, being financial planners and lawyers on this webinar today, wouldn't be a complete webinar without our disclaimer. So everything that we are going to discuss today, the topics we will go through, are all for your entertainment purposes only and information. So if you need personal advice, obviously reach out to Joel or myself on the personal finance matters, and reach out to Jane for any legal questions or things that you would like to discuss at a personal level. So let's dive right into the content. This is a bit of an idea of what we are going to be covering today. So first and foremost, who we are, why you should be listening to us, who's Jane, who's Joel, and of course myself, Jared, here in Singapore. We'll tell you a bit about the companies that we are involved with, and then we'll get right into the content. So first and foremost, one of the most important topics of today, estate planning. Is your family protected? What do you need to think about if you're an expat, if you're a resident? What documents should you have in place? What are some of the common mistakes that we see people making time and time again? We'll certainly be covering off that. Superannuation, changes for Aussie residents, changes for expats. We're near the end of the financial year. It's budget week. Fantastically exciting for those of us in the financial world. Probably completely boring for everybody else. But we're sure there's plenty that's going to come there. We've got an election probably in the next 12 months, end of financial year in less than 10 weeks, if my maths is correct there. So plenty to cover. So we'll cover off a bit on the super side. Tax changes, we've got tax cuts coming, we've got changes to tax rates, plenty to discuss and cover there. Obviously, the Aussie property market, not a day goes by where it's not in the headlines. So what's happening in the market, what do expats, what do residents need to know? And then, of course, investment planning. Where are some of the, I guess, areas that we're positioning clients in terms of investments at the moment? What are we watching for? Where do we see value? We'll touch on that a bit at the end as well. So on that note, Joel, I'll throw over to you to tell everyone a bit about yourself, a bit about Ally Wealth.
Excellent. Thank you, Jared. So my name is Joel Kieran. I'm a senior financial advisor working for Ally Wealth. Ally Wealth started in 2020, so midway through a pandemic, a great time to obviously start a business and, you know, from scratch per se. But it just came out from lots of movement that happened, particularly with Australians living all over the world. COVID was a bit of a I suppose let's call it a tumultuous time where we saw lots of movement happening, where lots of people coming back to Australia, lots of people leaving Australia because they needed obviously work to continue. So it was set up obviously to help Australian expats no matter where they live around the world, and we sort of focus on lots of broad financial advice and wealth planning for those clients living anywhere, essentially. So that could be from anywhere from investment advice, cash flow modeling, repatriation, moving anywhere around the world. And I think that as of the last list that I ran, I've got clients in 32 different countries. So, and that is very much still growing, and the team of Ally Wealth is still growing. That is my beautiful office located in South Perth. Jane and I are neighbours by about a street. So it's a great area to be around. So yeah, that's a little bit about me and Ally Wealth.
Fantastic. Thank you, Joel. And Jane, tell us a bit about yourself and Greenwich.
Thanks, Jared. So I'm part of a small team, and we, like Joel said, operate out of South Perth, which is a lovely place in the world. I joined Greenwich Partners in 2009. So Alex started the practice in 1976. He has more than 40 years of experience, and he has a particular interest in trust, estate planning and succession planning law. When I joined in 2009, I actually started as the receptionist and the legal secretary, but moved my way up and completed my law degree. So now I assist Alex in all aspects of the practice, with a particular interest, I think, in general commercial law, so dealing with small business transactions and the estate planning matters. And more very flattered to be asked to this seminar or webinar today, because I have a particular interest in assisting women with their particular issues, so in small business and estate planning. So.
Fantastic, Jane. Well, absolutely delighted to have you with us today. I'm sure you've got plenty of valuable content, so won't waste any more time with me speaking. We'll dive right into what you've got to share with us. Before we do, a little bit about Global Financial Consultants myself. So firstly, I must agree, I do love South Perth as well, albeit I'm sitting here in Singapore today, having lived here for 11 years as of July, so it has been a while. Global Financial Consultants started in Sydney in 97, moved to Singapore in 2003, and again, working with Australian expats is what we do day in, day out when it comes to all things personal finance outside of Australia. So obviously work very closely with Joel and the team with Ally Wealth in assisting our clients all over the world. So enough about us. Let's dive right into the content. So Jane, I'll throw over to yourself to perhaps start with the basics around, what is estate planning? What do we need to think about? I feel like people have a bit of a loose idea, but they're not quite sure where to start and what it all means.
Thanks, Jared. Yes, I agree. I think it's a term that we throw around all the time without actually appreciating what it means. And it does seem to be that it's overwhelming for a lot of people as well. So basically, at the most simplest, estate planning is the arrangement of your assets. And this is from the point of view of while you're alive to maximise your wealth and also as well to assist your family on your death and ensure that you protect your assets. So a good estate plan is generally a joint effort between you, your family, and obviously a multiple of professionals, so financial planners, solicitors, accountants, those sorts of people. And everybody sort of puts in and you get an estate plan out of that. As you said, Jared, I'm going to be more looking at the will side of it and what documents you should put in place to ensure your assets are protected. And I believe you and Joel will talk more about the financial aspects, particularly, wealth creation and wealth protection during your lifetime. On that note, I just wanted to also make the note that estate planning is not something just for the extremely wealthy. Everybody should have an estate plan if you've got a family. By having an estate plan, like I said, you can protect your assets or organise your assets during your life, but you can also make your family's life a lot easier on your death and also ensure that they're protected and that your wealth goes to the people that you care about the most. On that note, I will start with a will. And again, I know it's very basic, but I do know that a lot of people mention these off the cuff without fully understanding what it is. But basically, a valid will is a legal document where you choose a person who you want to help distribute your assets on your death, as well as determine who you want those assets to be distributed to and how. Only recently, actually, in the news, there was a report saying that about 60% of all Australians don't actually have a will. And they did emphasise the importance of having a will, and I agree. I think it is extremely important. However, I think in terms of the complexity, there is some complexity. And even though you think you may have a will, it does need to be a valid will for it to be effective on your death. A valid will must be completed and signed correctly. I won't get bogged down in the legislation, but the Wills Act provides a number of things that determine whether or not your will is valid. And that's why it's really important to ensure that you get some advice in that regard. And also to be valid, it mustn't be revoked by you. And there's actually situations where you can unintentionally revoke your will, things like marriage, if you write a letter that can amount to testamentary wishes on your death, those sorts of things. But I will touch on that a bit more later. If you don't have a will, what happens? If you don't have a will, the court will actually make provision of or distribute your assets. So under the Administration Act, the legislation gives the Supreme Court the ability to have some discretion as to how your assets will be distributed. And there's a certain a schedule of rules that they have to follow in doing this. Those that are most relevant, I thought, for us today, so particular situation, family situations. So for instance, if you're unmarried and have no children, the court will give the whole of your estate to your closest relatives, so your siblings and your parents. If you're married and have no children, then your spouse will have your estate. However, if your estate is quite large, your spouse might get some and your parents might also get a portion of your estate. If you're married with children, your spouse will get the whole of your estate. However, again, if your estate's quite large and we're talking, in excess of $400,000, then it'll be divided between your spouse and your children. Most importantly, probably what is most relevant to myself as well, I'm not married and in a de facto relationship. Under the legislation, de facto relationships are particularly complex and they're not as covered as they are if you were married. So if you're married with children, for instance, you can quite comfortably know that if you died without a will, your estate would go to your husband or wife, as the case may be, and your children. However, when you're in a de facto relationship, it's only more recently that the law has been changed, out of interest, by the way. And now your de facto spouse is treated like a legally married spouse. However, you have to have been living with your spouse for at least 2 years. And if there is any debate about whether a relationship exists, the court will have discretion as to whether or not they find there has been a relationship. Things they take into account are whether you lived with the person, the nature of your relationship, whether you had assets together. And on top of that, if you're in a relationship and your partner has been married previously, that previous partner may also have an entitlement to the estate. So it is very important to have a will in place in any situation, but I think particularly in the case where you're not married and you do have a de facto spouse, or even just living in a domestic relationship. More importantly, even if you don't live with them and you're in a relationship and you would like them to benefit from your estate. So something to keep in mind, I think. So when you've got to that point and you go, okay, I really need to put a will in place, the things you probably need to consider before you even look at getting advice are things like your assets, so what you own, any debts, so I'm talking like mortgages, car loans, those big sort of debts, or if you have a big credit card, who you want to appoint to deal with your estate after your death. So this is an important decision that you've got to make, and a decision you should talk to that person about. In the case of spouses, that's usually each other, but of course you can appoint anyone you choose as long as they're over 18. And sometimes I know my clients feel they would like to appoint their financial advisor, accountant, or solicitor just to take that pressure off their own family. And of course, get some financial advice. And then you want to make sure that you make adequate provision for all your beneficiaries. So in the case of being married and having children, you want to make sure that you leave enough of your estate for each of your beneficiaries, so each of your wife and your husband and children. I raise this because there is the risk that your will can be challenged. And what this means for you is that even if you have a will in place, if someone believes they haven't been catered for under your will in an adequate way, they can challenge that. And if successful, that gives the court the power to override the terms of your will. However, the only time that the court will do this is where you have clearly not made provision for someone, and they base this decision on a overview of the whole of your estate, the lack of provision for that person, but also how that will impact your other beneficiaries. So I think trying to establish a good distribution of assets is important as well. And then next, you also need to consider the fact that some of your assets won't actually be part of your estate, and you cannot determine where they go to on your death by your will. This will include jointly held property, so any real estate, bank accounts, or anything in joint names. So a lot of spouses will do this. That doesn't form part of your estate, will automatically go to the other joint holder of that property automatically on your death. Property held in trust is not yours to give away. Some shares are unable to be gifted under your will. And most importantly, I think for us here today, superannuation is the big one. And I see this all the time. People come to us and want to leave their super in a particular way. Unfortunately, superannuation benefits don't automatically form part of your estate. Ultimately, it depends on your superannuation arrangements, and you will need to talk to obviously the trustee of your super fund as to those arrangements and get financial advice sometimes. But generally speaking, what happens is when a will gets put in place, you want to look at putting a binding death benefit nomination at the same time under super law. It allows you to make a nomination to the trustee of the fund to nominate where your benefits go on your death. Most often I would recommend that a binding death benefit nomination be put in place whereby you appoint your legal personal representative. So this means that your super benefits will go to your estate on your death. This is an easier way of doing it. It's great for your family. And it also, in the case of some people where you have a lot of assets, say in property, it gives some cash to be able to pay for expenses and just deal with your estate and do those necessary things. So most public funds permit binding death benefit nominations. However, there are some requirements you have to meet. So of course you should seek further advice in that regard. And they usually last about 3 years. So as part of any estate plan, you should definitely consider ensuring that your super is going to go where you intend it to go on your death, whether that be part of your estate or not. That's just my personal advice in terms of super, in the sense that it does make things a lot easier when it forms part of your estate. On that note as well, any life insurance policies, whether or not they form part of your estate, again, will depend on whether they're part of your super and whether who owns the policy or and who should receive that policy. So these are all considerations. Again, you need to make sure that everything's in order as part of your bigger estate plan to ensure that you've got any nomination in place, that it goes to where you want it to go. And again, my advice would be that it would go to your estate or to your legal personal representative. Again, I can't tell you how important it is to allow your executor to have some form of cash. As part of my job, I often draft the will, but also act for the family right up until the point where the estate of a person who's deceased is administered. And it becomes very difficult when there's just not enough actual cash to be able to attend to the matters that need to be attended to. So things like super and life insurance policies can be a great way to deal with that aspect. I also wanted to briefly touch on overseas assets in your wills, just because this is particularly relevant to both Jared and Joel's clients, I understand. So a lot of you probably have assets in Australia, but maybe also in another country or countries, as the case may be. In such situations, it depends again on your personal circumstances, but basically if you have a will in another country that's a signatory to the convention providing a uniform law in the form of an international will, it will also apply in Australia. And as long as the will meets the requirements of its form, you can be sure that your assets are protected under that particular will. There's about 13 countries that are signatories to the convention, including Australia, the UK, and the US. If you have assets outside of these countries, it may be necessary that you need to put in place another will or wills. Of course, I can't advise you on this. I'm not an expert in international law by any means. So the idea would be that you would seek legal advice in the country in which those assets are held, and have a will in Australia and a will in each country in which an asset is held. The only thing that I do want to raise is it's really important to make sure that you liaise between solicitors and ensure that one will does not revoke the other unintentionally, because that could create a very messy situation later on for your family. And so usually that just means that in there you would just state that this will does not revoke any other previous wills made by you in any other country. It's as simple as that, but it's very important. And finally, I just wanted to touch on reviewing your will, because once you've gone to all this trouble of making an estate plan and putting in the first step of your estate plan being your will, a lot of people think, oh, that's it, I'm done. Good for me, pat on the back. Unfortunately, that's not the end of the story. Like I said earlier, your will can be revoked under certain circumstances. And whenever something major in your life happens, it's actually a good flag for you to review your estate plan generally, but particularly your will. So I generally recommend every 2 to 3 years that you just have a look and make sure that nothing in your will is not what you wish it to be anymore. But basically, the life events that really need to flag this for you is if you change your name, so if you get married, if your executor dies, so your executor is the person who you appoint as your person who controls your assets after your death and distributes those assets. Or they could even come to you and say they don't want to do it anymore. That's a great time to review your will. If one of the people you leave something to under your will dies or their circumstances changed, it might be a time for you to review your will. If you've gifted a particular property, this is most relevant if you have a house, for instance, and you decide to sell that house, you need to make sure that your will is reviewed in that sense and it's covered. And of course, if you marry or divorce, both marriage and divorce can revoke your will, which means it's no longer valid. So as soon as you're formally divorced or married, you've no longer got a will in place. So you need to make sure that you have one. Also, even if you end or start a de facto relationship, it's a good prompt as well to make sure that you review your will and everything's in order. And finally, if you have children, of course, or even if you adopt or foster children, or you get into a relationship with the person who has children, so you have stepchildren, all these are very important. I note that the definition of children for the purpose of estate planning law doesn't actually include stepchildren, fostered or adopted children. So if this is something particular to you, that's definitely where your will would have to be reviewed to include those children if you wish. And as part of that estate planning documentation, it's also really important to look at enduring powers of attorney, enduring powers of the guardianship. Excuse me. Your will looks after your assets on your death and is great assistance to your family in a really stressful time. However, prior to your death, there's instances where you may have an accident and or suffer illness and become incapacitated and unable to make decisions for yourself. This is where enduring powers of attorney and enduring powers of guardianship are particularly helpful for you and for your family because both documents, so in short, EPAs and EPGs, they can assist you to appoint the people that you want to act, but also assist your family members in really stressful periods of time. So an enduring power of attorney is simply a document that allows you to appoint another person to make financial and or property decisions on your behalf. So once you appoint an attorney, that person can do anything you can do and would only happen if you weren't able to make those decisions for yourself. On the other hand, an enduring power of guardianship, that's a document where you can appoint another person to make personal lifestyle and treatment decisions. Treatment decisions in this context means medical, surgical, or dental, and is particularly relevant, I think, when it comes to palliative care or life-sustaining decisions that need to be made. And I think by putting in place quite simple documents, actually, that it can really assist those people in those family members when something like this does happen. The last thing I wanted to, and I should say also that if you don't put these in place, obviously there's still the ability for your family to act, but it's a much more complex process for them. The State Administrative Tribunal gets involved, which is a legal application. So obviously that's why I recommend these documents too as part of your estate plan, because obviously you want to protect your family when you're well, unwell, and on your death. And finally, I just wanted to mention advanced health directives too. Advanced health directives are a document where you can put in place where you can set out a lot of your decisions about the treatment you actually want from a medical perspective. It used to be the case that solicitors would help you do this, but the law's changed quite recently and is now a pro rata form that you can actually get from the government website, Department of Health, I believe. and set out all of these decisions like treatment decisions, life-sustaining decisions, and you can actually upload them to the your MyGov portal now, so that your whole family, your doctors, your medical team will know these decisions. And I think this is a very, very complex topic, and I've tried to narrow it down as much as possible. But I suppose if there's anything you can take away from today, estate planning is very, very important, and it's an ongoing process. The start of that process, I think, is obtaining financial advice and considering putting in place this documentation. So your will, your enduring power of attorney, your enduring power of guardianship, and possibly your advance health directive. And I think as well, just opening this conversation between family members as well is important. So all your family members are aware of the situation. So I open up the floor to Jared and Joel. Thank you.
Thank you very much, Jane. Look, gosh, yeah, certainly a lot more to unpack in the realm of estate planning than just drafting your will. And I think you really highlighted the importance of making sure you're reviewing this on an ongoing basis, not just setting up a will that you've forgotten where you put it because you put it somewhere safe and you're not quite sure where that safe place is, or you've moved house now, or you haven't told your executor. Just, yeah, so important to be reviewing these things on an ongoing basis. Now, one question that's come through, and I'll throw this one over to you now. So you mentioned having wills in different countries. So might be a client of Joel's, client of mine. Maybe they're living in Singapore or Hong Kong, wherever. I'll paraphrase this one a little bit to make it a bit more broad. Now, assets in Australia, assets in Singapore, maybe assets in the UK as well.
Yep.
Now, if we're going to go down the path of having a will in each country, should those wills be the same in that should they basically mirror each other? Or is it better to say, all right, my Singapore will does the Singapore assets, my UK will does the UK assets, and my Australian will does the Australian assets? Do you have a view on which is best, or is that a case by case?
So I think, generally speaking, your lawyers in each country should liaise with each other. They would, to a certain extent, mirror each other, but they would generally deal with the separate assets in each country. And the reason for this is obviously because there's a myriad of laws that differ. For instance, tax implications. In Australia, we don't have death duties, but there's many countries, including the UK, which do. So from a broader estate planning, you would want to get advice on how to leave those assets in your will in another country, but also have your solicitors liaise with each other. So obviously it's part of your broader estate plan again, so it can work together. And then obviously all of those moving parts in terms of tax and death duties and the way you leave your assets can work together and achieve what you want to achieve overall. Yeah,
absolutely. And one other that's just come through, and I must admit a fairly common one, so I like this question. A lot of clients who are, or just expats in general, might be Australians living all over the world, and they know that they are beneficiaries of their, let's say, parents' estate. Should they be seeking advice as well around how those assets are going to be treated, taxed, what to do with them? Do they have their own implications based on where they're living?
Yeah, definitely. So I obviously, like I said, I can't give you any advice in terms of overseas law, but if you're receiving a lump sum of money or real estate, even from somewhere else into Australia, you should definitely seek advice in that regard. And if your family's open in that aspect, and you know that you're going to get something and your parents are quite elderly, it's a good idea to mention that when you see a solicitor as part of your estate plan, because that should be taken into account. Those assets that you're going to get that you would have to deal with as well. So a great estate plan would also account for assets that you may accumulate in the future, whether that be from your own or from your family.
Absolutely. No, that's fantastic. Hopefully that answers that one. Well, look, mindful of time, and gosh, I feel like we could probably spend the whole hour just talking about estate planning, but I believe Joel has a few things to share with us too. So we might push on. Joel, I'll throw over to you to talk us through some of the changes around superannuation, obviously quite relevant to the estate planning topics that Jane's already run through with us, but obviously quite a few changes on the cards as well in the not too distant future.
Absolutely. And it's, it's always nice to have this sort of wealth that accumulates that you could potentially leave to someone. But I tend to speak broadly to all of my clients that it's much easier to die broke than it is to leave a lot of money. So we should all be out there enjoying our life, but I suppose it's knowing exactly the day that we're going to die. We can model exactly to that day what to spend, right? But unfortunately, the unknown is a little bit there. So yeah, coming up, I believe tomorrow is budget day. So there's going to be a raft of changes coming in the Australian side, particularly with the budget. There's going to be some tax cuts. So it's, every Australian, I feel, will appreciate the benefit of lower taxes, considering we live in a very high tax jurisdiction. But from superannuation perspective, from the 1st of July 2024, there's some changes coming. The concessional contribution cap and the non-concessional contribution cap, they're both increasing. So the concessional contribution cap are contributions that we make to superannuation where we can claim a tax deduction. Non-concessional is where we don't claim any tax benefit from that contribution. It's just a nice, healthy way for us to beef out our superannuation accounts. The concessional contributions also include our employer contributions, so which I will touch on a little bit later. The superannuation guarantee contribution rates are also increasing from July, so that's going up to 11.5%. So we're getting a nice little extra small percentage from our employer contributions. The downsizer contribution age was reduced, so that is now age 55. Previously, that was 60. This is a great opportunity for, parents, if you're living in a broader house, or even, for example, you've sold a house that was once your primary residence that you've owned for 10 years and you're over the age of 55. This is a really good way to move $300,000 each essentially into your superannuation environment, which is, far much more tax effective than it is by having it in your own names. The transfer balance cap to 1.9 million, that's what it currently is at the moment. There's no additional news for that being increased, unfortunately, from the 1st of July, but that is also welcomed. I do anticipate that that will continue to rise up to circa 2.3, 2.4 million, probably over the next decade. And then there's also concessional carry forward contributions. So that is, you can use unused concessional contributions from prior years in 1 year. Again, there's some really good tax advantages to doing so, particularly if you've triggered some CGT assets or you've got some taxable event that happens. These are good times for a good use of that money, more or less. So with superannuation broadly, with these caps, essentially from this slide, the first little window there, we can't control. That's set by the ATO. The next two right windows, the investments and the withdrawals, that's what we can control inside superannuation. So we can obviously invest our superannuation essentially any way we like. Now, if you're with sort of any of the major retail or industry super funds, that your investment options might be relatively limited. So that could be, the high growth, the balanced, conservative style fund approach. That might be the extent of your investment selection, or you can go into, for example, the self-managed super fund route, and it just becomes essentially endless. Everything from gold bars to fine art. So as long as it's for the purpose of providing retirement benefits for the members. Insurance inside super, again, we can control that. And as Jane touched on earlier, who we nominate as the beneficiaries of our superannuation fund, really important to have those in place, whether that's, paid to your estate, paid to your spouse, whoever that is. It's really important to make sure that we're checking our binding nominations. And then obviously when we get to retirement, hopefully we've accumulated the nice nest egg. We transition that from an accumulation account to a pension account. A pension account, for the benefit, is completely tax exempt. So there's tax-free earnings, tax-free dividends, there's no capital gains tax, and any pension payments that are paid from your super fund to you are also tax exempt. So there's a great incentive there to have a nice healthy nest egg, particularly inside superannuation and pension accounts, particularly later on in life. That little scenario that you can see there at the bottom, we've got obviously an account-based pension versus an investment property. Let's just assume they're both worth 1.9 million. The rent on your $1.9 million property, 95,000 versus a pension payment, 95,000. We can see there that the net outcome is actually very different after considering tax. And when I suppose we like to talk about this broadly in the light of women per se, there's also additional contributions that can be quite beneficial. Knowing that women can ordinarily take time out of the workforce, that could be to raise children, to have other family matters taken care of. We do have other contributions such as spouse contributions, where, for example, your spouse can add contributions to your superannuation fund and claim tax benefits for doing so. So there is obviously income thresholds and contribution caps and limits that go with this, but it's really important to consider that even whilst you're not working, your superannuation should not be left behind. It's an asset that you're going to be obviously very welcome to have a nice healthy accumulated balance come retirement. In other news, I saw randomly, just off topic, the Queensland government has come out and said employees of the Queensland government, whilst they're on unpaid maternity leave, they will continue to receive super contributions. So that's it's a really proactive approach, particularly for any public servants in the Queensland government. They're looking to make that into law, which is, it's really, I believe it's a really good incentive to make sure that women's super particularly is not left behind. In times where, for example, they are on unpaid work breaks, for example, raising children. I also do have clients on the flip side of that, where the female earns more than the man and the man stays at home. So the same works in reverse. So it's also, those caps are not obviously based on gender by any means. So they are available to either side of that coin. There's also, for example, here where we're looking at boosting our superannuation, for women who have re-entered the workforce or may have not contributed to superannuation, salary sacrificing is a really great way of reaccumulating or really growing on that balance. This just highlights the net outcome of salary sacrifice and your net tax or your net pay, more or less, from contributing to super. This is likely to change given that we are having some tax changes coming on the 1st of July. So there's essentially a benefit if you're earning in excess of $100,000. Your tax benefit for this financial year up until the 1st or 30th of June 2024 is likely going to be greater than that if you do this from the 1st of July 2024. So there's just a really good incentive here to consider, right, well, what is your ideal retirement objective? What is our income objective when we do retire, and how best do we maximize our retirement benefit? And super and salary sacrifice is a really great way to do so. So this is just sort of looking more or less for my non-resident clients and anyone who's not currently living in Australia here. If you have Australian taxable property, so that is anything that will always remain taxable in Australia, this could be, for example, positively geared rental properties. So you have a rental property here in Australia, you're living abroad, and that rental income is in positive to the expenses. In this case, for example, non-resident tax rates start at 32.5%. So you would be taxed on any positively geared rental income at 32.5%. using superannuation contributions can be a really great way to negate some of that tax. So in this example here, you can see the concessional contribution cap is $27,500. If that was the positively geared or positive rental income that you'd received, if you made a contribution to superannuation for $27,500, that would reduce your personal taxable income to the ATO down to zero. You would pay contribution tax of 15% inside the fund, but that's 17.5% better than you'd pay to the ATO. So it's obviously not an absolute ideal getting you out of all tax, but it's at least a $4,800 saving that you're saving on paying to the ATO.
Certainly an important one. I mean, we find, I'd have to say, a number of expats look at this and think, oh, a few $1,000s or 15%, but I must say it's much more appealing than a kick in the teeth. So don't ignore this one. End of financial year is rapidly approaching. And even if your taxable income is $5,000, still more than $1,000 back in your pocket. I'm sure you can find a much more enjoyable way to spend it than allowing the ATO to do so. So definitely pay attention to this one and seek some advice.
That's it. And as well, it's worth also considering, everyone's at a different stage of their working life, particularly like, a conversation that I was having this morning with some clients. They're in their mid-50s at the moment. And, we're starting to talk about, yes, they are living abroad. And their argument was, oh, but if I have investments abroad, they're more tax effective than super because they're tax free. They were very lucky to be living in a tax free jurisdiction. And, my argument is, well, is it going to be tax free when you move back to Australia in 4 years? Unlikely not, because the ATO is going to start taxing you. So it's really important to consider where you are in that stage of life and what assets you're going to be using in even the short, medium, and long term to generate a long-term tax-effective retirement income. And superannuation in Australia is always going to be a goal kicker, particularly in that space. So whilst there might be some short-term tax to pay, particularly if we're paying 15% on accumulation, it's going to obviously pay dividends when we're 70, retired, and drawing tax-free income. The carry forward concessional contributions, again, this is a really great strategy for us to put a larger amount of capital into superannuation and claim tax relief on that contribution. To meet the rules, you have to have a superannuation balance less than 500,000, and your concessional contributions in any year exceed your concessional contribution cap. So I'll just break that down. So the 5 years preceding up to the current year, so this is going back to 2018, 2019, or 2019, 2020, any unused concessional contributions from those years can be used in the current financial year. So the current financial cap is 27,500. Let's just say hypothetically you sell an asset in Australia and you've realized a $100,000 capital gain. That $100,000 capital gain, you have also contributed nothing to super for the last 5 years, for example. Now, you could effectively reduce your personal income tax liability down, or by that capital gain, you could essentially add up to $100,000 in that case, and then claim a tax deduction for that. And it's a really healthy way to move a bulk of money inside the superannuation environment for the future of long-term planning. Really important to seek some advice on this. There's some really great tools that you can also use on the ATO portal in MyGov under the superannuation menu. The ATO, obviously, with things like single touch payroll, they can sort of keep track of what your superannuation contributions have been. So it's really, you can even look in there and see what your carry forward concessional amounts are, what your eligibility to contribute is. But broadly speaking, important to get some advice to make sure that what you can contribute and we're not triggering any sort of excess penalty charges or taxes there. The next I really want to touch on, and I know that Jane spoke about this a little bit broadly. Again, insurance inside super. Look, I have previously been a life insurance advisor solely in a prior financial advice life. So I have seen hundreds of different life insurance contracts over my time. And look, there is good, there's bad, and they're ugly, and they're not all treated the same. So it's really important to consider that if you do just have default insurance cover that's inside your superannuation fund, that it is actually fit for its purpose. It's great to think that, the last one, for example, there was one of them that I had. Where legal super, so for those working in the law profession, right, a lawyer working overseas, it says in their PDS you will not be covered if you are not an Australian resident. So they've got this life insurance policy in place with legal super that they're paying for, but they're currently living not in Australia. So therefore, in the event of their death, their life insurance is actually not valid and they won't be paid. So it's really important not just to look at the policies that you've got and the premiums that you're paying, but again, the underlying terms and conditions of your policy, because the only time an insurance policy serves any purpose to us is when we need to make a claim on it. And when we do need to make a claim on it, we want to hope to God that they're going to pay out. And we don't want to have have the ability to say we're not actually going to honour that claim because of X condition in the PDS. So again, really important to seek some advice here. Trawling through some PDSs is some of my fabulous late night reading. Luckily, we have software and systems that compare a lot of this in detail, so we can make relatively light work of it. So again, really important to get advice here and make sure that one, your insurance is enough to and is fit for purpose for you, and two, it's actually going to be relevant when you're actually going to need it.
And probably just one more point there, I guess, Joel, if I may. We see this time and time again with expats where they're trying to, I guess, sort of solve one problem and end up creating three more over here. Where, and we've had this conversation more times than I care for, where we've got clients who say, "Well, my cover's not valid for expats, so I'll just tell them I live in Australia. It'll be fine. So I'll just keep my Australian address and I'll just lie to my super fund, and all will be well." Well, sadly, insurers are not that stupid. And they will investigate where you were residing and where you were paying tax. And naturally, all of this will come up. Or it could also create, obviously, tax residency problems for you down the track. So I think your point of seeking advice and making sure that it's all actually looked at together and makes sense and working is just so critically important.
Absolutely. One of the things that was highlighted by the current Labor government is a $3 million cap per se on our superannuation. They're looking to obviously impose, the tax benefits that sort of cap out at $3 million. So superannuation is currently taxed at 15%. In the event, what they're looking to imply is, if your balance exceeds $3 million, that 15% tax will jump to 30%. So any earnings that happen on balances in excess of 3 million will attract an additional 15% tax. There is obviously rationale behind this on both sides of the fence, no matter what side you sit politically. But either way, what has not been included in that law is the indexation or inflation of that $3 million cap. So I would like to hope that common sense will prevail here and they will index up the cap eventually. But it's really important that when we're only working with what we know as at currently, it's really important that we try and, again, not forget about our superannuation, because if we have to abide by a $3 million cap, then the value of that $3 million is going to erode over time. As you can see, I'm sort of, if I'm 35 now, the value of $3 million at today's value is essentially only 924,000. So again, we really need to pay attention to our superannuation and making sure that it's not being left behind. I always get this question as a financial advisor. I swear it's daily at the moment. It's how much money do I need to have for how much income that I want? And this is just starting to highlight, we've got what's called the 4% rule. So if all of our investments earned an income of 4%, this is the kind of income objectives that you're looking at. So to earn $100,000 in retirement income of 4%, you would need about $2.5 million in today's figures. Now, obviously, as CPI and inflation erodes the value of our cash, that obviously will start to deplete that $2.5 million, because $100,000 this year is potentially, $105,000 next year. It's $110,000 in 5 years' time. So you can see this. You're not going to be living off the same $100,000 for the rest of your life. It's really important to note as well, and I've seen this, at the moment on the news, particularly in Australia. It's, how much money should you have in your super fund? Broadly speaking, I tend to disagree with a lot of this, just because everyone is in a different set of circumstances. Everyone is different. Everyone has a different income. Everyone has a different expense level. We're all in different financial situations. And so, when you're seeing, by the time you're 40, you should have $200,000 in super, it's rot. You need to really consider about what's right for you and what style of income and retirement objective you want to have, not what the news tells you that you should have, or what the super funds tell you is a comfortable retirement. It's everything that, as I said, we can control, we should control, and they are things like contributions and future investments to control our outcome for the benefit of long term. So yeah, that's my, I suppose, one only little stab at when there's generalization here. Tax. Oh, love tax. It's probably one of my favorite topics, of course. Australia, we pay way too much of it in comparison to lots of my other clients, and Jared smirking there while he's sitting in Singapore. But proposed from the 1st of July 2024, we are having some tax bracket changes, which is always welcomed, of course. So we're seeing the tax-free threshold remain the same. The first tax bracket's dropping a couple of percent there, from 19 to 16. That second bracket dropping from 32.5 to 30. 37 is remaining the same, but however, that $135 window has indexed up from the 90 of 120. God, yeah, 120. So that's obviously testing my exact maths. And then the upper threshold is increasing from 180 to 190. This is all excluding the 2% Medicare levy as well. So it's obviously great. It probably means if you're on one of those higher income tax brackets above 190,000, your tax benefit is going to be about just over $4,000, so per annum. So a little bit more money into the pocket. And as well for the non-residents, we're seeing a tax reduction there from 32.5% to 30%, which is, again, welcomed for our non-resident clients. So this is where we then talk about, right, well, how do we structure our investments, particularly when we're looking at how we want to accumulate our wealth? How can we do this tax effectively? How can we do this from an estate planning perspective? What's a lot of the benefits here? The first one that I put there is insurance bonds. So these are investments that we can put, they're essentially a life insurance contract, and they're treated by the Life Insurance Act. And the investments within that are held inside an insurance bonds are treated a little bit differently to how they are if they're owned in your own personal name. So the investments can largely be the same. They do attract a different tax position. Again, probably broadly speaking, it's something that that you should get advice on, because this can be a little bit more tax effective, particularly in Australia, if you're a high income earner. Discretionary family trusts. Family trusts are, again, a great tool, a great vehicle to use to protect assets, particularly in an estate planning perspective as well. Jane, I suppose just sort of throwing over to you, any sort of key points, you're the lawyer on the call. So benefits of a family trust in, I'd say, give us 100 words on what you see, where they come into a lot of the benefits here.
Yeah, so excuse me. As I said before, you can't, they're not your assets anymore to leave undue will, but obviously they do. They have asset protection advantages, tax advantages, and you can also use it as an investment vehicle as well. So it's a great way to do it. I mean, it's the same, although saying that it's the same as a self-managed super fund, there are some expenses in terms of maintaining it and updating it and getting it established and the ongoing costs. But I mean, if you've got significant assets that you want to maintain for your retirement and your children, it's a great vehicle in which to do that.
Yeah, absolutely. And we have seen where that has come into play, quite broadly speaking, about, distributing of income, particularly when it's an investment trust, and asset protection. The trust owns that assets, and it can only pass to, I suppose, the beneficiaries of those trusts. Yeah. The next one, obviously, company ownership. Again, there's control rules, there's different tax treatments. It would just depend on, again, your personal situation, what the benefits are, what the cons are. That's going to be very broad, just depending on your personal situation. Individual or joint direct ownership. Again, these will form part of your estate. Anything that's individually owned will likely form part of your estate. Joint assets can only be passed to the joint asset holder. There's probably also worth mentioning as well, you've got two types of joint ownership. You've got joint ownership or tenants in common, where you've got tenants in common, or let's just say you've got purchased a property that is tenants in common. That ownership that you hold, it does actually form part of your estate. It doesn't automatically revert. So it's really important to understand how your investments are structured and how your property is structured. And superannuation, again, superannuation ordinarily does not form part of your estate, and so it's dealt with by a binding nomination. But all of these are different ways in which we can own investment assets. They all serve a different purpose. They all achieve a different tax outcome. They all have, very varying outcomes. And so it's really important that you seek advice on what's going to be appropriate for you here.
We might skip over the example, Joel. Just mindful of everyone's time today, but we'll jump through to maybe just on the sort of super. Actually, might even just jump forward to the bit of super strategy as an example, if you like.
Yeah, sure. So this is just sort of talking about investments inside superannuation and where we can use some investments to essentially to our advantage, particularly with the different types of investment structures. So superannuation, again, has a maximum tax rate of 15%. Now, Australia has a process called franking credits or imputation, which is designed to prevent double taxation. So at present, for example, in this example, we've got CBA shares worth $13,640. Let's just assume the dividend yield on CBA shares is 5.5%, and that's essentially what it has been. Where we can then manipulate franking credits, particularly inside super, is to derive an enhanced tax outcome. So with this tax outcome, you can see here when the franking credit is refunded or rebatable back because the 30% tax, or like the 30% tax credit is only gobbled up about by half, you get a refund of the difference, particularly inside superannuation, which is effectively a really tax effective way to increase your yield after tax in your superannuation fund, or in this example, from 4.67 to 6.68. This becomes particularly attractive, again, in retirement phase pension accounts, where they've gone completely tax exempt, you're getting a rebatable franking credit in its entirety. So you've essentially boosted your yield even further. Again, really useful strategies that we can use, providing any government is not going to play around with franking credits or imputation, who knows? So but again, this is some sort of broad strategy that we tend to see work quite helpful for a lot of retirees.
And probably worth just noting, and again, we see this all the time with expats. I don't want to contribute to super because it's 15% tax, but I can invest my money outside and pay nothing. But the reality is, when you start considering these little sort of intricacies and various strategies around franking credits and tax rebates, you're not actually necessarily paying 15% tax because you're getting all these credits back. They all get realized in the financial year. We're seeing them all flow through. So, your tax rate might not be 15. It might actually be more like 3 or 5 or 8 or something much closer to the 0. So that's obviously not a recommendation to go and throw all your money into your super fund. It is a recommendation to go and seek proper advice and, of course, speak to Jane to make sure your estate planning wishes are all carried out correctly, but certainly not one to be ignored just because of that headline tax rate.
Yeah. And so property, I swear it's Australia's love story. We love talking about property. There is so many considerations for 2024. We've seen housing crises. It's property is all on the news, and it probably will be for forever, just because of our love-hate relationship with it. You either have it or you don't, and sometimes you have it and hate it. Sometimes you don't have it and hate it. Either way. But, there's lots to consider here particularly when we're dealing with property, and, estate planning of that property assets are significant enough. So a whole range of strategies come into play if you're looking to get onto the property ladder. It's obviously, if you get the advice early and make sure it's structured correctly, it's all set up exactly how it's intended to for the long term, it's much more cost effective to do that upfront than try and replace it later. So I suppose from my broad perspective, again, if property is something that you're looking to get into, speak to your mortgage broker, speak to your financial advisor, speak to your lawyer about how the impacts of structuring property are going to work for you. Yeah, we'll just skip over that. And I'll come over to my last bit of the thing here. We're seeing lots of news, lots of highlights around where the market has performed, where do we see it next, where is the place to invest. You can see here that we're seeing a lot of green on this graph, all but except Russia. So Russia and parts of China and Asia, where we've got some reds there, and that is obviously reflective of the current political and economic conditions in those countries and jurisdictions. But broadly around the world, we've seen healthy gains, particularly over the last 12 months per se, up until April 2024. So, if you've got investments, generally in the green zones, you should likely have pretty good, like a nice healthy sort of style of return, which has been wonderful, particularly in Aussie equities and US equities, where most markets are up circa beyond 8%. Where I see opportunities, so this is where we start to see value, the value heat map amongst the world. So this is areas where we start to see undervalued equities versus overvalued equities. Aussie equities, again, with a softening Aussie dollar, we see a nice little bump up in the Aussie equity prices. So that has helped, which is Morningstar's research places, I suppose, as an indice, broadly starting to hit the overvalued territory. That is not necessarily a reason to not invest in Australian equities, because it just depends again on your situation and what's going to be more important, particularly going forward. For example, in this, we don't want to be rushing in to be buying only Russian equities in this because they're undervalued. Well, that doesn't mean that you're going to yield a good outcome. So really, really good. there's plenty of opportunity in the market still to come. It just depends on your own personal circumstance and what you're aiming to achieve to get out of it. A low Aussie dollar again for our non-resident visitors into the webinar. If there's a time to take advantage of AUD weakness, it's probably now. This is obviously, I've got lots of clients that live in Singapore. The Sing dollar to the Aussie dollar, it's been bobbling around, $1.10 to $1.15 for a while now. And so this is obviously a good opportunity for strategies that if you are earning in foreign currencies and you are looking to come or invest, repatriate, or start to plan retirement income objectives in Australia, it's a good time to be considering your Aussie dollar exposure here and your investments in Aussie dollars. Because if that's going to be your domicile currency in the long run, then there's obviously advantages there, particularly. Not so much of an advantage when, us Australians travel to Singapore and look to pay for chicken and rice and it costs 15% more. But, broadly speaking, the other way around, it's a good opportunity.
I don't know, Joel, that chicken rice is still cheaper than it would be back in Australia, to be fair.
Yeah.
Even with a 15% surcharge.
Yeah, I agree. Okay. And again, investment 101, right? We've got to play the long game. So we've got to make sure that, we're not trying to time the market here. It's time in the market that's going to give us our long-term returns, our long-term performance. So you can see here, this was Vanguard post a wonderful graph every year, and it's the return index chart, and this is highlighting up until the end of 2023. And it's the growth of $10,000 if you were invested in both asset classes and you did nothing basically since then. So yeah, if you had $10,000 in US equities in 1992, they would be worth $176,000 today. So it's really important to take into account to playing the long game, particularly when CPI, which is the very low bar, is sitting at 21,000. So really important to always play the long game when looking at our investments. That sort of concludes up my investment rant for now. So there's always plenty, I suppose, to talk about. There's always plenty of strategies that we like to look at, particularly for different families, different stages of life. Women, very importantly, should understand and can take control of their financial independence, more or less. I like to sort of quasi think of myself as part-time financial advisor, part-time educator. I have a strong passion for financial literacy, and it's about, if we can understand our financial situation, then we can always benefit from it. So if you just so much want to have a chat, get in touch. I'm happy to run through some 101s.
Wonderful. Well, look, thank you very much, Joel. Yeah, very grateful for the overview there. As you can all tell, there is so much we could cover on these sessions. Obviously, we've tried to sort of keep the focus on the estate planning side, on building up women's financial literacy, building up that sort of financial empowerment, taking control of your money, knowing what's where and why it's there, making sure it's working for you. But certainly, look, a huge thank you to both Jane and Joel for joining us today, for sharing your knowledge. Jane, as I said at the beginning, I'm sure we probably just could have gone down that estate planning rabbit hole for the full hour and touched on nothing else. It's just such an important topic.
Yes.
Some people view it, I think, as a little bit morbid and maybe put it in the too hard basket, or the, oh, we'll get to that later,
All the
or,
time.
I
All
don't
the
have
time.
family,
Yes.
so I don't care. All those terrible things which should absolutely not be done. So what we will do, we will pop both Joel and Jane's contact details in the notes, so you'll be able to reach out to both. Any questions, case studies, obviously you want to look after your own finances and estate planning, please do reach out to them. We're going to wrap up there. I'm mindful of everyone's time. We've run a little bit over, but a huge thank you for everyone who's remained with us on the webinar. Thank you again to Jane and Joel, and look forward to seeing you in the next one.
Thank you all. Bye.
Well, welcome to a huge update on the work that we've been doing over the past years on the M1 product. We'll talk about that in just a second, but I want to give this some perspective in terms of the history of investing as I have lived it since I've lived it for about 60 years now. But I can say from all of my experience that today, almost everything that we do is so much more investor oriented than when I came into the industries in the 1960s. Load funds were charging what they called 8.5% loads, but they were really 9.3% loads of the money that you actually got invested. That was a commission, came right off the top, never to be seen again. And of course, the high expenses of mutual funds, operating expenses in those days, and then along comes about a decade later after I started, along comes the index fund and John Bogle's work, and we all know that the industry did everything they can to make it a thumbs down on Bogle. They called it Bogle's folly, and it was almost a bit of a miracle that the index fund actually took off at that time. But John Bogle was able to convince the trustees of Vanguard, even though the offering had been a complete failure, the initial offering, to let it go, give it time to show what it can do. And it not only did what John Bogle thought it would do, but the low expenses of indexes, the broad diversification of indexes, all of that came home to impact the rest of the industry. And by the way, I think it's fascinating that at that very moment that Bogle was working on his project, Charles Schwab was working on discounting the commissions that were being charged to investors. And that too was a huge breakthrough in terms of things getting better for the investor. So today, we have index funds in some cases that have zero operating expenses, zero commission to get in, zero commission to get out. And of course, we have, not only is that true with mutual funds, but we also have commission-free purchase and sale of securities like ETFs that now you can get. Not only, this is really magic, you can get very lower expenses, very cheap or no cost to get in and to get out, and tax management within that ETF that will benefit, likely, from the way, at least the way it's set up now under present tax regulations. They are much cheaper than the traditional open-ended mutual fund. So things keep getting better and better. And at the same time, unfortunately, ways of promoting things that are not in your best interest are getting more efficient with the use of the internet, and all of the tricks and traps of how organizations are able to sell and to motivate you to do things that are not in your best interest. So we at the foundation, Chris, Daryl, myself, and the others who have worked, Paul Hayes, all of these folks are interested in one thing, because none of us get paid. We're not interested in how much we're making off of you. We are focused on how you can make the most that you can make. And so that doesn't mean that all of our dreams for you, all of our hope that the future will look like the past so that the premiums will all flow to you. Sure, we want all of that. But the reality is, and you know this, One, that we're not giving personal advice. So this is supposed to be educational. It's a teaching moment. But that personal advice that is so important is about you understanding you and what your risk tolerance is, what your need for return is, all of that kind of information that is not ours to create for you, but for you to figure out and understand about yourself. And of course, what we're hoping will happen out of all of that is that you will be able, by using index funds, by using exchange traded funds, by being able to do all the good things you can do today, that you will become as good as a professional advisor. And what we're going to talk about today, as far as I'm concerned, is a huge step toward looking more and more like what a professional advisor is able to do for you. And that is to be able to manage a portfolio that would be very similar to managing a portfolio if you came into a firm like my old investment advisory firm, where people take care of everything for you. Well, we're going to find out how much of everything they can help you with. But again, I got to highlight, we are not your personal advisor. And all the things that people in the industry say about the future is not likely to look exactly like the past. It may not even come close for all we know. And that we can't guarantee that there's going to be a certain return that will flow out of these investments, out of the information that we provide. And oh, by the way, we have a new relationship with the people at M1 that is very important for you to know about. Chris may talk about this. And by the way, I'm going to stop talking pretty quick here and just let Chris go, because he's got a bunch of great information to share with you today. But I think it's important for you to know M1 is a brokerage firm. And M1, as a firm, has looked to people like us on the internet and other places, but mostly on the internet from everything that I know, to look for people like us to educate others about what they have to provide. And that while we do that, if you in fact, through a link on our site, go to M1, our foundation will receive, if you become an account of some amount, I think it's $1,000 or more, but that we will get a small fee one time. Even if you put $1 million in, the fee is going to be the same. There's no bonus for us bringing them somebody with a lot of money, but that we're going to get an affiliate fee. We have the very same relationship with Amazon, and that is, if you go through our site and you buy one of their books, we get a small little fee one time in exchange for that link. That's called an affiliate fee. And the only other affiliate fee of that kind we have is with M1. But here's the interesting thing that you need to know. When I was in the investment advisory business, one of the things that was a pain in the neck was that we had somebody at our firm working full time to make sure that everybody was doing what they should in terms of compliance with the rules. And one of the things that has transpired in the growth of M1, and Chris, you're gonna correct me on this if I misstate this, but as I understand it now, whenever we do anything that has to do that brings up the name M1 in the discussion, we actually have to run that through the the compliance department at M1. It's just like being back in the business. And it is a bit of a pain in the neck, but that is what M1 is doing today to make sure that people like us are not misrepresenting M1. And I think that's a really smart thing for them to do. And but that is a new part of our relationship with M1. We have to go through compliance, but we will, because we really think this is a product that's worth considering in terms of helping you as a do-it-yourself investor do it better. And my hope is that Chris will allow a little time for us not only to discuss M1, but to talk about another provider that we don't have any kind of an affiliate relationship with, but another provider of a similar kind of product that I think that you will also find of interest. So I am, as always, thrilled to introduce Chris Pedersen, our Director of Research. He is the man that brought us the best-in-class ETF list of ETFs that we recommend in our portfolios. And he is the man who created the two funds for life, the combination of the target date fund and a small cap value or some other fund to go along with it to give you an opportunity for a long-term improvement in your return. And he's also the man who has worked hard on understanding M1 and helping to build, in fact, not helping, but building the pies. I hesitate to bring up that word because, as many of you know, I've been on a diet for over 20 years, and just the mention of a pie makes me hungry. But Chris is going to talk about those pies and how they can be good for you and not bad for you. So, Chris, thank you so much for being with us here today to explain the latest information on M1 and to take us into a competitor that they have that I think people will enjoy learning about. So take it away, my friend.
Well, thanks, Paul, for the gracious introduction. It's always a pleasure to work with you because you make me sound like I'm smarter than I am.
You are.
Thanks for the mention of pies. This is my favorite time of year when you can get a peach blueberry pie. There's this narrow window when you can get those two together, and Susanna spoiled me. She made two of them this year. So, yeah, it's my favorite pie because maybe partly because you can only really get them fresh at that one time of year. So, why do we work with M1? Some of our followers and audience will remember years and years ago, we did some stuff with Motif and, that morphed, and now we're working with M1. Fundamentally, the reason I like the M1 platform is that it was founded by somebody who understood that they really wanted to be a do-it-yourself investor, and they wanted an automated platform that would help you do that. What does it take to be a do-it-yourself investor? You need to set an allocation, and then you need to have contributions that come in, help nudge the portfolio back towards that allocation, and you need to occasionally be able to rebalance. And ideally, you do that with a click of a button, and that's what M1 Finance lets you do. It lets you automate all of that and become a very disciplined do-it-yourself investor with an allocation you set up front and you decide to live with. And they call that allocation a pie, and you can combine pies to have your total allocation. And so we have worked with M1 creating shortcut pies over the years to match some of our portfolios because we thought it was a really good tool, especially for a young investor coming in who didn't have a lot of money, because up until recently, it was practically free. Now they have in recent days shifted their business model to where if you have less than $10,000, you pay a $3 per month platform fee. So you'll have to decide for yourself whether it's worth it for all of the convenience that they provide. I think it's actually a pretty good deal when you think of what they're doing, and hopefully a young saver will pass that $10,000 savings point early in their saving career, and it will become a non-issue. But that is a factor. It's something to consider now for a young investor, is that it does cost some money to get these benefits. But once you have set up your account, it really does help you be a good do-it-yourself investor. And I think the best way to help people understand what we used to have and what we're going to have and what we changed is to go to the website. So let me share my screen here.
And by the way, while you're sharing that screen, Chris, that $3 platform fee, that is going to, if you have, for example, 3 different accounts on the platform with 3 different portfolios, that $3 is the total. They're not having to pay $3 per account on the platform, but just to have access to the platform. Is that
That's
right?
correct. Yeah, that's my understanding as well. So if you had an IRA and you had a normal brokerage account, it would be $3 a month in total until the combined total of those two passed $10,000. If you go to the website over here on the right-hand side, we're at paulmerriman.com, and you come over to portfolios and go down to M1 Finance, you'll get to the webpage where we describe M1 Finance, and we have an affiliate link. And this is where you would sign up if you want to help benefit our foundation with the creation of a new account. You would click that link, it will launch a new tab, and then you have the opportunity to click Join Now, and it will ask for various pieces of information, and you will go through a process of signing up. So I'm not going to go through that today, but that process is like signing up for other brokerage accounts. It involves a fair amount of personal information, not surprisingly, but it's fairly straightforward and simple. And because they are set up as an online brokerage, I think they do some of these online transactions a little bit smoother and a little bit better than brokerages that maybe have their roots in brick and mortar. That's the advantage. The disadvantage is you don't have somebody to phone who knows your name, and you don't have brick and mortar retail presence where you can walk in the door and ask questions. So it's a trade-off, but for many people, especially young people who are more comfortable doing things electronically, it may be a good trade-off. So scrolling down, we have some descriptions about M1 Finance and what it is, but the part that's really important is we have these portfolio pies down here at the bottom. And these in the past included some fixed allocations to equities and fixed income, and only a subset of our sound investing pies. And the reason was that if you did all of the various combinations of equities and fixed income and all of our pies, it just got to be too many things. I see you smiling, Paul. You understand that. Yeah, it gets to be a big list. But the advantage of the M1 platform, one of the advantages is that it's actually very easy to mix pies of different types. So you can take a fixed income pie and you can take an equity pie, and you can set the ratio of the amount that you want between the two pretty simply. So we've changed the pies that we provide here as shortcuts so that you have all of the sound investing equity portfolios and all of our, there's only 2 fixed income portfolios, either the tax deferred or taxable. And we have all of the time horizons, the 5-year time horizons for the Merriman Aggressive Target Date Glide Path. So you now using these pies can do a lot more, and I'm going to show you how. And what I did was I grabbed the instructions, they're just above this, and I clipped them, and they're over here on the left-hand side. And so the first thing you would do is create an account at M1 Finance. And when you create that account, it's going to log you in. And I'm going to actually go to M1 Finance right now, and I'm going to log myself in so that we can do some demos here. Okay, so now I'm logged into that account, and I come back to the Paul Merriman M1 page. And once you're logged in, step 2 is while you're signed into your account, click one of the portfolios that you want. So I'm going to, Paul, pick one. What portfolio do we want today?
Well, let's talk about the ultimate buy and hold, because that's the one that is the ultimate amount of work to do if you tried to do this without M1.
Okay. And I've got a taxable account set up there. So should we do the 50-50 or the 70-30 U.S. International?
I've got 50-50. Let's look at 50-50.
Okay. So I'm going to click that, and it's going to take me to this web page that says a friend shared an investment strategy with you. And it's going to show you what funds are in that strategy. We use the best-in-class ETFs. It's going to show you some information about how it's performed in the past. It's going to show you its dividend yield, its expense ratio. And up here in the top right-hand corner, step 3 says explore this, click on explore this pie in M1. So we're going to click that. And now, because I'm logged into my account, it's going to go to a page where it says, it shows me that same set of pies, and I have the opportunity to add to portfolio. So the next step is I'm going to add that to my portfolio, and I'm going to add it to this account I have called test account. So we're going to add that. And I had some other things in that test account that I'm going to delete, get rid of here. So we'll delete those. And I think when you add it, it's going to come in at 100%. And so all you have to do now is click save. And I know you're thinking, wait a minute, I don't want to invest in the 100% equities. I want a mix of equities and fixed income. That's okay. Clicking save here will not invest in it. It's just saving your work is a way to think of it. And it's going to ask you to confirm your changes. So I'm going to confirm that. And now we can go back to the M1 page, and we're going to pick the fixed income portfolio we want. So it's a taxable account. I'm going to click the taxable fixed income, and we're going to go through the same process again. We get to see what that fixed income account has done in the past, what funds it includes. And then up here at the top right, we go explore this pie in M1 Finance. We add it to that test portfolio. You could have added it to my individual account or whatever your account is. You're going to add it to the one that you want. And now here's the genius of M1 Finance. You have these two pies. Each one is made up of a bunch of individual slices. You can adjust the percentages. So what percentage fixed income would we want in this portfolio, Paul?
Well, let's go 60-40, 60 equity, 40 fixed income.
Okay, so all I do is I type 40 here and 60 here. And there you go. You have a 60-40. And if you wanted a 50-50, it's just as easy, 50-50. So that's how simple it is. And when you click save again, actually we wanted your 60-40. We're going to go back to that. I don't want to change your strategy. You know me, I'm a little more aggressive than you. So 60-40 sounds good. All right. And then we confirm because it's a change. Okay. So now we have this pie over here in our test account that we set up. And because this account isn't funded, this doesn't look entirely complete. And what's left is for this account, and it would be true for your account if you're signing up new, is to connect a bank to set up the connection to fund this. to contribute some money to do a transfer, and then to do a purchase and to actually approve that purchase. And you also will have the option to set up automatic deposit, to set up dividend reinvesting, to have those deposits nudge your investments back to the portfolio allocation that you want. All pretty simple. Now, there is another thing that's really interesting, I think, about this ability to mix things. And I'm going to go back to M1 or back to the M1 finance page on Merriman and come down here to the Merriman Aggressive Target Date Glide Path PIEs. So let's say instead of 20 years to retirement or 25 years to retirement, you're actually 22 years to retirement. How would you use this mixing to take advantage, to approximate something that is that 22 years to retirement? Well, let's just go through the exercise. So first of all, you would want both of these pies added to your investing account. So I'm going to go back through this process where we explore the pie in N1. We're going to add it to our portfolio, and we're going to add it to the test portfolio. So we're going to lose our earlier allocation. I'm going to delete the 60-40 that we had. So we're going to delete that. And we're going to make this 100 because it won't let me out of the screen unless it says 100 total. So we're going to save that. And then we'll come back, confirm. And we'll get the 25 year, right? So we'll explore that. And we'll add it to the portfolio, put it in the test, add. Okay. And now what I said is, if instead of 20 years to retirement or 25 years to retirement, you're 22 years to retirement, well, then what that means is that you're more like the 20 than you are like the 25. How much more? Well, you're about 40% of the way there, right? Because each year is 20%. So that would say that you want to have 40% in the 20 years to retirement and 60% in the 25 years to retirement. And boom, now you have actually got effectively the 22 year to retirement Merriman Aggressive Target Date Glide Path allocation. So this earlier you could do using the calculator on the website, get the allocation, type in all of these numbers individually. And it might be slightly different because when you do it this way, you're getting a straight line between the years. But it wouldn't be very much different. It'd be pretty darn close. So I think this is genius. I think being able to do this sort of thing with the Merriman Aggressive Target Date Glide Paths really simplifies things. And in fact, if you were somebody using that approach, when the year comes, let's say next year you're 23 years old, you don't even have to go back to the Merriman website. You just come in here and you go, oh, now I'm 23. It's not 40-60, it's 60-40. And you keep doing that until you get at the end of that 5-year period of time and you have to bring in the next one. So I think it's really a very cool way to do all of this. And it makes it a lot easier for the investors. That's really the gist of it. Yeah.
Only an engineer would have come up with that. Appreciate that, Chris. But I got to understand something, because the moving parts of this whole process are that the people who follow our work are saving money.
Yes.
And then they're putting this money into whichever portfolio it might be there. And if they want to rebalance, what's the step to rebalance? Is that another button to push?
To do that, I have to go back to, I'm going to go to my home. And I have, if I go in invest, I can go to my individual account. And my individual account comes up, and I have this button down here that says rebalance. So I could click rebalance. And it comes up and it tells me I can rebalance in the next trading window. Most people would be fine with that. And that's a possible taxable event. So we'll buy and sell slices and return your pie to its targets right away. Or you can rebalance over time with deposits. And so you can schedule a deposit to come in, right? So rather than sell something and then deposit a month later and have to pay tax on the gains of the sale, you could say, I know that I've got a sizable deposit coming in. I'm not going to rebalance tomorrow, right? I don't have a deposit coming in right now, so I'm going to rebalance. And it's got a pending rebalance up here. And that means it's going to make some trades and it's going to rebalance, and that'll probably happen this afternoon or tomorrow. And that's all you have to do. That's it.
So there is one other moving part here that's important, and that is that if people are going to follow your recommendations for the best in class, and it's time to rebalance, and it's in a tax deferred or tax free account, so we take taxes out of the consideration here. How do they pick up the new best in class ETFs that you're recommending if there has been a change? And by the way, I just want to mention you do that every 2 years.
Okay, you come into the account and then you have your pie over here, which is represented as just one thing because it's this set of slices that are underneath this ultimate buy and hold worldwide allocation. So to change that, you click on the arrow on the right-hand side and that expands it. And now you can come in here and you can edit this allocation and you can take one of these funds. So let's say we replace AVUS with SPY. So you would come in here and find, oh, this is funny. I haven't updated this with the new allocation. So let's say, which one do I have in here? I have Vanguard Total Stock Market. So I'm actually going to replace that with AVUS. So we'll do it right now. So I would delete that because I haven't updated my individual investment in a while. And then I would add, so I'm going to add a slice and I would come up and search for AVUS. And I add that to the basket and then I add it to the account. And now I have to set an allocation so that it totals up because right now it comes in at 1. So I raise that up to the original allocation amount, which I believe was 11% or 12%. And then I click save. And it's going to say, do you confirm these changes? Because this is going to trigger a sale and a purchase. And I am going to trigger that change. So I click confirm. And there you go. Now, that's if you want to change it one at a time. But what if I wanted to just adopt the whole new best in class set of ETFs, right? Okay. So to do that, I would come back and I would go to the ultimate buy and hold. This is a taxable account. And I like the 70-30 allocation. That's actually closer to a market cap weighted index these days, which is interesting. So I'm going to click that 70-30 allocation. Explore this pie. Add to a portfolio, and we're going to put that in this individual portfolio. We're going to add that. And then we're going to delete the old one and keep the new one. So the old one was that one right there. So I'm going to delete that and we're going to make this new one 100. I'm going to save it. And we're going to confirm. So it's going to trigger some long-term capital gains, not very much. I'm okay with that. And if I decide, no, I don't want to do that, I can come up here and I can click cancel and get rid of that pending rebalance and go back to my old ones. But I actually kind of like the idea of updating this account to all the new best in class.
So here is what I probably got most excited about when I saw what was going on. I have had so many conversations with people who have looked at our sound investing portfolios, and we show the use of indexes going back to 1970, using the percentage in about 9 different portfolios. Now, one of those portfolios is all in the S&P 500, and another portfolio is all small cap value. So, in a sense, it's really 7 portfolios of combinations of equity asset classes. But people get into this thought process as they look backwards at past returns, and they'll like one particular strategy because it did well in the 70s, maybe didn't do as well in the 2000 through 2009, and another one didn't do so well in the 70s, but did a lot better in 2000 through 2009, and they're struggling. Which one of these should I use? What I thought might happen is that people would say, you know, I like the 4-fund worldwide strategy. And I like the worldwide value portfolio. That, those are both very fine historically portfolios, and I also like the simplicity of the S&P 500 small cap value. And so they might say, what about if I wanted to take my IRA and just make it 1/3 each in those 3 strategies, so that when they rebalance, it would rebalance somehow back to the combination of those 3. Can you walk us through what that would mean to do that, or is it just a pipe dream?
Well, it's easy. It's just what we just did. So what's your desired portfolio?
Okay, I want to be, and we'll not make it a 3rd each. I want it to be 25% each.
Okay.
One will be the 2-fund strategy.
Got it.
Another will be the worldwide value. Another will be the worldwide 4-fund
Is that
strategy.
50-50 or 70-30?
Okay. All right. Let's make it 70-30. Let's make another portfolio all U.S., the 4 U.S. funds.
Yeah, let's walk through that. Okay, so we've got the US 2 fund. So I click on that, and I explore that pie, and we'll just add these to the test account. Add that portfolio to the test account. Add. And confirm, and then we do, all right, that was the first one, worldwide all value 70-30. So we explore that, add to the portfolio, put it in the test one, add, and there's a shortcut, I can just click equalize up here. If I click them all, I can go equalize and it'll make them 50-50. Save that. And then the US 4 fund. So we explore that. Add to a portfolio, put it in test, add, select all, equalize, save. Almost there. And then your last one was the worldwide 4 fund 70-30. So we explore that pie. add to the test account portfolio and select all and equalize, and you're done. That's it.
So, okay, this is fantastic. Now it's been a year. It is time to rebalance. So, is it now going to rebalance so that each one of these portions are going to go back to whatever the, well, first of all, if we're in an IRA, it could theoretically be updated to have the new funds in it. And it would be updated so that you're back to that original 25% each in those four different equity strategies. Is that what you've got?
Even more than that, right? You have 2 allocations in the 2 fund, you have 5 allocations in the worldwide all value, 4 allocations in the US 4 fund, and 4 allocations in the worldwide 4 fund. So that's 8. Well, actually, that's 8 plus 5 is 13, 14, 15. You have 15 allocations. And if you click rebalance or you contribute new money that nudges towards the rebalance, it's going to push to get all of those, all 15 of them back to where they need to be, which will result in also achieving this 25, 25, 25, 25 allocation. So yeah, it will do a lot for you.
So if you're dollar cost averaging into this 4-part pie, it will be sending that money into each one of those areas to try to bring it back to the original. It's not going to get exactly back to the original because you're not asking it to totally rebalance. You're asking it to nudge toward what I want to have as my asset allocation.
On the day of a contribution, it may well get you back to exactly the right allocation, depending on how much they've drifted.
Yeah.
And one of the really, really cool things about this is behavioral. When we ask people to rebalance manually, creating a spreadsheet, figuring out what they need to buy more of and what they need to sell, by the time you get done with that process, you realize you're selling your winners and you're buying your losers. And it introduces this opportunity to second guess the process. Even though objectively academics tell you it's a good thing to do, that process of doing it manually introduces some emotions that are not helpful.
Yep.
And similarly, when you contribute new money and you're buying these things that are underperforming and you're buying them on the cheap, and what a deal, right? I mean, that's fantastic for your long-term returns. Emotionally, if you were doing it manually, it would be tempting to go in and say, I don't know. I mean, the S&P 500's been crushing it. I think I should buy more of that.
You're right.
So the automation here, I know that M1 Finance can't call themselves robo-advisors because they're not offering advice, but they are offering a benefit that I think of when I think of robo-advisors. That's nudging you to better behavior. And it's because they're automating things and removing manual processes that you would have to do that might introduce emotion. And I think that that's a powerful and potentially underrated aspect of a tool like M1 Finance.
And I suspect, as a matter of fact, it might be worth spending a few minutes right here. I suspect the fact that Fidelity has, in essence, when I say copied, they've got something that is similar called the portfolio baskets or basket portfolios, one way or the other. And they are basically offering a very similar kind of a process. I don't know if you've looked at it as I have not looked at it as carefully as I suspect that you either have or you will as you dig deeper. But I know that they're at this point they're charging $3.99, I believe it is.
I think it's $4.99.
$4.99. You're right. $4.99 to have access to the platform, instead of $3.99, or is that $2.99?
$3.
$3, all right. And so it's a little more expensive, but it is Fidelity. And one of the things we haven't talked about is that one of the beauties of this process of rebalancing is not only that it's commission free if you're using ETFs, and by the way, commission free if you're using individual stocks as well, but that there is the ability to work with partial shares. So now if you want to just trade $50 of something, you don't have to figure out, okay, how many shares could I buy with $50? You just say, I want $50, and it will buy you 3.621 shares or whatever it is. And that's a big deal. I mean, it's another hurdle that keeps people from being able to do this easily. And if they're doing it at M1 and Fidelity, remember John Bogle was once the only guy offering index funds, but look at them today. Almost all of the major firms are offering index funds in one way or another. In fact, all of them do, to the extent that you can go get it through an ETF today that you couldn't on the stock market before. So this is wonderful, wonderful help for that individual investor who not only has to kind of sort through the searching of what are the right asset classes to be in, what are the right funds or ETFs to buy to be in those asset classes, when is the best time to rebalance. I mean, it goes on, and every time you put up those hurdles, there's just a certain number of people who are going to come to that hurdle and say, I don't want to go over that hurdle. But every time it's just got to push a button to get over, that changes your financial future. And I got to just mention one thing that I don't think can be forgotten in this process. And that is that when I talk to college kids about investing, and we talk about learning how to do it yourself, and not having to hire an investment advisor to do it for you. And if you're putting away $6,000 a year, and if you get market returns on that $6,000 a year, and then you get into retirement and you make lower returns because you add fixed income and you take out 4% a year, well, at the end of a lifetime, it turns out that if you paid somebody 1% to help you through that process over a lifetime, that it reduces what you get to keep, you and your family, by about $3.5 million. And yet it would sound that 1% with your first $100, we're only talking about $1 here. And then when it's $1,000, we're only talking $10. I mean, what's the problem here? Well, the problem is those little tiny bits that you get to pick up. And the reason that others get to pick it up for you is because you're not willing to clear these hurdles. And what Fidelity and M1, what they're doing is they're clearing that hurdle for you, either free or almost free. And I think that is amazing.
And we have, because of our relationship with M1, we've been offered something that I think our audience would appreciate, and that's the opportunity to interview Brian Barnes, their CEO and founder. And I think it would be interesting to hear his story about why he created the company. And it would also be interesting to be able to ask him some questions from our audience. So if you're using M1 Finance, or you have questions about M1 Finance that maybe are keeping you on the fence, that you're wondering about, we would love to get those questions. And sometime in the next few months, we'll try and work out a schedule where we can get him and your questions together. And I think that would be a wonderful opportunity for us to expand on this in a way that is really tuned to what our listeners are curious about.
I think that's going to be great fun, Chris. And one of the things that I think it's important to understand about M1 is that it's not the old-fashioned bricks and mortar kind of a brokerage firm. Now, I ran into this. I wanted to open an account. What did I do? I sent them a check. Well, they don't take my check. Because they don't do business that way. It is all done on an automated basis with a direct deposit from your bank. And I believe their SIPC coverage is 3.5 million per account. And other than that, from what I can see, they are, uh, when I say just another brokerage house, you can buy and sell securities. This may be important to you. You don't buy and sell mutual funds, open-end mutual funds, through M1. You don't use M1 to buy a mutual fund from Vanguard or Fidelity. You would buy an ETF that you would buy at Vanguard or Fidelity or any of the brokerage firms, but their business is not dealing in the mutual funds, the open-end mutual funds, but they do work with all of the ETFs. So, as Chris has asked, please, we want your questions and comments about M1 because I think it's going to be great fun to have Brian. And this is a man, by the way, with a passion, and in a way on the same path that we are, except he's trying to build something that's going to last forever. And Chris and I are not sure what forever means. So there is a difference in that regard.
We're getting closer to the expiration date of our
Yes,
temporal forever.
the use by.
Yeah. There's hopefully there's more to it than that. Yeah.
Yeah. Well, we're going to work on that. But Chris, as always, thank you for the great teaching work that you do and helping people clear these hurdles. Let's get them over all those hurdles and keep that money in their family. And I think that is a worthwhile effort for all of us. So thanks, and thanks to you, the viewers and the listeners. I hope that this is a podcast and a video that you will share with others. And in the video, there's an opportunity for you to go in there and ask questions and share comments about this presentation as well. And I also look at those, and if I see a question I can help with, I just go right to work and answer the questions under the video. So all the best to all of you. We're here to serve you, and we serve best when we know what is your best in your best interest. Thank you.
Hey guys, what's going on? It's Andy Elliott. In this video, you're going to learn if you're a sales pro and you want to make more money, this man Dennis is about to tell us how to do it. You're about to blow up. Check it out.
I'm out of control. I can't stop, no, thinking I'm about to blow. Like a dog fly, you will see the bullets fly. More cry and the ring will be a...
All right, guys, Andy Elliott. I'm here with my man, Dennis. Dennis, what's up, brother? Thanks for being here, guys. Me and Dennis have done a lot of events together. Now, I want you to understand something. I come from an automotive background, okay? Now, we train everybody in every industry now, but my man, Dennis, here now, he runs about, how many stores? Is it 8 or 9?
9. We got 10 coming on.
Yeah, so he's running about almost 10 stores, okay? He's in charge of all the financial numbers, marketing, a whole bunch of other stuff. But what Dennis has is a very unique gift to teach finance. Now, I want you to understand something. What I've seen Dennis do with a lot of people, and that's what I said, salespeople, managers, GMs, everybody, pay attention. You're going to get more value today than you've ever gotten. On the finance end, what Dennis does is that he teaches people how to basically be recession proof. He teaches anyone, and I'm going to say anyone, so anyone watching this, he can teach you how to become a pro in finance. Number one, make more money than you ever imagined in your life, okay, and go to the top. So if you're wanting to go to the top and be the top 1% earner, whether you're in the automotive industry or any industry, understanding finances is a very key point. Now, Dennis, I'm going to turn this over. I'll ask some questions to you. Number one, just tell us who you are, how long you've been in finance. By the way, I've done business only with one person in the entire country. Every day I get text messages. Andy, I'm the best in finance. I'm the best in the world in finance. I'm the best. Can we do business together? No, I love you. I'm grateful for you. This is my dude. Why? Because he gets freaking results. This guy, when we do events together, every individual that comes in the room, number one, becomes a master communicator. Extremely important. How to speak, how to talk, how to articulate the words. Two, master presenter. You know, it's funny how so many salespeople are like, or my bad, finance guys, we'll call them. Everybody sells. But during finance, they say, well, what if somebody says they don't want a warranty? What if somebody says they don't want gap? What if somebody says this or that or this? He's like, listen, had you presented it right, there would have never been an objection. Okay, now I want you to remember that. That's called the 1% language, okay? The other 99%, they're saying, well, man, what happens when you do this? This guy says, no, I can teach you to be so deadly with the way you present, the way you talk, the way you carry yourself, the way you understand what's going on. It's a chess move. They all say yes, okay? I've seen him take an average normal person getting into finance, week one, go in, sell 2 or 3 products per deal, run finance gap penetration and warranty penetration like no one else, and have the customers stay in that store, in that company forever, and love that store. You know what I love? Dennis always says finance is the last touch, right? You're the last touch. After that sale, a great finance guy not only secures the contract, the deal, secures more money, but also secures the relationship forever. My man Dennis right here teaches people how not to be amateurs, but to be pros. And in a world right now where a lot of people are amateurs, they honestly, most finance people and salespeople don't self-develop every day. On this call, on this training, you're going to become addicted. You're going to become obsessed with self-development. And Dennis is about to shower some freaking fire on us and love. And, you know, he ain't all checked and fired like me. He actually is. But he does it in his own tone, in his own language. And he can train anybody, which is why I partner with him. He can teach anyone. And when I say the word anyone, I mean, if you're like me, like I stuttered when I was young, I thought I had a learning disability. I didn't think I understood stuff. The way that Dennis breaks it down, no matter who you are, you'll understand. And by the way, once he talks to you, we're doing an event that's coming up very soon. I would love for you guys to be there, okay? So grab a pen, grab a piece of paper, take some notes, my man Dennis. I'll give you my cell phone number here in a little bit. You can text me if you'd like to get information on it. We'll be happy to send it to you or your store. And if you're a salesperson who goes, well, I'm not in finance. No. Listen to me. I can show you. He will teach you this one-day event how to go get a job in any company in the world in finance. Walk straight into your door, to your dealership you're at right now, and they'll hire you on the spot. So you want to make all the dough? You want to be freaking super valuable? Here's your chance. So, Dennis, number one, how old are you? Tell us about your family. Tell us how long you've been in the business, and just rock and roll, man. We love you.
Thanks, man. I really appreciate you having me come down to the Lions Den. Every time I come down and visit Andy and his team, like I'm on another level, and I'm buzzing sitting in the chair next to you and being with your team today. So, number one, thank you for that. But my name's Dennis Gingrich. You know, actually yesterday I turned 44, so I'm really excited about that.
Look good, dude.
Dude, trying, man. Got to take care of the temple, man, so you can take care of other people. I know you do that every day.
Yeah.
But super important to me to really develop people. That's what I live for. That, you know, I quickly found that I like working with people and helping people accomplish their goals and dreams, and everybody's got different ones. So number one, that's what I like to do. But a little bit about me, man. Like I said, I turned 44 yesterday. You know, I'm married, my wife Jessica. We got 5 great kids, 23, 21. I got a 20-year-old, and I got a 9 and 10-year-old. All about those kids. I got great kids. I'm truly blessed. But I've been in the automotive industry really since before I was 18. My dad started in Southern California for Bob Wondry's Ford back in the early 70s as a salesperson. And I will say this to my dad, who's also Dennis, best belly-to-belly salesperson I've ever met. Truly an amazing guy. Can't thank him enough for everything he gave me. He's a big part of why I'm sitting here today.
Hey guys, what's going on? It's Andy. A lot of you leave comments telling me that you need help. Do me a favor. I'm going to tell you the best way to get a hold of me. Shoot me a text message right now, 918-210-0254. 918-210-0254. I'll help you with whatever you need. I got your back for life. Let's get back to the video. By the way, that's called mentorship, okay? And if you didn't have a dad like that, I didn't have a dad that taught me sales and business. Listen, you want to listen to Dennis because he's dangerous. And I'm going to tell you this. I've had large companies pay Dennis a lot of money to come in and teach people who have been in finance for 5, 10, 15 years. And literally they were running $2,000, $2,500 a copy, and they thought they were killing it. Dennis will take them to $3,000, $4,000 a copy. These same people, by the simple principles he teaches. So I just want to tell you, like, whether you're a veteran, listen to me. You got to go back and have a growth mindset. And I honestly underestimated you, because we think of a closer, a badass, this guy. Dude, this guy is the velvet hammer, which in the finance office is extremely important. Because a lot of the times on the front side, they see salespeople with a lot of energy, right? Which, hey, I love energy. I think it's super important. And I know that you have it too and you like to have fun. But the way that you articulate your words when you're presenting, it's dangerous. When we first did our first training together, I remember everybody, when you did the Too Good to Be True close, I honestly dropped my jaw, and this guy could sell you everything he has on his piece of paper. Everything. It's the most dangerous close in the history of time. And I've memorized it to the T, and he taught it to me. So the closer is being learned from other closers. This guy is dangerous, and he's ethical, and he has integrity, and his morals are through the roof. And I just need you to know this, that this is your time to change, and keep going. So your dad taught you, you had a mentor. That's amazing. Here's everybody's chance to learn.
Yeah, I mean, it was great. I turned 18, and my dad was always a hard worker. We had a lot of fun. We did nice things, and then I went off to college, the University of Nevada, Reno, and I still wanted nice things, and my dad always said, man, you can have whatever you want, but you just got to work hard so you can have it. And so I'm like, okay, I need to get a job. And, he always did well for himself. So I was like, well, hey, I think I'm going to sell cars. And, a buddy of his that they came up in the business together, he owned a small independent dealership and ultimately blew up, and he's done great things for his life, but gave me an opportunity to sell cars and go to school at the same time. And my college upbringing, going to University of Nevada, Reno, like I didn't go to football games, basketball games. I didn't get the typical college experience. I go jam out my classes, and then I'd come back and I'd be at the gate, as you like to say, sitting on the tailgate, reading a book, whatever I needed to study, and up would come in. I was the first guy there, and I found success early. Here I was 18, consistently leading the board, doing a good job, and wasn't working as much as the other guys. And all my buddies, when we got to go out, we got to go have a good time because I had the funds to go do that. So. It got really real for me quick because I was 19. I found out that I was going to have my first kid. And it was like, man, I got some real responsibility here. And so I kept going. And then I did some stuff on the back of a lot. You shouldn't do it a business. And I mean, I would never encourage this, but I got caught. And I remember they sent me home, and they're going like, I get a phone call the next day. And of course, overnight, I'm like, dude, what am I going to do? I got a kid on the way. I got to figure this out. And the general manager calls me, and I remember he had this big red couch, Andy. And he called me in. He's like, hey, I want you to come in. And I show up. I'm skinny little kid, still. And he goes, dude, I want you to lay down on the couch. I felt like I was in the psychologist's office. And he's like, no, lay down, and we're going to talk. And he goes, what were you doing? And I go, dude, I'm just, I'm kind of bored. I want to grow. I keep winning. I'm doing good, and I just want to grow and develop, right? So I get, when I'm thinking about sales guys that want to grow and develop, like, you're my people. We're the same. Growth and development. That's what people need in general, right? That's where they find fulfillment. Because if you're, a body of water, if it stagnates, it's rotten. It's not a good place to be. And the human soul, the human mind, and just us as people, that's not what we need to be. We need to be fluid. We need to be moving. We need to be growing so we feel good about who we are as people, which I think is most important, right? Feeling good about who you are as a person is number one. And when you feel good there, right, that's the foundational. Everything else seems to fall in place, right? And it comes faster for other people. It comes slower for others, but it's out there. So, always keeping that growth mindset, like that's what it means to be human, at least in my opinion. But, and then, so we go through this whole conversation. And he's like, all right, beat it. And then I'm going to call you tomorrow. You better answer my call. And I'm like, okay. So he calls me, and he calls me back in. And then he goes, all right, we want you to go do finance down at our smaller, like the original gas station lot. And I'm like, okay, I guess I'm going to do finance. So, I got thrown into doing finance. It was a smaller independent store. We were doing, I don't know, 30 to 50 cars, and it was really cool because it was all a bunch of younger guys, like his nephew there. He was a couple years older than me. I think he was like 22 at the time. And all the salespeople, it was all these guys in their young 20s. And, we were out there, but he gave us this opportunity at this, this gas station, and we had to do it all, man. Like, I learned everything about finance. It was packaging the deals, making photocopies, knowing what every single bank did for advance, debt ratio, all the stuff. But I had to do it. It was like, you never want to learn. When you learn long division, you need to be able to do it by hand before you get the calculator.
Facts.
Right? And that's what I believe is you got to learn the basic foundational things in whatever you're doing, whether it be sales, whether it be finance. And, sales in the automotive space, it's the same out on the line. And it's not really any different in finance, in my opinion. And quite frankly, there's a lot of commonality even in the service drive to what we're going to talk about here today that you can transfer not only in the automotive industry, but into other spaces, insurance, selling financial products and stuff. So, there's a lot of crossover. But I think for you guys on the call, you sales guys that are hungry and you want that growth, and maybe you see that finance guy that's in the back room doing really well for himself, and you want that for you, like, dude, it's yours. It's yours for the taking, because there's a lot of people, specifically in automotive, that get a little bit comfortable. They take for granted.
Super comfortable.
They get super comfortable. They really take it for granted, And I think,
guys, in the automotive industry, it will print money. Print. It should almost be illegal how much money you can make in the automotive industry if you're trained. Okay, so continue to listen. By the way, listen, if anybody watching this real quick, write down this number. Just grab a pen, write this down, okay? 918-210-0254. This gentleman, who I will tell you is one of the greatest of all times, okay, 918-210-0254. You text me, say, give me information on the finance event coming up. I will send it over to you. It's in Scottsdale, Arizona. You will be with me and him for one day, and you will leave dangerous. Okay? I'll just tell you, we'll ruin the value of money for you. You will leave a completely different human being. And I love what you're saying. You said you got to learn how to do it with the pencil before you get a calculator. Like guys, let us teach you the real way. The way that lasts.
No, if you get a foundational understanding of anything, I don't care what it is, but if you really understand the basics of really anything in the world, like I can't think of a situation where this wouldn't apply. Like if you don't have your basic foundational stuff and know all the little details that really are foundational to delivering a finished quality product, that's from delivering a car to a customer, out in front of the dealership, or, handing the customer the envelope full of all the paperwork they just signed with all the great protection products. If you don't know all the things that go into that, and it's not hard. It's not hard. It's just that people have a hard time because they take what they have for granted and get this cavalier attitude about it. That it's, they just gloss over things that are truly simple, but they're important. Like what we do, I would say it's hard, right? It's hard, but it's not complicated. Hard is, you got it. Like if you're a sales guy, you got to make a lot of calls, text, emails, and get a lot of rejection.
Everything is hard that pays
well. 100%. If it's easy, you're not going to have a good life.
Yeah.
I think we're all here on this planet to have a good life and feel fulfilled, but you need somebody in your life that is willing to pour in the time and the energy to make sure your foundation is solid. Everybody needs a mentor, and there's a lot of people out there, some of you guys that are listening to this right now, maybe you don't have a mentor. Maybe you don't have somebody that, has a give a shit level about another human being because they're truly in it all for themselves. And that's a reality, right? There's
a lot of that.
There is a lot of it, and it's unfortunate, but we can change it.
But
right?
that's not everybody, and that's why we do these talks so you guys can listen. And I want to tell you something. If I want to talk directly to some people right now who are not in the finance department yet. You've been selling cars, you've been killing it or not doing well. It doesn't matter to me, and you're looking for a change. Like Dennis always talks about, looking for a change. Let me explain this to you. Office job, don't chase cars anymore. You're out of the heat, you're inside. Printer, desk, chair, brain, right? Mouthpiece, quick turns, lots of money. Skilled, okay? Great attitudes. Love what you do, okay? Big money. That's what this man will teach you. I notice a lot of people when they move into F&I, they get sent out to F&I schools, okay, schools, and when they go out to these schools, literally they're teaching a classroom of people. A lot of the times they just want to get the money, get you through the classroom, get you back to the dealership. It's hard to find somebody who truly gives a shit about everybody. And what I love about you, Dennis, is that every person, I've noticed that, like in these finance schools, it's almost that they can prejudge who's going to make it and who's not. The guy that shows up in the suit, who's got the slick mouthpiece, he's a real good speaker, he does this. Dennis, I've learned that you almost believe in everybody, or you do believe in everybody. And I've watched people who were probably counted out, who most people didn't think they could make it, and the way that you teach them to talk and present, when they go home in these simple, you break it down so simple, uncomplicated. Finance sounds like, oh, I'm going to get into numbers. It's really none of that. They go back to their stores and their salespeople, and they walk up to their general managers and they say, I paid for my own financing class because I would like to move up. I would like for you to let me show you how I'd present numbers if somebody came back to the finance office. And within 5 minutes of their general manager sitting down and listening to you talk to them, they will offer you a job in finance on the spot. Guaranteed. That's what this event's about. That's that number I just gave you, 918-210-0254. If you're ready to level up and you want to go into the finance department and you want to be the top 1% in their industry, you want to make 20 grand a month, 50 grand a month, I don't care. What do you want to make? This is where you're going to learn it in one day. Now listen, one of the best teachers I've ever seen in my life. You're slow to speak and your words are dangerous. You teach word tracks, not theories, not like, well, if somebody was to say that, I'd kind of say this. This guy teaches word for word what to say, and when you say it, it works. It's the craziest thing, and it works for everybody. But one of the things that I just want to stop and talk to the salespeople who maybe are wanting to move up in the future, this is your opportunity, because in your company, if you do get put in finance one day, normally what happens is that you end up shadowing another finance guy, and that guy is trying to make money on his own and train you. Do you think he wants you to take his money, or she does? No. They want you to take the cash deals. They want you to take the crap stuff. They want you to do the stuff you don't like. And that's the reason why people get a bitter taste in finance right out the gate, is because they end up being basically somebody else's assistant.
Yeah, no,
yeah,
that's not fair.
Yeah, and you're not being treated as somebody to get a fair opportunity. When you walk in, and I've seen people that are in finance for 20 years that come in and they're like, oh my God, man, like I have been so disconnected. And by the way, I've never been. Who did you work for before that you did finance training with? What was the name of the company?
The finance insurance company. I work for Zurich.
Yeah, Zurich. So Zurich is a huge company. They're massive. Dennis, how long did you work for Zurich?
I worked for them just a couple months shy, 8 years.
Okay, 8 years. He ran accounts and trained people for Zurich. Now, I need you to understand something. He's watched every method that every finance department that teaches. He's watched the good, he's watched the bad. You've watched every finance trainer in the country. You've seen them all. You've heard it all. You've watched every strategy. Guys, Dennis works for the Nilo Auto Group, which is in California. And I need you to understand the Nilo Group, one of the highest, I would say, sought-after companies in respect, dignity, and stuff. Like, you guys are on point, and they don't let anybody come in there. Like, you got to be the best. Am I correct?
No, that's it, man. I really look at the Nilo company.
It's like 1 to 10. They're like 12 on like customer service, like off the charts, like breaking the chart on customer service. Dennis makes sure that he trains his people every day to not only provide customer service that their clients have never seen in their life, but also make sure that everything works out great. So I need you to understand this. The guy that you're dealing with, he's been in F&I his whole life, done it himself. So he's not in theory telling you what he should do. He did it and killed it. He also taught it with Zurich, okay, which means he did it for 8 years. He was a teacher. And now he's running an entire auto group, and literally he's making sure that it's working just right, and their numbers are amazing. But the way they take care of people is unreal. Hey guys, what's going on? It's Andy. A lot of you leave comments telling me that you need help. Do me a favor. I'm going to tell you the best way to get a hold of me. Shoot me a text message right now, 918-210-0254. 210-0254. I'll help you with whatever you need. I got your back for life. Let's get back to the video. This guy can teach you to have a value on you in which no one else in the world has. And if you want to be a top 1%er, like I really think that like you teach multi-dimension, like from protecting the dealership to making money to explaining value, because making money is explaining value, to protecting the client. Protecting the client is huge. You know, Dennis always asks a common question. He's got these golden questions that he asks. He says, hey, where do you think car dealerships make their most money? And he's like, do you think it's in sales or service? And the customers always say sales. It's not. It's in service. That's why the service department is twice as big, which is why my job right now at this point is to let you know how things work in the back end so that you can protect them. Am I correct?
Correct.
And Dennis, I need everybody to understand this. If you want to create more value in an economy right now, at the time of we're shooting this at 2023, there's a lot of financial statements going down in car dealerships, okay, because it was easy last year and the year before. A lot of sales people's money are going down. The finance department isn't changing, okay? Like, listen to me. If you want to put yourself in a position in which you never have to worry about, like if you want to be recession-proof, I would say, this guy will teach it to you. So that at 918-210-0254, you'll spend a day with me and him. Keep going. But I love it, man. I just got to shut up because I love what you do for other people, but I love your standard is so high and the way you believe in other people. I'm just like, damn, man, there's got to be at least right now, 100,000 people that are like, dude, I'm ready to level up and go to the next level. Like, what's my next step? This is it.
No, this truly is it. I mean, to get good at at finance and hell, salespeople, that this is a natural step. If you're looking to make a career in the automotive industry, I would say knowing finance is like it's a foundational building block of any successful dealership. Anybody that has a great finance department, to Andy's point, is recession proof. It just touches. Some guys in the fixed operations department or more that are on the sales side, might disagree with this, but really when you think about finance, they're that last touch, the last touch with that customer. And everything that happens in that finance department, it's either putting a bow on the customer's experience where they feel really good and they're going to come back and see you guys, the salespeople that work so hard, you've been dealing with them for weeks, months, days, 6, whatever. And then the finance guys got to do a good job of taking care of that customer and also setting the dealership up, because we don't just want to sell them cars. I mean, we do. We want to sell them cars. We want to sell them F&I products, but we want them coming back in our service drives so our service advisors can make a good living for them and their families. The customer has a good ownership experience when they come into our service department. Our technicians, the guys that really work for a living, they're out there in 115-degree heat wrenching on cars. None of us want to do that. That's hard work. They need cars to fix. So when our finance managers can do a great job putting a bow on that experience, sell valuable F&I products in a transparent manner to keep the dealership compliant and stay out of court, got to do it that way. If you're not doing it that way, you're not doing the job. Right? Period. End. There's no
And doing it the right way is doing it this way.
It is the right way. This isn't smoke and mirrors. This isn't, magic card tricks. It's just very simple. It's communication. Yeah. Every effective salesperson, regardless of industry, they all have one thing in common. They're great communicators. And I really believe helping people become better communicators is going to help them reach their goal, whatever it is it may be. But, getting back on track, when we're selling these finance and insurance products that the customers get value out of, and when they show up into the service department, they got a good experience. And then when it's maybe the economy slows down, sales slow down for whatever reason, you've got this organic traffic flow in your service department. So future salespeople have opportunities to sell another car when you move up and you're in the finance office, or you're on the sales desk, or you're the general manager, or you're the dealer principal. It's just this life cycle that I really believe that finance feeds the automotive life cycle more than any other part of the dealership.
Anything else. And by the way, this is the hardest thing because most people can't see their hand right? Further than the hand in front of their face. They can't do this. Like look, if I was a dealer, a general manager, and I really wanted to provide like the most packed showroom floor to my team ever, it'd be simple. My F&I team would be the most trained, the most best attitude, the most loving, the best communicators in the world. And they would literally make sure that when every customer left, they would be doing service in our service department, number one. And then number two, they would be protected. So when something broke, they would stay happy so they could get it fixed. So that bow that you wrap on it stays there the whole time. And by the way, all we're doing is nurturing. I think the reason why people don't come back is because they don't have any nurturing. So if the service department does a good job, that nurturing's there because that finance contract was sold, so they come back to your company. That means they end up back on your showroom floor. It just creates a natural flow of people. Yeah. And you know, most people think, well, I got to take care of business today. How many years are we going to keep saying that? And by the way, if they were trained, you'd be taking better care of business today. You'd be making more money on your customers, and your customers would love it, and they'd be back to buy more. You know what I mean? Like, dude, the common sense stuff just seems to be missed.
Yeah, no, 100%.
Like, spend more money in advertising, but don't teach our people in finance to be great. Spend more money in advertising, or we need to make more money in finance. You're not going to do it until your people are more skilled. It can't happen. Now, at our last event that me and Dennis had, a lot of companies sent their people out. So if you're a manager, you're a general manager, and you have one or two finance guys that you would like to send out to this event, you text the 918-210-0254, send them out. We'll send them back the top 1% in the industry. Guaranteed. Andy Elliott, or mark my words, stop following me and never, ever do business with me again. I don't partner with anybody. Okay, this is the only guy that I partner with because he's dangerous. And you know what I love about Dennis too? I gotta say this: your compliance, like the way that you operate, and you talk about doing it right, like explaining value and selling value. So you sell valuable products. Like you really can't like. It may cost $2,000 or $4,000 or $5,000 for a warranty, but really you can't even put a value on what it does, especially in now how expensive cars are getting to work on, the machines, the diagnosis. It's $200 an hour just for labor in the service department for what parts cost. I mean, dude, like these things are actually undersold.
100%. I mean, and that's the thing we got to talk about is professionals, specifically in the finance department. And that's something that, is foundational, I believe, to a really successful finance manager is making sure you have a good base level understanding of the entire dealership's ecosystem. You need to know, what your store's labor rate is. You got to know it. You got to know, how much things cost to fix, from tires to wheels to windshields. Like, you have to know those things. And you have to be confident when you say it and explain it to the customer, and it's got to be believable. But where a lot of guys and gals fall short is they're not doing the homework and have a good broad understanding of the ecosystem. And sometimes it's not their fault, right? They just don't have somebody that will slow down.
The standards are so low to what guys, I'm gonna say one thing. This is why this is your lucky day. The standards are so low in the automotive industry for what a finance person should be held to the standard of that dealerships are missing $10 million a year. Easily, I'm not running their finance department right. And by the way, it's because of human capital. What I know is that it's normally, now there are better products than others, there are better warranty companies than others, but the people are what make the difference. And you know what I know? If there's any general managers watching this and you don't have the finance department that you want, do me a favor. Send one person that you know that cares. I didn't say that knew the automotive industry, that cares. And send them to Dennis, and Dennis will send them home the best, running the best per copy, the most products per deal, and literally leave the customers feeling like there's a bow on the deal at the end of the transaction. Which, by the way, I love Dennis. You always talk about like being relational, so many people see deals and they say, "Oh, well, that ain't gonna make any money." Every deal can make money.
Every deal can make money.
And people don't understand that. They've been sold a lie. Okay, which is why it's a good when we do these one-day events to reset people's thinking. You know what I'm saying? Like, hey, a lot of people like know the product that they sell, but they don't have the right mindset. They don't have the right perspective to look at deals anymore. There was once a time when they everything they saw was like, oh yeah, this is great, that's great. But now they say, oh, that's bad, this is bad. They find everything that's wrong. Like when you get away to these events, you know, you have a way to look at deals to show people where all the money is. And that's what I love, but also how to stay compliant and do a great job. A lot of people hate finance people, car dealerships, they hate car salesmen. And the reason why is because they're amateurs. You know what I'm saying? And you just do such a good job of building pros. It's crazy. You know, and we talked about the Nilo group. Like the Nilo group is 100% pro.
Yeah, no, we're dude, we hold everybody to a very high standard.
Super high standard.
Super high. And
highest standard I've almost ever seen in the automotive industry.
You know, and it's not just numbers, Andy. You know, I mean, numbers are important. At the end of the day, we're in business. We all want to make money, you know, but it's very important. You know, we want to take care of our customers. We've been in business for over 100 years.
You guys take care of people to, I watched a customer that was unhappy with a car and they just took it back.
Yeah, we just take it back.
Listen, like just give it back. We love you. Like whatever you need.
We'll get you next time when you're ready.
I mean, when I say this, like it almost goes against the grain of the automotive industry, but it's why you guys are growing so fast and so successful. But who's doing all that? Well, number one, it's the standards from up above, from the leadership, right? But it's also the way your people are trained.
Well, I think, you know, training is a big part of it, but you know, a lot of people put a lot of focus on the customer experience, which I think is important. But one thing we really hold at a high value, and I would be comfortable saying this, I'm more in tune and more keyed up to make sure our employees have a good experience. I want them to have a great place to work.
Well,
I want them to be happy. I want them to be able to go home and enjoy dinner with their families, you know, a few nights a week, because there's late hours in this business. We have great hours of operation because we want our people, our salespeople, finance managers, everybody, we want them to have good family lives. We want them to be fresh and ready, and when they're off, I don't want them thinking about the Nilo company. You guys talk about it here, be where your feet are. I want them to be able to do that when they're at their homes with their kids. You know, that's what I want for them. And then that way when they come back and it's showtime, they're on the main stage, they're with a customer, they're on the phone, they feel good about where they work, because I really believe that translates over to the customer, and then the experience takes care of itself.
Yeah.
You know, and we do have high expectations. We're very proud of our PVR and penetration, and you know, those are all numbers on a page at the end of the day, and you know, that's how we're paid. But I think as an industry, if we get more into taking care of our people and make sure they've got a good environment, and that's an environment means to me having somebody that cares to invest in another human being and make sure that they're on a track to go where they want to go in the future, so they get that growth and fulfillment that we're all seeking. If we can do that, a lot of this other stuff just happens organically. You'll get better results just when you got a good work environment. I truly believe that, and you know, the rest with the training and the presentation and the handling of objections and making sure that everybody's dialed on that just becomes the icing on the cake, in my opinion. And I think we got to do that as an industry more. We got to do a better job at that, so we
it's
can.
Just a shortage of good leadership.
Well, it is. Leadership is leadership is a tough thing, and you know, you've talked about this. The sales arena over the last couple years with COVID is, you know, it hasn't really done us any good. It was good from a financial standpoint for a lot of people, but I really think it stunted our growth.
Yeah.
We stunted
it made
our
us
growth.
worse.
Yeah, it was. You know, what do they? You know, fat hogs get slaughtered first, or you feed the bears, they forget how to hunt. Whatever the analogy is you want to make, that's kind of been a byproduct of COVID, and I feel bad for a lot of guys that got started in the business 3 years ago, and hey, some of that's just, you know, happened to be when you were born. Nobody can control that, but
you got tricked.
You got tricked, man, and you know, it's like it wasn't nobody like deceived you. It's just, you know, it's the market.
It was a fake market.
It was a fake market, and you know, the market. I've been doing this since 1997 when I turned 18, and you know, I've watched the waves, the ebbs and flows, you know, from how the lenders, change their lending habits. Rates go up, rates go down, advances go up, advances go down. They want more stips, they want less stips, they do no stips. It's very cyclical. And I think for you sales guys, especially the ones that are newer in the business, I really believe, coming down here to Scottsdale, spending some time with us, talking about finance, is really going to prepare you for the next stage in your career, not only in automotive, but I really believe there's some transferable skills that you can take with you wherever you go. And, I'll tell you a quick story, man. One of the coolest story I ever went, I went down to a dealership, an independent dealership in my market, because I got, I do some other business outside the Nilo company.
Yeah, and by the way, Dennis does run, tell him what you run.
So I have a finance and insurance product company. I would compete with a Zurich, nowhere near the size.
Yep.
I would say I'm a little bit more boutique.
But you're more hands-on.
I am more hands-on. I would say our company is a little bit more high-touch, quality interactions, because I don't want a lot of accounts. I want quality accounts. I want people that want to get better, not only just in finance. I want them to want to get better in all facets of their operation.
Yeah. So if you're reaching out and you want to get tickets to our event, you're going to text the 918-210-0254. If somebody is looking for another, for maybe to talk to Dennis about what you can do, give him your number. And they can text you and you
my
can set
cell
up a
phone's
conversation.
916-899-7139. Business has got to fit. To have a good business partner, you got to have a good fit. People want to do business with people they like. It's true when you're selling someone a car or you're selling them a repair in the shop. They want to know and feel like the person on the other side of the desk has their best interest at heart.
A good deal is only fair both ways.
I tell this to our sales team all the time. And I'm cool telling my customers this. If it's the right car and the wrong deal, I don't want your business. If it's the wrong car and I don't want it. I want the right car, the right deal, because I want you to feel good about your experience here at the Nilo company, because I don't want to sell you one car. I want to be there for your next car. I want to see you in service. I want you to be around with us for our next 100 years.
And that's why people miss it.
Mm-hmm.
But you're going to tell me a story, and I want you to tell it to me. But I wanted everybody to know that if there is a dealer watching, small or big, you love independence.
I love everybody, man.
Yeah, I know. But I've seen you grow independence really fast on a dangerous level. I mean, there's some stores that sell 1,000 a month that we've done business with, and then there's some that sell 20 a month. So I just want everybody to know that if you need Dennis's assistant and you're an owner or general manager, you're welcome to text him directly. And I just love giving him a plug to help you if it is a right fit, because he's very educated, very smart, and if he says yes, he don't take bets he can't win.
No, 100%. I want to deliver.
Yeah. So tell us the story.
So I went down to this local dealer. A good friend of mine. He was a referral actually from an account I earned when I was working at Zurich, and hey, you're doing such a good job. I want you to go see my buddy down in Sacramento. So I'm like, cool. I'd love to meet him, and I'm sitting there talking with him, and we get a good relationship, we're doing business, and then eventually he goes, hey Dennis, I'm really looking for a sales manager. So, I got a pretty big network of people. And so I get a referral. I'm like, hey man, I really think this would be a good fit. You're gonna get a lot of latitude to make an imprint and put your stamp on the place, and they need a leader. And I bring him in, and I'm sitting there and I'm listening to this guy's conversation. And when he was talking to the owner about coming on board, he told this story about another guy he had worked with who worked with him much closer than I did for a lot longer. But he goes, he and I forget how it came up, but the moral of the story goes, man, this guy, his name's Mike Lazon, I'll give his name. He really made me what I am today as a sales professional. He really showed me all the basics, showed me he cared, and helped me find success. He battled through me when I was in a tough place in my life, but he really made a meaningful impact in my life. And I wouldn't be where I'm at today if it weren't for that guy. And I feel like as leaders, that's the goal. I want somebody to say that about me when I'm not around.
Bam.
I feel like if we do that, if that's the target, and we aim for that in everything we do, like, dude, we're making meaningful change on the world. And it's one person at a time. And it's a lofty goal, but it takes it takes slowing down and putting yourself aside, I think, which is hard to do because we all got families, we all got goals, but leadership is getting stuff done through other people.
Well, the qualities of a great leader is to not have self-interest.
Correct.
To have the interest of other people. And sometimes you got to make hard decisions as leaders that aren't always in the best interest for you, but they're in the best interest for your people.
100%.
And people don't get that anymore.
No, they don't get it. You have to. There's so many things like when you think about tribes, every tribe has a chief, and that's what a leader. And when things are going tough or going wrong, and
People
you look at
to the
today's
leader.
market right now, it's tougher, it's hard. They need that chief that is going to assure them and show them that everything's going to be okay. We're going to be fine as a tribe. We're going to come out on the other end, and we're going to be good. It's the leader's responsibility to give the tribe that level of certainty, so when they're on stage, they got nothing to worry about than the other human being in front of them. We've all heard it, love the one you're with. And our salespeople, our finance managers, our sales managers, anybody in the dealership, they can't truly love the one they're with if the leader is not giving them the certainty they need. And I really, really believe that that's the goal, right? And it extends when you're talking about the culture. And I know you're a culture monster here. You got a culture you believe in. And I read a great book, and it's called Tribal Leadership. If you haven't read it, I'd suggest you pick it up. But there's a line in that book when it comes to preserving the culture. And and I might butcher it, but basically it is the first clean kill awakens the herd, and it's in the context, if you have somebody in your store that is killing the culture, and everybody else is on board, it's your responsibility to preserve that culture and keep it good for the masses. That's the leader's job, is to safeguard that.
Most leaders don't have the courage, because I'm going to explain why. A lot of the time, that toxic person is usually the highest producer.
Yeah.
Sometimes it's not, but a lot of the times it is. And that pride, that ego, and that entitlement, the eye rolling in meetings, the I don't have to do this.
Yes.
It feeds into everything else, and people think, well, if I was to get rid of that guy, well, we're already not doing well enough, then I would really get my butt kicked. Now, what would happen is your people would respect you and they'd rise.
Yeah. They
Okay.
recognize the void if it's that top.
Exactly.
They recognize the void,
And
and
that
they
person
know.
is probably doing better than everybody else because he's killing everybody else.
Mm-hmm.
Okay? But a lot of people don't see things that way. I think this event we're doing, okay, I think this would also work for anybody not in the automotive industry that is maybe currently a person who's in sales in any industry, or who works somewhere and is thinking, man, I want to learn more about automotive opportunities. Coming out and sitting down. I believe time and experience don't mean anything.
No. I mean, I love a blank slate, to be honest.
Like listen to what he's
Yeah.
saying. He goes, I love a blank slate. So if you're watching this, if you're in finance and you're looking to run your numbers to $3 to $4 grand a copy, you need to be here. If you're wanting to get into finance one day and you're in sales, you need to be here. If you're a blank slate and you're in any industry at all and you've never sold a car in your life, you need to be here.
Yeah.
Dennis, you're going to bring the heat and teach everybody.
No, I'm fired up, man. You're spot on. I think coming in, having a nice conversation, talking about the basics.
Can you tell us what all we'll cover at this training? I mean, just so like people can understand, from like compliance to closing to overcoming.
Yeah, 100%. I definitely like to talk about the overall ecosystem of a dealership, how important each department is to one another. Like, one really can't exist without the other, and with finance being, in my opinion, the center and the big impact. Because if you don't know how important something is, you're never going to give it the attention it deserves, right? So we got to talk to that at a high level and give the examples as to why, right? I think that's the starting point right there, and it is. So when you think about sales, the automotive industry, has a bad reputation with consumers, and quite frankly, a lot of it is deserved, right? We can read the news and things happen in sales, and then it goes into the finance department. Either the finance manager just does it because that's the way he was taught, and I'm talking about doing, uncompliant behaviors, breaking laws, breaking regulations.
And this is huge. General managers, owners, everybody listening here. Dennis is a compliant freak. I mean, compliance in the state of California are pretty deep.
No, it's
compared
tough to
other
find
states.
another state as
Yeah,
stringent.
that's tough. And
Yeah.
by the way, so teaching, we're going to teach from a standpoint of like, this flies everywhere.
Oh, 100%, man.
Right,
You got to
so, like-
train to the lowest common denominator on that.
Oh my gosh.
Yeah.
So I just want to tell you, like, the safety of a company, the safety of a dealership, the longevity of staying out of court, sleeping at night, it's called heaven on earth.
Well, guys, and for you in sales, right? I mean, you want to go home in finance, a salesman, you want to go home and feel like genuinely good about the service you provided. And if you're not doing it right in a compliant fashion, you're not going to live, you're not going to feel good.
This industry won't last long for you either.
It won't. I mean, that's
Yeah,
why we
income
have
will be short-lived.
well, that's why we have regulators that are all coming down on our industry, is because we're not doing it right. And like I said, sometimes it's not deliberate. Sometimes it's just like the guy
taught
that's
you?
been there 40 years. That's the way they did it in the 80s or whatever. And I'm being, a little bit extra,
but somebody taught them
Yeah.
wrong.
Yep.
And things change.
Things do change. It's
Yes.
always evolving.
And I love that about this event. Things have changed, and this man is up to date today. What's good, what's not.
I don't have a choice.
No, exactly. And by the way, either does anybody in
And
a
I
finance
like it.
department. Yeah. Well, number one, to me, it allows you to actually have an unfair advantage over everybody else, because in a world full of amateurs where people don't know how to do their job, they don't know how to explain value properly, they don't understand how valuable the finance department is, they don't understand how it protects people, they really don't understand it because they got in there just to make a check, and they don't really understand how precious and important it is and profitable. Guess what? They're amateurs. You guys are going to be taught to be the best in the world.
Yeah.
This is crazy, man. I always talk about, because I'm the sales guy, so I always teach, how to close, influence, persuade, paint pictures, tell stories, do all these things. He does the same thing, but he does it in the finance world, which pays a lot of money.
Mm-hmm.
It allows you to be a very valuable employee.
Yep.
It allows you to basically run your own business inside of a business.
Yep.
And man, it's a great life if you're the best.
Yeah, absolutely.
Not being good, it sucks.
No, if you're the best, right? And for me, I tell everybody at the Nilo company, our finance team, I expect all of you to be unicorns. I want you to run great numbers. I don't want bad CSI. I want you to have an amazing relationship with the people in our business office that make sure we get paid, cars get registered, trades get paid off, all the stuff we sold them gets registered so they can recognize the value of it when they need it the most, no matter where they're at, right? They need to understand that. They need to have that. They need to understand and know, and this is something we talk about, is how all these different F&I products work. You should know how to walk through a claim. If your service
Most people
advisor
have no idea.
If your service advisor can't call in a claim, and maybe it's can't or maybe it's won't, or hell, it could be because they're not familiar, because you're not selling things further down the menu, so they don't have experience.
That's right.
They don't know. You need to understand how that works, because when you sell them, I don't care if you're just selling them a car or you're selling them an F&I product, you're selling them a promise. And if you can't deliver on your promise, dude, what are we doing? And I really believe that. And, and all that kind of wraps in to the compliance piece, because if you're not making customers feel good and they don't have a good experience, that's when they start opening their mail from the attorney that's looking to do a class action lawsuit. That's when they're calling the dude we all see on the billboard when we're driving into work, Larry Lemon Law or whoever they are, and they start looking and asking questions. And this is that other piece about putting a bow on it, right? When you close that file, and this is what we're going to teach you, when you close that file, it would be something you'd be proud your mom would put on the refrigerator. Man,
Well
Andy
said.
did a great job on this project. It's clean, it's tight, all T's are crossed, I's are dotted, and then touch it once. Make sure it's done. We don't need to be focusing on yesterday's business. We need to be able to be focusing on the individual that's in front of us right now, delivering a great experience, great service, maximizing our earning potential, and making them feel good about it. And then so our salespeople are able to continue and focus and give us more opportunities. but we got to talk about it and make sure everybody understands all the stuff that goes in to putting together a tight little deal. Because if you're the guy in finance right now, and I know you're out there, right, and it might not be your fault, maybe you haven't had somebody to invest the time, that you don't feel good about how you're doing it, I'm going to fix that for you. I want you to feel good about what you're doing. I want you to not only feel good, but I want you to know that you're doing it right. Because if you're running big numbers and getting a big paycheck and you're not doing it all right, you know, at the end of the day, it's all for naught if your owner's cutting checks for deductibles on their insurance policies, you're writing settlement checks, you're involved in lawsuits, and you're in court, and you're just doing all this stuff because either you didn't know or you didn't train. You got to get fixed up, because we are in an era in the automotive industry where government oversight has probably not been higher. So the table stakes right now of becoming a good finance manager are about as high as they've ever been. And then also, if you're a sales guy, because you can do all those things at a high level and you can show up to your interview, and I'll get you prepared to interview for that finance job you want so you can get your foot in the door and know how to do it right. That's why the upside in finance is what it is because the dealership's livelihood to a large extent in the legal arena depends on it, and it also depends on it out in service to a large extent. So table stakes of being a true pro, knowing the craft inside and out and how you impact the dealership, dude, like you got to get it. And you know, when you come in here to Scottsdale, Andy and I are going to make sure you walk out of here being ready, whether it be ready for an interview to get your foot in the door into finance, or if you're finance, you're going to elevate your dealership. And hell, I'll even go this far. Some of you, if you want to be a sales manager, you got to have a good grasp on everything that goes into finance to really be effective, because some of the best sales managers, some of them are great at leading people, and that's part of it, but like the extra layer is be able to see a deal where nobody else saw it. That's the difference, where the sales guy goes from missing his unit bonus to making it, and they say, Andy, dude, I can't believe you figured out a way to make that deal for me with the guys in finance. Thank you. Priceless.
Priceless. That F&I guy, by the way, listen here, so we're just going to make a blanket statement. Number one, he's going to teach you to be the best in the world at what you do with the skill, okay, and be the best closer in the country. Number two, he's going to teach you to do it ethically at a level where every dealership in the world will want to hire you. Number three, if you want to make a lot of money, okay, he's going to teach you to be the best. That's huge. Number four, your value is going to be so high because these people are getting harder and harder and harder to come by. It's just crazy. And lastly, you want to run a dealership one day? You want to be in charge? You want to be the big daddy boss? Okay, you want to really get paid some real big money? You're going to have to be great at this. This is to teach you how to be an operator. Okay, so I just want to say to everybody here is that this is going to be your opportunity, guys. Okay, number one, to train with me, to train with Dennis. Okay, 918, write it down, 918-210-0254. Send your people. You come. It doesn't matter. We're going to take care of you, and it's going to be awesome, man. So I just want to tell you guys, Scottsdale, Arizona, you can text me for the dates. I'll send you all the info. Me and Dennis will be here together. Dennis will be flying in from Cali. Okay, we spend a lot of time together. I told you I don't partner with anybody. You guys already know that. I partner with him. You know why? Because he's the very best, and he's way better than me at this. I learn every time he's teaching it. I learn so much. I just can't believe it. And can we finish this call with the standard? A great finance manager, how many products per deal should they be selling? What should they be running per copy? We've already talked about who they should be, but what are some numbers that if somebody's not hitting, we know that this is there for them so they can leave hitting these numbers?
Dude, I really believe that the potential, and I look at it maybe a little bit different from some other people.
Good, I like the way you look at it because you're the one teaching us, so forget everybody else.
Reserve is important. I always like to look at my PVR. I'm
going to interrupt him. I love this question he asked. We're on a Zoom call, training a company that sells about 1,000 cars a month, and they were running about $2,000 a copy. Remember that? And Dennis goes, "What's the reserve?" and the reserve was like 800. You remember that? And by the way, listen to me. So Dennis goes, so basically the reserve is just reserve, right? I mean, so they're only making $1,200 really per copy.
Well, Andy, and I got to tell you, there's places that would be very happy with that. And I think people are very happy with that because they don't know maybe what's out there. So if you think you're good, right, there's always a bigger, badder fish in the sea.
Yeah, and dude, this is the big bad fish right here. And he's going to teach you how to be the big bad fish. So let's go to the standard, but I love what you're saying about reserve. Like, pull the reserve out. Anybody watching this, pull the reserve out of your team and see what they're really running.
No, I mean, and this is, something we're going to talk about, right? For you to get good at anything, you got to be able to strip the emotion about how good you are or aren't. You got to take it out of it. You got to look at yourself objectively. In my opinion, the only way to do that, when you look at put all the gross you put on the books, right? Year, month, however you want to look at it, subtract all the reserve gross out of it. That's the number. And then take that number divided by the number of deals you did. And that's your number, right? And man, I see.
Dude, a lot of people don't want to see that number.
Well, dude, it doesn't feel good. But man, like.
That's the real number.
That is the real
and that's
number.
how you know who your big bad fish are.
Yeah, I don't, I mean, putting up some numbers.
Give us some real numbers, what you believe that this should be the standard. And if they're not at that, we can ensure that when they leave, they will be running.
Dude, if you're not, I really believe, if you're not at minimum, hitting 2,500 all in, right around 18 to 2, like, this is for you, right? And even if you're more than that, like, I don't even like talking about our numbers.
No, I got it.
Yeah,
well, we know your
saying,
numbers.
They're good, but
we've
I
already said 1
yeah.
to 10. You guys are a 12. So I mean at everything. I mean, just from even the owners. Meeting the owners are unreal. If you want to be the top 1% in the industry, if you want to be so secure in your position, if you want to be untouchable, you want to have a dream life and create a lifestyle you never imagined, get paid all the money, and also service your customers at a level they've never seen it and understand better than anyone else, Dennis is going to teach you to be the best, okay? And I'll be right here with him the whole time. But I want to tell you guys, I can't wait to meet you guys in person. Guys, to get your tickets, okay? These sell out quick. We do smaller rooms, so it's very an intimate teaching. 918-210-0254. You can shoot me a text message. I'll see you guys here. And lastly, give them your cell phone number one more time if somebody wants to partner with you on what are a few things that you do outside of training with me and outside of the NELO group with your insurance company.
So we set up complete finance and insurance programs, service contracts, tire and wheel, paint and fab, any F&I widget under the sun. We put forth the same products that we sell to our customers.
Mm-hmm.
We are in the high line segment, BMW, Audi, Porsche, Jaguar, Land Rover. And those customers, as all customers, they deserve and expect when they have an issue and we sell them something, it's got to perform at the highest level. So we want to offer the highest level of coverage available to our customers because they're so important to us.
And also, when somebody goes underneath your wing, you also train them.
I do train them.
I mean, you make sure that not only have the best product, but also they are the best.
Yeah,
am I right?
Absolutely.
Okay.
You could have the
like
best.
It's not just a product. I mean, because I know a lot of people that are servicing, dealerships and their warranty companies, but they don't teach them to be the best.
No, they don't teach.
They
them
want
to
to
be
pick
the
up their
best.
check.
You could have, and this goes out to the dealers, the GMs. You could have the best F&I products in the entire world, best thing ever. But if your people aren't trained to sell them at a high level, it doesn't matter. And I'm going to take that a step further, because we also help with reinsurance solutions for dealers. We set those up. I got plenty of support, training, and know-how myself to set up a great profit participation for you. But if they're not feeding the machine, the reinsurance machine, you could have the best reinsurance structure, the best products. None of it matters unless your people can execute at a high level. And if it's not a quality product that delivers on the promise at the end, dude, well, you're not going to have customers to sell it to anyway. So, and it goes into compliance. So, what we're going to talk about, when we do this event here in Scottsdale is really giving you a holistic view of how important you are. We're going to prepare you for your next step in your career. And then, those of you guys that are already in the trenches, I love you. You're my people. We're going to help you go to the next level. And, getting better oftentimes means, it's bigger numbers, it's more products per customer, driving your penetration, but helping you get to yes quicker. You shouldn't feel exhausted after running a deal, man.
Dude,
You should
he's
be
so good, man. Dennis, I gotta say, the way you teach is so good. When you present, I always said make it easy to say yes to, hard to say no to, and make it the client's idea every single time. You're the grandmaster at that. And it's real. You're not, like you said, there's no smoke, mirrors, magic tricks. There's no card games. It's real, and it's real service. And dude, you take care of people, and they love you for it.
Well, and when you come in, man, just all you got to come in, open mind. You walk away with one or two things. No matter what you're doing in life, you're going to be a better place. And I'm really invested in making sure you get value out of your time down here in the desert.
Well, first of all, we're going to make you rich. So buy yourself a ticket. And how you going to do that? You're going to text me, 918-210-0254. You're going to beat me and Dennis in Scottsdale, Arizona. We're going to do a one-day event. It's going to change your life forever. You're going to eat lunch with us. We're going to train all day long. You're going to go home absolutely the best, top 1%. So, Dennis, hey, I love you, man. Will you give out your number one more time just in case?
916-899-7139. Call, text anytime, man. Look forward to hearing from you guys.
Yep, and then you guys text the 918-210-0254 to get information on your tickets. We love it. If you're a dealership, let us know how many you need. We'll make you a group deal. Guys, we love you. We got your back for life. Dennis, thanks for being here, brother. Guys, we'll see you in Scottsdale. Hey guys, I just want to tell you, you're the true 1%ers. You made it till the end of the video. Do me a favor, share it with the friend that wants to go to another level. Make sure you like the video, comment below so I know who you are, set your notifications, and then subscribe to the channel. We got daily sales training videos dropping. I'll see you soon.
आज तक किसी पेरेंट ने बच्चे को खर्चे और निवेश के बीच में फर्क नहीं बताया। आप एक आईफोन लेते हो, वो आईफोन खर्चा भी हो सकता है, वो आईफोन निवेश भी हो सकता है। इफ यू आर हैविंग ओनली वन सोर्स ऑफ इनकम, यू आर वन स्टेप अवे फ्रॉम पॉवर्टी। आप डेट को सिर्फ 3 चीजों से क्लोज कर सकते हो। क्योंकि सर हमारे यहाँ एक प्रॉब्लम है, हमें ना ये सिखाया गया बेटा जिस दिन तेरी इंजीनियरिंग खत्म हो गई, MBA खत्म हो गई, तेरी पढ़ाई खत्म हो गई। हमें किसी ने ये नहीं बोला कि उस दिन से तुम्हारी पढ़ाई चालू होगी।
जिंदगी की तो उसी दिन चालू
होगी। 6 लाख रुपया महीना कमाने के बाद भी फोन ये आता है कि यार अभी तक SIP नहीं चालू कर पाए।
हेलो दोस्तों, मैं डॉक्टर योगेंद्र सिंह राठौड़ आप लोगों के लिए लाया हूँ इनर वेलनेस टाइप का अगला एपिसोड। आज बेहद स्पेशल गेस्ट हमारे बीच मौजूद है, बिजनेस एंड फाइनेंस कंसल्टेंट। प्लीज वेलकम संजय कथुरिया जी इन बिटवीन अस।
थैंक यू डॉक्टर वाई सर, इट्स सच अ प्लेजर टू सी यू। हमेशा आपके एपिसोड्स देखता रहा हूँ और आज आपके सामने बैठा हूँ, मुझे बहुत अच्छा लग रहा है। थैंक यू सो मच फॉर कॉलिंग मी।
सो संजय जी, ये हम सभी जानते हैं कि भारत में फाइनेंशियल एजुकेशन की बहुत ज़्यादा कमी दिखती है, कहीं स्कूल्स में तो पढ़ाया भी नहीं जाता है। सो व्हाट इज़ योर टेक ऑन दिस कि फाइनेंशियल एजुकेशन पे कैसे काम किया जा सकता है इंडियन एजुकेशन सिस्टम में?
देखिए, फाइनेंशियल एजुकेशन इंडिया में जो है, एक डेटा ने बताया था कि करीबन 75 से 80% लोग आज भी फाइनेंशियली अनएजुकेटेड है। जो व्यक्ति शायद IIM से पढ़ाई भी कर चुका है, IIT से भी पढ़ाई कर चुका है, वो भी फाइनेंशियली अनएजुकेटेड है। आज मैं अपने साथ ही, जब मैं अपने कम्युनिटी में देखता हूँ, लोग मुझे मैसेजेस करते हैं कि मैं 50 ईयर्स की हो गई हूँ, मैंने अभी तक SIP चालू नहीं करी है और मेरे पास कोई इन्वेस्टमेंट ही नहीं है। तो ये सारी चीज़ें मुझे बहुत डरा देती हैं। एक बात हमेशा, मैं तो एक ही मेंटर मानता हूँ, मेरे गुरु द्रोणाचार्य हैं, वॉरेन बुफे। तो वो जो एक लाइन कहते हैं, वो मोती सोना सब कुछ एक ही अंदर जड़ा हुआ है। वो है कि वो कहते हैं कि इफ़ यू आर हैविंग ओनली वन सोर्स ऑफ इनकम, यू आर वन स्टेप अवे फ्रॉम पॉवर्टी। यानी कि अगर आपकी सिर्फ एक इनकम की सोर्स है तो आप बस जिस दिन वो इनकम की सोर्स गई तो यू आर फिनिश्ड। तो इसीलिए वो बार बार इन्वेस्टमेंट्स की बातें करते हैं, प्लांटिंग अ ट्री की बात करते हैं कि भाई मनी प्लांट जिसे कहते हैं। तो आपको मनी प्लांट में पहले सीड डालना पड़ता है, कोई भी प्लांट में सीड डालना पड़ता है, उसी तरह मनी प्लांट में भी आपको सीड डालना पड़ता है। तो फाइनेंशियल एजुकेशन इंडियन एजुकेशन सिस्टम का अंग ही नहीं रहा है। अब न्यू एजुकेशन पॉलिसी में इस पर कुछ चर्चाएं हो रही हैं, काफ़ी लोग इस पे इनिशिएटिव्स ले रहे हैं, प्राइवेट लेवल पे इनिशिएटिव्स ले रहे हैं, पर मुझे अभी भी सरकार के लेवल पे या फिर मुझे स्कूल्स के लेवल पे ऐसी कोई इनिशिएटिव होते हुए नहीं दिख रहे। उसके 2-3 और कारण है सर। उसमें एक कारण ये भी है कि कुछ पेरेंट्स अभी भी अपने बच्चों को फाइनेंस के बारे में सिखाना ही नहीं चाहते। वो चाहते हैं छोटा है अभी तो उसको कुछ और पढ़ाई करनी चाहिए, उसके
सिखाते
माइंड
हैं
में
तो
पैसे
बस
की,
सिखाते हैं तो एक सेविंग की बात की जाती है, उसकी सेव करो, उसके अलावा और कुछ
उसके अलावा
एजुकेशन नहीं है।
उसको वो भी कैसे फोर्सफुली कि ज्यादा खर्चा नहीं करना चाहिए।
हाँ, बस ये
ठीक है,
चीज।
तो आज तक किसी पेरेंट ने बच्चे को खर्चे और निवेश के बीच में फर्क नहीं बताया कि एक खर्चा होता है, एक निवेश होता है। आप एक आईफोन लेते हो, वो आईफोन खर्चा भी हो सकता है, वो आईफोन निवेश भी हो सकता है। आप उसका इस्तेमाल क्या करने वाले हो उस पर निर्भर करता है।
Yes.
अगर आप उसमें फालतू रील्स देखने वाले हो, टाइम पास करने वाले हो, दिन रात गर्लफ्रेंड से बात करने वाले हो, बॉयफ्रेंड से बात करने वाले हो, तो वो खर्चा है। पर उस पर आप अपना एक यूट्यूब चैनल बनाते हो, इंस्टाग्राम चैनल बनाते हो, रिकॉर्डिंग्स करते हो, कंटेंट डालते हो, या फिर किसी प्रकार का कोई भी चीज करते हो, आजकल ट्रेडिंग अगर आप सीख के ऑनलाइन कर लेते हो, तो वो इट इज अ वेरी पावरफुल इंस्ट्रूमेंट। तो वो आपको पैसे कमा के दे सकता है। तो कुछ लोगों के लिए आईफोन खर्चा भी है, कुछ लोगों के लिए आईफोन निवेश भी है। तो आज तक हमारे पेरेंट्स ने या आज के भी पेरेंट्स ने कभी डिनर टेबल पे ये सारी बातें नहीं की। जो कम्युनिटी ये सारी बातें करती है, आप अहमदाबाद में रहते हैं, गुजराती कम्युनिटी यहाँ पे रॉकिंग है, तो वो लोग के डिनर टेबल पे ये बातें होती हैं, पेरेंट्स ये बात करते हैं, और इसलिए आप उसका इंपैक्ट भी देखते हैं। उनके बच्चे भी ये बात करते हैं, उनके बच्चे पैसों को बहुत जल्दी समझ जाते हैं। हमारे यहाँ क्या है कि लोगों ने इंडियन, अगर आप एजुकेटेड है, यानी आपने प्रॉपरली अपनी बीकॉम कर ली, बीए कर ली, तो आप एजुकेटेड हो जाते हो। पर ये एजुकेशन नहीं है। आज मैं गुजरात में ऐसे बच्चे देखता हूं जो फुल्ली एजुकेटेड नहीं होते, पर उनकी फाइनेंस की अंडरस्टैंडिंग, पैसे को लेके अंडरस्टैंडिंग, शायद उनको टर्म्स नहीं आते, पर फिर भी उनकी जो अंडरस्टैंडिंग है, बनिया अंडरस्टैंडिंग जिसे हम कहते हैं, वो बहुत गजब होती है। वो क्यों होती है? क्योंकि डिनर टेबल पे वो डिस्कशन होता है।
ट्रू
सर, लोग कहते हैं शुगर एक हेरिडिटरी डिजीज है। शुगर एक हेरिडिटरी डिजीज नहीं है। शुगर हेरिडिटरी इसलिए बनती है क्योंकि आप डिनर टेबल पे, लंच टेबल पे सेम खाना खाते हो। तो आपके पेरेंट्स जो खाना खा रहे थे वही खाना आप खा रहे हो, तो उनको भी उसी खाने से शुगर हुई और आपको भी उसी खाने से शुगर हुई। तो आपको ये लगता है क्योंकि मेरे फादर को शुगर थी तो मेरे को शुगर है। ये गलत धारणा है। इसी तरह फाइनेंशियल एजुकेशन भी एक हेरिडिटरी, आप कह सकते हो, डिजीज की तरह देखा जाना चाहिए।
Wow.
क्योंकि डिनर टेबल पे अगर माता पिता फाइनेंस की बात नहीं करते, बताना नहीं, बच्चे को पता नहीं होना चाहिए पैसा कहाँ है, वो बिगड़ जाएगा, वो आज समझ नहीं पाएगा, तो वो जो डिनर टेबल पे डिस्कशन नहीं हुआ, वो आगे जाके उनके बच्चों की फाइनेंशियल हेल्थ पे बहुत मैसिव इंपैक्ट करता है। जिस तरह आप सेम खाना खा के उनको शुगर की बीमारी दिला रहे हो, उसी तरह आप उनको फाइनेंस की बातें ना करके उनको फाइनेंशियली डिसेबल कर रहे हो।
बहुत ही खूबसूरती से आपने समझा दिया। तो अभी आपने एक पॉइंट हम बात कर रहे थे, तो आप बता रहे थे कि देयर आर मेनी पीपल हु आर गुड इन जनरेटिंग इनकम। जैसे आपने कहा एक सोर्स ऑफ इनकम, तो कई लोग, कोई सेल्स में अच्छा है, कोई कम्युनिकेशन में अच्छा है, तो वो इनकम जनरेट करने में तो अच्छे होते हैं, लेकिन फिर भी वेल्थ बिल्डिंग में अच्छे नहीं होते। ये दोनों गेम किस प्रकार अलग हैं और किन रूल से खेले जाते हैं, अगर इसको थोड़ा आप डिफरेंशिएट कर सकें।
देखिए, हमारे ना अधिकांश चीज़ें जीवन में जो है, दे आर डायरेक्टली प्रोपोर्शनल टू एफर्ट यू पुट इनटू दैट। सो फॉर एग्जांपल, अगर आपको अच्छी बॉडी चाहिए
जी,
तो आप 4 घंटा जिम करोगे वर्सेस 6 घंटा जिम करोगे, तो 6 घंटे जिम वाले की जल्दी और ज़्यादा अच्छी बॉडी बनेगी। तो हमारा माइंड क्या ट्रेंड है कि मैं ज़्यादा मेहनत करूंगा तो ज़्यादा अच्छी बॉडी बनेगी। जब आप जॉब पे जाते हैं तो आप कितने ज़्यादा देर काम करते हैं, उस पर आपका अप्रेजल इंक्रीमेंट निर्भर करता है कि भाई मैंने 12 घंटे काम किया, 14 घंटे काम किया, सैटरडे भी काम किया, संडे भी काम किया, तब कहीं जाके मेरी तनख्वाह बढ़ेगी, मेरा मैनेजर से सीनियर मैनेजर बनूंगा। तो हर चीज़ जो हम जीवन में कर रहे हैं उसमें हमारा माइंड ट्रेंड है कि ज़्यादा करोगे तो ज़्यादा मिलेगा। पर प्रॉब्लम यह है कि निवेश एक ऐसा फील्ड है जहां आप जितना ज़्यादा करोगे उतना कम मिलेगा। तो आपका एफर्ट और आपका आउटकम इन्वेस्टमेंट्स के फील्ड में इनवर्सली प्रोपोर्शनल है।
वाओ,
कंप्लीटली इनवर्सली प्रोपोर्शनल है। अभी जैसे जब आप एक पेड़ को उगाते हैं, तो जब पेड़ को उगाते हैं तो पूरा टाइम पेड़ को पानी नहीं डालना होता। सुबह एक टाइम पे डालना है, सूरज के सामने उसको रखना। एक बेसिक 3-4 चीजें हैं जो हो सकता है आप 10-15 मिनट में दिन में कंप्लीट कर सके। अगर आप पेड़ में पानी डालते नहीं, मैं जितना ज्यादा पानी डालूंगा उतना जल्दी पेड़ बढ़ जाएगा, वो तो बढ़ जाएगा बेचारा, ठीक है, ओवर हाइड्रेट हो जाएगा, सॉइल खराब हो जाएगी।
राइट,
यही इन्वेस्टमेंट्स है। आपको इन्वेस्टमेंट से दूर रहना है। एक बार कर दिया, बीज डाल दिया, धीरे धीरे वो अपने आप उगेगा। उसमें कोई जल्दी नहीं हो सकती। देयर इज नो वे टू मेक क्विक मनी इन दिस वर्ल्ड। द ओनली वे टू मेक क्विक मनी इन दिस वर्ल्ड इज बाय वर्किंग ऑन योर एक्टिव स्किल्स। अगर आप 50,000 की तनख्वाह पे हो, अपने स्किल सीखते हो, अपने जो जॉब कर रहे हो उसमें बेटर हो जाते हो, तो आप अपनी तनख्वाह को अगले साल 50,000 से 1 लाख 1.5 लाख भी कर सकते हो। पर इन्वेस्टमेंट में आप 50,000 को 1 लाख 1.5 लाख नहीं कर सकते 1-2 साल के अंदर। तो इन्वेस्टमेंट्स क्यों अच्छी नहीं हो पाती? क्योंकि जीवन में जो हमें अधिकांश चीजें सिखाई गई हैं कि योर मोर एफर्ट्स विल गिव यू मोर रिजल्ट्स, इज एब्सोल्युटली ऑपोजिट इन इन्वेस्टमेंट्स। मोर एफर्ट्स विल गिव यू वेरी बैड रिजल्ट्स। ये एक रिसर्च हुई है अमेरिका में कि जितने एक्टिव म्यूचुअल फंड्स हैं, तो 90% एक्टिव म्यूचुअल फंड्स होता है जहां पे एक फंड मैनेजर बैठा है, डिसाइड करता है कि मैं कौन सा स्टॉक लूंगा, कौन सा स्टॉक नहीं लूंगा।
ठीक है।
एक पैसिव फंड होता है कि बोला S&P 500 एक इंडेक्स है, हम तो उसको कॉपी करेंगे जी, दिमाग नहीं लगाएंगे। ये दो तरह के फंड होते हैं, एक्टिव होता है, पैसिव होता है। तो एक्टिव फंड में तो ज्यादा पैसा बनना चाहिए क्योंकि एक आदमी बैठा है, दिमाग लगा रहा है, इंटेलिजेंस लगा रहा है। ये देखा गया है कि सिर्फ 4% एक्टिव फंड्स हैं पूरे यूएस में जो पैसिव फंड्स को बीट कर पा रहे हैं।
ओके।
इसमें एक बड़ी अच्छी आपको कहानी सुनाता हूं।
जी जी।
वॉरेन बुफे 2008 में उन्होंने एक हेज फंड मैनेजर, ये जो एक्टिव फंड मैनेजर होते हैं, उसके साथ एक बेट लगाई। टेड सीडस करके बंदा था, उसके साथ एक बेट लगाई। तो वॉरेन बुफे ने बोला, देख भाई, मैं अपने पैसे पटक रहा हूं पैसिव फंड में, और तू तो एक्टिव मैनेजर है, तू चल मैनेज कर पैसा। दोनों एक अमाउंट ऑफ पैसा स्टार्ट करते हैं, 10 साल बाद मिलेंगे।
अच्छा।
2008 की बेट थी ये। 10 साल बाद मिलेंगे, जिसके ज्यादा रिटर्न्स बने होंगे, जिसके कम रिटर्न्स बने होंगे, वो उस आदमी को पैसे देगा जिसके ज्यादा रिटर्न्स बने होंगे। बेट थी $1 मिलियन की।
ओके।
अब वॉरेन बुफे ने क्या किया, एक बार पैसा उठा के पैसिव इनकम फंड में डाल दिया, उसके बाद ना देखा ना कुछ किया, कुछ भी नहीं किया, वही बीज डाल दिया,
भूल गए
और भूल गए। ये भाई रोज लगा हुआ है, टीम लेके बैठा हुआ है, और उसमें रिसर्च कर रहा है, इन्वेस्टमेंट कर रहा है, एग्जिट कर रहा है, एंट्री कर रहा है, ट्रांजैक्शन कॉस्टिंग कर रहा है। 10 साल बाद दोनों मिले। वॉरेन बुफे ने 84% के आसपास रिटर्न्स कमाए 10 साल में, एनुअलाइज नहीं, टोटल। अब यूएस में ना बहुत अच्छा रिटर्न होता है क्योंकि यूएस में एफडी का रिटर्न 1% 2% होता है, तो वहां 84% 10 साल में मतलब 6-7% कंपाउंडेड बहुत बड़ी बात होती है। इसी अवधि में टेड सीडस ने 26% रिटर्न कमाए।
वाह।
तो एक आदमी जो एक्टिवली फंड को मैनेज कर रहा था, इंटेलिजेंट था, फंड मैनेजर था, सालों से फंड मैनेज करता है, वो पैसिव फंड से हार गया, पर एक लंबी अवधि में, 10 साल की अवधि में।
यस।
तो आज एक बंदा जो इनकम जनरेट कर रहा है, वो कुछ इंस्टाग्रामर्स को देख के, यूट्यूबर्स को देख के कि मैंने जो है ये शेयर इतने प्राइस में खरीदा, आज वो 5 गुना हो गया, 4 गुना हो गया, 3 गुना हो गया, ये देख के एक्साइट हो जाता है। वो ये नहीं देखता कि ये एक जर्नी है, ये भी एक करियर है। तो एक आपका नॉर्मल करियर होता है, एक आपका इन्वेस्टमेंट करियर होता है। आपका फोकस नॉर्मल करियर पे करो, इन्वेस्टमेंट करियर को साइड में बस बीज डाल के छोड़ दो। वो इतनी प्यारी चीज है, अपने आप ग्रो करता रहता है। आप उसको छेड़ोगे ना तो वो पेड़ खड़ा हो जाएगा। अब ये होता नहीं है क्योंकि जैसे एक हमारी भाषा में कहते हैं, चुल लगी होती है सबको कि खुजली है, चुल है, कुछ तो करूं, कोई बटन दबाऊं, क्योंकि अब इतना इजी हो गया है। पहले क्या होता था, जब मेरे फादर 1981 से इन्वेस्ट करते, तो तब क्या होता था कि न्यूज़पेपर में हफ्ते के बाद आता था कि रिलायंस का प्राइस कितना मूव हुआ एक हफ्ते में। अब आपको 1 माइक्रो सेकंड का भी पता चल जाता है। तो तब लोग डिसीजन ही नहीं लेते थे, तो ऑटोमेटिकली लोगों की होल्डिंग पीरियड बढ़ गई क्योंकि आपके सामने एक्टिवली स्कोरबोर्ड नहीं है ना,
ट्रिगर्स नहीं है,
ट्रिगर्स ही नहीं है। अरे यार ये देख क्या, ओ कुछ हो गया, वो फेड ने रेट काट दिया, ये कर दिया, वो कर दिया, ये प्राइस नीचे गिर गया, आज 2% गिर गया, आज 1% गिर गया। तो वो सब अब दिखता ही नहीं था आपको एक हफ्ता, तो डिसीजन ही नहीं लेता था आदमी। तो आज डिसीजन फटीग है नहीं क्योंकि आपने फटाफट देखा, कट आउट किया। तो ये सारी चीज़ें जो हैं एक इंश्योर करती हैं कि एक व्यक्ति अपनी इन्वेस्टमेंट जर्नी में आगे नहीं बढ़ पाता क्योंकि वो ये सोचता है जो बाकी चीज़ों में जीवन में लग रहा है वही यहाँ लगेगा।
तो माइंडसेट का कितना रोल है इसके अंदर? एक तो स्किल भी चाहिए कि अंडरस्टैंडिंग गेम की होना, कितना लेवल तक अंडरस्टैंडिंग्स और स्किल का रोल है और कितना माइंडसेट का रोल है, अगर आप उस पर कुछ एक्सप्लेन कर सकें।
देखिए, एक व्यक्ति का स्किल का रोल इसमें मुश्किल से 5 से 10% है।
ओके।
क्योंकि मेरे तो स्किल की जरूरत ही नहीं है ना, मैं तो फंड मैनेजर को पैसा दूंगा, म्यूचुअल फंड में पैसा डालूंगा, तो मुझे क्या स्किल चाहिए? स्किल तो उधर बैठी हुई है फंड मैनेजर की, वो लगा रहा है पैसा अपने आप।
तो हमेशा किसी फंड मैनेजर के थ्रू ही जाने का।
देखिए, मैं आज एक ऑडियंस से बात करता हूँ, आपके पास पैसे की तो नॉलेज है नहीं, तो आप ये सोच रहे हो कि आप एक बैलेंस शीट स्टडी कर लोगे। रिलायंस आज बैलेंस शीट, रिलायंस के ओनर को नहीं पता होगा उसकी बैलेंस शीट में क्या है। मतलब इट इज सच अ कॉम्प्लिकेटेड बैलेंस शीट।
ट्रू।
एंड सेम इज विद ऑल दीज बिग कंपनीज। आपको बैलेंस शीट पढ़नी नहीं आती है, आपको मार्केट्स की इंफॉर्मेशन नहीं है। जो फंड मैनेजर है वो 15 साल से ये काम कर रहा है, उसका रोज का काम है, वो मार्केट के अंदर बैठा है, उसको इंफॉर्मेशन पहले ट्रैवल होती है, वो डिसीजन ले सकता है, वो इमोशनलेस है, आप इमोशनल हो, ठीक है, आपको ये सब चीज़ों का कंट्रोल ही नहीं है, उसको सब चीज़ों का कंट्रोल है। तो आप अपना पैसा उसको दे दो ना, उसका रोज का काम है, आप अपने काम पे फोकस करो, आप अपनी तनख्वाह को डबल करो, ट्रिपल करो ना, ताकि ज़्यादा से ज़्यादा पैसा उसको दे सको।
राइट।
तो हमारे यहाँ क्या है, सबको, सॉरी सर आपको ये वर्ड शायद अच्छा ना लगे, पर लोगों को ना मोहताजी चाहिए।
अच्छा।
मोहताजी का मतलब ये हो गया कि जो मैं कर सकता हूँ, एक्टिव इनकम बढ़ा सकता हूँ, वो मेहनत नहीं करनी है मेरे को। ऑफिस के बाद आके 1 घंटे की पढ़ाई कर लूँ या 2 घंटे की पढ़ाई कर लूँ, कुछ सीख लूँ, कोई कोर्स ले लूँ, वो नहीं करना है मेरे को, क्योंकि उसमें मेरा एफर्ट जाता है। तो मुझे क्या करना है, मुझे करना है कि भाई स्टॉक मार्केट से पैसा बन जाए और मेरे को साल का 40% 50% बना रहे। क्यों बनेगा? ये वॉरेन बफे पिछले 60 साल से 20% रिटर्न बना रहा है, सिर्फ 20%। और आजकल के बच्चों को लगता है कि दिन में 10% बनना चाहिए, कि भाई 50,000 डालूं तो दिन के अंत में 5,000 रुपए निकाल कर। क्यों भाई? हाउ? दिस इज अ रॉन्ग एक्सपेक्टेशन। तो जब आपकी एक्सपेक्टेशन ही गलत होगी तो ऑटोमेटिकली आपका हार्ट ब्रेक होना ही वाला है।
वो जो एक इंस्टेंट ग्रेटिफिकेशन की आज हैबिट हो गई है, एडिक्शन है लोगों में, सब कुछ तुरंत चाहिए जी। वो जो 2 मिनट में मैगी बनती है वैसे ही चाहिए कि जी मार्केट भी 2 ही मिनट में सब उनके फेवर में कर दे।
बिल्कुल। मैं आपको ना इस पे इंटरेस्टिंग डेटा देता हूं। इंडिया में 8 करोड़ लोग ट्रेड करते हैं, मोटा मोटी 8 करोड़ डीमैट अकाउंट है।
8 करोड़, ओके।
पिछले साल 30 लाख लोग एलिजिबल थे लॉन्ग टर्म कैपिटल टैक्स देने के लिए। 8 करोड़ लोग में से 30 लाख लोग एलिजिबल थे लॉन्ग टर्म कैपिटल गेन्स टैक्स देने के लिए। उसमें से 3% ऐसे थे, मतलब 10% ऑफ 30%, 3% ऐसे लोग थे जिनका 1 लाख से ऊपर का गेन था जिसपे एक्चुअली टैक्स लगता है।
1 लाख के गेन तक कुछ
नहीं लगता था। अभी वो 1.25 कर दिया इस बजट में।
ओके।
तो इस बजट में एलटीसीजी बढ़ा दिया ना, थोड़ा सा 10 की जगह 12.5 कर दिया। लॉन्ग टर्म कैपिटल गेन टैक्स थोड़ा सा बढ़ गया, मतलब 10 से 12.5% हो गया। अब मैं बताता हूं कि मानसिकता बताता हूं, डेटा से जो चीज समझ आती है ना, वो चीज किसी चीज से समझ नहीं आती। 8 करोड़ लोग हैं, 30 लाख लोग कुल मिला के एलिजिबल हुए हैं जिनका लॉन्ग टर्म कैपिटल गेन्स बना है। किसी का 20,000 बना होगा, किसी का 50,000 बना होगा, वो तो एलिजिबल ही नहीं है टैक्स देने के लिए, क्योंकि 1 लाख तक की छूट है। उसमें से 10% लोग, यानी टोटल 3% लोग ऑफ 8 करोड़, यानी 2.5 लाख लोग एलिजिबल हैं अब टैक्स देने के लिए, मतलब जिनका 1 लाख से
ऊपर का गेन है।
ठीक है, उसमें भी सबका 10-10 लाख तो गेन है नहीं, किसी का 1.25 होगा, किसी का 1.5 होगा। आप सोचो ये 10 से 12.5 हुआ, मेरे हिसाब से 10 लाख से ऊपर तो रील बन गई होंगी इस पे कि हाय हाय मार डाला मार डाला मार डाला। अरे किस बात का मार डाला? तुम हो क्या उस 2.5 लाख लोगों में जिनको देना है एलटीसीजी? मेरे को रोना चाहिए, मेरे को देना है एलटीसीजी। तो पॉइंट ये है कि लोगों को ना हाई हाई करने का बहुत शौक है, मोहताजी करने का बहुत शौक है। ये बुरा लग सकता है लोगों को, बट मैं ये थोड़ा बोलना चाहता हूँ, जानबूझ के ये बात बोलना चाहता हूँ कि बातों को डेटा से समझो। लोग प्रॉफिट्स नहीं कर रहे हैं स्टॉक मार्केट में, और ये मैं नहीं कह रहा हूँ, स्टॉक मार्केट का बॉस कह रहा है, सेबी कह रहा है। सेबी ये कह रहा है कि इंट्राडे ट्रेडिंग में 70% लोग लॉस कर रहे हैं, और अगर आप ट्रांजैक्शन कॉस्ट जोड़ दो तो 90% लोग लॉस कर रहे हैं।
ओहो।
और ये लॉस जो है ये 54,000 करोड़ का लॉस है साल का। अगर इन सबका लॉस जोड़ दिया जाए
पर ईयर
54,000 करोड़ रुपए का लॉस है। मैं इसका आपको एक एग्जांपल देता हूं कि बॉम्बे म्यूनिसिपल कॉर्पोरेशन, जो हमारे देश की सबसे बड़ी म्यूनिसिपल कॉर्पोरेशन है, उसका एनुअल बजट 35,000 करोड़ होता है। तो यहां 35,000 करोड़ रुपए का, मतलब बॉम्बे के बजट का 2 टाइम्स, मोटा मोटी 1.5 गुना समझ लो,
1.5 गुना करीब।
तो भारतवर्ष मस्ती मस्ती में लॉस कर रहा है। आज 3 महीने की एसआईपी है 54,000 करोड़ रुपए। तो इससे अच्छा है, लॉस करने से अच्छा एसआईपी में डाल दो ना पैसे।
सो यानी कि व्हाट यू आर सजेस्टिंग इज कि पेशेंस और लॉन्ग टर्म गेम में ज़्यादा इन्वेस्टिंग बेटर है एज कम्पेयर टू जो लोग क्विक गेन्स की तरफ जा रहे हैं। ये माइंडसेट शिफ्ट लोगों को लाना पड़ेगा।
क्विक गेन्स कोई नहीं बना सकता, ये मैं लिखित में दे सकता हूं। इट इज इम्पॉसिबल। आप 3 महीने के होराइजन में, 6 महीने के होराइजन में, 12 महीने के होराइजन में प्रॉफिट्स बना सकते
ओके।
पर अगर मैं आपको 10 साल का, जो टेड सीडस और वॉरेन बफे, ऐसा काफी टाइम आया होगा जिसमें टेड सीडस के रिटर्न्स वॉरेन बफे के ऊपर गए होंगे, और 10 साल की अवधि को जब देखा गया तब पता चला कि भाई टेड सीडस तो 25-26% पे रह गए और ये भाई 84% मार गया। देखिए, कंपाउंड इंटरेस्ट का एक फॉर्मूला है, A = P × 1 + R⁻n। 3 चीजें हैं, आप कितना पैसा डालते हो वो कितने रेट से कंपाउंड होता है और वो कितने समय तक रहता है। इसमें जिस रेट से कंपाउंड होता है ये आपके हाथ में नहीं है, क्योंकि मार्केट्स अपने हिसाब से बिहेव करेंगी। आप एक बहुत छोटा प्लेयर हो मार्केट में, और आप मार्केट्स को डिफाइन नहीं कर सकते, बड़े लोग भी नहीं कर सकते। तो मार्केट्स के रेट तो आपके कंट्रोल में नहीं है। 2 चीजें आपके कंट्रोल में, आप कितना पैसा डालते हो और कितनी देर के लिए डालते हो। अब कितना पैसा डालते हो वो मल्टीप्लिकेशन में, P × 1 + R⁻n, पर कितनी देर के लिए डालते हो वो एक्सपोनेंशियल है, raised-to-a। तो जितना ज्यादा देर पैसा डालोगे उतना ज्यादा कमाओगे। इसलिए मैं लोगों को कहता हूं ज्यादा मत कमाओ, ज्यादा देर कमाओ।
ब्यूटिफुल। सो अगर जो बिल्कुल कंप्लीटली न्यू ऑडियंस है हमारी, ये ऑलमोस्ट फाइनेंस पे बहुत कम गेस्ट आए हैं आज। आई थिंक इट्स वेरी गुड कि काफ़ी सारा एजुकेशन लोगों को मिलने वाला है। तो काफ़ी सारा हमारा ऐसा ऑडियंस है जो आप ऐसा समझे कि बिल्कुल बिगिनर है इन्वेस्टिंग की समझ में
जी।
तो क्या डूज है जो एक कंप्लीट बिगिनर को जो आना चाह रहा है, और क्या डोंट्स है? अगर आप कुछ मेन अपनी जर्नी से कुछ पॉइंट्स बता सको तो बढ़िया रहेगा।
देखिए डोंट्स पहले स्टार्ट कर देता हूँ।
जी जी बिल्कुल।
कोई भी रिश्ता लंबा तब चलता है जब उसमें अपेक्षाएं कम होती हैं। तो अगर आपको स्टॉक मार्केट से लंबा रिलेशन चाहिए, मुझे लंबा रिलेशन चाहिए था, मैं 18 साल से स्टॉक मार्केट में हूँ, 18 ईयर्स, 2006 से। मुझे लंबा रिलेशन चाहिए और मुझे और इसको जब तक मैं जीवित हूँ मुझे इसके साथ रिश्ता चाहिए। मेरी तो ये शादी है एक तरीके से, ठीक है। मैं तो मतलब वो द टिल डेथ डज अस अपार्ट कहते हैं ना, टिल डेथ डू अस अपार्ट। तो जब तक मृत्यु हमें अलग नहीं करती, मेरे को तो स्टॉक मार्केट से पैसा कमाना है, क्योंकि ये ऐसा समंदर है जो मुझे, जिसमें से लोटा भर भर के मैं पैसे कमा सकता हूँ। पर अगर मैं इसको पूरा सुखाने की कोशिश करूँ तो सर ये ताकत तो सूरज में भी नहीं है कि वो पूरे दरिया को एक साथ सुखा सके। तो अगर सूरज में वो ताकत नहीं है तो मेरे में तो बिल्कुल नहीं। तो पहले अपने आप को बताओ कि भाई यू आर नॉट हियर टू मेक क्विक गेन्स, यू आर टू हैव अ लॉन्ग रिलेशनशिप विद द मार्केट। बिकॉज लॉन्ग रिलेशनशिप जब आप रखोगे तो आप कभी भी दुखी नहीं होगे। एक्सपेक्टेशन अगर आप रियल रखोगे, अगर आप ये रखोगे एक्सपेक्टेशन कि मेरा पैसा हर साल दुगना होगा, आपका दिल खराब होगा, आप इस मार्केट को छोड़ के चले जाओगे। अगर आप पिच से गए तो आप रन नहीं बना पाओगे, तो पिच पे रहो। अगर आप कहते हो कि मुझे 12 से 15% का रिटर्न्स चाहिए
जी,
तो इस मार्केट में क्षमता है कि आपको अगले 40 साल तक 12 से 15% के बीच का रिटर्न्स दे देगी। आज ये स्थिति है हमारे भारत देश की, ग्रोइंग कंट्री है, ग्रोइंग स्टॉक मार्केट है, बहुत अभी स्कोप बाकी है। तो पहली चीज है अपेक्षा कम रखो मार्केट से, अनरीजनेबल एक्सपेक्टेशन मत रखो, ठीक है। दूसरी चीज है कि कंटिन्यूअसली डिसिप्लिन तरीके से, परसिस्टेंट तरीके से इन्वेस्ट करो। अब इन्वेस्टमेंट के दो तरीके हैं, या तो खुद करोगे या फंड मैनेजर्स के थ्रू करोगे। अगर खुद करना चाहते हो तो जिस तरीके से 5 साल लगे डॉक्टरी करने के लिए, 4 साल लगे इंजीनियरिंग करने के लिए, 3-5 साल लगे एमबीए करने के लिए, इसी तरह स्टॉक मार्केट को पहले अच्छे से सीखो।
खुद अगर करना है तो एक लर्निंग कर्व से गुजरना
पड़ेगा। आपको सीएफए करनी पड़ेगी, आपको एमबीए फाइनेंस करनी पड़ेगी, आपको फाइनेंस के बारे में सीखना पड़ेगा, आपको बैलेंस शीट सीखनी पड़ेगी, आपको P&L सीखनी पड़ेगी, आपको टेक्निकल एनालिसिस सीखनी पड़ेगी। हमको कोई थोड़ी छुरी काटा पकड़ा के बोलेगा किसी का सर्जरी कर दो। कोई यूट्यूब पे वीडियो देख के तो आप और मैं सर्जरी कर नहीं सकते। तो आप ये क्यों अपेक्षा करते हो कि यूट्यूब पे वीडियो देख के आप स्टॉक मार्केट में स्टॉक्स खरीद लोगे?
हाँ, बट लोगों की तो ये एक्सपेक्टेशन है आजकल एक्चुअली।
बस गलत एक्सपेक्टेशन है, तो गलत होती है। फिर 10% लोग, 90% लोग लॉस करते हैं, फिर गाली देते हैं मार्केट्स को। मार्केट को क्यों गाली दे रहे हो? आपकी गलती है। अगर कोई डिग्री पाने को आज 5 साल लग रहे हैं, 4 साल लग रहे हैं, तो इसमें भी तो कुछ होगा ना, इसको भी तो स्टडी करना पड़ेगा। आप टिप पे कैसे डिपेंड कर सकते हो? यार IRFC का शेयर खरीद लो, IRCTC का शेयर खरीद लो, REC का शेयर खरीद लो। तो ये, और तीसरी चीज जब इसमें है, आपने एजुकेशन ली, फिर आप मानसिकता बिल्ड करो, क्योंकि ये पैसे की बात है। पेपर ट्रेड करना और रियल ट्रेड करने में जमीन आसमान का फर्क होता है। जब आप पेपर ट्रेड करते हो, आप अज्यूम करते हो आपके पास 10 लाख रुपए हैं और आप शेयर खरीद बेच करते हो, तो आपका इमोशन नहीं प्ले करता। उस टाइम आप कोल्ड होते हो, अपना स्टॉप लॉस लेते हो, सब कर लेते हो। पर यही 10 लाख अपने लगा दो एक बार, फिर देखता हूं कितने लोग स्टॉप लॉस ले पाते हैं। लोग स्टॉप लॉस नहीं ले पाते। तो रिस्पेक्ट करो पैसे की। तो ये छोटी छोटी चीजें हैं, या तो आप अपने आप सीख लो। अगर आपका मेन व्यवसाय स्टॉक मार्केट नहीं है, अगर आप नौकरी कर रहे हो, अगर आप बिजनेस कर रहे हो, अगर आप किसी भी तरीके का कंसल्टिंग व्यवसाय कर रहे हो, तो प्लीज भूल जाओ इन्वेस्टमेंट को, वहां पे डाल दो म्यूचुअल फंड्स में, पैसिव में, स्मॉल कैप में, लार्ज कैप में, उसकी बाद में चर्चा करते हैं। पर भूल जाओ उस चीज को, आप फोकस करो अपनी ग्रोथ पे।
जो आपका एक्टिव इनकम है उसको आप इंक्रीज करो और जस्ट हायर समबडी और गिव समबडी जो कि आपके लिए मैनेज करे।
बस ये करना है पैसे के साथ, इससे पैसा बन जाता है।
हाँ।
इसके अलावा किसी चीज से पैसा नहीं बनेगा। लोग आके बोलेंगे मैंने तो ये कर दिया, वो कर दिया, वो शॉर्ट ड्यूरेशन है। किसी ने 1 साल में किया, 2 साल में किया, कोई बड़ी बात नहीं। 10 साल में करके दिखाओ, 15 साल में करके दिखाओ। 15 साल खेलो, फिर मेरे से आके बात करना। मैं 16 साल से खेल रहा हूँ, तब तो एप्पल टू एप्पल हो गए ना मेरे साथ। मैंने तो कितने साइकिल्स देखे। 2008 का क्रैश देखा, 2009-10 की चढ़ाई देखी, फिर 12 से लेके 16 के बीच की मैंने फ्लैटनेस देखी, 16 के बाद फिर थोड़ी सी ग्रोथ देखी, फिर 20 का क्रैश देखा, फिर यहां बैठा हूं आपके सामने इस बातों का जवाब देते हुए। तो इतने साइकिल्स देख के आ गया मैं। तो आज अगर कोई 22 साल का लड़का, 25 साल का लड़का अगर आर्ग्यू करता है इस केस पे कि मैं कर सकता हूं, तो यू शुड टॉक टू मी व्हेन यू आर 40, कि तब तक आपने 2-3 साइकिल देख लिए होंगे, एक आधा क्रैश देख लिया होगा, तब चेक करेंगे आपकी इमोशनल स्टेबिलिटी कितनी होती है।
फिर भी जो ये कई बार लोगों में एक ग्रीड अंदर से चलती है, जो ग्रीड, जो इमोशन उनको रोकता है, तो हाउ डू यू हैंडल दैट? कभी आपको खुद आया कि कभी लगा हो कि नहीं अभी कुछ ज़्यादा, या फिर शुरुआत से ये पेशेंस आपने डेवलप किया था? इसको कैसे कोई कल्टीवेट कर सकता है ऐसे माइंडसेट को? व्हाट डू यू थिंक?
देखिए, कुछ चीज़ें तो थप्पड़ खा के ही समझ आती हैं। मैं ऐसा नहीं कहूँगा कि मैं भगवान हूँ, मैंने पहले दिन से ही ठीक किया। मैंने भी ऑप्शंस खरीदे, मैंने भी क्विक मनी के लालच में पैसा लूज किया। मेरे पास भी लोग आए मुझे बोले कि भाई हम तेरे को महीने में जो है 2 गुना कर देंगे पैसा, तो मैंने उनको अपना पैसा दिया। तो मैंने भी ये सब किया, पर मैंने क्या किया, देखिए बड़ी बात ये थी कि अगर मेरे पास 100 रुपए थे तो मैंने ये काम 10 रुपए से किया, 20 रुपए से किया,
छोटे अमाउंट से किया
यस,
आपने, बड़े
मतलब
अमाउंट
उससे
पे
मैं
नहीं किया।
मर नहीं जाऊंगा वैसे अमाउंट से किया। आज प्रॉब्लम क्या हो गई है सर, कि लोग ये सिर्फ अपने 100% कैपिटल से नहीं कर रहे। मेरे पास 1 लाख है ना सर, आपसे 10 लाख ले लूंगा, उनसे 10 लाख ले लूंगा, अपना 10 लाख लगा दूंगा, फिर ये 30 लाख के साथ गैम्बल करूंगा। अब मेरे पे ट्रिपल लाइबिलिटी होगी ना, मेरा तो 100% गया और 2 लोगों का 100% मैंने और ले लिया। तो प्रॉब्लम आज ये हो गई है कि लोग ये सोचते हैं, मेरे मैं एक लड़के को जानता हूँ 22 नाउ, मतलब अभी उसकी उम्र 22 साल है। 2020 में कोविड में सब ट्रेडर बन गए थे, तो वो भी ट्रेडर बन गया। उसने कुछ ट्रेडिंग करी तो शुरू में वो जो बिगिनर्स लक होता है वो उसको फेवर कर गया, तो ही स्टार्टेड मेकिंग 7% पर मंथ। अभी तो कूल जलूल रिटर्न्स है, तो उसको लगा कि ये 7% तो हर महीने चलेगा, अपनी गाड़ी बढ़िया हो गई। तो उसने जाके अपने दोस्तों को बताया होगा। अब दोस्त इमीडिएट लालच आई जाता है यंग बच्चों में, तो किसी ने लाख दे दिया, किसी ने 50 दे दिया, किसी ने पापा से लेके दे दिया, उसने खुद के पापा से ले लिया। ये सब करते करते उसने 60-70 लाख रुपए जमा कर। अब उसके रिटर्न्स हो गए जी कम, 7% की जगह 1-2% रिटर्न्स हो गए। ठीक है, वो तो टिकते नहीं है रिटर्न्स इस तरीके से। अब उसने सबको प्रॉमिस किया हुआ था, तो किसी ने उसको आके बोला कि सर आप एक काम करो भैया, आप एक ये फ्यूचर्स एंड ऑप्शंस होता है, आप उसमें पैसा डालो, ये ऑप्शंस ना 10-10 गुना हो जाते हैं दिन में। तो उसने सारा 70-80 लाख रुपए उठा के ऑप्शंस में डाल दिया। अब ऑप्शंस में डाला, ऑप्शंस तो मतलब ऑप्शंस खरीदने वाले तो पैसे कमाते ही नहीं है, तो उसका पूरा 70-80 लाख रुपए वाइप आउट हो गया, बिकॉज वो स्टॉप लॉस नहीं लगा पाए, इमोशन कंट्रोल नहीं कर पाया। 80 लाख रुपए डाउन है सर, 25,000 की तनख्वाह है, साल का 3 लाख कमाएगा, अगले 30 साल लोन चुकाएगा। वन फाइनेंशियली रॉन्ग डिसीजन कैन टेक यू बैक 10 to 20 years ऑफ योर लाइफ। तो अगर आपको मस्ती करने का मन है, अगर कहीं भी अर्ज हो रही है, खुजली हो रही है, तो पूरा कैपिटल मत डालो, थोड़ा पोर्शन डालो, टेस्ट कर लो। इस पे भी हमारे गुरुजी की एक बात है, हमारे गुरुजी कहते हैं डोंट टेस्ट द डेप्थ ऑफ वाटर्स विद बोथ योर फीट। बड़ी सिंपल बात है कि भाई जितना दोनों पैरों से अगर अंदर चलेगा वो बहुत गहरा है, तो तुम तो सीधा अंदर, पर थोड़ा पैर डाला, पता चला अच्छा अरे मिल रहा नहीं, तो आप सेफ हो, बाहर
सेफ, आ गए वापस,
आप वापस आ जाओगे, थोड़ा से गीले होके आ जाओगे। तो हम भी वही करते हैं, आज भी मैं थोड़ा बहुत, ऐसा नहीं है कि मैं नहीं करता मस्ती, मैं करता हूँ, पर वो कैपिटल इतना छोटा है, मेरे टोटल कैपिटल का इतना छोटा पोर्शन है कि फर्क ही नहीं पड़ता, खो गया तो खो गया, ठीक, मस्ती थी, आई कैन अफोर्ड इट। तो यू प्ले सट्टा उतने से खेलो जितने से आप अफोर्ड कर सकते, बाकी को चुपचाप अपना काम पे लगाओ। मैं इस पर एक एग्जाम्पल देता हूं, जैसे हमारे दिन महीने में हम 90 मील्स खाते हैं, ब्रेकफास्ट लंच डिनर 3 मील हो गई, तो 90 मील्स फॉर एग्जाम्पल खाते हैं। इसमें से कितनी मील बाहर खाते हैं? 5-10 ज़्यादा ज़्यादा, तो यानी 90% घर पे खाते हैं, 10% घर के बाहर खाते हैं। घर पे खाते हैं तो क्या खाते हैं? दाल चावल रोटी सब्जी,
फिक्स है,
नोटी मोटी वही चीज़ होगी। 80 उसमें भी 80-90% सेम ही चीज़ें होती हैं। भाई आपको समझो भिंडी पसंद है तो आप बोलोगे ज़्यादा भिंडी बनेगी, कोई सीजन चेंज हो गया तो सीजनल कोई वेजिटेबल्स आ जाएगी, राइट? इसी तरह इन्वेस्टमेंट पे 90% आपको दाल चावल खाना है, विच इज योर म्यूचुअल फंड्स। नहीं तो हाजमा खराब हो जाएगा। और जैसे जैसे आप ओल्ड होते हो वैसे वैसे घर का ज्यादा खाना है, नहीं तो आप और खराब आपका हाजमा हो जाएगा। तो इसी तरह इन्वेस्टमेंट्स को डील करो, घर का खाओ, विच इज सिंपल खाना खाओ, ताकि बॉडी हमेशा तंदुरुस्त रहे। इन्वेस्टमेंट्स करो, म्यूचुअल फंड्स में करो, ये आपका दाल चावल है। हाँ भाई, वो थोड़ा बहुत क्रिप्टो करना है, पेनी स्टॉक्स करना है, फ्यूचर्स ऑप्शंस करना है, सर आप मना मत करो, मेरा मन है तो कर ले, पर 10% से कर ले।
अच्छा, आपने, मैं पूछने वाला था ये सवाल, जो बिटकॉइंस और क्रिप्टो और इन सब का क्या मार्केट है इंडिया में और क्या फ्यूचर है? इज इट लेजिटिमेट और क्या ये फ्यूचर होगा कुछ इनके अंदर? क्योंकि बिटकॉइंस पे तो बहुत लोग करते हैं, कई बड़े बड़े लोग भी उसके ऊपर करते हैं, तो क्या ये, पहले तो ये कि क्या ये लीगल है, सबसे फर्स्ट चीज़ तो ये इंडिया में लीगल है क्या? सेकंड चीज़, इसका फ्यूचर क्या है? और तीसरा चीज़ कि लोग इसमें कई 10 टाइम्स रिटर्न की बात करते हैं, कि 20 टाइम्स रिटर्न की बात करते हैं, 10x 5x 2x की बात होती है, तो वो किस तरीके से, क्या बबल है, ब्रेक होगा? तो उस पर थोड़ा एजुकेट कीजिए आप।
लीगैलिटी के एंगल से अभी क्लैरिटी नहीं है। इट्स अ टैक्सेबल इंस्ट्रूमेंट, वेदर इट इज लीगल और नॉट, अभी ये पता नहीं।
ओके,
मतलब सरकार ने ये नहीं बोला कि ये लीगल है कि नहीं, बोला ये इस पर टैक्स जरूर देना है। ठीक है, तो अभी ये थोड़ा सा ग्रे एरिया चल रहा है। तो देखिए, आपकी सरकार जिस चीज को क्लैरिटी से नहीं बताती, मेरे हिसाब से आपको उसको छूना भी नहीं चाहिए। अभी पीछे बहुत सारे केसेस हुए कि काफी इन्फ्लुएंसर्स ने एक फॉरेन एक्सचेंज कंपनी, एफएक्स कहते हैं हम उसको, फॉरेन एक्सचेंज में, फॉरेन करेंसी एक्सचेंज में एक एक्सचेंज कंपनी है जो जम के इंडिया में स्पेंड कर रही है। मुझे तक आया था जब मेरा चैनल थोड़ा सा ग्रो हुआ कि सर आप हमारे लिए करते हो वीडियोज़, तो मैंने मना कर दिया था क्योंकि वो आरबीआई बैंड लिस्ट में, मतलब ऐसा नहीं है कि उसमें गवर्नमेंट क्लियर नहीं है, उसमें गवर्नमेंट क्लियर है कि ये बैंड है, उसके बावजूद काफ़ी इन्फ्लुएंसर्स उसको प्रमोट कर रहे हैं। अब उनके कोई रीज़न होंगे, उनको लगता होगा यार हमारा घर इसी से चल रहा है, पैसे नहीं है, कुछ भी हो सकता है। मैं मतलब आई डोंट वांट टू गेट इनटू दैट एरिया।
मैं भी उन्हें नॉलेज ही नहीं है उस चीज़ की।
हाँ,
जैसे ये खबर कहाँ से मिले कि ये बैंड है नहीं है, क्योंकि
देखिए आरबीआई की वेबसाइट पे जाइए, बायर बीवेयर है ना। आप अगर कोई भी आपको आके कथा सुना के जाता है तो इंटरनेट जिंदाबाद, आप जाइए चेक करिए। मैं अगर बोल रहा हूँ कि आपका फॉरेन करेंसी एक्सचेंज के बहुत सारे ऐप्स को आरबीआई ने रेगुलेट किया हुआ है, बंद किया हुआ है, तो आप जाके चेक कर सकते हैं, आपको मिल जाएगा आर्टिकल। इट इज़ एज सिंपल इज दैट। आप तो इंटरनेट का ज़माना है, फटाक से मिल जाएगा। तो फर्स्ट चीज़ है कि गवर्नमेंट की क्लैरिटी नहीं है इस चीज़ पे। तो हाँ, मैं आ रहा था उस पर कि वो बैंड जो ऐप है उसको काफ़ी लोगों ने प्रमोट किया। अब ईडी रेड मार रही है उस पर, जो उनको अकाउंट्स मिल रहे हैं, चाहे छोटा चाहे बड़ा। तो अगर आपने $1000 भी डाले थे, $2000 भी डाले थे, उस पर आप पकड़े जाओगे। और एक बार आपको पता है कि आप इंडियन ऑफिशियल से पकड़े गए तो फिर आपकी पूरी जिंदगी आराम है। तो क्यों अगेन ऐसा क्यों कोई स्टेप लेना जो आपको आगे 10-15 साल के लिए रुलाए? पैसे की बात है ना, तो बी सेफ। तो क्लैरिटी लीगैलिटी में नहीं है। देखिए बहुत सारे अभी जितने भी ये क्रिप्टो एक्सचेंजेस है, ये दुबई मूव कर गए। वजीर एक्स है या फिर कॉइन डीसीएक्स है, काफी लोग दुबई मूव कर गए।
वजीर एक्स में अभी वो इशू कितना चला था,
$300-400 मिलियन का कुछ गड़बड़ हुआ।
राइट।
तो देखिए ये सब अभी एफटीएक्स क्रैश हुआ उससे पहले 1.5-2 साल पहले, जो दुनिया का सेकंड लार्जेस्ट एक्सचेंज था। बाइनेंस जो लार्जेस्ट एक्सचेंज था उसमें प्रॉब्लम्स आई। तो आप देख रहे हो इस इंडस्ट्री में प्रॉब्लम आ रही है। तो जब आप देख रहे हो इस इंडस्ट्री में प्रॉब्लम आ रही है, गवर्नमेंट आपकी क्लियरली डायरेक्शन नहीं दे रही है, तो आपको क्यों घुसना है इसमें? व्हाई डू यू वांट टू इवन ट्राई दिस? तो ये बेसिकली है। तो मेरा तो मतलब दिस इज माय स्टैंड कि इसको नहीं ट्रेड करना चाहिए।
सिर्फ इंडियंस के लिए है या फिर कोई भी कंट्रीज हैं जहाँ पे
नहीं? जैसे दुबई में
है?
दुबई में क्लियर है, दुबई में आप कर सकते हो। दुबई में तो आप फॉरेन एक्सचेंज भी कर सकते हो।
ओके,
वो तो कंप्लीटली अलाउ करते हैं, वो तो लिबरल है इस मामले में। ठीक है, देखिए वो लिबरल है, उनके काफी रीजंस है। दे कैन कंट्रोल थिंग्स वेरी वेल, बेटर देन आवर गवर्नमेंट्स। इंडिया में हवाला, ये वो बहुत सारी चीजें होती हैं विच आर नॉट इन फेवर। वहाँ टैक्सेशन नहीं है, तो इसलिए इंडियन गवर्नमेंट हर चीज को सस्पिशन से देखती है कि यार ये किस लिए यूज होगा। अब बिटकॉइन है, किसी को पता ही नहीं किसने भेजा, किसने खरीदा, तो ये तो बहुत मस्त टूल है हवाला करने के लिए। तो गवर्नमेंट ऑलवेज लुक्स एट इट फ्रॉम अ लेंस ऑफ कि यहाँ कुछ गड़बड़ हो सकती है, मेरा रेवेन्यू लॉस हो सकता है। तो इसलिए सरकार उन चीज़ों को टैक्स कर देती है, इमीडिएटली टैक्स कर देती है। तो ये गवर्नमेंट का थॉट प्रोसेस होता है। हाँ।
और जो 10x कई बार लोग
हाँ 10x रिटर्न्स। सर ना मैं एक बात कहता हूँ कि जंगल में सुंदर लड़की चुड़ैल होती है। तो अगर आपको कोई ऐसी बात आके बता रहा है विच इज टू गुड टू बी ट्रू, भाई आपको जंगल में हो, आपको एक बहुत सुंदर लड़की दिख गई, तो वेरी लेस चांस ना कि जंगल में एक सुंदर लड़की खड़ी होगी। तो दैट मीन्स किसी चुड़ैल ने अपना रूप बदला होगा और आपको वो खाने वाली है। तो कोई आपको आके कुछ चिपका के जा रहा है कि भाई आपको 10% या 2 टाइम्स या 3 टाइम्स या 5 टाइम्स कर दूंगा। इज इट अ नॉर्मल रिटर्न? टुडे एफडी इज गिविंग यू 7%, स्टॉक मार्केट म्यूचुअल फंड्स आर गिविंग यू 12-13%। हाँ, कोई एक साल हो सकता है जब ऐसा कुछ हो जाए, बट दैट विल हैपन व्हेन यू हैव स्पेंट अ लॉट ऑफ टाइम इन दैट मार्केट। आते हैं ऐसे समय आते हैं जब आप मार्केट से अच्छा रिटर्न्स कमा लेते हो। भाई 2020 के क्रैश में जो रुका उसने 2021 का फायदा भी उठाया, 2022 का भी फायदा उठाया, पर ही शुड बी रेडी कि हो सकता है 2027 में क्रैश आ जाए। तो ये तो अगेन एज आई सेड कि बेट्स आर नॉट ऑफ शॉर्ट टर्म, बेट्स आर ऑफ लॉन्ग टर्म। ये कछुए और खरगोश की रेस है और इसमें कछुआ जीतेगा, हमेशा जीतेगा। तो ये है। तो आप अनरियलिस्टिक रिटर्न्स लोग आके जाते हैं, मतलब ये सारे किस्से देते हैं। मैं आपको एक क्वेश्चन पूछता हूं। अब कुछ लोग आएंगे आपको बोलेंगे, टेलीग्राम पे मैसेजेस आते हैं कि आप मुझे पैसा दीजिए, 50,000 दीजिए, मैं आपको दिन का 5,000 कमा के दूंगा। ऐसे काफी मैसेजेस आते हैं। ठीक है, दैट मीन्स ही इज सेइंग कि मैं आपको दिन का 10% कमा के दूंगा।
राइट।
तो अब एक केस स्टडी लेते हैं कि आपने ₹1 डाला और वो ₹1 10% डेली कंपाउंड हो रहा है। ठीक है, आपने ₹1 डाला, वो ₹1.10 हो गया। अब आपने अगले दिन ₹1.10 डाला, तो अब उसको ₹1.21 हो गया, कंपाउंडिंग लग गई उस पर। ठीक है, साल में 250 ट्रेडिंग डेज होते हैं, 250।
ओके,
250 दिन मार्केट्स ओपन होती है, इंडियन स्टॉक मार्केट्स। अगर आपने पहले दिन ₹1 डाला है तो ये 250 दिन के बाद क्या नंबर होगा आपके हिसाब
अगर
से?
ये कंपाउंड होता रहे
ये
तो
कंपाउंड होता रहे तो, क्योंकि उसने तो यही प्रॉमिस किया ना, मैं तेरे को 50,000 पे 5,000 दिन का कमा के दूंगा।
दिन का कमा करके देगा।
तो मैं तो बहुत समझदार हूँ, मैं वापस उस 50,000 में 5,000 डाल दूंगा।
2-2,500 टाइप कुछ।
2-2,500 आपके हिसाब से 2,2,500 हो जाएगा। द आंसर इज 2,230 करोड़। मैं 1 रुपए की बात कर रहा हूँ, 1 लाख नहीं, 1,000 नहीं, 10,000 नहीं, 1 करोड़ नहीं। आप 1 रुपया अगर डालोगे
करोड़ हो जाएगा
तो वो 2,230 करोड़ रुपए हो जाएगा। तो यार अगर वो कर ही पाता तो अपने पैसे कोई कर लेता ना, तुम्हारे पास क्यों आना है?
क्या जरूरत क्या है उसे?
उसको जरूरत क्या है? अगर वो 50,000 से दिन का 5,000 बना सकता और उसको वो कंपाउंड कर सकता, क्योंकि वो तो कह रहा मैं रोज बना के दूंगा, तो बेस बना ना अपना, पहले दिन 50,000 था, अगले दिन 55 कर।
सही बात।
तो 1 रुपया जब 2,300 करोड़ बन सकता है, तो उसके पास तो अंबानी से ज्यादा पैसा हो जाएगा 1 साल के बाद। तो जब अगेन आप जब राइट क्वेश्चनिंग नहीं करते व्यक्ति से, आप उससे सही चीजें पूछ रहे नहीं हो, आप सिर्फ बेसुध होके या फिर अनकॉन्शियस होके डिसीजंस ले रहे हो, तो फिर आपका पैसा तो जाएगा ना। फिर उसमें सरकार की या अंबानी की या अडानी की या किसी की भी क्या गलती है? किसी टीचर की, कोच की क्या गलती है? तो ये बायर बीवेयर है। बायर को बीवेयर होना पड़ेगा, जिसका पैसा लग रहा है उसको सवाल पूछने पड़ेंगे।
तो मेन ये चीज़ है कि अपने इमोशंस को आप कितना, स्पेशली जो एक ग्रीड है, कई बार सब कुछ बताने के बावजूद भी हमारे अंदर का जो ग्रीड फैक्टर है वही सबसे ज़्यादा प्रॉब्लम क्रिएट करता है। अभी आई थिंक किसी तो भी सेलिब्रिटी के लिए नाम तो यहाँ नहीं ले सकते हम, बट ऐसा कुछ चल रहा था कि उसने बहुत सारे लोगों का पैसा लिया, बिटकॉइंस में डाला और दैट वाज मैनिपुलेशन, ऐसा कुछ,
और खत्म हो गया पैसा। तो पॉइंट यही है ना कि होना यही है। अच्छा, बिटकॉइन सब बोल रहे हैं, पीछे जब क्रैशेस हुए तो बिटकॉइन हैड रीच्ड अ लेवल ऑफ आई थिंक व्हाट $16,000-17,000, फिर इट रीच्ड अ लेवल ऑफ $70,000-75,000। तो कोई चीज जो इतनी वॉलेटाइल है उसमें आप भगवान थोड़ी हो कि 17,000 में घुसोगे 17,000 में निकलोगे।
वॉरेन बफे का क्या टेक है इस पे?
वो तो डालते नहीं, उसका बड़ा सिंपल फंडा है, आई डोंट इन्वेस्ट इन थिंग्स व्हिच आई डोंट अंडरस्टैंड। बस देखिए, मैं म्यूचुअल फंड में डालता हूँ पैसा। म्यूचुअल फंड पैसा कहाँ डाल रहा है? स्टॉक्स में डालता है। कौन से स्टॉक्स में डालता है? रिलायंस में डालता है, TCS में डालता है, इन्फोसिस में। मैं सबको जानता हूँ। मैं जानता हूँ रिलायंस के पीछे एक मुकेश अंबानी है, उसके पास एक तेल का कुआं है, एक रिफाइनरी है, एक शॉप है बहुत सारी, जियो है, 70-50 करोड़ यूजर्स है उसके। तो मुझे पता है एक रिकरिंग रेवेन्यू का अच्छा बिजनेस है। हाँ, अब आगे वो ग्रो करेगा, कितना करेगा, दैट इज द ओनली क्वेश्चन। ठीक है, तो मैं जानता हूँ मेरा पैसा एक सही जगह लग रहा है। अब मेरा पैसा एक ब्लैक बॉक्स में लग रहा है जिसके बारे में मुझे कुछ आइडिया नहीं है, तो मैं तो बहुत अनसेफ फील करूंगा उसमें। और बच्चे आजकल इसको ऐसे खेल रहे हैं, मतलब दे आर न्यूक्लियर वेपन्स। दे लिटरली, वॉरेन बफेट उनको न्यूक्लियर वेपन्स कहते हैं, फ्यूचर्स एंड ऑप्शंस को, कि भाई मैं मतलब दे आर वेपन्स ऑफ मास डिस्ट्रक्शन, दिस इज द वर्ड ही यूजेस। तो आप जो इतना बड़ा इन्वेस्टर है वो तो इनको खेल रहा नहीं है,
राइट।
तो आप क्या समझते हो, आप मतलब इस गेम में जीत जाओगे?
तो ये कैसे, कहाँ इन्वेस्ट होता है, इसकी वैल्यू क्यों बढ़ती है? जो भी ये डिजिटल करेंसी है, इसका वैल्यू किस तरीके से बढ़ता है?
देखिए, कोई भी डिजिटल करेंसी हो या ऐप हो, जैसे जोमैटो की वैल्यू क्या है? जोमैटो की इंडिपेंडेंट तो कोई वैल्यू नहीं है ना, उसकी तो एक ऐप है। उसकी वैल्यू इसलिए है क्योंकि दोनों तरफ उसके पास बहुत सारे यूजर्स हैं, खाने वाले भी बहुत हैं, खिलाने वाले भी बहुत हैं, और खाना पहुंचाने वाले भी बहुत हैं। तो जब ये इकोसिस्टम पूरा चर्न करता है तो ऑटोमेटिकली वैल्यू क्रिएट होती है। उबर भी सेम है, चलाने वाले भी बहुत हैं और चढ़ने वाले भी बहुत हैं ऊपर उबर में। तो उबर ऐसा सिस्टम चर्न करता है जब इतना सारा ट्रांजैक्शन होता है। देखिए, जो अंडरलाइंग टेक्नोलॉजी है बिटकॉइन की, उसे ब्लॉकचेन कहा जाता है। ब्लॉकचेन इज द मोस्ट वंडरफुल इन्वेंशन ऑफ दिस वर्ल्ड, बिकॉज ब्लॉकचेन एक इंसान को भगवान बनने से बचाता है। भगवान कौन है? भगवान वो है जो पास्ट बदल सकता है। हमारे यहाँ लैंड रिकॉर्ड्स में पास्ट ही बदल दिया जाता है, आपको पता है। रिटर्न होते थे, हैंड रिटर्न होते हैं। तो क्या होगा कि भाई किसी को आपने ऊपर नीचे कर दिया तो उसने संजय कथुरिया की जगह राकेश कथुरिया कर दिया या सुरेश कथुरिया कर दिया, हल्का सा रब करके। अब लड़ते रहो आप कोर्ट में पटवारी के साथ कि भाई मेरा तो जमीन थी, मेरी जमीन थी। जब ये रिकॉर्ड ब्लॉकचेन पे क्रिएट होते हैं, क्योंकि ये फाइल उसके हाथ में थी, ब्लॉकचेन में ये फाइल उसके हाथ में होती ही नहीं है। ये फाइल बहुत सारे लोगों के हाथ में होती है, और बहुत सारे लोगों को कन्विंस करना, इन्फ्लुएंस करना, जिनको आप जानते भी नहीं हो, इट्स इम्पॉसिबल। तो एज अ टेक्नोलॉजी, ब्लॉकचेन इज वन ऑफ द मोस्ट ब्यूटिफुल टेक्नोलॉजीज ऑफ दिस वर्ल्ड। हाउएवर, एज अ कॉइन उसका यूज क्या होता है? जैसे मैं आपको एक एग्जांपल देता हूं। देयर इज अ प्लेटफॉर्म कॉल्ड, इंडियन प्लेटफॉर्म कॉल्ड पॉलीगॉन। तो पॉलीगॉन एक ऐसा प्लेटफॉर्म है जिसके ऊपर बहुत सारी एप्स बनी हुई हैं। ठीक है, इन्हें डैप्स कहा था, डिसेंट्रलाइज्ड एप्स कहा जाता है। पॉलीगॉन इज अ लेयर 2 ब्लॉकचेन कहते हैं। तो लेयर 2 ब्लॉकचेन है लोग इस पे एप्स बना रहे हैं, उस एप्स में ट्रांजैक्शन हो रहे हैं, उस ट्रांजैक्शन में पॉलीगॉन का कॉइन यूज होता है।
ओके
तो उस वजह से पॉलीगॉन के कॉइन की एक वैल्यू आती है, क्योंकि उसमें रोजमर्रा का यूजेज आ रहा है। पर कोई आता है शीबू इनू, ये क्या चीज है भाई, किस चीज के लिए यूज हो रही है, क्या हो रहा है, जिसे मीम कॉइन कहते हैं आजकल। फिर एक स्क्विड गेम्स आया, तो स्क्विड गेम्स का कॉइन बन गया, एक दिन में $0 to $10,000 गया, एक दिन में। और अगले दिन $10,000 to 0 आ गया। अब आपने सोचो पैसा डाला होता, उसमें कुछ भी डाला होता, मैंने कहता हूँ लाख रुपए डाला होता, 2 लाख डाला होता, 10,000 भी डाला होता, तो वो तो जीरो होना ही है ना, क्योंकि आप सोचोगे अरे अभी तो 10,000 ही पहुंचा, अभी कल को ये 1 लाख पहुंचेगा, देख अगले दिन वो जीरो हो गया। थिंग्स आर नॉट इन योर कंट्रोल, ये ब्लैक बॉक्स है, आप इस सिस्टम को जानते नहीं हो। रिलायंस एक दिन में 10,000 नहीं होगा और एक दिन में जीरो नहीं होगा, क्योंकि एक अंडरलाइन कंपनी चल रही है, लाखों लोग नौकरी कर रहे हैं, तेल बिक रहा है, दुकानों में सामान बिक रहा है, जियो पे लोग बात कर रहे हैं, डेटा कंज्यूम कर रहे हैं, पे कर रहे हैं जियो को। तो इतना बड़ा इकोसिस्टम ऐसे धम करके नहीं गिरेगा।
सो दैट इज वेयर द वॉलेटाइल फैक्टर कम्स,
इसलिए वो वॉलेटाइल है।
सो अगर कोई डेट के पैटर्न में आ गया है और सपोज उसके पास में अभी इन्वेस्टमेंट के लिए तो पैसा है नहीं, तो एक डेट पैटर्न से बाहर आने के लिए एक व्यक्ति क्या सिस्टमेटिक प्लानिंग कर सकता है?
बहुत ब्रिलियंट क्वेश्चन है ये। तो अगर डेट ऑलरेडी चढ़ चुका है, मतलब गलती हो गई, दो चीज़ें, या तो मेरे को डेट लेना है या डेट हो चुका है। तो मैं स्टार्ट करता हूँ, डेट हो चुका है। तो डेट हो चुका है तो आप डेट को सिर्फ 3 चीज़ों से क्लोज कर सकते हो, ठीक है। पहली चीज़ है अपनी इनकम बढ़ा के, तो इमीडिएटली अपनी इनकम पे फोकस करना स्टार्ट कर लो। देखिए हाई तौबा करने से कोई प्रॉब्लम बचे, कुछ काम नहीं होने वाला, ठीक है। आप फंस गए हो, अब आप फंस गए हो तो फंस गए हो,
यस।
अब आपको बाहर निकलना है, बाहर निकलने के 3 ही विकल्प हैं, और आपको मेहनत करनी पड़ेगी, क्योंकि फंसे भी आप थे, है ना। कुछ तो आपने किया होगा कांड, जिस वजह से आपने उधार लिया है, या कांड किया होगा, या कोई पुराने कुछ भी पाप किए होंगे, या हो सकता है फैमिली बर्डन होगा, कुछ भी हो सकता है, ठीक है। पर अब तो आपके ऊपर आ चुका है, तो अब आप ही को एक्शन लेना। पहला एक्शन अपनी एक्टिव इनकम बढ़ाओ, कुछ भी करके, ठीक है। हसल करो, डबल मेहनत करो। अगर 10 घंटे काम कर रहे हो तो 16 घंटे काम करो, 18 घंटे काम करो, अपनी इनकम बढ़ाओ। पॉइंट नंबर 1। पॉइंट नंबर 2, अपने खर्चों को रूथलेसली मर्सीलेसली खत्म कर दो, बस।
जो कट कर सकते हो
जो कट कर सकते हो। स्विगी में अगर 10 बार खाते हो तो 2 बार खाओ, ठीक है। अगर 20 सब्सक्रिप्शंस पड़ी हुई हैं तो 1 पे ले आओ।
जो भी कट कर सकते हो सब कट कर दो,
रूथलेसली मर्सीलेसली कट करो कॉस्ट को। 1-1 रुपया अब आपको फायदा देने वाला है इस टाइम पे, क्योंकि वो उधर जाएगा, लोन रिपे करने जाएगा। और तीसरी चीज और सबसे इंपॉर्टेंट चीज है, कोई भी ऐसा असेट आपके पास पड़ा है जो आपके आज काम नहीं आ रहा, तो हम इसको कहते हैं लिव टुडे टू फाइट टुमारो। चाहे कोई गोल्ड का असेट है, चाहे कोई जमीन पड़ी हुई है, कोई दुकान पड़ी हुई है, कुछ ऐसी चीजें पड़ी हुई हैं घर पे जो आप बहुत साल से यूज नहीं कर रहे हो, जिनका कोई योगदान नहीं है। मैं कहता हूं कोई खटारा गाड़ी पड़ी हुई है, कोई फर्नीचर का पीस पड़ा हुआ है, बेच के 1,000 रुपए आ जाते हैं, 2,000 रुपए आ जाते हैं, 3,000 रुपए आ जाते हैं, बेच लो। इमीडिएटली अपने एसेट्स को खाली करो जो नहीं चाहिए, क्योंकि यहां भी हमारे गुरुजी बोलते हैं, इफ यू बाय थिंग्स यू डोंट वांट, वेरी सून यू हैव टू थिंग्स सेल थिंग्स यू वांट। तो आप उस सिचुएशन में आ चुके हो कि नाउ यू हैव टू सेल थिंग्स यू वांट, मतलब कुछ चीज़ ऐसी चीज़ें हैं जो आपको चाहे रखनी पड़े पर फिर भी बेचनी पड़ेगी, क्योंकि आपको उधार चुकाना है। तो यही 3 तरीके हैं जिससे आप उधार, कोई भी चीज़ से इमोशनली अटैच मत हो इस टाइम।
हाँ, इंडिया में ये बहुत होता है, लोग अपनी प्लॉट से, ज्वेलरी से, सबसे इतना इमोशनली अटैच होते हैं कि डेट पे जितना ब्याज देना हो वो देने के लिए तैयार रहते हैं, लेकिन उसको नहीं छोड़ते,
उसको मोनेटाइज नहीं कर पाते। ये मैं आपको बताता हूँ, मैं बिजनेस कंसल्टिंग करता हूँ, तो एक व्यक्ति मेरे पास आया, ये वहाँ रहते हैं, जिम कॉर्बेट।
अच्छा, हाँ, ओके।
तो एक व्यापारी आए मेरे पास, जिम कॉर्बेट के आसपास, वो रामनगर एरिया में रहते हैं। तो बड़े सरल व्यक्ति, अच्छे आदमी, बोलते मेरे पे 6.5 करोड़ रुपए का उधार है और मैं उसका ब्याज नहीं भर पा रहा हूँ, ठीक है। तो मैंने डीप डाइव किया, क्वेश्चंस पूछे, मैंने बोला कोई जमीन, कोई कुछ। बोलते मेरे पास मेरा घर है, वो है 9 करोड़ रुपए का। तो मैंने बोला वो घर बेचो और ये 6.5 करोड़ का लोन चुका दो, अभी के लिए थोड़ा हल्के घर में चले जाओ, बिजनेस बनाओ, बाद में वापस ले लेना। सर ये समझाना 6 महीने लग गए मेरे को। जब 6 महीने में पानी यहां आ गया कि बैंकों के बहुत गंदे वाले फोन आने लग गए और ये होने लग गया, तब जाके उन्होंने डिसीजन लिया। तब तक 50 लाख का और अक्यूमुलेट हो गया। तो लोग डिसीजन फटीक जो रखते हैं ना, आप फंस गए ना बॉस, तो उसके बाद आपको रूथलेस होना पड़ता है। आपको अपनी जान बचानी है, तो उस टाइम पे आप अपने एसेट की जान नहीं बचा सकते। आप अपने जमीन की जान बचा लो कि नहीं यार, ये तो जमीन मेरे पिताजी नहीं देती, इसी काम के लिए दी थी कि बेटा तू फंसेगा ना तो उसने तेरे काम आएगी, तो निकालो इसको, फटाफट निकालो। तो एसेट मोनेटाइजेशन इंडिया में लोग नहीं करते, जिंदगी भर लोन में फंसे रहेंगे, पर अपने एसेट को मोनेटाइज नहीं करेंगे। अरे वो एसेट बना ही इसलिए था कि कल को कोई खुदा ना खास्ता प्रॉब्लम आती है तो यू हैव टू टेक केयर ऑफ दिस थिंग्स। तो रूथलेसली मर्सीलेस मतलब उस टाइम पे आपको मर्सीलेस होना पड़ता है अपने ऊपर, अपने एसेट्स के ऊपर, अपने खर्चों के ऊपर, तब जाके आप लोन से बाहर आ सकते हो। अगर आप हाय 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 तौबा मैं तो मर गया, मैं तो बर्बाद हो गया, मैं कुछ नहीं कर पाऊंगा, तो यू विल नेवर कम आउट ऑफ डेट, नेवर एवर कम आउट ऑफ डेट।
कई लोग तो एक डेट के लिए दूसरा डेट लेते हैं, वो
तो
साइकिल
डबल
चलती
फसावट है, वो तो डबल फसावट है। वो एक टोपी बदली दूसरी डाल दी, दूसरी टोपी बदली तीसरी डाल दी, वो उसमें आप देखिए आपको लाइफ जीनी है, यू हैव वेरी लिमिटेड टाइम हियर, 70 साल 65 साल 80 साल जो भी होगा आपका, उसमें अगर आप 5-10 साल इस स्ट्रेस में निकालोगे कि मैं उधार कैसे चुकाऊंगा उधार, आई डोंट थिंक सो इट इज वायबल टू फॉर अ ह्यूमन लाइफ टू थिंक लाइक दैट।
ब्यूटीफुल। जो एक और कई लोग जो स्पेंडर होते हैं, जिनको थोड़ा इन्वेस्टिंग में नहीं होता, वो कहते हैं कि एक्सपीरियंस कब लेंगे, लाइफ इज़ अबाउट एक्सपीरियंस, ज़िंदगी 4 दिन की है, सब इन्वेस्ट कर देंगे। तो इस माइंडसेट को कैसे इसको डील किया जा सकता है जिन लोगों में ये माइंडसेट है?
तो इसके लिए आजकल एक टर्म आया योलो, यू ओनली लिव वंस। तो ये बहुत बड़ा प्रॉब्लम है, इस टर्म को बहुत आराम से जिया जा सकता है। मैं ये कहता हूं कि आप आज अच्छा जी सकते हो और कल उससे ज्यादा अच्छा जी सकते हो। लोग मेरे से पूछते हैं सर सब कुछ SIP में डालते हैं, ना सब कुछ SIP में नहीं डालते। दैट इज नॉट व्हाट आई एम सेइंग। आई एम नॉट हियर सेइंग कि कॉम्प्रोमाइज ऑन टुडे कंप्लीटली, कुछ भी मत करो। तो इस प्रोसेस के लिए सबसे पहले बजटिंग करना सीखो। सर मेरे पास लोग आते हैं, वो बोलेंगे कि मुझे जो है ट्रैवल करने का बहुत शौक है, मुझे जाना, मेरी 25,000 सैलरी है सर, मैं कहाँ से जा सकता हूँ, तो गरीब हूँ, 25,000 ही सैलरी है मेरी, उसमें से 20,000 तो खर्चे हो जाते हैं। मैं एक क्वेश्चन पूछता हूँ, ये 20,000 खर्चे कहाँ हो रहे हैं, जरा मेरे को उतना बता दो। किसी के पास उसका जवाब नहीं है। फिर कुछ बच्चों से मैंने बनवाया इसका जवाब
जी,
ठीक है। अब आंसर सुनोगे तो आप हैरान हो जाओगे। एक बंदा दिन में 10 सिगरेट फूक रहा है, 15 रुपए की एक आती है, तो 4,500 रुपये तो उसके सिगरेट में जा रहे हैं, 54,000 रुपये साल के सिगरेट में चले गए। 54,000 में क्या वो दुबई का ट्रिप मार के नहीं आ सकता? मार सकता है, पर अगर कॉन्शियस रहेगा, वो डिसीजन लेगा कि मेरे को अब सिगरेट बंद करनी है, क्योंकि मेरे लिए इंपॉर्टेंट है घूमना, मेरे लिए इंपॉर्टेंट है लाइफ के एक्सपीरियंसेस लेना, तो ठीक है मैं कहता हूं चल तू आज पूरी नहीं बंद कर पा रहा, तो तू 10 सिगरेट मत पी, तू 5 पे आ जा, 54 की जगह 27 तो बचेगा। ठीक है। दूसरी चीज, आजकल जो लोगों को पता ही नहीं चलता उनके पैसे कट रहे हैं, वो है आपकी सारी सब्सक्रिप्शंस। 10 तरह की सब्सक्रिप्शन है, 1,500 रुपये महीना उधर कट जाता है। नेटफ्लिक्स, अमेजॉन, ये वो जी फी सोनी फोनी सब कर लिया लोगों ने। क्यों? क्योंकि मैच देख रहा था, उस महीने का करो ना, फिर भाई वर्ल्ड कप देखना तो तब उससे डिज्नी हॉटस्टार कर लो, फिर अगले मत करो। डिज्नी हॉटस्टार भी आपको ये विकल्प देता है। तो यहां पे लोग 18,000 रुपये नहीं बचा पाए। ठीक है। तीसरी चीज है, बेसुध होके स्विगी और जोमेटो से खाना मंगा रहे हैं। घर पे बैठे सर क्या हो रहा है, बोर हो रहे थे सर, अच्छा फिर क्या किया, एक मैंने वो मंगा ली, क्या कहते हैं, आइसक्रीम मंगा ली। क्यों? बोर हो रहा था। तो भाई तेरे तो लग गए ना 350 रुपए।
ट्रू।
350 रुपए वो करके अगर तूने 10 बार भी मंगा ली तो 3,500 रुपए खोटे कर लिए। 3.5 इंटू कर ले 12, 42,000 रुपए होते हैं। तो एक ही बच्चे को जो रो रहा था, मैंने उसकी बैलेंस, उसी की P&L में से 1 लाख रुपए निकाल के दे दी। मतलब ये तेरे 1 लाख रुपए जा घूमना जो। तो yes you live only once, yes you should enjoy, but your budget and your vision needs to be the same. आपका विजन है घूमना, आपका बजट नहीं बता रहा मेरे को कि आपका विजन घूमना है।
वाओ।
आप कहां खर्च करते हो वो विजन से अलाइन ही होना चाहिए ना।
दैट्स ब्यूटीफुल।
भाई आपसे समझो, वायसर सर आपने कहा कि भाई मैं लोगों को एजुकेट करना चाहता हूं
जी,
हर फॉर्म में एजुकेट करना चाहता हूं, तो आपका इन्वेस्टमेंट कहां हुआ? एक स्टूडियो में हुआ, आपने हाईएस्ट क्वालिटी स्टूडियो बनाया, तो आपकी विजन और आपका स्पेंड मैच कर रहा है।
सो ट्रू,
है ना। सो योर विजन एंड योर बजट हैज टू बी मैच्ड। उसी टाइम तब भी आप जिंदगी के, चाहे आप 15,000 रुपए महीना कमाते हो, आप फिर भी उस आदमी से ज्यादा लुफ्त उठा सकते हो जीवन का जो 2 लाख रुपए महीना कमा सकता है, क्योंकि आपको पता है आपका पैसा जा कहाँ रहा है। फिर आप अनरीजनेबल भी नहीं होते अपने पैसे के साथ। भाई ठीक है मैं साल भर में इतना पैसा बचाऊंगा कि मैं ऋषिकेश का एक ट्रिप मार के आता हूं। अब मेरी 30,000 तनख्वाह है तो मैं साल भर में इतना पैसा बचा लूंगा कि मैं दुबई का ट्रिप मारूंगा। मेरी तनख्वाह 70,000 है तो मैं साल भर में इतना पैसा बचा लूंगा कि मैं साउथ ईस्ट एशिया का एक ट्रिप मारूंगा।
तो इसमें कोई रूल है संजय जी कि इतना परसेंट, कुछ कोई स्टैंडर्ड है कि इतना परसेंट में आप SIP में लगाएं या इतना परसेंट इनकम का इन्वेस्ट होना चाहिए, ऐसा कोई स्टैंडर्ड है जिसको फॉलो कर सकते हो लोग?
आप जितना जब यंग हैं तो राउंड अबाउट 25% आप अपना इन्वेस्टमेंट्स में लगाइए।
तो अगर 100 रुपया कमा रहे हो तो 25 आप इन्वेस्टमेंट में लगाओ ही लगाओ।
बिल्कुल डालिए। एक वो ना आपको डिसिप्लिन क्रिएट करके देगा। इंपॉर्टेंट मेरे लिए ये है कि आप एक डिसिप्लिन क्रिएट करो। आप ये समझो अगर आपकी 30,000 की तनख्वाह है तो आप ये समझो कि आपकी 22.5 की तनख्वाह है। गाड़ी यहां से चालू होगी, 22.5 से चालू होगी। हाँ, अगर आपकी कोई ऐसी एक्सट्रीम सिचुएशन है जहाँ पे घर का कोई ऐसा बोझ है जो आपके एक लाइबिलिटी लिमिट में आता है, तो हाँ ठीक है, इस 25 को आप 15 कर। पर अगर आप एक रीजनेबली ओके स्टेटस में हो तो शुरू में आप 25% आपका डेफिनेटली इन्वेस्ट करो। अगर आपका समय सीमा ज्यादा है, आज आप 20 साल के हो और आप 40 साल 45 साल तक इन्वेस्ट कर सकते हो, तो थोड़ा ज्यादा कंट्रीब्यूशन स्मॉल एंड मिड कैप में डालो, क्योंकि स्मॉल एंड मिड कैप के ग्रोथ होने के चांसेस ज्यादा होते हैं। और बट शुरू में कभी कभी ऐसा होता है कि आपने गलत टाइमिंग में घुस गए, आपको तो पता नहीं था, मार्केट थोड़ा क्रैश कर गई, तो कभी कभी इंपैक्ट भी आ जाता है उसमें। जैसे मैंने स्मॉल एंड मीडियम कैप में फंड में डाला था पैसा 2016 सितंबर में। 2020 प्री कोविड वो जीरो था, मतलब देयर वाज नो रिटर्न 4 साल में, 3.5 साल में
ओके,
जीरो रिटर्न था, ₹1 का रिटर्न नहीं था, एवरेजिंग हो रही थी। फिर जैसे कोविड आया तो 25% गिर गया, आज वो 200% ऊपर है।
अच्छा,
क्योंकि मैंने SIP रोकी नहीं,
वो आपने
कंटिन्यूस रखी मैंने, आज वो 200% यानी 3 गुना हो चुका है मेरे इन्वेस्टमेंट का। तो ये एक लॉन्ग टर्म गेम है। कभी कभी स्मॉल कैप शुरू में आपको धोखा दे सकते हैं, तो इसलिए उनको 20 साल खेलना पड़ता है। 20 साल में वो आपको धोखा नहीं देंगे। तो जितना आपका होराइजन लंबा है, आपका गोल जितना लंबा है, आप अपने रिटायरमेंट के लिए कर रहे हो या आप अपने कोई कॉर्पस के लिए कर रहे हो, कुछ के काम के लिए कर रहे हो, तो आप ज्यादा पैसा स्मॉल एंड मिड कैप में डाल सकते हो। फिर जो बचा हुआ पैसा, समझो आपने 50% स्मॉल एंड मिड कैप में डाल दिया, आप 20% 25% लार्ज कैप में डालो जो ट्रस्टेड कंपनीज है, और एक 10-20% आप जो बचा हुआ है वो उसमें डाल दो, इंडेक्स फंड में डाल दो जो पैसिव है।
सो टोटल अगर 100 रुपए कमा रहा है तो एटलीस्ट 25% तक का व्यक्ति दिमाग में इन्वेस्टमेंट का लेके चले।
बिल्कुल।
और EMI का कितना लेके चले, कि आजकल तो हम देखते हैं कि 100 रुपए कमा रहा है 80 EMI में जा रहा होता है, इतनी हालत में है लोग। तो वो
देखिए मेरे हिसाब से आपका अगर आप ब्रॉड स्पेंड, मैं 30,000 के आदमी को पकड़ता हूँ,
ठीक है, एग्जाम्पल ले लीजिए। हाँ,
30,000 में से समझिए 7-1,000 रुपए वो इन्वेस्ट कर दे,
ठीक है,
23,000 बचा। 23,000 में से 7-8,000 रुपए की वो EMI ले ले। अब वो EMI लेता है तो ऑब्वियसली 7-8,000 की EMI बहुत बड़ी EMI होती है। 7-8,000 में तो मतलब ऑलमोस्ट एक आईफोन और 1-2 चीज और ओन कर सकते हो, ठीक है। तो एक अच्छा लग्जरी चीज भी आपने देख ली है, और उसके अलावा जो 15-16,000 है उसमें आप अपना खर्चा मैनेज करें, वो आपका बजट हो गया। अब देखिए आपके पास पाई तो उतनी ही है ना, इसलिए हम इसको प्रॉफिट्स फर्स्ट, मैंने अपनी कंपनी का नाम भी प्रॉफिट्स फर्स्ट रखा है। तो अप्रोच ही प्रॉफिट्स फर्स्ट होनी चाहिए कि इसमें आपने प्रॉफिट अपना पहले निकाल दिया जो आपको इन्वेस्टमेंट करनी है,
दैट इज योर प्रॉफिट,
दैट इज योर प्रॉफिट,
वो आपका प्रॉफिट है।
पर
जो
आपने आज उसको कंज्यूम नहीं किया, आपने ये डिसाइड किया कि इस प्रॉफिट को डिलेड ग्रेटिफिकेशन, मैं इसको बाद में कंज्यूम करूं, आज मैं इसको निवेश करूंगा। तो आपने 22,000 जो बचा है उसमें से ही अब घर चलाना है, उसी में से EMI देनी है। अब वो आपकी तनख्वाह हो गई, आपकी तनख्वाह 23,000 है, तो 23,000 का 25% कितना हुआ, 5-6,000 रुपए। तो 6,000 रुपए 7,000 रुपए तक आप अगर EMI करते हो तो आप स्ट्रेस में नहीं हो।
तो जैसे कई लोग घर ले लेते हैं, सपोज जैसे इन्वेस्ट तो नहीं किया उसने, और ये क्वेश्चन बहुत से लोगों को रहता है कि सपोज मैं अहमदाबाद में रह रहा हूँ और 20,000 रुपये का रेंट दे रहा हूँ, और वही मैं सोचता हूँ कि इससे तो बेटर है कि मैं खुद का घर ले लूँ और उसके ऊपर 30-35,000 की मैं EMI देना चालू कर देता हूँ। सो ये कहाँ तक एक लॉजिकल है डिसीजन कि नहीं है, खुद का घर लेना जिसकी वजह से अब आप 15-20 साल के लिए अपनी सैलरी का एक मेजर अमाउंट सिर्फ घर की EMI में दे रहे हैं, एंड आपके पास में अब कोई रिटर्न डायनामिक कुछ आ नहीं रहा है आपके पास में। तो मोस्टली तो मिडिल क्लास का कमर वही टूट जाता है जब वो अपना घर बनाता है, तो सारी सेविंग वेविंग सब कुछ लगा के अब 15-20 साल के लिए लॉक हो जाता है वो, कि अब मेजर चंक जो है वही जाना है उसका।
राइट।
तो ये किस हद तक सही डिसीजन है? मैं जस्ट टू ऐड ऑन दिस, आई थिंक निखिल कामत कुछ समय पहले एक वीडियो में कह रहे थे कि खुद का घर नहीं लेना चाहिए या ऐसा कुछ, तो भी ही वाज सेइंग। तो इस पे अगर इफ यू कैन गिव सम।
देखिए मैं खुद रेंट पे रहता हूँ, वहीं से स्टार्ट करूंगा। मैं अभी भी रेंट पे रहता हूँ। और आपका मैं इक्वेशन जो आपने बताया मैं आपको उसको थोड़ा और डिटेल करता हूँ। आपने बोला कि एक घर है 20,000 रुपए का रेंट है, तो यानी साल का 2,40,000 रुपए का रेंट है साल का। तो मोटा मोटी ये घर मेरे हिसाब से 80 लाख से लेके 1 करोड़ के बीच में होगा अगर आज इसको हम खरीदने जाएंगे तो करोड़ रुपए का घर हम पकड़ते हैं। अब मैंने करोड़ रुपए का घर खरीदा है, तो करोड़ रुपए पे सबसे पहले 12 लाख रुपए तो मुझे सरकार को देने हैं, 7 लाख रुपए की स्टैंप ड्यूटी देनी है, 5 लाख रुपए का GST देना है। अगर अंडर कंस्ट्रक्शन है तो GST देना, नहीं है तो एटलीस्ट स्टैंप ड्यूटी तो देनी ही देनी है,
वो तो देनी है। ठीक है।
तो अगर मैंने 6-7 लाख रुपए स्टैंप ड्यूटी दे दी और उस घर का भाड़ा 2.5 लाख रुपए था, 2,40,000 था, तो मेरे तो 2.5-3 साल तो सिर्फ स्टैंप ड्यूटी रिकवर करने को चले जाएंगे।
राइट,
ठीक है, पहला फटका यहाँ पड़ गया मुझे। सेकंड है, अगर मैं 1 करोड़ का घर लेता हूँ तो मेरी EMI पड़ेगी 84-85,000 रुपए। क्यों पड़ेगी? वैसे 60,000 पड़ेगी, पर मेरे पैसे की भी तो कीमत है भाई। अगर मेरा जो 20-30 लाख रुपए लगने वाला है, पहले तो मेरे पास 20-30 लाख होना चाहिए,
डीपी तो करने जितना
हाँ,
होना
डाउन
चाहिए
पेमेंट करने के लिए
minimum।
पहले आपके पास 20-30 लाख रुपया होना चाहिए, यानी आपको अपने माता पिता से ही लेना पड़ेगा, उनको अपनी सेविंग्स तोड़नी पड़ेगी, तो उनका इंटरेस्ट बंद हो जाएगा वहां पे। तो हर पैसे की कीमत है भाई, देयर आर नो फ्री लंचेस इन द वर्ल्ड। तो आपने अगर 80% लोन लिया और 20-30% खुद 20% खुद का डाला, तो 80% पे आपका ब्याज जाता है। पर आप ये मानो कि आपका भी पैसा उधार पे है, तो 1 करोड़ पे आपका ईएमआई पड़ेगा 85,000 रुपया। 85 और रेंट कितना है 20,000 रुपया, तो बचा 65,000 रुपया। अगर इस 65,000 की मैं SIP कर दूं 12% के हिसाब से 20 साल के लिए, 20 साल का लोन है, 20 साल के लिए मैं 65,000 की SIP कर दूं, तो 20 साल बाद ये 65,000 रुपए 6 करोड़ 50 लाख होंगे। 12% पे, सिर्फ 12% पे कह रहा हूं,
सिर्फ 12% पे 65,000 6 करोड़
साढ़े छह
और
करोड़
50
रुपए
लाख हो जाएंगे।
यस। और उसके बाद आप उस पैसे में से महीने का 6.5 लाख रुपए निकाल सकते हो जिंदगी भर, क्योंकि बचा हुआ पैसा फिर भी कंपाउंड कर रहा होगा। तो आपने तो अपने आप को फाइनेंशियली फ्री कर दिया ना, बहुत सिंपली। 65,000 रुपए जो आप बैंक को देने वाले थे, इस खुशी में कि इस घर को आप ओन करते हो, भाई उस घर को आप नहीं ओन करते हो, बैंक ओन करते हो। आप उस दिन ओन करोगे जिस दिन आखिरी किस्त जाएगी।
सिर्फ एक
साइकोलॉजिकल है कि मेरा घर है, भाई तेरा घर नहीं है, बैंक का घर है, तू बैंक के घर में रह रहा है। जिस दिन कुछ हो गया, तूने 3 EMI छोड़ दी, तो तेरे घर आके ये इसको तेरे को बाहर कर देंगे, और फिर इसकी कुड़की करके जो बचेगा पूछेगा तेरे को दे देंगे। बट उसी तरफ अगर तेरी SIP मिस हो गई, आपकी SIP मिस हो गई, तो यू विल नॉट बी पीनलाइज्ड, बिकॉज SIP इज नॉट अ लाइबिलिटी, EMI इज अ लाइबिलिटी। मैं EMI को कुत्ते का पट्टा बोलता हूं। अब कुत्ते का पट्टा तो भाग नहीं सकता ना वो, तो आप भाग ही नहीं सकते, इतना ही भाग सकते हो 3 महीने तक। उसके बाद आप पकड़े जाओगे। तो इसलिए आप एक यंग बच्चे हो, 20-21 साल के हो, क्यों कुत्ते का पट्टा पहनना चाहते हो? एंजॉय करो। आप वही 85,000 के घर को 20,000 में रख, 65,000 रुपए की SIP कर दो, आप 6.5 करोड़ के मालिक हो जाओगे। मालिक, अच्छा घर है, घर तो बिकता नहीं आसानी से, कभी इलिक्विड हो जाता है। ये 6.5 करोड़ जब आपके पोर्टफोलियो में होंगे 20 साल बाद, तो आप राजा होगे, किंग। 40 साल की उम्र में 6.5 करोड़ रुपए रखे आपके पास, तो आपका एक व्यवहार अलग हो जाता है, आपका तरीका अलग हो जाता है, आपका कॉन्फिडेंस अलग हो जाता है।
जो कई लोग कहते हैं कि उस घर की वैल्यू बढ़ती है, व्हाट इज दैट आर्गुमेंट? पर बेचने तो वाले नहीं हो आप उसको।
अच्छा, ना आप उसका बाथरूम बेच सकते हो, ना आप उसका टॉयलेट बेच सकते हो, ना आप उसका किचन बेच सकते हो कि आपको पैसे चाहिए। म्यूचुअल फंड तो इतनी प्यारी चीज है कि आपको 6.5 करोड़ में से 6500 रुपए चाहिए कि भाई मेरे को आज 6500 की कमी होगी, तो आप 6500 बटन दबाओ, अगले दिन आपके घर पे 6500 आउट ऑफ 6.5 करोड़। अब मैं घर है, वो तो 6500 रुपए देगा नहीं ना मेरे को, उसके लिए मेरे को उधार लेना पड़ेगा, लोन अगेंस्ट प्रॉपर्टी।
फिर से इंटरेस्ट जाएगा,
फिर से इंटरेस्ट दो, इंटरेस्ट पे इंटरेस्ट दो। अच्छा, मजेदार बात बताता हूं, 20 साल में आप जितना पैसा बोरो करते हो बैंक से, उसका डबल वापस करते हो।
20 ईयर्स का लोन,
20 ईयर्स का अगर आपका लोन है, तो आप डबल वापस करो।
1 करोड़ का लोन लिया तो 2 करोड़ वो पे
आप वापस करने वाले हो,
और उतनी तो घर की वैल्यू भी नहीं बढ़ने वाली।
देखिए, मैं कहता हूं बढ़ भी जाए
तो भी कुछ यूज नहीं,
आप यूज नहीं कर सकते,
प्रैक्टिकल यूज कुछ नहीं है,
प्रैक्टिकल यूज कुछ नहीं है। तीसरी चीज, आप बंद गए। आप आज अहमदाबाद रहते हो, आपको लगता है यार मेरे को बड़ी अपॉर्चुनिटी दिल्ली मिल रही है, तो अब फंस गए, अब आपको बेचना पड़ेगा, डिस्ट्रेस में बेचना पड़ेगा। तो और वो जो 7% सरकार को दिया था वो डूब गया,
और वहां रेंट पे भी नहीं रह सकते,
और वहां रेंट तो मतलब आपको तो डबल फटका हो गया ना। तो आपकी लिबर्टी को, आपकी मूवमेंट को, सबको ये घर रोकता है। हाँ, आपने एक कॉर्पस बना लिया, आप स्टेबल हो गए, आपने तय कर लिया कि भैया मैं अहमदाबाद में ही अपना जीवन काटूंगा, ठीक है, मेरा एक सर्कल बन चुका है, सब कुछ हो चुका है, मेरे को नहीं जाना कहीं और, मेरा जॉब ट्रांसफरेबल नहीं है, कुछ नहीं है। मेरा पापा ने बहुत अर्ली में बड़ौदा में घर बनाया, हम लोग ने बड़ौदा से स्टार्ट किया।
अच्छा,
हाँ, पापा ONGC में पहले काम करते थे, तो बड़ौदा में थे, तो बट ठीक है, मैं उनको ब्लेम नहीं करता, क्योंकि उस टाइम पे ना और कोई विकल्प ही नहीं था, तो उन्होंने घर बना लिया, मकरपुरा करके एक जगह है वो बड़ौदा में, वहां पे घर बना लिया। सर, उस घर को बेचने में हमारी चीखें निकल गई। अब पापा को 4 बार तो बॉम्बे से उठ के बॉम्बे बड़ौदा जाओ, नेगोशिएट करो, अच्छा उधर बड़ौदा वालों को पता है ये तो रहता नहीं है यहाँ पे, तो इसको कोई भी प्राइस कोट कर दो। आप समझ लो कितना कितना नॉन ट्रांसपेरेंट इलिक्विड मार्केट है ये। मैं आम व्यक्ति की बात कर रहा हूं, मैं उस व्यक्ति की बात नहीं कर रहा जो थोड़ा उस सर्कल में है जहां पे रियल एस्टेट की बात कर रहे हैं। मैं एक नॉर्मल इंसान की बात कर रहा हूँ। 30-35 हज़ार तुम्हारी तनख्वाह है, 40,000 तनख्वाह है, लाख रुपए भी तनख्वाह है, पर तुम ये सब चीजें नहीं मैनेज कर सकते, इसलिए इसको छोड़ दो, प्यार से SIP में इन्वेस्ट करो, घर अभी मत लो, लाइबिलिटी मत लो अपने सर पे, और धीरे धीरे पहले अपने आप को ग्रो करो। सबसे ज्यादा निवेश इस टाइम पे यहां लगाओ, यहां, क्योंकि आपकी एक्टिव इनकम बढ़ेगी। क्योंकि ना सर, हमारे यहाँ एक प्रॉब्लम है, हमें ना ये सिखाया गया, बेटा जिस दिन तेरी इंजीनियरिंग खत्म हो गई, MBA खत्म हो गई, तेरी पढ़ाई खत्म हो गई। हमें किसी ने ये नहीं बोला कि उस दिन से तुम्हारी पढ़ाई चालू होगी,
जिंदगी की तो उसी दिन चालू
उसी दिन
होगी।
चालू होगी। तो हमारे यहाँ ना सबकी मानसिकता होगी कि मैंने एमबीए में पैसे दे दिए, इंजीनियरिंग में पैसे दे दिए, अब मेरे को कहीं और नया चीज़ सीखने की ज़रूरत ही नहीं है। तो आपको, आप जैसे ही मार्केट में आते हो, मेरा ये फ्रेमवर्क है कि आप अपनी इनकम का 5% यहाँ लगाओ। चाहे कोर्स करो, चाहे कोई कॉन्फ्रेंस में जाओ, नेटवर्किंग करो, आप अपनी एक्टिव इनकम को बढ़ाओ। ये सब चीज़ों पे मत फोकस करो। अपनी तनख्वाह आज 50,000 है तो 3 साल के अंदर इसको 2 लाख करो। वो आपके हाथ में है, ये सब आपके हाथ में नहीं है, ये मार्केट के हाथ में।
राइट, वो तो पेशेंस के साथ ही
वो
पूरा
पेशेंस के
गेम
साथ,
चलेगा।
बस उधर ध्यान मत दो ज़्यादा, उधर अपना छोटा सा काम करके छोड़ दो।
इसका आपने बता दिया। तो अगर कोई इंसान सपोज गाड़ी लेना चाहता है तो उसके लिए क्या परसेंटेज दिमाग में रखने चाहिए? कई लोग कहते हैं कि साल भर का जितना इनकम है उसका 10% तक आप इसमें लगाओ, उससे ज़्यादा लगाने का प्रयास मत करो। सो इसका भी कोई रूल है जो आप फॉलो करते हो?
देखिए, गाड़ी में मैं 2-3 पहले तो उस पर कैविएट्स डाल देता हूँ। पहली चीज़ गाड़ी में ये है कि आपको गाड़ी तब लेनी चाहिए जब आपकी कंजम्पशन 1000 किलोमीटर से ज़्यादा है महीने की।
अच्छा,
अगर आपकी 1000 किलोमीटर से ज़्यादा नहीं है कंजम्पशन, आपके लिए कोई भी गाड़ी खरीदना वायबल नहीं है इंडिया में।
कैसे?
मैं आपको मैथ देता हूँ। एक होंडा सिटी है, कितने की आती है?
10 लाख, 12 लाख,
12-13 लाख की
12-13 लाख।
12-13 लाख की। अगर आप गाड़ी का ईएमआई देखते हैं तो वो मोटा मोटी 2000 रुपए पर लाख होती है। अगेन मैं ये कहूंगा कि डाउन पेमेंट भी मेरा पैसा है, उसकी भी कीमत है, तो एटलीस्ट उतनी कीमत तो है जितने का मैं लोन ले रहा हूं। तो मैं पूरे पैसे को डाउन वो मानूंगा कि मैंने लोन पे लिया है। तो 13 लाख रुपए अगर मैं लेता हूं, या 13-14 जो भी है लेता हूं, तो मोटा मोटी 25-30 हजार के रेंज में मेरा ईएमआई आएगा। 15-20 हजार की इंश्योरेंस आएगी, 45 हजार हो गया। और उसके बाद मेंटेनेंस आप 5 हजार रुपये लोएस्ट पकड़ लो, मतलब बहुत कम पकड़ लो, ठीक है। टायर चेंज होते हैं, सब कुछ होता है, एक्सीडेंट कुछ हो गया तो वो सबको हमें गिन ही नहीं रहा। तो आपका करीबन 25-30 हजार की ईएमआई होगी, 15-1 हजार की इंश्योरेंस होगी, 40 और 10 हजार का आप मिस लेना, 50 हजार का बेसिक खर्चा। ये गाड़ी घर पे खड़ी है, 50 हजार रुपये की पड़ रही है। अब 50 हजार डिवाइड बाय 1000 किलोमीटर, 50 रुपए किलोमीटर। उबर ओला आपको करीबन 21-22 रुपए किलोमीटर।
अच्छा,
सिंपल हो गया। तो अगर आपका कंजम्पशन 1000 किलोमीटर का नहीं है तो मेरे हिसाब से आपके लिए गाड़ी नहीं बनी। सेकंड चीज आपके लिए गाड़ी तब बनी है जब आपकी इनकम बहुत सिग्निफिकेंट हो जाए। आप
फिर कंफर्ट एंड कन्वीनियंस से
आप
कर
उस
रहे हो।
चीज को बजट कर सकते हो कि ठीक है यार, ये मेरे लिए पैसा है। आप 25 हजार की तनख्वाह पे और बोलो यार मैं आज एक समझो क्विड ही ले लेता हूँ, 6 लाख रुपए की क्विड ले लेता हूँ, तो 12 हजार की तो आपकी किस्त बन जाएगी यार। 50% तो सीधा किस्त में चला गया आपके। तो पहला रूल ये नहीं है कि मैं कितना कमा रहा हूं, पहला रूल है मेरा कंजम्पशन कितना, मैं खरीद किस पर्पस के ले रहा हूं। आपका पता चला ऑफिस से 2 किलोमीटर दूर घर से, 4 किलोमीटर दूर घर से, तो 4 दूनी 8, 8 20 दिन जाते हो 160 किलोमीटर। एक आधी बार फैमिली के साथ बाहर निकल गए 100 किलोमीटर मार गए तो 250 किलोमीटर। 250 किलोमीटर तो हाईली अनवायबल है। 200 रुपए पर किलोमीटर की पड़ जाएगी आपको होंडा सिटी। और अभी मैंने ड्राइवर नहीं गिना, मैंने फ्यूल नहीं गिना, ये सब अलग है। मैं तो सिर्फ फिक्स्ड कॉस्ट की बात कर रहा हूं। तो लोग ना मैथ नहीं कर रहे हैं ठीक से। अगर वो मैथ करने लग जाए ना, उनके इन्वेस्टमेंट डिसीजंस बेटर हो जाएंगे, फिर वो स्ट्रगल नहीं करेंगे।
ज़्यादातर लोग तो आई थिंक मैथ तो दूर की बात है, स्टेटस ड्रिवन ही बहुत चलते हैं इंडिया में, कि अगर पड़ोसी पे आ गई है और या फिर घर में ये दिखाना है कि मैं कितना अमीर हूँ, वो स्टेटस जो है वो हमसे शादियों में भी एक्स्ट्रा खर्चे करवाता है, वो कई बार बड़े बड़े फ़ोन रखवाता है। तो व्हाट इज़ योर टेक ऑन दैट, कि जो स्टेटस ड्रिवन परचेजिंग है इंडिया के अंदर वो बहुत ज़्यादा चलती है। कई बार तो इवन आप दिवाली पे पटाखे भी फोड़ते हो तो कई बार ये देखते हो कि पड़ोसी की कितनी देर फूट रहे हैं, उस हिसाब से
सही कह रहे हो।
कंपटीशन रहता था बचपन में, लोग कंपटीशन करते थे कि इसके घर में इतना फूट रहा है, उसका इतनी, मतलब पटाखे की लड़ी में भी कंपटीशन चलता था, इसके 1000 की लड़ी है, हमारी 10,000 की होएगी, ऐसा लोग करते हुए हम देखते थे।
ट्रू।
सो हाउ टू डील विद दैट?
देखिए, ये आपने बहुत अच्छी, मेरे को ना आपकी इस बात से एक बचपन की बात याद आ गई कि मैं एक सोसाइटी ओएनजीसी कॉलोनी में रहते थे, तो हमारे वहाँ एक फैमिली थी, तो हमें पता होता था कि सब लोग जब पटाखा फोड़ेंगे तो उनकी वो 10,000 की लड़ी चलेगी। तो सोनू भैया करके होते थे हमारे, तो हम सब पटाखे फोड़ दिया, अपने सुतली बम फोड़ दिया, वो लक्ष्मी बम फोड़ दिया, ये फोड़ दिया, वो फोड़ दिया। लास्ट में सोनू भैया आएंगे, वो रील पूरी घुमाएंगे 10,000 की, दाड़ दाड़ दाड़, और फिर दैट विल बी द क्लोजिंग ऑफ इट। मतलब ही वॉज नोन फॉर दैट। देखिए, इन्वेस्टमेंट्स में, लाइफ में फियर ऑफ मिसिंग आउट ना होना इन्वेस्टमेंट्स में आपका सबसे बड़ा सपोर्ट सिस्टम बनता है। सर, जब आप मर्सिडीज में जाते हो, बोरोड मर्सिडीज है, किसी को तो पता नहीं वो पीछे क्या चल रहा है, जो बंदा आपको देख रहा होता है वो आपको नहीं, मर्सिडीज को देख रहा होता है। उसको क्या पता अंदर कौन बैठा है, उसको तो कुछ नहीं पता अंदर कौन बैठा। चलो, हो सकता है आपके केस में पता हो, बिकॉज आप एक पब्लिक फिगर है, कि जनरल आदमी की बात कर रहा हूँ।
Yes.
मैं देखता हूँ यंग प्रोफेशनल 3-3 लाख की तनख्वाह, 4-4 लाख की तनख्वाह में BMW उठा रहे हैं, X1 उठा रहे हैं, कि चल यार एंट्री लेवल BMW उठा लेते, 60 लाख की है और 60 लाख पे अपने को 1.25 लाख की EMI आएगी, तो मैं 3 लाख कमा रहा हूँ, 40% चला जाएगा, कोई बड़ी बात नहीं है। पर अंदर तू बैठा है, तेरे को तो मतलब कोई देख रहा थोड़ी, मतलब नोबडी इज वाचिंग यू, दे आर वाचिंग BMW बिकॉज देयर एस्पिरेशन इज नॉट यू, देयर एस्पिरेशन इज BMW,
राइट।
ठीक है? तो आप गलत फाइट में हो, ये फाइट आप जीत ही नहीं सकते। तो पहली चीज तो ये हो गई। सेकेंड चीज ये हो गई कि जब आप फोमो करते हो, तो वो वॉरेन बफे अगेन हमारे गुरुजी की एक लाइन है कि टू शो पीपल दैट यू हैव मनी इज द फास्टेस्ट वे ऑफ लूजिंग मनी। तो उनकी ना एक्चुअली क्या, अगर किसी को इंसान को फाइनेंशियल जीवन बेस्ट जीना है तो उन्हीं की बुक पढ़ लो बस, आपको जिंदगी में और कुछ करने की जरूरत ही नहीं। तो आप अगर कोई ऐसी चीजें कर रहे हो जिससे आप दुनिया को पैसा दिखाना है ना, तो आप ही का पैसा जा रहा है, उनका थोड़ी जा रहा है। तीसरी चीज है, जैसे आप ये चीजें दिखाते हो, इंडिया में खासकर कुछ लोग आप पे चिमड़ जाएंगे कि यार इसके पास तो बहुत पैसा है, चलो इससे पैसा ले लेते हैं, ऐसे उधार ले लेते हैं, ऐसे ही कर लेते हैं, ऐसे मतलब भाजी वाला भी अगर आप उतरोगे तो BMW से तो 100 रुपए किलो फालतू ही लगाएगा आपको। तो ये क्या है कि आप है ना, अमेरिका का सिस्टम इंडिया में कंट्रोल भी नहीं कर सकते, मतलब एकदम प्योर कॉपी पेस्ट नहीं कर सकते हो। वहां सिस्टम्स अलग हैं, कंजम्पशन। अच्छा, उधर क्या है, लोगों को पता है कि अपन रंग हुए ना तो सरकार अपना ध्यान रख लेगी, देयर इज अ सोशल सिक्योरिटी सिस्टम। यहां नहीं है, यू आर ऑन योर ओन इवन आफ्टर पेइंग टैक्सेस। तो आपको ये सब ध्यान रखना पड़ेगा, आपकी डोरी आपके हाथ में है इस मामले में, कि आपको टेक केयर करना है कि ये फोमो के किस्से में नहीं पड़ना। हाँ, अगर आपकी इनकम बहुत सिग्निफिकेंटली ज्यादा हो गई है, 7 लाख महीना, 8 लाख महीना, और आप 1 लाख की गाड़ी का EMI देते हो, तो फिर भी समझ आता है। चलो, अगेन इट इज अ मैटर ऑफ बजटिंग, क्या बजटिंग कैसे कर रहे हो। बजटिंग आपका आधार बनता है, बजटिंग आपके GPS का करंट लोकेशन है। जैसे GPS में करंट लोकेशन मांगता है ना, वैसे बजटिंग आपका करंट लोकेशन बताता है। फिर आप डिसीजन लेते हो कि मेरे को किस तरफ जाना है, व्हाट इज माय डेस्टिनेशन, एंड देन हाउ डू आई ट्रैवल टू दैट डेस्टिनेशन।
इसके कोई रूल्स हैं, बजटिंग कोई कैसे सीख सकता है, या फिर हर एक व्यक्ति का कोई इंडिविजुअल है, या फिर कुछ स्टैंडर्ड रूल्स लोगों ने बता रखे हैं या आप सिखाते हो कि इज देयर एनी मेथड ऑफ बजटिंग?
मैं ये कह रहा हूं कि आपको पहले प्रॉफिट्स फर्स्ट अप्रोच रखो, कि अपना 25% तो साफ ही कर दो, दिखना ही नहीं चाहिए, दैट इज नॉट योर्स।
तुमने कमाया ही नहीं है,
वो कमाया नहीं है, वो गया, ठीक है, वो आपके फ्यूचर सेल्फ के लिए गया है, वो आपके लिए उस दिन के लिए गया है कि जिस दिन आप काम नहीं कर पाओगे, नहीं तो आप काम करते करते ही मरोगे। मतलब आप अपने आप को देखिए, लोगों ने पिछले 16 साल में, मेरे दोस्तों ने गाड़ियां खरीदी, मेरे दोस्तों ने घर खरीदे, मेरे दोस्तों ने बैग्स खरीदे, मैंने क्या खरीदा, मैंने अपना टाइम खरीदा। वो ये सब खरीदते रह गए, मैं अपना टाइम खरीदता रह गया। तो आज मैंने अपना टाइम कंप्लीटली खरीद लिया, मैं फाइनेंशियली इंडिपेंडेंट हो गया। वो आज भी नौकरी कर रहे हैं, क्योंकि उनको 1.5 लाख रुपए की घर की EMI देनी है, 1.25 लाख रुपए की गाड़ी की EMI देनी है। 6 लाख कमाने के बाद भी शांति नहीं आती महीने की। जो मेरे पीयर्स है जिन्होंने मेरे साथ स्टडीज की थी, 6 लाख रुपया महीना कमाने के बाद भी फोन ये आता है कि यार अभी तक SIP नहीं चालू कर पाए। क्योंकि वो अपना ये सब खरीद रहे थे ना,
EMI दे रहे हैं, तो SIP कैसे देंगे?
अब SIP कैसे करेंगे, क्योंकि लीजर है, स्टेटस है, शाम हर सैटरडे को घर पे लोगों को दारू पे बुलाना है, महंगी 18 साल वाली पिलानी है, तो हम तो भी स्टेटस मेंटेन कर रहे हैं, ठीक है करते रहो, हम तो फ्री हो गए। तो ये आपका माइंडसेट है। तो आपको पहले अपना माइंडसेट बिल्ड करना है कि व्हाट डू यू वांट इन लाइफ। डू यू वांट टू बी अ स्लेव एंड वर्क ऑल योर लाइफ, और you want to say कि I will struggle for the first 10-15 years. First I will buy my own time and then I will do whatever I want to do. ये choice आपकी है, मेरी नहीं है। आपको लगता है नहीं जी, I am very happy working till 70-80 for somebody else, करो, कोई प्रॉब्लम नहीं है, बढ़ाते रहो अपने एक्सपेंसेस जैसे जैसे आपके इनकम बढ़ रही है। तो ये पहली चीज होगी। बजटिंग में कोई ऐसा रूल नहीं है। बजटिंग में ये है, आप पहले अपने गोल्स को सेट करो कि मेरे को ट्रैवल करना पसंद है, तो ट्रैवल का बजट अलग करो। अब ट्रैवल, आपकी तनख्वाह 25,000, आप सोचो मैं अमेरिका चला जाऊंगा 10 दिन के लिए, वो पॉसिबल। आपकी तनख्वाह 25,000 है तो आप साल में एक बार ऋषिकेश जा सकते हो, आप साल में एक बार मुन्नार जा सकते हो।
मुझे एक पॉइंट आपने बोल दिया ना कि बजट और विजन आपस में मैच होना चाहिए। आई थिंक दैट्स द, अगर वो चीज किसी ने कर ली तो दैट इज,
एंड इट इज अ
प्योर अलाइनमेंट।
इट इज अ मैटर ऑफ कॉन्शियसनेस सर। आप तो देखिए NLP सिखाते हैं, और NLP भी एक मैटर ऑफ कॉन्शियसनेस है,
राइट?
ठीक है, व्हेन यू स्टार्ट बिकमिंग मोर कॉन्शियस अबाउट योरसेल्फ।
ट्रू।
तो जस्ट बिकम कॉन्शियस अबाउट योर फाइनेंशियल। सर मैं 11वीं में था 2001 में, तब एक्सेल नहीं था, कंप्यूटर्स नहीं थे, कुछ नहीं था मेरे पास। एक पर्ची होती थी, उसमें रो बनाते थे, 1 जनवरी, 2 जनवरी, 3 जनवरी, 4 जनवरी। कॉलम में आता था कि आज खाना इतना खाया, बस का भाड़ा इतना दिया, ऑटो का भाड़ा इतना दिया, बुक्स इतने की खरीदी, बाहर मटर गश्ती इतने की कर ली, मूवी देख के आ गए। तो एक होता था दिन के अंत में, हाँ भैया 34 रुपये खर्च हो गए, ठीक है चलो।
तो ये जो लिखने वाला काम है, क्या डेली बेसिस पे कितना आया कितना गया डेली मेंटेन करना चाहिए? बिकॉज कई लोग कहते हैं कि दैट्स नॉट अबंडेंस, आपको रोज का ध्यान नहीं रखना, लिखना नहीं चाहिए रोज का कितना गया कितना नहीं गया। What is your take on that? क्या every penny that we spend, there should be documentation of it?
मैं आपको एक सिंपल क्वेश्चन पूछता हूँ, रिलायंस आज क्या आपको खर्चा करता है, डॉक्यूमेंट नहीं करता?
करता है।
करना ही पड़ता है, उनको तो सरकार को दिखाना पड़ता है, इन्वेस्टर को दिखाना पड़ता है।
हाँ।
अगर आज उनके यहाँ 25 रुपए आधे लीटर का दूध आता है ना, वो भी लिखा होता है
यस
मिसलेनियस एक्सपेंसेस में,
राइट।
और अगर आप उसको डबल क्लिक करोगे तो आ जाएगा कि दूध इतने का आया था, पनीर इतने का आया था, खाना इतने का आया था, ये इतने का आया था। तो क्या वो अबंडेंस में नहीं है? बिल्कुल अबंडेंस में है। कॉन्शियसनेस और अबंडेंस में दो थोड़ी अलग चीजें हैं।
राइट।
आपका कॉन्शियस होना जरूरी है। दिस इज अ मैटर ऑफ प्योर कॉन्शियसनेस।
ट्रू।
ये जो आपको बजटिंग है वो आपको कॉन्शियसनेस देता है कि भाई मैं खर्चा क्या करूं, मैं कम करने थोड़ी कह रहा हूं खर्चा, मैं कह रहा हूं पता योर विजन एंड योर बजट शुड अलाइन। मेरा पॉइंट ये है, आप रोते रहोगे कि मैं ट्रैवल नहीं कर पा रहा और आप यहां पे सिगरेट फूक रहे हो, या फिर आप सब्सक्रिप्शंस को पैसा दे रहे हो, या फिर आप गलत चीजों में पैसा डाल रहे हो, तो आपका रोना गलत है, बिकॉज योर विजन एंड योर एक्सपेंस आर नॉट मैचिंग विद ईच अदर। इट इज ओनली अ मैटर ऑफ दैट। ये बोलना कि इतना मत सोचो पैसा कहां जा रहा है, आई टोटली डिसएग्री विद दैट, बिकॉज एवरी डैम ऑर्गेनाइजेशन in this country or this world who is abundant in nature is documenting every expense of theirs.
So true.
Apple भी कर रहा है, Apple की भी बैलेंस शीट निकलती है, ठीक है, Samsung भी कर रहा है, Google भी कर रहा है, Facebook भी कर रहा है, सब कर रहे हैं। तो वो abundant नहीं है क्या? बिल्कुल abundant है।
अभी हमने टैक्सेस की बात की थी, तो अभी जस्ट बजट रिलीज हुआ है, तो आपका क्या टेक है ओवरऑल? अभी एक बहुत अच्छा पॉइंट आपने कहा कि कई बार जो सोशल सिक्योरिटी जैसे हमारे यहाँ पे नहीं है, तो जो टैक्सेस हमसे लिए जाते हैं और जो सर्विसेज एक सिटीजन को मिलती हैं, कितना गैप आप इंडियन टैक्सेशन सिस्टम में आप देखते हैं, और इस बार का जो बजट है वो क्या एक आम व्यक्ति के लिए बेनिफिशियल है?
मैं इसको थोड़ा हाउस होल्ड से कंपेयर करता हूँ। फॉर एग्जाम्पल, किसी का घर है और उस घर में 32 लाख की कमाई है साल की और 48 लाख का साल का खर्चा है, तो पापा कैसे एक्ट करेंगे?
तो
खर्चे कम करेंगे,
यस,
ठीक है, बाहर नहीं जाने देंगे आपको, आपके फ्रिल्स को कम करेंगे, पहले तो उधार लेंगे कहीं से कि बच्चा वसूला कवर करें,
यस,
ठीक है, या घर में कोई असेट होगा तो बेचेंगे, कोई ज्वेलरी बेचेंगे,
राइट।
पर सरकार का भी यही हाल है। उनकी 32 लाख करोड़ की कमाई है, 48 लाख करोड़ का खर्चा है,
तो वो
कहाँ से नाराज है कि मम्मी बोल रही बेटा खर्चे नहीं निकल रहे करके। तो वो 16 लाख करोड़ पहले तो उनमें से वो डिसाइड करेंगे कि कितना उधार लूंगी, कितना पीएसयू के शेयर बेचूंगी।
तो हम इस स्थिति में आ कैसे गए?
ये ना देखिए, सालों साल से जो प्रॉब्लम चल रही है कि हमारे एक्सपेंसेस आर ग्रेटर देन हमारी आमदनी 18 है, खर्चा रुपये है। तो आमदन देखिए, अब घर में 4 बच्चे हैं, दे आर कॉन्ट्रीब्यूट, उसमें से 2 बच्चे कॉन्ट्रीब्यूट कर रहे हैं 32 लाख, या एक बच्चा कर रहे हैं उस 32 लाख में, बाकी 3 निकल रहे हैं। तो जब बजट में प्रॉब्लम आएगी घर में, तो प्रेशर किस पे डाला जाएगा? जो कमा रहा है उसी पे तो डाला जाएगा, बेटा तू और कमा के ले थोड़ा, ये 3 तो निठल लें, इनसे क्या आप अपेक्षा करें?
सो ट्रू।
तो यही हो रहा है। आपके 80 करोड़ लोगों को आज अनाज सरकार दे रही है, खिला रही है, और आप और मैं कमाऊ पूत हैं, या हमारे जैसे कुछ कमाऊ पूत हैं, तो हमें बोल देते बेटा थोड़ा यार तू देख ले यार, तू 10% LTCG की जगह 12.5 दे देना यार, है ना, या तो तू शॉर्ट टर्म 15 की जगह 20% कर देना। वो तेरे को एक बेनिफिट दिया था ना इंडेक्सेशन का, वो इस बार नहीं दे पाएंगे अब हम। तो वो तो मतलब कमाऊ पूतों से तो उम्मीद करेंगे, और किससे करेंगे? तो हमारे से उम्मीद की जा रही है, हमारे को करना पड़ेगा। चॉइस मतलब हमारा चॉइस नहीं है इसमें कोई, और बहुत समय तक नहीं रहेगी, मैं आपको बोल रहा हूँ। अगर कोई ये सोच रहा है कि ये स्थिति अगले 4-5 साल में टोटली रिवर्स हो जाएगी, आई डाउट। आई थिंक दिस विल बी वेरी लॉन्ग लिव, बिकॉज मैं आपको सिंपल एग्जांपल देता हूँ। पिछले साल 45 लाख करोड़ का खर्चा था, इस साल 48 लाख करोड़ का खर्चा, 3 लाख करोड़ ज़्यादा खर्चा हो रहा है साल का। 7% 8% से आपका कॉस्ट ऑफ मतलब लिविंग कॉस्ट ऑफ रनिंग द कंट्री इज इंक्रीजिंग बाय 7 to 8%, एंड पीपल आर गेटिंग मोर फायर्ड नाउ बिकॉज AI आ गया है, तो जॉब्स और कम हो रहे हैं। सरकार को जॉब्स के लिए बहुत प्रेशर है कि भाई जॉब्स क्रिएट करो। तो अभी जो सिचुएशन है वो परमिट ही नहीं करेगी सरकार को कि वो हमारे जैसे जो लोग हैं जो कंट्रीब्यूट कर रहे हैं टैक्सेस को लेकर, उसको कोई बेनिफिट्स दे पाए। तो इसलिए मैं कोई नाराज नहीं होता, कोई दुखी नहीं होता। आई नो दिस विल हैपन,
नीडी है, जरूरत है यही,
हाँ,
कोई ऑप्शन नहीं है।
आप समझे ना कि वही मैंने जो एग्जांपल दिया कि घर में आपके 4 या 5 बच्चे हैं, उसमें से कमा एक ही रहा है ना,
उसी पे सारा बोझ
है और उसी से अपेक्षा है, उस पर अपेक्षा भी उसी से है कि बेटा आज तेरी तनख्वाह समझो 10 लाख रुपए साल की है, तो कल बेटा तेरे को 15 करनी पड़ेगी। ये तो नहीं कर रहे कुछ, मैं नहीं कुछ कर सकता इनका, ये तो ऐसे ही बैठेंगे यहाँ पे कंचे खेलेंगे, खेलना ठीक है।
तो आजकल जो इतने सारे कई बिजनेसमैन हैं जो दुबई में स्पेशली ऑपरेशंस अपने शिफ्ट करते हैं और दुबई से ऑपरेट करते हैं, तो ये इसी टैक्सेशन सिस्टम की वजह से दे आर डूइंग इट। अगर आप कुछ इसमें कैलकुलेशन दे सकें कि सपोज़ कोई व्यक्ति 1 करोड़ रुपया एक कंपनी प्रॉफिट बनाती है इंडिया में, और वही सेम 1 करोड़ अगर दुबई में बनाती है, तो इन हैंड फाइनली किसके पास कितना रहने वाला है, इफ यू कैन गिव सम कैलकुलेशन?
देखिए, मैं इसका ब्रेक इवन पॉइंट आपको दे देता हूँ
जी।
अगर आप महीने का 25 लाख से ज़्यादा कमा रहे हैं तो दुबई विल बी फेवरेबल फॉर यू।
अच्छा।
अगर आप साल का 3 करोड़ रुपए कमा रहे हैं, 3 करोड़ या उससे ज़्यादा कमा रहे हैं, तो दुबई इज़ अ फेवरेबल कंट्री फॉर यू। उसका रीज़न ये है क्योंकि 25 लाख में आपका वहाँ पे कॉस्ट ऑफ लिविंग इज़ वेरी हाई। तो आप जो इंडिया में 2 लाख रुपए महीने में जी सकते हो, वहाँ पे आपको वो 6-7 लाख रुपए महीने में जीना मतलब लग जाता है।
सेम चीज़, यस।
तो 3x की कॉस्ट है, तो 3 करोड़ में फिर आप वो सब निपटा सकते हो। दूसरी चीज़ ये है कि फ्रॉम टैक्सेशन स्टैंड पॉइंट दुबई में जो वैट है, जो हमारा जीएसटी, वहाँ फ्लैट 5% है। इंडिया में वो अलग अलग स्लैब्स है, 5, 12, 18, अलग 28। इन टर्म्स ऑफ बिजनेस टैक्सेशन आई थिंक वहाँ पे करीबन $1 लाख के आसपास तक आपको बिजनेस टैक्स नहीं देना पड़ता, और उसके बाद भी अगर बिजनेस टैक्स देना है तो सिर्फ 9% देना पड़ता है।
कॉर्पोरेट
टैक्स जिसे कहते हैं,
यस यस,
जो यहाँ 0 से स्टार्ट हो जाता है और आपको मिनिमम 25% देना पड़ता है, और अगर आपकी रेवेन्यू 400 करोड़ से ज़्यादा है साल का तो आपको 33% देना पड़ता है। तो ये इंडिया का मतलब जो है डिफरेंस है। तो ऑब्वियसली इंडिया इज़ अ वेरी हाई टैक्स रिजीम। अगर आप 100 रुपये का रेवेन्यू करते हैं तो मोटा मोटी आपके पास सरकार के पास मोटा मोटी उसमें से 20-22% चला जाता है, टैक्स और इनकम टैक्स मिला के। मैं एक एवरेज स्थिति में आपको बताता हूँ।
ओके।
तो अब 88 जो आपके पास 78 रुपये बचते हैं, उस 78 रुपीज़ में से आपको अपना घर चलाना है, सब करना है, तो वो आपका मैथ होता है।
सिर्फ 20-22 ही जा रहा है, कई लोग तो कहते हैं कि 48 तक चला जाता है।
मैं बिजनेसेस के बारे में बात कर रहा हूँ,
अच्छा।
बिजनेसेस को कॉस्ट को बेनिफिट मिल जाता है ना, तो जो सैलरीज दे रहे हैं, गाड़ी चला रहे हैं, ये सब कर रहे हैं, तो उसका उनको बेनिफिट मिलता ही।
जैसे कोई सिर्फ सर्विस इंडस्ट्री में अगर
हम एक एम्प्लॉई हैं,
सपोज कोई सर्विस इंडस्ट्री में सिर्फ है,
हाँ,
तो उसको जैसे जीएसटी भरना पड़ रहा है, मगर उसको कोई क्रेडिट नहीं मिल रहा है जीएसटी का, तो
वो भी उसकी कॉस्ट हो गई,
तो उसके ऊपर तो 18% और चला गया।
हाँ, बिल्कुल।
और प्लस जो अगर वो 20 लाख से ऊपर वाली स्लैब में है,
हाँ,
तो उसको उस
हाँ, और अगर वो 4 करोड़ से ऊपर वाली स्लैब में तो 40% तो उसका वो हो जाता है इनकम टैक्स। तो देखिए, टैक्स तो इंडिया में ज़्यादा है, टैक्स तो इंडिया में बहुत ज़्यादा है, नो कोई डाउट ही नहीं है, पर इसके कम होने के चांसेस भी नहीं है।
बट द सिचुएशन, अच्छा वो आपने ये बताया, बिकॉज मेनी पीपल आर नॉट अवेयर ऑफ दिस कि व्हाट इज द रीजन why they are doing it,
yes,
because they are also trapped.
हाँ.
they have no choice.
मैं क्लियर करना चाहता हूँ, कुछ लोगों ने मेरे को पिछले कुछ एक पॉडकास्ट में थोड़ा लिखा कि आप मोदी समर्थक हो। मैं मोदी समर्थक नहीं हूँ, मैं आपको सिचुएशन बता रहा हूँ। आप अपेक्षा नहीं कर सकते, मैं डिफेंड नहीं कर रहा हूँ उनको। आप जो सिचुएशन, भाई मैथ तो मैथ है ना सर। भाई अगर मैं परिवार के एग्जाम्पल से बताया कि 32 लाख परिवार कमा रहे हैं, 48 लाख खर्च कर रहे हैं, तो पापा तो स्ट्रिक्ट होंगे, कुछ कर ही नहीं सकते पापा ने, तो घर तो खत्म हो जाएगा किसी भी दिन,
राइट। जबकि वो भी जानते हैं उनके फेवर में नहीं करेगा काम। दे आल्सो नो दैट
आज तो जीना है ना, वी हैव टू लिव टुडे टू फाइट टुमारो। तो आज अगर हम जीते रहेंगे, और अपेक्षा किससे करेंगे, जो कमाऊ पूत है, क्योंकि बाकी 4 तो नहीं कमा रहे।
फाइनेंशियल स्ट्रेस को डील करने के लिए क्या करते हैं? बिकॉज अल्टीमेटली हम कितना ही गेम को समझते हो, बट कई बार प्रेशर एक्सपीरियंस हो सकता है, या फिर आपके पास लोग इतने कंसल्टेंसी में आते होंगे। सो फाइनेंसिस की कमी की वजह से कितना स्ट्रेस में लोग जाते हैं, और क्या वो कोप अप कर सकते हैं उस स्ट्रेस को हैंडल करने के लिए?
देखिए, अगेन मैं अपने हमारे इस संवाद से कुछ चीज़ों का इसमें बहुत सिंपल आंसर है। फर्स्ट है, अपना कॉन्शियसनेस लेके आओ, अपनी बजटिंग लेके आओ। मैं इसका ना एक 4 स्टेप फ्रेमवर्क देता हूँ। पहला स्टेप है बजटिंग, टू बी अवेयर ऑफ वेयर यू आर राइट नाउ। तो आपको पता चल जाएगा कि आप खर्चे किस पे कर रहे हो, कहाँ कर रहे हो, वेयर इज योर मनी गोइंग।
एटलीस्ट एग्जैक्ट आपको पता होना चाहिए
आपकी फिक्स कितनी है, वेरिएबल कितनी।
ये एक ऐसा पॉइंट है संजय जी कि मैक्सिमम मैंने देखा कि घरों को ये पता ही नहीं होता कि एग्जैक्टली पैसा कहाँ जा रहा है।
घरों छोड़ो, बिजनेसेस को नहीं पता होता।
यस,
घर वाले तो फिर भी बोलते हैं चल ठीक है, चल रही है, मतलब चल रही है, ठीक है, ऐसे कोई प्रॉब्लम नहीं। बिजनेसेस को ही नहीं पता। मैं तो बिजनेसेस पे सबसे पहले जाके, ये मेरा पर्सनल फाइनेंस और बिजनेस फाइनेंस में यही फ्रेमवर्क रहता है, फर्क नहीं पड़ता फ्रेमवर्क में। पर देखिए, इश्यू कॉन्शियसनेस का बहुत कम मैंने व्यापारियों को भी देखा है कि अगर मैं उनसे पूछूं कि आपका बजट क्या है, आपका फिक्स कॉस्ट का ब्रेकअप क्या है, आप कितना वेरिएबल कॉस्ट कर रहे हो, कितना प्रॉफिटेबिलिटी कर रहे हो, जीपी कितना है, एबिटा कितना है, प्रॉफिट बिफोर टैक्स कितना है, नेट प्रॉफिट कितना है, तो नहीं पता होता लोगों को। जबकि दर रनिंग एन एंटरप्राइज ऑफ 100 करोड़ रुपीज रेवेन्यू, 200 करोड़ रुपीज रेवेन्यू, नहीं पता होता। एंड आई डोंट ब्लेम देम, ठीक है, उन्होंने आज तक इस बारे में ज्यादा सोचा नहीं, पर फिर आप स्ट्रेस में आते ही इसीलिए हो क्योंकि आप कॉन्शियस नहीं हो, ठीक है। तो पहली चीज आप बजटिंग करो। सेकेंड चीज आप इमरजेंसी फंड क्रिएट करो, ये बहुत जरूरी है। इमरजेंसी फंड भी सिंपल, मैं इसको एक एग्जाम्पल देता हूँ कि जैसे एक सेस्ना प्लेन होता है, छोटा प्लेन, उसको लैंड करने के लिए मात्र 1 किलोमीटर का रनवे चाहिए। फिर एक A320 होता है, उसको लैंड करने के लिए आपको करीबन 1.5-2 किलोमीटर का रनवे चाहिए। और एक A380 होता है जंबो, उसको 3-3.5 किलोमीटर का रनवे चाहिए। तो आप अगर सिंगल हो तो आप सेस ना हो, तो आप 6 महीने का अपना आपके पास कॉस्ट, आपके जो खर्चे हैं उसका 6 महीने का आपके पास एफडी में होना चाहिए। पहले दिन नहीं होगा, उसको बिल्ड करो।
ठीक है।
ठीक है, अगर आप A320 हो यानी आप एक हस्बैंड वाइफ, तो आपके पास एटलीस्ट 9 से 10 महीने का होना चाहिए। और अगर आप एक पूरा परिवार हो, 2 बच्चे हैं, सब कोई है, तो आप 12 से 15, तब आप A380 हो गए, तो अब 12 से 15 महीने का आपके पास एक रिजर्व क्रिएट होना चाहिए। अब आपको ना कॉन्फिडेंस आ जाएगा कि यार मेरे पास एक रिजर्व है, कल को प्रॉब्लम हो गई तो कोई फर्क नहीं। और इस रिजर्व को कहीं नहीं डालना, चुपचाप एफडी में डालना है। कोई भी फाइनेंशियल इन्फ्लुएंसर आके बोले एफडी बेकार है, बोले थैंक यू सो मच, वो तो पैसा एफडी में ही होगा। ठीक है?
इमरजेंसी फंड आपको
नाम ही
एफडी में
इमरजेंसी
रखना
है,
है।
तो उसका काम रिटर्न्स कमाना नहीं है, उसका काम है इमरजेंसी में आना।
ठीक
है तो
ऑब्जेक्टिव क्लियर है उसका।
हाँ, देखिए अपेक्षाएं क्लियर रखो, उसके बाद निवेश चालू होगा। अब तीसरा होता है इंश्योरेंस। आजकल देखिए लाइफ इज वेरी अनसर्टेन, हेल्थ इंप्रूवमेंट कॉस्ट आर वेरी हाई।
यस,
आप एक प्रॉपर लाइफ इंश्योरेंस लो जो आपकी इनकम का 20 से 25 गुना है, और टर्म लो। ये यूलिप फुलिप ये सब मत लो, क्योंकि ये इतना करोगे तो 20 साल बाद पैसे वापस मिल जाएंगे, कुछ नहीं, प्योर टर्म इंश्योरेंस।
मृत्यु के बाद क्या मिलेगा?
हाँ बस, अगर बच गए तो गए वो पैसे, और खुश होना कि बच गए तो गए पैसे, ठीक है, अच्छी बात है। तो मतलब आप खुद मरो इसके लिए वो नहीं कर रहे हो कि मतलब चलो काश में मर ही जाता। तो आपने 20 to 25 टाइम्स आपकी इनकम का आपके पास इंश्योरेंस होना चाहिए।
जी।
सेकंड है, अगर आप एक परिवार हैं, अगेन एक हस्बैंड वाइफ बच्चे हैं, तो एटलीस्ट 10 से 15 लाख रुपए का फैमिली फ्लोटर का आपके पास वो होना चाहिए, हेल्थ
इंश्योरेंस आपके पास।
लोग है ना यहाँ पे बहुत गलत करते हैं, 2 लाख रुपए की फैमिली फ्लोटर। अरे यार क्या होगा, क्या फर्क पड़ता है?
नहीं,
लेके रखो
घर में।
चाहे आपको 2000 साल के फालतू देने पड़े, चाहे आपको 4 सिगरेट दिन की कम फूकनी पड़े, प्लीज ये वाला काम करके रखो। तो ये हो गया BEI। और चौथा आई है इन्वेस्टमेंट्स, कि अब आप इन्वेस्टमेंट्स का भी जर्नी चालू रखो, ताकि आपके लॉन्ग टर्म गोल्स हैं, चाहे आपके बच्चों की शादी है, आपको खुद को पढ़ना है आगे जाके, फिर से डबल MBA करनी है, डबल कोई ग्रेजुएशन करनी है, आपको गाड़ी खरीदनी है, घर का डाउन पेमेंट करना है, आपको 20 साल बाद रिटायरमेंट पानी है, उन सब के लिए आप एक इन्वेस्टमेंट करो। बस सिंपल और मस्त रहो। BEI,
बजट, इमरजेंसी, इंश्योरेंस एंड इन्वेस्टमेंट।
बस इससे ज़्यादा दिमाग नहीं लगाना ज़्यादा। इसके अलावा आप दिमाग का लगाना है एक्टिव इनकम बढ़ाने में।
हाँ,
ये सब कर दिया, आप सेफ हो गए। ठीक है, और ये सब करने में आपको पूरे महीने में 2 घंटा लगे।
That's it।
बस उसके अलावा जो बाकी समय है वो आपके पर्सनल, आपके फैमिली रिलेशनशिप्स में, अपनी सेल्फ इंप्रूवमेंट्स में, अपने एक्टिव इनकम को बढ़ाने में, हासिल करने में, डबल इनकम क्रिएट करने में, ये सब में जाना चाहिए। प्रॉब्लम क्या है, लोग यहाँ पे अपेक्षा फूल जलूल कर देते हैं, तो वो बेचारे मारे जाते हैं।
दैट्स द बिगेस्ट प्रॉब्लम, कि वो एक्सपेक्टेशन ही।
बिल्कुल। आप मुझे
बिल्कुल
बताइए
नहीं
सर,
है,
आपने पिछले 20 साल में, अगर मैं आपका एक 20 ईयर करियर पूछूं, एक क्वेश्चन रिवर्स कर देता हूं,
हाँ।
तो आपने अपनी एक्टिव इनकम पे कितना फोकस किया और उससे क्या बेनिफिट मिला, वर्सेस आपने अपनी पैसिव इनकम पे कितना फोकस किया और क्या बेनिफिट?
मोस्टली तो एक्टिव इनकम पे ही फोकस किया। एक्टिव इनकम तो बहुत ड्रास्टिकली, ऑलमोस्ट ऐसा लगता है कि बहुत ज़्यादा एक्स हो गई है। और इन्वेस्टिंग मोस्टली, जैसे एक रेगुलर इन्वेस्टर, हमें क्या बचपन से सिखाया जाता है कि प्लॉट्स ले लो, घर, रियल एस्टेट ले लो। तो मोस्टली इन्वेस्टमेंट्स उन्हीं जगहों पे मेनली किए, और बाकी कुछ म्यूचुअल फंड्स में किए, जिसमें 13-14% के रिटर्न मुझे आते हैं। पर वो मतलब मैं करके भूल गया हूँ, मतलब मैं उसमें कोई दिमाग नहीं लगाता हूँ। जो मेरे मैनेजर हैं वो ही देखते हैं, बस कभी कभार आके बताते रहते हैं कि हाँ भाई ये हो रहा है, वो हो रहा है, दैट्स इट।
पर मैं अगर कहूँ तो आपने सबसे ज्यादा बेनिफिट आपके रिटर्न्स का हुआ है आपकी एक्टिव इनकम पे, ये मैं कह सकता हूँ।
यस।
तो बस यही स्टोरी है सबकी, यही होनी चाहिए। अगर आप 100 रुपए कमा रहे थे आज 10 साल पहले, तो आप 10 साल बाद 10,000 कैसे कमाओ, 100x कैसे करो, उसको इस पे फोकस होना चाहिए ना, ये रिटर्न्स पे, क्योंकि वो आपकी गेम नहीं है, वो आपकी गेम नहीं है। मैंने बताया ना कि दिस इज ओनली वन प्लेस जहाँ पे जितना कम आप इन्वॉल्व हो गए उतना आप ज़्यादा पैसा कमाओगे।
तो बहुत ही मज़ा आया संजय जी, इतना मस्त सिंपल तरीके से आपने इसको समझाया। और आई थिंक इतना सिंपल समझाया कि लोगों का और जानने का इंटरेस्ट बनेगा, कि ये, वरना लोगों को ना ये बोरिंग लगता है सब्जेक्ट की। फाइनेंस ऐसा नहीं कि इच्छा नहीं है लोगों में, बहुत से लोग सीखना चाहते हैं, बट कई बार कुछ इंटरेस्टिंग बना के कोई सिखाए तो लोगों का इंटरेस्ट और ज़्यादा बनता है। तो आई थिंक बहुत ही अमेजिंगली आपने लोगों को सिखाया।
थैंक यू सो मच।
एंड नाउ वी विल मूव टू द रैपिड फायर।
श्योर।
सो लेट्स गो फॉर द रैपिड फायर। सो नाउ वी विल स्टार्ट रैपिड फायर। संजय जी रेडी?
जी।
स्टॉक्स और बॉन्ड्स?
स्टॉक्स थ्रू म्यूचुअल फंड्स।
व्हाट इज योर फेवरेट फाइनेंशियल बुक?
मेरी फेवरेट फाइनेंशियल बुक है भगवत गीता।
भगवत गीता?
यस।
तो यार ये तो रैपिड फायर है, बट इसमें अगर आप एक्सप्लेन करें कैसे?
क्योंकि मैंने जैसे बताया 90% माइंडसेट का गेम है, 10% स्किल का है।
हाँ।
तो भगवत गीता आपको माइंडसेट बिल्ड करने में सॉलिड हेल्प करती है। उसके अगर प्रिंसिपल्स आप इन्वेस्टमेंट्स में लगा लो तो आप कभी गलत नहीं हो सकते। उसके अलावा अगर नॉर्मल जो बुक अच्छी लगती है वो मुझे, आई थिंक द साइकोलॉजी ऑफ मनी इज अ ब्रिलियंट बुक बाय मॉर्गन हाउसल।
बहुत ही ब्यूटीफुल
बुक लिखी हुई है। और अगर आपको कुछ भी सीखना है तो मेरे गुरुजी की कोई भी बुक उठा लो आप, वॉरेन बफेट की, बस उसमें आपको गोल्ड स्टैंडर्ड जो है कोर्स मिल जाएंगे।
तो गीता में आपने कहा, वैसे तो रैपिड फायर है, बट इफ यू कैन गिव 2-3 पॉइंट्स जो गीता में से आपने उठाए हैं और आप यूज करते हो अपनी लाइफ में।
एक श्लोक तो सबसे फेमस है 247 कि कर्म कर कर फल की चमत्कार, बट एक श्लोक है जो मेरे को बहुत पावरफुल लगता है, वो है 4th अध्याय का 40वां श्लोक है, जिसे हम कहते हैं अज्ञाना च श्रद्धाना च संशयात्मा विनश्यति नाया लोको अस्ति परो ना सुखम संशयात्मा। मतलब कि जो व्यक्ति अज्ञानी होता है और जिसमें अज्ञाना च श्रद्धाना च, यानी जिसमें ज्ञान नहीं है और श्रद्धा नहीं है, somebody who doesn't have knowledge and somebody who doesn't have conviction, ठीक है, ऐसी आत्मा का विनाश होना तय है। ठीक है, ना या लोको अस्ति ना परो ना सुखम संशयात्मा, मतलब उसको कोई भी लोक में सुख नहीं मिल सकता। तो अगर मैं इन्वेस्टमेंट्स में इसको लगाऊं कि जब तक आप किसी चीज के बारे में प्रॉपर नॉलेज नहीं गेन कर लेते तब तक कन्विक्शन बिल्ड नहीं होता, और जब नॉलेज और कन्विक्शन नहीं होता आपके माइंड में हमेशा संशय रहता है,
डाउट रहता है।
ठीक है, ना या लोको अस्ति ना परो, मतलब आप म्यूचुअल फंड से भी सेटिस्फाई नहीं होगे, आप स्टॉक से भी सेटिस्फाई नहीं होगे, आप बॉन्ड से भी सेटिस्फाई नहीं होगे, क्रिप्टो से भी नहीं होगे, रियल एस्टेट से भी नहीं होगे, किसी प्रोडक्ट से नहीं होगे, ना सुखम संशयात्मा, आपको कभी सुख यानी कि आपको कभी भी रिटर्न्स का सुख प्राप्त नहीं होगा। तो बहुत ये लाइन में क्लियर लिखा है, नॉलेज एंड कन्विक्शन इज द मोस्ट एसेंशियल आइटम्स फॉर योर ब्यूटिफुल इन्वेस्टमेंट जर्नी।
Wow, that's beautiful. One word to describe your investing style.
Passive and sloth, मतलब don't touch.
Best financial advice you have ever received.
Your efforts are inversely proportional to your returns.
Gold or real estate?
Gold.
Most underrated investment?
Long-term patience.
Crypto, future or fad?
Fad. India में तो fad है।
Morning person है आप या night owl?
A little bit of night owl.
What is your favorite finance quote?
The first rule of compounding is don't disturb it.
Most memorable trade?
In a month, I made on my options trading around about 9.5%.
Diversification or specialization?
Not highly diversified. That doesn't give you returns. That preserves your capital.
Best tool for financial planning?
Excel sheet.
Wow, old is gold. Huh? Most influential financial guru?
Warren Buffett.
What is your favorite part being a finance coach?
I can solve problems which have far-reaching effect. तो एक डॉक्टर होता है, वो एक मरीज को जब ट्रीट करता है वो उस मरीज को ट्रीट करता है। मैं अगर किसी की फाइनेंशियल प्रॉब्लम सॉल्व करता हूँ, उस पूरे परिवार की प्रॉब्लम सॉल्व होती है। और अगर किसी बिजनेस की फाइनेंशियल प्रॉब्लम सॉल्व कर दूँ तो उसके सप्लायर्स की, एम्प्लॉयज़ की, कस्टमर्स की, सबकी प्रॉब्लम सॉल्व होती है। तो आई थिंक व्हाट आई डू, गॉड इज काइंड ऑन मी कि ही इज चोजन मी टू डू थिंग्स विच हैव फार रीचिंग इफेक्ट ऑन पीपल्स लाइव्स, बिकॉज अपार्ट फ्रॉम दिस देयर इज रोग और ऋण। इसके अलावा तो कोई बहुत बड़ा प्रॉब्लम है नहीं लाइफ में लोगों के। तो या तो रोग है या ऋण है, तो मैं ऋण का डॉक्टर हूँ, कुछ लोग रोग के डॉक्टर होते हैं। तो आई थिंक दैट इज द मोस्ट ब्यूटीफुल पार्ट ऑफ माय
ब्यूटीफुल संजय जी।